going back to December-ish. So seeing any flow switch to IWM to the upside will be welcome because it really hasn't had any. We'll also be watching for any lines coming through on TNA and TECL. That's the 3X bull. Want to see if they're doing anything there. If they're hitting calls, especially 6-digit calls or more, that's a good sign. If they're selling calls, that is not a good sign. Those lines there, along with SQQQ, will be on heavy watch for me today going into FOMC. Keyword being going into FOMC, we're in a position now to where risk off would mean covering. That would be risk off at this point. Let's see if they actually risk off and we get some type of a covering rally, or if they just keep the hammer down. Finally, two more pieces I want to cover before we get into Mr. Stockington.
Time from New York City for our viewers worldwide.
Last week we talked about how some of these retail inventories are building up from pandemic-related items, things like sweatpants, houses, refrigerators, electronics, that kind of stuff. These inventories continue to build. There is a thought that sometime after July 4th being probably the trigger, those holiday sales. There's going to be a lot of stuff that is much cheaper than what it is now. That's something that, you know, in the spirit of helping that cocksucker Jerome Powell destroy the
Verizon yet Verizon to expand 5G ultra wideband availability using CBRS spectrum.
Victor, because you remember, he did say after all, growth has to move down. That's what has to happen for inflation to come down.
We do see 75
basis
points.
We absolutely
there could be some pain involved in restoring price stability, but we think we can maintain a strong labor market. So far, all of those things really are not happening. Powell continues to be the enemy of the people in every way, shape, and form.
The Fed is going to be forced to get more aggressive than they had expected.
Let's go ahead and help him out. Let's help
Flow
everybody out and not buy shit until after
Wells Fargo. Esty, I want to start with you.
Mr.
As far as how
Stockington,
you're
what
viewing
do you have
today's
for us, sir?
rebound. Is this something you want to participate in, or is it a dead cat?
Do we not care about levels this morning?
Oh, Bender, I am so sorry. I am so sorry.
What the hell did I even get up for?
You know what?
PayPal.
You know what?
Big
You know what?
catalyst in
Go
the
ahead.
coming
Call
week,
me a
especially
name. Call
not
me a
ahead of
name.
the Fed,
I
that
deserve to
really
be
make
called
you
a
want to
name.
jump in
End
up
after
with
the last
Grubhub.
couple of days sell-off.
I don't need to call you
People
anything. It's your access to payments.
Well, somebody in the room just called me a son of a
They
bitch.
seem
Papa
to
Yankee,
match
Papa
the
Lima.
kind of
You're getting lots of names in
expectations
Victor.
the market wouldn't be
PYPL
surprised if
and
they
V.
get that in
Remind your
tomorrow.
Grubhub. And I think it's deserving.
Beyond that,
I think
we
I think you're
need to
right.
start to
Actually,
see inflation coming down a little
All right,
bit
I'll go
faster.
through this real
We
quick.
knew it was going to be slow and gradual,
I'm going to
but
post
we're not getting
this chart.
inflation
You remember
data
the
for
level
another
that I
2
gave
weeks
yesterday?
almost.
And it was
And that means
the
there's
lowest level that I
little
gave. And I
catalyst for
said,
real upside move
I gave you two trend line,
beyond today.
potential trend line support areas. And there was one that I said,
DCI,
if it gets here, this is where I think it will bounce. This is where it should bounce because there was two trend lines that it actually lines up with, along with previous support. That number was 37.35.
Earnout payments for the next 5
We got
years.
pretty close to that. I want
Delta,
to say
Charlie, India,
the low was
DCI.
like 37.33 or something like that. So it's pretty close. Here is here is that chart, and the reason that I put that number in the chart, that is a 233 minute, so it goes back to that later colored sort of parallel channel. You can see that trend line that started back in August 18, August 18. And you can see that trend line support angling down, right, that parallel channel going from upper left to lower right. You can see where that trend line resistance has come into play.
Ultimately be avoided. SD, is that your sense right now
on the bottom
that
side
basically
of
this will be a capitulation?
Crude futures
by
popping
the
here,
Fed
moving above the
30
area.
$3 level. Conditions tighten as
Up
much as they
around
already have.
2% here.
Pull it back.
we're still we're
I think at some point, I'm not sure
37.75
how
now,
much
so
they'll
we're
pull
you know
back because
40
once the
40
market
points
has
above that.
sort of
But
accepted all these rate hikes,
if we
they're
pull back
they're going to
here,
try to get as many as they can under their belts
that's kind of the
before
area
they might have
that
to
I would
loosen
still
again at some
say
point
is
next
pretty
year.
important.
But I think at
On
some
the
point
60
they
minute,
are going to
the
acknowledge that they're
10
keeping an eye on
is
growth.
at the 10
Now, at the
MA is at
moment, it looks like Jackson
37.82.
Hole is going to be
The
pretty
20
good
is
timing for that.
37.76.
Yes, we
And the
get a
50
lot
is
of information tomorrow, but
38.33.
we really need to see a
I think
couple more days of
38.25 to
inflation figures. And we
38.33.
just want to hear the Fed say, we're not
We're going to get any
blindly
sort of
hiking. We're not just
rally.
doing this
I
one
would look at
factor.
that
We have to
level.
bring inflation
If you're
back down.
continue to
If you
be
look at
bearish,
the,
that's
10-year
not a
inflation
bad
expectations,
area to take
they're
a
holding
shot
in.
short
They're not
with a tight
exactly at
stop. If
2, but
everything
they're
else,
not that high
that you
either.
look
It's
at
that
kind of
1
lines
year
up,
that's still
that
quite
wouldn't be a
high.
bad area.
And I
If we
think
can get
once they
above
start to
3,800 and go
acknowledge
test
growth,
that
that will ease a lot of the
38.25 to
concerns for
38.3,
markets,
that's going to be
especially if we
an area
have the
that
growth numbers in
is
the
pretty
U.S.
key
stay
for
solid, which is not too
bears to
hot,
hold in the
but
short
not too much
term,
weakness
and
to
key
stoke
to get above
those
for any
recession
sort of
fears either.
bullish move.
For now, it's not as if the
So
data is
above
giving them any
that
comfort. Producer
38.30,
prices
then you got
underscoring
38.50.
that inflationary pressure
And that
that's
above
pervasive
38.50
throughout the
should see
economy. This
some
is Wall Street continues
a
raising its
stop
Fed rate
run
hiking
on
forecasts
shorts.
ahead of tomorrow's decision. Let's
If
bring in Bloomberg's
37.30
Michael McKee
gives,
for
then
more.
you got
People looking
3,700
for
and
that 75 basis
36.86 below
points
that.
of PPI data
And
not dissuading them.
until this gap gets filled above at 38.80 to 38.96, I'm going to keep that on this daily morning show that we do. I will be talking about that until it fills, and who knows how long it's going to take, but just keep it in mind.
Now, the Fed is
That's all I
looking at the
got.
month-over-month
Thanks, Bennett.
sequential
I
moves
appreciate that.
in
Yeah, no,
the
it's like, once again,
PPI
it's
and
like
CPI.
it
PPI today
becomes
goes
really,
up
if you
0.8
really,
in the
really
month of
pay
May after
attention to
0.4
Bender's segment
in
as
the
far as,
month of
when he's kind
April,
of saying,
and that
okay,
is not
look
good
at
news, but it's those
this level, and
double-digit
this level,
increases that are getting the public's attention, and
you're
you
going
can
to be
see the
helped
move
out
in the
quite a
Michigan
bit
numbers,
if you're writing
and that's
those
got to
levels
scare the Fed
down and
because
you're
they
really,
don't
really
want a
marking them
wage
on
price
your
to
target
higher.
areas of entry.
But they still
And
have to
again,
decide.
we can't
75
reiterate
to
enough,
50. The market is told the US
these are
Army
all
now because of all the news
areas of
stories out
interest.
yesterday.
They
Here's
have
their
the
choices.
addition, the ability to move in either
Would
direction.
75 now hurt their ongoing forward
So
guidance? Do
thanks
they have
once
to
again,
promise
Bender,
another
for
75?
putting
Will
those
people
out.
believe them if they do? Would 75 now help or hurt the
I
Fed's
can do it.
credibility? Do people think they
Do you have
need
anything
to
good for us,
go
dude? Do you have something
75?
that's like, hey,
And would it
there was
backfire
some
by
really, some
suggesting
good stuff we need to
recession
talk about
ahead? That's
today
going
as
to be a
far
key
as,
question
some
for Jay
good
Powell
stuff.
when he holds his news
I have
conference
the
after
good
the
stuff.
meeting.
You
Now,
got the
Eric was
good
asking
stuff. All
about the
right,
dot plot.
come on with it
You can
then.
see in the dot
All right,
plot what the
let's
market
go.
is expecting. The lower line there is
Before
what
I
Fed
get into
funds
my
futures
stuff,
were
I'll kind of
pricing
tie
back
in a
at
couple
the
things
May
that
4th meeting. Now
we're
look
talking
above
about.
that. The white line is what
One,
Fed fund futures are
you
pricing
threw
right
out there
now for the Fed
energy
dot
ripped
plot.
the
So we're going to see
upside.
a
So
major change probably.
Black Box, we
And
put out
as Eric
a
pointed out, the real
flow
question is
play
that
alert
middle
yesterday
dot
that's
in the
probably going to be down about
2023, where
30%
is the
this morning.
terminal rate?
But
How high are
there
they
was
going
some
to
flow
go?
we saw
That's going
into
to be
the
the first thing
XLE
everybody's going to be
yesterday
looking at
for
tomorrow,
July
Lisa.
Mike
1st.
McKee, thank you so much. A lot of people looking for that 4% or above
let's
level.
see,
JP
where we
Morgan's Michael
the
Feroli
$80
looking for
strike.
75
So
basis
that'd
points
be
in
something
tomorrow's
to keep
meeting,
an eye
right?
on. If you
Quote,
didn't get
pulling
in
off the
yesterday, you can
Band-Aid a
get
little
it on sale
faster.
today.
One might wonder whether the true
They put some
surprise
good
would
money
actually
into
be
that.
hiking 100 basis points,
And
something
then
we think is a
the other things
non-trivial
that
risk.
we'll be
The
looking
team at
at will be the
Goldman
levels.
Sachs
So
following
we
suit,
can start
writing,
with
quote,
SPY. There
we
was
have
some good
revised our
dark pool.
forecast to include
I
75
put that
basis point hikes in June and July. Steve Dweck and Eric Delson still with us. Eric, you were talking about how it does seem like this Fed's going to have to be more aggressive, talking about a 75 basis point rate hike. Do you think that markets will view this favorably if they do that, that it actually is a positive that they're trying to get ahead a little bit of the inflation?
Well, Lisa, I think you have to consider which market we're talking about. Equities, it's hard right now to see a situation where over the next 1, 2, 3 months, the Fed will, the market, the equity market will take a much stronger Fed tightening path as positive. I can certainly see that as maybe the worst tail risk scenario where we have 15, 20% inflation, and the Fed going much more aggressively, still a negative. I do think, though, you're thinking about the maybe the fixed income market, specifically break-evens, inflation expectations. Those, have been very well behaved. The Fed being really resolute here on hawkishness should keep break-evens pretty well contained. and certainly put more upward pressure on the U.S. dollar.
Well, but Eric, don't you think there's a potential liability for markets if the Fed moves 50 basis points, has a somewhat tepid signaling as far as what's going to happen, that people could get worried that they're perhaps going to get further and further behind inflation?
Yes, exactly, and that's sort of what I was saying in terms of the worst tail risk scenario, where the Fed has to eventually do more down the road. So I think if they were to, after just basically signaling 75, go 50, that could end up being taken relatively negatively. At the same time, though, I still think that if they hike by 75 basis points tomorrow, signal a relatively aggressive path going forward, the equity market is, in my opinion, not going to like that. Maybe there's a very brief relief rally, but that, in my opinion, will not last very long.
Esty, what's your view on this?
Well, I think ultimately it's going to be a lot more about where we end up than whether we get that 75 tomorrow. I think given the CPI number on Friday, the 75 would be welcome. It's going to depend, again, on how much more hiking you have to expect. But I think if we start to see that terminal rate coming up higher than it's been recently, but at a level that seems to match where the market thinks it should be, it'll provide more relief than anything. And I think it'll help in a way with Fed's credibility of, catching up because maybe they've been seen as behind the curve, and really getting those hikes in now that they can, because the data in the U.S. economy at the moment is allowing it to do so.
Esty, do you agree that the long-term terminal rate is somewhere around 4%, which seems to be more of the consensus in the market right now?
That feels a little bit high because we've gone up almost a whole percentage point just in the last 3 days since that CPI number. We really have a lot more data that needs to come in. But at the moment, imagining 75 basis points now and potentially 75 in July again is perfectly an option for the Fed. They've already signaled bigger rate hikes than the 25 basis points. They want to get those in. And then again, that Jackson Hole meeting starting to look more like really the better timing for any potential pivot that they would want to do, or acknowledging that growth has to be kept in mind as well.
Eric, before we move forward, as we head toward the open here, we are seeing the rally stick and actually extend 0.7% gain in the NASDAQ. At what point do you really get the sense that we've priced in what we need to price in and there starts to become value again, especially given the fact that the NASDAQ is down more than 30% so far this year?
Well, one thing in particular that really worries me, Lisa, is that there has been a continual tendency or bias to want to stand in front of this move in interest rates. This continued expectation that the Fed is going to blink, hawkishness has peaked, and it just continues to not happen. So my concern is that we continue to underestimate how much further this interest rate move can go. We tend to think that the terminal rate in this cycle will likely be close to, if not above 4. So we do expect, I know that is essentially priced in markets at this point, but in terms of the sentiment, I think something has to change here. This cycle is different than the last cycle. The Fed is much more worried, in my opinion, about inflation than it is about where the S&P 500 trades, or whether or not we're at 1.5% growth versus 2% growth. Inflation is number one. So I do think there's more pain to the downside here over the next 6 to 12 months.
I think that we need to dig into what it means to have something priced in. If it's priced into one market in terms of rates expectations, but not necessarily into equity valuations. Esty Dweck, Eric Nelson, both of you are sticking with us. Joining us now with a look at the stocks moving ahead of the opening bell. Here's Abigail Doolittle.
Well, Lisa, we're certainly looking at a much easier tone on this Tuesday morning than yesterday during that sell-off with the futures higher. A big piece of it is earnings. Oracle, the shares are absolutely soaring. This on a solid beat by the software giant as cloud spending accelerates, database strength, and license upside. Now, this, of course, is an enterprise software giant, so their strength suggests that IT budgets are holding up for now. That's an important read-through. Amazon up 1.5% after yesterday in that sell-off, hitting its lowest level since April of 2020. Twitter up 2.5%. Elon Musk is going to address the Twitter staff virtually for the first time since the whole takeover talk back in April this Thursday morning. Investors seem to like that possibility. And FedEx up 8.6%. The quarter was basically in line, but the company has raised the quarterly dividend by 53% to $1.15 per share. This could even change the profile of how this stock screens. Right now, Lisa, an easier tone for stock investors.
Abigail, thank you so much. Coming up, Wall Street's latest bear market keeping investors on edge.
We do want to kind of lean into market when we see dovish pivots coming through, but that requires central banks acknowledging the trade-off between growth and inflation.
That conversation still ahead as we do see those gains maintained ahead of the open here, about 17 minutes until we do get a sense of whether we can break the trend that we've seen in 2 days that were ugly on Wall Street. This is Bloomberg.
CME Group, where risk meets opportunity.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
What if you were a gigantic snack food maker and you had to wrestle a massively complex supply chain to satisfy cravings from Tokyo to Toledo? So you partner with IBM Consulting to bring together data and workflows so that every driver and merchandiser can serve up jalapeno, sesame, and chocolate-covered goodness with real-time data-driven precision. Let's create supply chains that have an appetite for performance. IBM, let's create.
You asleep? Do we have enough life insurance? How would just one of us afford the house, car, Jason's college?
Ethos Life.
Ethos Life?
Go to ethoslife.com and get your personalized quote in seconds and apply online in minutes, often without a medical exam. And Ethos is very affordable.
Hey, I just got my free quote with Ethos.
That's great, sweetie. Sweetie? Get a free personalized quote at ethoslife.com.
Welcome to Lenovo Late Night IT, where insiders share stories straight from the trenches. How much did the cyber criminals pay you to write that article?
I think we're actually witnessing the end of ownership.
AI by itself is actually fantastic, but doesn't really do the job.
Yeah, it'll be like a robot dance.
Like this?
This is Lenovo Late Night IT.
The Fed says a 50 basis point hike is coming.
The Fed is telling the markets what it wants them to do.
But what's next?
Some big questions about the next move, the one after that, and ultimately the destination.
Maybe they can let the high prices naturally bring down demand.
Trust Bloomberg for the fastest coverage and exclusive analysis.
The press conference live. McKee in there. It'll be interesting.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
We see the near-term environment very challenging from the perspective of elevated inflationary pressure, but also earnings way too optimistic at this point. That is why we have lowered risk-taking, but at some point we do want to kind of lean into market when we see dovish pivots coming through, but that requires central banks acknowledging the trade-off between growth and inflation.
It's not just BlackRock. Sentiment across the board is dire. That is a takeaway from Bank of America's latest fund manager survey, showing global growth optimism falling to a record low, with stagflation fears jumping to the highest level since 2008. Let's bring in Taylor Riggs for more. Taylor.
Lisa, and sort of that really sets us up nicely when you think about some of the sort of big key themes and the big takeaways, and then what that means for some of the most crowded trades as well. This hardly will be shocking to you. It's been the theme pretty much of the year. It's been long commodities and long dollar. As we learn, king dollar, huge when you think about sort of the last few days. Long ESG is also interesting. I want to point to short treasuries, sort of the third moment there on that screen, as we've seen in the last 6 trading days before today, a 2-year yield that has been jumping gain about 68 basis points. That trade is certainly done well. Long cash is interesting. We know cash, even after inflation, is losing money, but that highlights the defensiveness of this nature. Long Bitcoin, maybe in the last few days, hasn't totally paid off, but really interesting when we're thinking about gauging risk sentiment in this environment. You want to talk about risk sentiment. It all comes on the back of some of those big tail risks, as you can see there. Again, hardly surprising, right? Hawkish central banks, a global recession, along with higher inflation leads to that stagflation concern, Lisa, that you really mentioned. And then down this screen a little bit, systemic credit risk. And then, of course, the continued fallout from the Russia-Ukraine conflict. But again, with hawkish central banks really being the key focus, that is where, as you learned yesterday, 75 might be the new 50 when it comes to some of these rate hike expectations in the immediate term and the near term. 8 and 6 really is the new 4, and it is the new sort of lower end. So that really has been where the consensus has been, according to B of A.
Taylor, I like the understated that hasn't really worked out when it comes to the crypto bet.
Nice.
Taylor Riggs, thank you so much for that. Flowbank's SD Dweck writing the following: sentiment was already fragile with investors almost looking for an excuse to sell, and the hot CPI gave it to them. Markets are caught between wanting tightening to bring down inflation and fears of what this will do for growth. SD Dweck and Eric Nelson still with us. SD, talking about what might be baked in, what will be baked in down the road. Are you actively shorting any equities? Are you still actively shorting any bonds?
No, we were a little surprised by how much sovereign bonds spiked again in the last couple of days, but it feels like we're towards the end of that cycle. Same thing with the equities bottoming. I'm a little more optimistic on the second half of the year than others, probably closer to the JP Morgan view. And that probably means that we've seen, or we're closer to the highs in some of the bonds. So cautious right now, defensive right now, starting to look for opportunities to build for the medium term or even the second half of the year, little by little. But at some point, as you're saying, I think the rates market is baking in a lot of hikes already, a lot of tightening. We've seen financial conditions tighten sharply already. We have that wealth effect that's having another impact. We're going to have the mortgages have an impact on the housing market in the U.S. So I think a number of things are lining up for I guess, an improvement in sentiment, at least, with a little bit of a cooling in the U.S. economy and hopefully inflation coming down a bit as well.
One of the most crowded trades right now, and Eric, I want to get your sense of this. As Taylor was just outlining, is crowded a dollar long, and we're seeing that even today, early in the tape. We saw a persistent bid to the dollar, despite the fact that it seemed to want to weaken as a reprieve from yesterday's strengthening. How much are you looking at that strengthening of the dollar to continue versus the euro versus perhaps some stasis where we are now?
Yeah, what's so interesting, Lisa, is that you hear this sentiment from the fund manager survey. At the same time, if you look at positioning among leveraged funds, it's really almost balanced. Whereas if you go back to 2015, we had the euro bottom around 103. It was very short, right? So I think about momentum players, some of the, those funds that tend to signal the market bottoms. They are not net short euro. So we think the euro short position and euro downside can run much further here. We do think euro will be below parity within 1 month. And to me, there is an underappreciation or underestimation of just how much euro can go below parity. This, I think, is a really important anchor in investors' minds. They're thinking that, okay, well, maybe we can get down close to that level, probably not break it because we didn't break it a couple of years ago when the Eurozone was probably in a worse position, but I think there's much more downside for euro ahead.
Eric, just real quick here, is that because of how much more the Fed's going to do than the ECB, or is it because of the existential threat created by the widening spread in Italy bonds versus German bonds?
I think it's both, Lisa. You just highlighted two of the really important points why I think investors will continue to push the euro-dollar pair lower. From a growth perspective, too, the U.S. is in a much better position than the Eurozone. The Eurozone is essentially close to stagnating at this point, whereas the U.S. is still growing at a steady clip. So, again, much more euro downside ahead, in my view.
SD Dweck and Eric Nelson, thank you so much. Coming up later, we've got the morning calls. Wall Street anticipating more pain in stocks amid mounting margin pressures. That conversation still ahead. And we'll speak to Pete Shear of Academy Securities at the opening bell, hopefully get his take on credit in particular, given some of the incredible sell-off and the escalating sell-off, particularly investment-grade credit. When does the Fed start to take notice? Just minutes away from the open with solid green. This is Bloomberg.
Super excited to open up my diploma from Southern New Hampshire University.
I'm nervous, I'm excited.
Okay, let's see it. Let's see it. Oh my gosh!
Jesus Chisores. I did it. And it's here.
Yeah!
Next term starts soon. Visit snhu.edu.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. However, we can't do it alone. Find out how you can help.
Building on gains, this is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Let's take a quick look at the action. NASDAQ building on what we saw earlier, up about 1%, and S&P up 0.7%, trying to reprieve some of the losses from yesterday. If you take a look at bonds, still a bid in, although marginally so. Yields down pretty much across the board, although flat on the 30-year, 3.32% on the 2-year, 3.34% on the 10-year. Tom was talking about how flat that curve is getting across the board this morning. If you take a look over in Europe, this is what I am focused on, the existential threat to the euro, as Eric Nelson was just talking about, given how much spreads are blowing out in Italy, crossing that 4% level in Italy on the 10-year for the first time going back to 2014 on the heels of the expected tightening over there. Time now for our morning calls. We'll look at some of the analyst recommendations on Wall Street this morning. First up, Bank of America downgrading Best Buy to neutral, $90 price target, expecting consumers to shift their spending away from discretionary products. Next up, Deutsche Bank downgrading HP Enterprise to hold, seeing limited upside given the more cautious IT spending environment. And finally, Benchmark downgrading Netflix to sell, pointing to a challenging macro environment and growing FX headwinds. Coming up, futures rebounding following 4 straight days of losses. That conversation coming up next with Pete Shear of Academy. This is Bloomberg.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm always interested in the idea that where we are really defines our kind of outlook and the way that we engage with the world.
Which world do you live in?
We all live in our own worlds. There's no reason to think of virtual communities as in any form lesser than a physical community. They are open in a way that doesn't mean you need to travel somewhere.
Hyundai Motor, connecting art and technology.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
If you're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Just go to hurricane.com today. Also available at these fine retailers.
Hello to Truebill, the #1 personal finance app packed with tools to help you manage your money. Like canceling unused subscriptions with just a tap. They also negotiate lower bills on your behalf. You can create custom budgets and see your net worth in one place. And you can even get your credit score for free. If you're ready for an all-in-one money management solution, then download the Truebill app today. Truebill, the money app that works for you.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
Doesn't always give you time to change the outcome. Prediabetes does. With early diagnosis, prediabetes can be reversed. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Moments away from the start of trading, the rally gaining, although a little bit off where it was earlier. The NASDAQ up 0.8%. The S&P up about 0.5%, 37.72. As you see, a bid into bonds, people trying to retrace some of the losses from yesterday. You're seeing strength. Yields lower, 3.34% on the 10-year. Euro, a little bit of strength, although really fighting against the dollar strength that is coming through throughout the morning, 104.47, and crude with a little lift at 122.41. Joining us now with some stocks that are moving at the opening bell. Here is our own Abigail Doolittle.
Well, Lisa, a piece of that bullish action that you were just talking about, modestly bullish action, the S&P 500 up 0.5%, has to do with information technology and Apple. Apple, of course, the heavyweight to each of the indexes, and the shares are bouncing higher. This as yields are essentially lower to mixed, flat, but not soaring as they had been over the last couple of days. FedEx is soaring up 9.9%. The quarter was basically in line, but the company raised the quarterly dividend by more than 50% to $1.15 per share. That could actually change the profile of this company as you get some more dividend-sensitive investors in that stock. Alibaba, similar to Apple, bouncing back up 3.4%. China Tech yesterday down sharply. And then finally, Coinbase Global reversing a big decline earlier. The largest crypto exchange is laying off 18% of its staff, citing an economic downturn. Now, we, of course, have had Bitcoin and others collapsing more recently. The question is, will that continue? The charts may point to a sharp rebound. Tune into Bloomberg Crypto at 1 p.m. We will be charting Bitcoin.
And we will be definitely watching that coming up later today. Abigail, thank you. Meanwhile, big tech bouncing back after recording its biggest 4-day slump since March 2020. Bloomberg's Ed Ludlow joining us now with more. Ed.
Yeah, good morning, Lisa. In some cases, more muted rebound, but in others, strong. Look at Oracle, for example, really an earnings story where it recorded 19% top-line growth in its cloud unit, an area that Oracle's tried to move into, and forecast that that could actually accelerate to growth of 25-30% in coming quarters. You look at some other names that have felt pain in recent sessions, Amazon, Tesla, Twitter, interesting, up almost 4%. Elon Musk, Bloomberg is reporting, will address staff on Thursday morning, so tune in for that. We have retraced some of the losses, but we're still feeling a lot of pain. And I'm looking very closely at the market cap that's been shed in those key mega cap tech stock names. All eyes on the Fed this Wednesday. The most bullish elements of Wall Street following the technology sector, basically hoping that the Fed is decisive, and no matter what basis point increment a hike comes in, that it does something to soften yields. And that if we see a softened yield, what you see on your screen is valuations have come down. And could the time to buy be near? The other point as you look at this terminal chart is there is symmetry between what we're seeing now and what we saw in the dot-com bubble. We're not quite there yet. But the difference in the conversation I'm having with investors, Lisa, is that they say, look at the fundamentals. The fundamentals of these companies are not the same as they were in the dot-com bubble era. And there's a fantastic story on the Bloomberg Terminal today titled Global Stock Rout Prompts Call for Back to Basics Investing. And there's a section in there on free cash flow. And that's one of the key areas of difference. You look at some of those tech names in the S&P 500, even software companies, the free cash flow makes them a very different name, very different strength. We're up 0.8% on the Philadelphia Semiconductor Index, for example, up 0.6% on the NASDAQ 100.
Ed Ludlow, thank you so much. The latest PPI print coming in slightly under expectations, giving sentiment a bit of a boost. Bloomberg's Taylor Riggs joining us now. Taylor.
Lisa, you're spot on. And historically, it has given the markets a little bit of a boost when some of the numbers come in a little bit lower than expected. Maybe a relief here that inflation looks to be a little bit more under control than previously thought. The reverse has been the case when it comes in hotter. Really starts to pressure the market as you continue to think about a Federal Reserve that is on the move. Coming into this print, though, inflation break-evens, at least on the 2-year, had been falling, but I don't think that this really does justice when we think about the long-term picture and the rising 2-year sort of break-evens. Long-term, that have been really, really rising, but at least coming into this, there was sort of an expectation of a little bit of a relief, and you certainly saw that, and trying to find a place here to steady out. I think what is interesting when we think about the market reaction, Gina Martin Adams has been all over this and sort of correcting and helping me understand this, Lisa, where the low beta stocks like Staples, they have done well when you think about some of the recent volatility, but you need to be careful when you think about Staples outperforming some of the discretionary stocks because they already have pretty low margins. So when we're getting hot PPI and CPI, these companies like the Staples may not be able to pass on entirely to some of the consumers here. But I guess in some of these volatile markets, that low beta play really has been the big outperformer.
Taylor, thank you so much. Fears of earnings weakness, keeping investors cautious. BlackRock's Wei Li still waiting for the bottom before she buys, writing following. We're not buying the stock dip because valuations haven't really improved. There's a risk of the Fed over tightening and profit margin pressures are mounting. Bloomberg's Kaylee Lyons joins us now for more on this gloomy picture. Kaylee.
Yeah, gloomy indeed, Lisa. Apparently a 20% decline from the record high for the S&P 500. A bear market is not yet enough to find an entry point here, at least for some of those big institutional players. BlackRock is among them, but there are others who are not willing to buy this dip, are not willing to call the bottom. Mike Wilson over at Morgan Stanley, for example, David Kostin over at Goldman Sachs in that camp as well. Mike Wilson actually taking a look at consumer sentiment and saying that drop poses a risk to the economy and the market from a demand standpoint, because if demand starts to deteriorate, if consumers aren't willing to pay up for certain goods, that limits companies' ability to pass on higher input costs through the mechanism of pricing power and higher prices for their end customer. And if that goes away, if that pricing power goes away, then margins are threatened. Over the past 3 months, we have seen operating margin forecasts falling. According to Bloomberg Intelligence, analysts forecast that 54% of companies in the S&P 500 will have lower operating margins in the second quarter than they did a year ago. And BI says that does not bode well for the market, as operating margin forecasts are usually a leading indicator of where stock prices are headed. If you look back at 2011, 2015, 2018, 2020, ahead of the market turbulence we saw in those years, you saw operating margin projections getting cut beforehand. So if history repeats itself, Lisa, that would mean more trouble is likely on its way.
Thank you so much, Kaylee. Some breaking news crossing the wires. Abigail Doolittle back with us for more. Abby.
Well, Lisa, we do have natural gas futures absolutely plunging right now, on pace for the worst day since January of 28, down 17.5%. This, of course, after a headline has crossed the Bloomberg terminal that the LNG, there's been an update from the Freeport LNG update. They plan to have a partial reopening within 90 days. That, of course, means that there will be more supply. That is the the Texas, the liquefied natural gas producer in Texas, of course, with the explosion last week, it had been planning on shutting its doors for at least 3 weeks, but now we're getting this update that the supply will be restarting, a partial restart in about 90 days. Natural gas absolutely plunging, down 15.3%. You can see a very dramatic plunge there, Lisa. Again, the worst since January.
And just to give you some sense, Freeport LNG provides about 20% of the liquefied natural gas processing in the United States at a time when this is very much a focal point. Abby, thank you so much. We'll keep an eye on this and bring you updates throughout the day. Obviously, natural gas feeding into some of the inflationary reads and utility bills. Right now, let's turn to Peter Scheer of Academy Securities, who's been laying out the bottom line, saying, quote, I want to own treasuries here at the wide end of the range, but for the first time, I'm scared that we could break out of this range. Big problem. Credit spreads should outperform equities here, though both may be weak. Pete, I have been looking forward to speaking with you all day, since you always say it like it is, and this was a different tone to your note. What is it that makes you more nervous now in terms of buying the dip than you were, say, on Friday when you actually did do that?
You know, one thing that I have not liked, it started really Friday and continued yesterday, is this kind of yard sale mentality, right? There's been nowhere to hide. Short-dated treasuries, long-dated treasuries, corporate bonds, equities, commodities, everything was selling off, everything was under pressure, and I'm not sure where the buyer's going to come from. So to me, that's switched, right? There's something to me that's triggered this a little bit. And on yields in particular, what we're seeing in Europe is definitely starting to scare me. You're seeing European banks underperform U.S. banks. That's never good. You're seeing Italy and Spanish bond yields, go much higher even than French and German. So this whole thing that treasuries were, the only game in town is not true either. So I'm very nervous that we could see much higher yields than I was originally expecting.
What kind of range are you looking at now?
I could see something where we get to 4% on the 10-year. And unfortunately, I don't think it would be gradual. I think it would be one of these, very abrupt sort of trading things that were happening, right? I just don't see the level of liquidity out there necessary to support the kind of, volumes that we could see.
That's where I was going to go, Pete. I was hearing about the lack of liquidity and how if you wanted to sell something, you kind of couldn't. In a lot of benchmark markets, whether it was investment-grade credit or even some treasuries, how much does this market dysfunction start to become a real problem for the Fed, where they have to address it in some capacity? I mean, this is what made them jump in March of 2020.
Yeah, it is kind of wild. If you look back at liquidity last summer when they said we still needed QE versus liquidity today, we clearly need something much more today. And you are seeing that sort of selling philosophy that you mentioned where people start selling what they can, not what they have to. So either things have gone down too much or liquidity so poor, so they move to the next asset class. And that's how you get these ripple effects. And I think that's what we saw Friday and again Saturday. So we're really caught between a rock and a hard place with the Fed where, one, they should maybe be looking at supporting the market, but they cannot because of the inflation story. And more people are talking maybe they have to hike 75 or 100 to help the market. And I get that theory, but it's still hard to believe the market would respond well to a surprise large rate hike tomorrow.
For people who lived through the past decade, it's sort of shocking to think that we're seeing investment-grade bond yields on average rise to the highest since 2009. That's where we are right now, getting up toward 5%, which was a high-yield bond yield not so long ago. And high-yield bonds you're seeing well north of 8% and on average. When does this income start to look attractive? When do you start saying, you know what, we're finally getting what we've been asking for a decade?
I think you're already seeing some of that. It's just hard to see because what I think you're seeing is some equity people selling to get into high yield, some high yield people selling to move into investment grade and so on and so forth. So I think more and more people, though, at the end of the spectrum are getting pushed to cash. So I think you're going to see cash balances grow as people de-risk across the board. And only then will you start really seeing, real improvements. So I think there is support for investment grade, and it's coming from the equity market. But at the same time, there are people leaving this market to move to cash and safety, which unfortunately I think is probably the right trade right now.
Peter, when things move quickly, things break. At what point do we start to see margin calls and other types of triggers escalate selling?
I think we're seeing that already. I think yesterday what we saw is a lot of pressure on crypto, right? That went down. And that very quickly feeds into disruptive stocks, which feeds into the major tech indices, which feeds into individual companies. So I'm watching the tech market very closely, the crypto market very closely. I think we could see Bitcoin down 15,000, maybe 10,000. To me, two big things are really occurring there is you're seeing with these layoffs that you just mentioned on coin, that they're not seeing the adoption or the use case grow. That was always an important thing, right? This FOMO, getting new people into the asset class. And at some point, I've got to believe there are some long-term holders who have been down money for the last 2 years who might think about locking in some serious wealth, right? Crypto traded in $8,000 to $9,000 for most of 2018, 19, and 20. They still have some gains. I think you take that and see where this plays out. So I do not believe we're going to see a crypto bounce. In fact, I think we're going to see weakness. And what we're just starting to get a handle on is how important has crypto wealth been to this economy, both on the spending, but also on the hiring, the conferences, the semiconductor purchases, and also the energy usage. So I think we could have a really rough summer.
And just to sort of build on what you were saying about Coinbase, earlier the news broke that they're laying off about 18% of their workers because, as you said, Peter, the adoption just isn't there. You point to the systemic aspect of crypto. Do you think that it is bigger than people appreciate? And could it have potentially, I don't want to say a disinflationary kind of shift, but could it actually accelerate the shift to something that perhaps is more comfortable?
Yeah, I actually think first we're going to see more economic problems because you're going to see less spending. You're going to see some of these things. But ultimately, I think it will ease some of the pressure, especially on the energy, right? There's been times that crypto mining has accounted, would have been like the 10th largest economy in the world in terms of its energy usage. Yes, they're able to harness some energy that couldn't go otherwise, but some part of that's coming out of the grid. So we might actually see a reduction in energy prices if crypto kind of really falls out of bed. And becomes far less popular.
You're sticking with us, and we've got a lot more to talk about. Coming up, President Biden visiting Saudi Arabia in July.
Of course, he will be. They will discuss energy with the Saudi government. I think what I'm trying to say is to look at this trip as it being only about oil is not. It would be simply wrong to do that.
That conversation coming up, and we are about 13 minutes into the trading session with gains across the board, people trying to maintain something that does seem to be fading, however. The S&P up now less than 5 basis points. This is Bloomberg.
Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, today on Bloomberg.
I used to have to go in to the auto parts store. Paid too much, never find quite what I'm looking for. Now I just go online to Rock Auto and see all the parts my car will ever need. Lower prices, more parts, more brands. It's so easy to find the right parts fast. All the parts your car will ever need. Rock Auto. All the parts your car will ever need. RockAuto.com.
To start eating better? If only it were that easy. Fresh and Lean thinks it is. Meals with fresh organic ingredients delivered to your door, ready to heat and eat in under 3 minutes. So if you're looking to eat healthier, we got you. How easy is that? Fresh and Lean.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Welcome to your world, your why. What drives you? What do you want to leave behind? That's your why. It's your purpose, and we will work with you every step of the way to achieve it.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
Small business owners know they've got to be prepared for anything. You gotta be prepared! And when you use Constant Contact, prepare accordingly. Let's send this. Let's sell this. Let's win this. With email marketing and more to drive your business forward. Try it free at ConstantContact.com.
Adapt in a changing world. You could hire a professor of theoretical mathematics.
We all know this equation, right?
He'd crunch numbers day and night.
That's it.
To maximize profitability.
Morning.
I have quarterly numbers. They're beautiful.
And forecast revenue from every corner of your organization.
Is that important?
Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster. For a solve problems like a genius world. Workday for a changing world.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg's The Open. I'm Ritika Gupta, live in the principal room. Coming up, Brendan O'Connor, a UBS financial advisor. That's at 3:30 p.m. New York time. This is Bloomberg.
continue to plan for a trip to Israel and Saudi Arabia. This would be an opportunity for the president to engage with leaders from across the Middle East region. Of course, they will discuss energy with the Saudi government. I think what I'm trying to say is to look at this trip as it being only about oil it would be simply wrong to do that.
We'll get to the political response to inflation in just a moment. Just wanted to point out that stocks are really fluctuating between gains and losses. Had been actually in the red across the board, now regaining some of that, but highlighting how fragile this market move is and how little conviction there is behind the bid to buy. President Biden heading to Saudi Arabia amid record gas prices. Bloomberg reporting that Biden will visit in July and meet with Crown Prince Mohammed bin Salman. Bloomberg's Anne-Marie Hordern joining us now for more from Washington, D.C. Anne-Marie, what are they hoping to accomplish?
Well, it's going to be wide-ranging, and I think the administration, everyone jumps, of course, to oil, given Saudi Arabia is the central bank, you can say, of oil. They've been a swing producer for decades, and you do have the biggest domestic problem being inflation, higher gasoline prices now north of $5 a gallon on average across the country. But they are making sure to point out that this is not just about oil, and they did so in a number of statements. We also heard from the Saudi Arabia's embassy talking about the fact that this will be about other global challenges, economic investment. They name a number of issues, Lisa, like space, energy, cybersecurity, climate, food security as well. The one thing I would point out, though, the White House statement that came out did not mention Crown Prince Mohammed bin Salman, but the embassy statement did, and that statement said the Crown Prince and President Biden will hold official talks. So the two will not just be meeting, they will also be holding official talks, meet with other members of the GCC. So politically, you can see that this one is tricky for the White House. A president that said he wanted to make the kingdom a pariah and has said that at one point there was nothing worthy of this country. He will now go and visit it, which kind of ends the pariah era and is a bit of a restart for this administration with Riyadh.
Anne-Marie, thank you so much. Peter Scheer is still with us and taking a look at gasoline prices, well above $5 a gallon when you look across the average of American gas stations. How much are you looking at this to be the swing factor in terms of a recession or a soft landing?
One thing I've been very disappointed in, I thought our response to what's going on would be with the war in Ukraine would be to address some of our own problems, right? We've underinvested in the industry. We haven't made it very comfortable for our energy companies. We killed the Keystone deal. I thought we'd see a much more, aggressive attitude towards returning to complete energy independence here, making sure we are built. And I don't like kind of the fact that we seem to be almost going hand in hand, asking for handouts and favors and sending very mixed messages. I would think the Saudis are aligning themselves closely with China. When we shut down Russia's access to dollars, I think every autocratic nation across the globe, especially the commodity-producing ones, turn to China. So we're going to have to address these solutions ourselves. We're going to have to figure out what we can do domestically and with our closer allies. And I'm not seeing that being done. And that's one reason I'm very nervous about gas prices coming into this. And then what I'm hearing is refineries that can do it, it's mostly outside of the U.S., are starting to switch to diesel production because they can make so much money in diesel right now that you're going to see ongoing pressures in the gasoline. And that's just hurting the economy. It's hurting individuals at all levels.
And it's also affecting earnings margins. And we're seeing that, profit margins, I should say. We're seeing that in terms of the expectations that companies are putting out there, as well as what they are telling us, whether it's Target, and they're boosting their dividend in response to it, or many other companies. How much do you think we've adequately priced in the margin pressures from these higher oil prices, from the higher salaries, and the like?
I think we're just starting to do that. When we look at it, a lot of people seem to be talking about, well, we might get a recession if we don't get a soft landing, but that recession's, next year type thing. I think there's a real chance that this economy kind of hits the brakes as early as this summer. So we've got to be addressing this sooner. And I don't think we have the urgency that's necessary to get this going. Whether we cut taxes or something, we've got to drive the economy, and it's just not occurring.
And bank CEOs have been increasingly pessimistic, with the exception of Bank of America. Morgan Stanley's James Gorman coming out seeing a 50-50 recession odds, saying, quote, unlikely at this stage to go into a deep or long recession. It's possible we go into recession, obviously, probably 50-50 odds now, but that's okay. We also heard from Goldman's former CEO, Lloyd Blankfein, seeing too much pessimism, talking about dialing back the negativity. If I'm managing a big company, of course I'm prepping for the worst, but come on, guys, we could potentially get a soft landing. Where do you fall on this?
I really don't see a soft landing right now. I think we pulled, we don't talk enough. We only talk mostly about the rate hikes, but we have QT going on, right? So the Fed's reducing their balance sheet. All indications to me are that Fed balance sheet expansion helps risk assets, and I can't see any reason that Fed balance sheet reduction doesn't hurt risk assets. So we're facing that on top of everything else. I think, unfortunately, there's a likelihood, and we could be kind of coming into an ugly economic scenario by the election.
Peter Scheer.
And we've been talking.
I hope you're wrong, but I know that you're not alone in that expectation. Peter Scheer, thank you so much for being with us. We really appreciate it and all of your insights. Coming up, the market-moving events that you need to be watching. That's next in our trading diary. A real messy tape right now, fluctuating between gains and losses. Now losses on the NASDAQ down 0.1%, the S&P up 0.1%. Yields still getting a little bit of pressure, bonds getting a bid as we head toward the rest of the day. This is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
At Principal, we recognize our responsibility as a financial services leader is to help more people and businesses feel secure in their finances and their future. For us, good business has always been about people, from helping our newest investors get started to providing more valuable insights to our most sophisticated investors. We're committed to fostering a more diverse, inclusive, and sustainable world. And working together, we can create a brighter future for all of us.
G'day, we're Atlassian, the creators of teamwork software like Jira, Trello, and Confluence. Think of us as a teamwork lab, where teamwork experts have been studying how teams work for decades, pioneering new ideas and testing every obstacle in the way of nimble human collaboration, all to perfect the everyday act of working together. Unleash the potential of your team at Atlassian.com.
The world sometimes feels like making a profit comes before the environment, that profitability and social progress aren't compatible. But what if another world were possible? A world where investments could drive companies to change. This is why Amundi offers investments that allow you to help build a different world. And you, in what world do you want to invest your money and your future? Amundi, confidence must be earned.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
Trying to recover. This is Bloomberg's The Open. I'm Lisa Abramowitz in for Jonathan Farrow. A quick look at the gains that we are seeing. It's been fluctuating between gains and losses. Now up 0.4% in the NASDAQ, around the same amount on the S&P. If you take a look, there still is a bid into bonds. Perhaps that's what's supporting this, because perhaps we get some sort of near-term cap to yields. You can see the 10-year yield at 3.35%. That 2-year yield very close to it. That flattening in the yield curve, 3.3175%. I'm most focused right now actually on the European markets. Those 10-year Italian yields still near the highest levels going back to 2014. You could see the German yield also near the highs that they've seen since the pandemic. And this is what's putting pressure on the euro, although not today. We're seeing a bit of a reversal in that. Time now for the trading diary. What you need to be watching this week. President Biden discussing the economy at 11 Eastern. Then retail sales out on Wednesday, followed by a trifecta of central bank rate decisions. First up, the Fed, Chair Powell's news conference on Wednesday, the Bank of England on Thursday, and finally wrapping up the week with the Bank of Japan on Friday to address that yield curve peg. This was Countdown to the Open from New York. This is Bloomberg.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists. What has COVID done to AI initiatives in the workplace?
Massively accelerated it. I was with a CIO last week in Atlanta, and he was telling me they have Steve. And Steve apparently has gone out to win some company award.
Okay.
Steve is actually a robot, right? Like, no one knows that in the
Wait,
company.
so a robot is like employee of the month?
Yes.
This is Lenovo Late Night IT.
Today's busy world, managing money is hard. That's why I started Truebill, an app that brings your entire financial picture into focus. Truebill also saves you time and money by canceling subscriptions you no longer want and getting you lower rates on your bills. Download Truebill and start saving today.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Hi, I'm Jim Furyk. My dad Mike here has coached me my whole life.
And now I'm retiring.
Well, what?
I'm leaving you here with the pros at Club Champion. Their custom club fittings guarantee lower scores with more distance, greater accuracy, and fewer putts. Even pros like you will improve their scores instantly.
So what are you going to do now that you're retired?
Fish. Maybe a little golf.
This Father's Day, give Dad the gift of golf with a 15% bonus on Club Champion gift cards.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Tuesday, June 14th. Here are the top market stories that we're following for you at this hour. 75 is the new 50. Money markets and economists increasingly expect the Fed to hike by 75 basis points on Wednesday. Investment grade spreads start to blow out. Capitulation. Are we there yet? Liquidity dries up, crypto tanks, speculation of margin calls trigger worries of 2018. And speaking of a crisis at Coinbase, the trading platform will cut 18% of its workforce as the CEO warns of an incoming recession and a crypto winter. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, after the devastation we saw yesterday on Wall Street, it is no surprise to me that equities are higher today. I have very little conviction, though, in the follow through to this kind of buying, as we don't yet really understand what happened yesterday. We know why, but what happened?
Yeah, I think we need to get some clarity from the Fed. That needs to come tomorrow, and we'll wait and see exactly what we get. We could get 75 basis points in a pretty downbeat summary of economic projections. I think you want to pay attention to the latter. Yep, we're up by a little bit. 0.75% on the S&P. That doesn't feel very convincing. It doesn't feel like a massive turnaround Tuesday, does it? I just listen to your headlines, Alex. All pretty depressing right now. Are we there yet in terms of factoring in all the negative news, or is there further still to go? Capitulation, are we there yet? Was the précis title of Mark Cudmore's piece on the MLive a little bit earlier on. He leads that Market Live team. He's a macro strategist here at Bloomberg, and he joins me now on set. Mark, it's great to see you. Haven't seen you for a long time. It seems that you just show up at these kind of perfect moments.
Just randomly, yeah.
Let's talk a little bit about capitulation and what this feels like right now. How do I tell the difference between a capitulation point and the capitulation point?
Well, first of all, if I had the perfect answer, you know what?
I'd be a lot wealthier man if I had this exactly. But I think there are a couple of things you can tell the difference. I think one is we get lots of mini capitulation points, and that's where like a market breaks in the short term. That is the price action. That's where you can use a lot of your kind of short-term technical indicators, and you kind of say they're stretched, and we get a micro panic in one asset class. I think we've seen a kind of semblance of that in front-end rates the last couple of days, or in crypto. But I think the big capitulation is where investors give up. They're not looking to fight it. They're not looking to buy the dip. They're more about preserving capital. They're no longer greedy. They're no longer looking for an opportunity. They're scared.
It's the moment you go to the pub and your friends say, not how do I make money, but how do I not lose money?
Exactly. I think that's absolutely the way to summarize it.
Or you don't go to the pub because you don't have money to pay for it because your pint is like 20 bucks. There's that point.
It depends on your cultural background, Alex. That's quite an extreme, policy.
So, Mark, I guess also when you say, sell everything into sort of total like desperation, you also talked about some specific names. You're looking at ARK and Tesla, and I'm wondering, like, you don't really think of looking at capitulation in terms of what ARK is doing in Tesla, but like, what's your read-through on that?
So, yeah, this morning I wrote a piece specifically looking about when is the capitulation point in stocks, because that's what everyone cares about. When do we buy the dip again? And one of the things I was pointing out is that the cult of equity is not broken. I remember in 2008 and 2009, we were talking about maybe you never buy stocks again. Maybe we never see this high. Maybe this is our Japan 1989 moment where we still haven't reclaimed those highs. We're not anywhere near that. People are very much in the culture of where do we buy the dip? What are the reasons you look to buy? For me, there are a few. I think you want to see the leveraged crypto trades blow up. So I'm looking at MicroStrategy to essentially implode. I think ARK ETF to be given up. We no longer quote Cathie Woods on a daily basis. And to me, $33 is the level there. That's the lowest level we've seen in more than 4 years. That was the pandemic panic low. That's kind of an arbitrary level, but we're pretty close to that, and I kind of see that as one level. And I do think when the Tesla-Twitter deal is either renegotiated or collapses entirely, that would be another moment of kind of showing the weakness in Tesla. Now, Tesla's a great company, but it became unanchored in valuations, and I think we need some reality to return to markets.
That's the fun stuff. Let's talk about the boring stuff. What needs to happen in the bond market? What needs to happen in credit? What needs to happen with the BOJ? All of these kinds of bigger macro gorillas in the room, elephants in the room. What happens to that? What needs to happen to them for us to get to the capitulation point?
So wait a sec, that's the fun stuff. I'm a macro guy. This is far more fun than random single-name stocks. I'm just trying to, talk to the US audience here, but to me, it's the macro stuff. So bonds, I think there are two things. I think one is you need to see the terminal rate become unanchored. We started to see that in recent days, but I want us to really fear a Volcker moment. I think we're going to have, I want it to get to a point where we talk about the Fed doing several % in one meeting in a panic. And I'm not saying they'll actually do that, but I think we need to be talking about that in a serious way. And I also think we need to see the abandonment of ridiculous rate policies around the world, with the BOJ most extreme and that kind of thing. So I want them to abandon their yield curve control, which will look completely out of place when the rest of the world is hiking rates aggressively.
But Mark, I wonder, in that kind of condition, even just after yesterday, everyone's like, uh-oh, liquidity, that's a problem. There isn't any, we're starting to freak out. It's a little like 2008. In the scenario you just laid out, I can't imagine what the conversation is going to be around liquidity.
Yeah, look, liquidity is a big issue, particularly in the treasuries market. There's some pretty funny moves going on there. Look, I was off actually on Friday and Monday, but even then I was seeing remotely, people kind of messaging me going, Mark, what's going on? There's 10 basis points moves on nothing happening in the treasuries market, supposedly one of the world's most liquid markets. So I think liquidity is a bit of an issue. But ultimately what this comes down to for liquidity, the bigger one, which people on Main Street mean they complain about, and then they therefore complain to the Fed and we change policy, probably comes back to credit, which Guy referenced, is this idea is that, everyone talks about when there's a Fed put. There's no Fed put when it comes to the equity market. They do not care about the equity market falling. In fact, it helps their mandate of damping animal spirits and therefore controlling inflation. But if you do ever get a broken credit market, that's when companies stop being able to finance their debt, and that's when companies stop working. So that's what I'm working about, is when liquidity really, really goes in the credit market. Now, we're seeing credit spreads blow out at the moment. We're seeing a scare, and the liquidity is very poor. It's been very poor for some time, but we're not yet in non-functioning credit markets, and that's probably a bigger catalyst.
In all of this, the dollar is going up. I want to take you back to kind of your roots, the emerging markets. If the Fed has to talk about, if we're talking about the Fed doing what you're referencing, like multiple massive hikes, the dollar's going through the roof. Let's talk a little bit about how that ripples around the world. I'm trying to work out what breaks. Is it something in the US economy, because the Fed's doing what it's doing? Is it something in Europe because, well, hell's breaking loose here and we're dealing with wars and credit spreads blowing out and peripheral spreads blowing, or is it in the emerging market as the dollar really starts to gain traction?
I don't think it is in emerging markets, actually. I think lots of things will break. So that's ultimately, we're talking about at the start, what's the capitulation point? That's when lots of things are breaking. I actually think that the easier way to look at this is where are the most expensive valuations? Because that's where, you know, if something's already very cheap, if it breaks, if it's already damaged goods and it breaks, it doesn't matter as much. It's the thing that you think is wonderful and that people depend on that breaks. And that's why I think it will be the US. Remember, an expensive dollar is very, very tough for US companies, and that makes it very, very hard. So I think that's where a lot of the expensive valuations are, and that's where I'm thinking more of the vulnerability. Emerging markets cleaned up their external balance sheets after the taper tantrum in 2013. These are cheap currencies. They've generally got pretty good external balances. Now, obviously, emerging markets is hard to simplify as one asset class now, but generally it's not as vulnerable as it was in previous eras, and they're much farther ahead in the rate hike cycle. So I'm less worried about emerging markets. In fact, when you're trying to be positive, I actually think the ways to be positive are in emerging markets.
Well, Mark, and that's such a good point, is that whatever breaks in each crisis is different each time. We fix what we think was broken, and then something else breaks, and we have to keep on breaking it. So, to your point, where should people be hiding out in safety? I mean, do we have to be looking, though, at then emerging markets in some capacity? First of all, I think that not all stock markets are like a sell here necessarily. There's still some stock markets, particularly the US, that aren't maybe super expensive, but they're far from being cheap. And I think they will get to that cheap point in the fact that we've seen tightening of financial conditions. But there are cheap stock markets around the world. And I think like Hong Kong is a great example where, you know, it's hard to get a bullish case because it's so leveraged to the Chinese economy, and that's not a great story at the moment. But it's also hard to see much more downside given how cheap it is on however you value it. So I think places like that become a risk-reward play, and I think that's just one example. There are other emerging markets that are very much beaten down as well. So I think it's important to emphasize, I still think there's a lot more downside in the year ahead on US stocks, but I'm not particularly negative on global stocks. And on a developed market basis, Japan will probably be okay. UK will probably be okay. So some of these developed market stocks can also do okay in the coming year. Yeah, you guys are keep buying pines, so there you go. Hey, Mark, we really appreciate it. Thanks for sticking around.
That's the liquidity issue we're worried about.
Exactly. Mark, we really appreciate it. It was so good to see you, Mark Cudmore, joining us from Bloomberg. And tune into our special coverage, Fed Decides. That begins tomorrow at 1:30 p.m. New York time. So coming up, let's talk about it. Is the market ready for a 75 basis point hike? We're going to ask Jordan Jackson, JP Morgan Asset Management global market strategist, and also get his take on what he's looking at in terms of capitulation. This is Bloomberg.
Right now, we're all feeling the squeeze. You're having to get creative. Find a new way. But birthdays still happen. Fridays still call for s'mores. You have to make magic, and you're figuring out how to do that. What you don't have to figure out is where to shop. Because while you're getting creative, Walmart is doing what we always do. Keeping prices low for you every day. So you can save money and live better.
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers. Invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated platform.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your goals are ours, too. And Vanguard Retirement Tools and Advice can help you get there. That's the value of ownership.
Shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
This week is fraught with peril. Inflation is really the Achilles heel of risk markets.
Markets are reacting the way they are because they believe the Fed is going to be forced to get more aggressive than they had expected.
I certainly don't think that a 75 basis point hike is out of the question.
Even though there might be an initial sell-off on 100 basis points, I think there'd be a subsequent rally because the Fed is finally getting hold of the narrative, which it certainly has lost over the last year.
This is a time to be selective, but I wouldn't sit on my hands.
There are opportunities in areas where one can position.
Pockets of stocks that have been proven.
Europe looks good to us. China looks good to us. The credit space in the U.S. looks good to us.
Equities in general, specifically in the U.S., I'm still pretty cautious here.
It doesn't have to be all about the U.S.
Because I still think we've got some wood to chop with respect to the macro and policy outlook.
Those were some of our guests on Bloomberg Television discussing Monday's sell-off, which saw the S&P officially enter into a bear market, which takes us back to the question of the day, capitulation. Are we there yet? The S&P now up by 0.3%. Want to ask Jordan Jackson, J.P. Morgan Asset Management Global Market Strategist. Jordan, are we there yet?
I don't think so. I think we might have another, call it 5 to 10%. You know, the reality is markets don't like uncertainty. There's a lot of monetary policy uncertainty. There'll be fiscal policy uncertainty as we move towards the elections coming in November. We still is a big question mark in terms of Russia, Ukraine, China with their zero COVID tolerance policy. So many questions, so many uncertainties out there. And one of the things I'm looking for that buyer to step back into this market. We haven't really seen, when you see the selling pressure, we haven't seen that buyer step back in from a retail investor perspective, from an institutional perspective. So I feel a little more confident when we see some of those buyers start to step back into this market. But with all these uncertainties out there, I'm not quite sure where we're there yet. Okay, so at that point, if you see 5 to 10% more left, where can you still sell at this point? Like, are we going to be selling the winners here? I think so. It's going to have to be some of that rebalancing. There's been a pretty big sell-off in a lot of pockets of the market. You think about the NASDAQ, the Russell 2000 growth. The average stock in these indices are down 40 to 50%, right? And so that means from a valuation standpoint, these are much more attractive entry points now than they were just 6 months ago. So I do think you sort of sell your winners, take profits there, sort of rebalance into some of the areas that have been hardest hit, and I think that'll pay dividends over the next 12 to 18 months. Jordan, is the game here to make money or to not lose money? I think the game here is not to lose money. Again, there's a lot of uncertainty out there. The price pressures will start to feel in different parts of the market more broadly. And so I think it's not just about owning the winners, but it's about not owning the losers as well. Do you feel like the stagflation fears, so Bank of America had their fund manager survey out and said that the worries about stagflation are the highest since the financial crisis in 08. Do you feel like there are certain sectors that have accurately priced that kind of stagflation risk? Or more to go, and which sectors might they be? Not necessarily. I mean, we still see stagflation risk that's still relatively low here in the U.S. economy. Job growth remains strong. Consumer balance sheets remain robust. Even the negative first quarter GDP print, I think, really masks the still strong domestic demand that we have in the economy. And that's obviously contributing to some of the inflationary pressures that we're seeing. So we still think that it's a fairly low risk. And, you know, I'm not quite sure that markets sort of fully appreciate a bigger outsized risk of stagflation. I will say if we start to see job growth, payroll gains start to slow, maybe a tick up in some initial employment gains, if we start to see those job vacancies numbers come down in the JOLTS report as well, that'll start to, I think, more bubbling concerns of stagflation, of course, if inflation continues to remain high. But I think we'll start to look at some of those data points to really firm up our outlook on if stagflation is really an elevated risk or not. Jordan, if there's still downside in the equity market, why don't I want to be in cash? Well, cash is really, really negative, right? If you look at the real effective funds rate or cash, you're losing 8%, right, per year. So in purchasing power. So you know, I still think. But Jordan, you just told me there could be further downside in the equity market as well. So if I'm losing on both counts if I'm in the equity market. Well, you got to get two things right. You got to know when to get out and when to get back in, right? And so by sitting on cash, we can guarantee that you're going to be losing purchasing power. We don't know if there is the bottom, if we may, sort of accelerate from here once the Fed sort of clarifies what policy will look like tomorrow. They may provide some forward guidance that the markets might actually like and rally on. And we don't want to miss out on some of those rallies banking on that by sitting in cash, we know we're going to be losing purchasing power.
So if that's the case, like, where do you hide out?
Well, I think you still want broad exposure, but you got to be selective. And this is really where active management comes into play. I think the easy money has been made. This is not a market in which a rising tide lifts all ships. You really want to be having high-quality companies that can deliver on cash flows, that have high degrees of operating leverage. So that suggests that sectors like energy, materials, financials that have that high degree of operating leverage. But you've also seen a lot of these growthier names sell off pretty meaningfully. And so now you're able to get some tech shares at a reasonable price, right? Technology sector stocks at a reasonable price. And so I think you create a little bit of balance and be really selective in this market.
Jordan, how do I know if they're a reasonable price if I don't know where the Fed ultimately is going to take the terminal rate?
I think that's fair, but I think we can feel confident that the Fed probably won't go to 5%, probably won't go to 6%. They probably end sort of just shy of 4%, I would say. And that's generally where the markets are sort of coalescing around. And so I think with that sort of backdrop, you don't really spell the concern for or full-out bear market in equities from here, right? It's not going to go down another 30%. But I do think you could see some additional price pressure. But as the clouds start to lift, particularly as we look ahead towards 2023 and 2024, then you may get that late year Santa Claus rally, if you will, and markets continue to bounce back to the first half of next year.
So I feel like literally a week ago, the conversation was, is 50 the new 25? Then it really quickly changed to, is 75 the new 50? And now I feel like the conversation will become, is 100 the new 75? In terms of what the market is now expecting on Wednesday, do you feel like if the Fed needs to shock the markets more, like, are we going to have to see 100? Like, are we going to see triple-digit rate increases? Like, what are you guys modeling for the risk of that?
The Fed has to be very, very careful here. Right now, the markets are pricing in 275, so 75 tomorrow, 75 in July, followed by 250s in September and November, roughly. So effectively getting the Fed funds rate to roughly 3.5% by the end of the year. But they're fighting inflation that they don't necessarily have the right tools to combat, right? It's energy inflation, it's food inflation. We actually saw core inflation supposedly, right? We're not sure, can't call it yet, but peak out in March of this year and has continued to sort of decelerate while headline continues to move higher. So they've got to be more careful and cautious, particularly after delivering and getting rates to roughly 2.5% by the middle of this year. They've got to be cautious in what they're going to signal to the market in terms of how much or how far they're willing to go to fight this inflation that should naturally dissipate over the back half of this year and into next year, and that's particularly within energy and food.
Jordan, genuinely nice to see you in the studio. Thanks for dropping by. We really appreciate it. Jordan Jackson, JP Morgan Asset Management. Thank you very much. Still ahead, the crypto winter hits the biggest crypto exchange in the United States. Coinbase laying off 18% of its workforce. Maybe we should have seen this one coming. More next. This is Bloomberg.
Cloud. Accenture, let there be change.
Reduce carbon emissions, they say. When it comes to our planet, we need to do more. We choose positivity. We choose to change. Tomorrow now. We'll learn, we'll try, we'll do and undo whatever it takes to get there. We don't have to commit, we choose to. We choose Earth. It's up to us, and that's our biggest power, the power to choose. Do you? EDP, changing tomorrow now.
At Fidelity, your dedicated advisor will help you create a comprehensive wealth plan for your full financial picture with the right balance of risk and reward, so you can enjoy more of this. This is the planning effect.
use Constant Contact, prepare accordingly. Let's win this with email marketing and more to drive your business forward. Try it free at ConstantContact.com.
One of our other top stories of the day is Coinbase laying off 18% of its workforce, another sign of worsening crypto downturn, and it joins other crypto exchanges like Gemini and BlockFi, which have cut staff. Also, the CEO warns of an economic downturn and a crypto winter. Joining us now with more is Bloomberg's Sonali Basak. What was your biggest takeaway from the announcement? Because there was lots of interesting parts, the outlook, but also how fast that they grew, and now they're kind of paying for it, which I feel like encompasses this easy money policy era that's ending.
And on top of that, where the money comes from, Coinbase is publicly traded, right? So at the end of the day, what is the expectation of return for not just Bitcoin and crypto investors, but anyone that invested in crypto companies that are then related to this crypto downturn more largely? The other thing I would say is that remember how many people have left Wall Street to join these firms. So it does start to put pressure not just on the market itself, but also on the job market here after you've seen so much competitive pressure.
Is this good news for Wall Street or bad news for Wall Street?
You know, I've been thinking about this a lot, Guy, because just a week ago we published a story with Adina Friedman, the CEO of NASDAQ, saying one day we have the technology that exists for every asset in the world to be digital. And so you have to wonder with what's going on in crypto right now and the shakeout you're seeing, some of these projects just won't exist. A lot of these lending protocols can come under serious regulatory scrutiny. But if every asset in the world can be digitized one day, then what are the types of projects that make it through today? And I think that's where a lot of people are placing their bets. At some point, it's like any other market. When there's capitulation, the number of people who are still in the market might have some winning bets here.
But in terms of the Wall Street problem, and they were like bleeding workers and they have to be really competitive now, did those people then go back to Wall Street? And does that kind of ease the labor tension there a little bit? The other story about crypto in the last 24 hours was the liquidity issue. I read some stuff about margin loan calls, et cetera. What are you hearing on that front?
Yeah, and that story in particular is in relation to MicroStrategy because the firm's president in May said that Bitcoin needs to be cut in half to around 21,000 before we'd have a margin call. Again, they can still avoid that. I think something else that's interesting is more firms and certain specific Bitcoin lending firms have taken Bitcoin as collateral. So what does that mean when Bitcoin is plunging so aggressively? How much more do you have to post in that kind of scenario? And how much does that model continue on? Will other banks start adopting it if they can make it through this really significant downturn?
Sonali, you talk to a lot of people on Wall Street. What are you hearing? Yesterday felt like a day when liquidity pockets started to appear. We saw liquidity drying up. What are you hearing about what's going on trading desks?
I think one thing that's really interesting, Guy, because liquidity has really been the hot button issue here. Who is going to step in to make markets when the market just is so different than it was 10 years ago? Remember when Jamie Dimon had made that hurricane warning? The other thing he said at that time was that he was worried that, you know, you could see in a 2008 type forced selling issue here, and the banks aren't around this time in the same way they were in 2008. They are just different in terms of what their scope is. What I hear from investors, talking to a very large credit investor last week that was saying that the depth of the market was just very narrow. There weren't a lot of buyers by number, and a lot of them are still not ready to get in yet. They expect that spreads might widen further later this year. You're not seeing it a lot right now, partially because issuance has been down so much. So let's see if that turns out to be true.
We'll watch with interest. Sonali, thank you very much indeed. Bloomberg Sonali Basak. What's going on Wall Street? You want to know? You are Sonali. Okay, coming up, the Fed is beginning its two-day meeting. It starts today. We could see the biggest hike from the Fed since 1994. We get a decision tomorrow. We're going to get a take on that next. Megan Schweber, Bank of America, joining us next to give us a take. This is Bloomberg.
CME Group, where risk meets opportunity.
We empower those who act.
Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
I started Truebill because I hate paying for subscriptions I'm not using. Find something you no longer want? Truebill can cancel it for you.
Truebill is an all-in-one finance app that tracks and categorizes your spending and alerts you if anything needs your attention.
Download Truebill, the money app that works for you.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
Unlikely at this stage to go into a deep or long recession. It's possible we go into a recession, obviously. Probably 50-50 odds now. But that's okay.
You know, that was Morgan Stanley CEO James Gorman speaking at the Morgan Stanley US Financials Payments and CRE conference yesterday. Not completely upbeat, but certainly reasonably upbeat. Abigail Doolittle tracking the moves in the market right now. Yesterday, difficult. Today, a little easier, but it ain't over yet.
It certainly is not, Guy. And it may be easier, but it's also messy. So after that four-day slide of about 10% for the S&P 500, leaving the index in an official bear market, right now we have stocks down slightly. This after in the pre-market at one point being up as much as 1.4%. Opening higher, now lower. It's anyone's guess as to where things go because of the uncertainty around not just the economy, but of course the Fed tomorrow. You can see crude oil higher, up 2.2% after sliding. Yields coming in finally, for the most part, except for this two-year yield, it's up 2 basis points. That's probably one pressure on stocks as investors continue to worry that the Fed is behind the curve and that they may have to hike by 75 basis points as opposed to the guidance of 50 basis points. As for some of the big movers on the day, earlier, not surprisingly, lots of green when shares were higher, and we still do have some green here. Oracle up 8%, a great quarter on the cloud, along with database and licensing. Very important implications here. This is a large enterprise software company, so it points to the idea that IT budgets are still healthy. FedEx also a solid quarter, an inline quarter, but they raised their dividend by more than 50%, so investors clearly liking that. Occidental Petroleum up 5.9%, up with oil, along with some positive comments on Wall Street. However, Coinbase Global down 4.7%. This, of course, as Bitcoin is sliding, and they're talking about cutting their staff by 18% due to the economic downturn. Some are saying, though, it has more to do with that slide in Bitcoin. As for Oracle, this is very interesting to me. This is a purely technical chart. On top, Oracle, on bottom, the S&P 500 relative to the 50-day moving average. You can see how similar both of these charts are. Oracle, the individual equity, and S&P 500, the index. And something very unusual here, pointed out by Dan Curtis, our markets manager, 2 consecutive gaps down. The first time we've seen that in many years, just the 5th time in 13 years. The same thing for Oracle, but on this strong quarter, Oracle has filled those gaps, and it may actually produce an island reversal to the upside. If that is some sort of a precedent for the S&P 500, it suggests that maybe, just maybe, the Fed could provide some sort of bullish impetus for investors. We'll wait and see, but this is a very interesting chart to track. And then finally, Alex, right in your wheelhouse, natural gas, big moves here. We have natural gas here in the U.S. absolutely plunging. This on the news that Freeport LNG terminal, that they are planning on partially reopening within 90 days, offering more supply. They, of course, supply more than 20% of the supply here in the U.S. But you can see the huge difference in European natural gas. I mean, this is just wild. I don't know what you think about this, but almost trading like penny stocks here on the day.
Yeah, I think Guy's pretty screwed over there in London when it comes to paying bills to keep warm next winter. Thanks very much, Abigail. Appreciate that. All right, let's get back to the Fed here. Wall Street raising that possibility that the Fed could consider the biggest rate hike since 1994. Now, some actually are now predicting potentially a 100 basis point hike, including Wharton School of Finance professor Jeremy Siegel. He spoke yesterday on Bloomberg Television.
Even though there might be an initial sell-off on 100 basis points, I think there'd be a subsequent rally because the Fed is finally getting hold of the narrative, which it certainly has lost over the last year.
Joining us now, Megan Swiber, Bank of America Global Research U.S. Rate Strategist, joining here on set. Megan, it's great to see you. Thanks for coming in.
Thanks so much for having me, Alex.
So a week ago, it was 50 as 25, then it became 75 as 50, and is it 100 going to be the next 75? Where are you guys at for tomorrow?
So our call is for a 50 basis point rate hike tomorrow. We are, though, of course, flagging this potential for a 75 basis point hike. And really that comes in the backdrop of a very, very strong CPI print last Friday and signs that longer term inflation expectations are becoming unanchored.
What are the chances, Megan, that tomorrow the Fed also signals that the chances of a soft landing have now completely disappeared?
So I think that the Fed is likely not going to signal that, but what they will need to be giving a very strong message on here is that their priority has to be getting inflation under control. I think the fact that, again, we've seen these longer-term inflation expectations signaled by UMich 5 to 10-year survey really is the impetus for them to shift gears on this. You know, before they were kind of taking 75 out of the scope. But I think that when we see the fact that these longer-term inflation expectations are really accelerating, this is the psychology in the mindset of price makers and price takers that they really need to get a handle on here.
Mm-hmm. Well, but that's kind of the thing, is that if you have the Fed swaps price at 4% terminal rate by mid-2023, to shock the market more than that, how do they do that?
Yeah, Alex, the only way that they can really do this is by signaling that they're focusing on neutral, not in nominal terms, so not in that 2 to 3% range that they've been guiding, but in real inflation-adjusted terms. That would be a meaningful shift from them and imply that they're likely going to be thinking about a terminal rate far above that 4% level when they're thinking about it in inflation-adjusted terms.
What does, Megan, what does far above mean there?
Far above means that at least they need to get to around 50 basis points or so above the prevailing inflation rate to be in aggressive, restrictive territory. Again, they've been signaling this communication around neutral and nominal terms, so between 2 and 3% in terms of the Fed funds rate. But if they are thinking about this in real inflation-adjusted terms, they need to get around 50 basis points above the prevailing inflation rate, which we all know is extraordinarily high right now.
Yeah, I was going to say, isn't that like 8.5%?
Well, so, you know, the way that they should be thinking about this is likely in terms of where those longer-term inflation expectations are. If they see those becoming ungrounded from the 2% level that they'd like to target, they need to start thinking about this in terms of where Fed funds rates are relative to those longer-term inflation expectations.
Sorry, just to nail this down, so where do you think that number is?
So again, in terms of our core view, we have terminal rate between 3.5% and 4%. But what they would do to shock the market and would cause us to rethink our baseline forecasts is, again, if they're thinking about this in real inflation-adjusted terms.
Because it would mean they'd have to get more aggressive at the end of the day.
Exactly.
But you can't make that adjustment yet because they haven't signaled being that aggressive.
Exactly.
So they don't have to hike 100 basis points for it to stop the market. They can just talk about their terminal rate in a different way.
Exactly. It's all about how they're framing it. And as we were just discussing, really the market's already forecasting and pricing 75 basis points this week, 75 basis points in July. So the shock to the market is really going to come more from where they're thinking about the terminal rate rather than what just kind of the very near term slope will be.
In terms of where, can we just talk about sort of demand destruction and ultimately whether or not the Fed is going to have to deliver that? And judging by what you said, they probably will have to. What does that do to the labor market?
Yeah, and right now that is something that the Fed has on their mind. We see this to some extent from their communication around the FOMC minutes. Right now, though, they're very much so focused on the inflation side of the mandate. And they actually do need to see a cooling in labor. They need to see a cooling in job creation to really cause this cooling in demand and cool the more cyclical components of inflation. So to some degree, you know, taming inflationary pressures needs to come at the cost of a weaker labor market.
So part of that also is what part of the market's the Fed going to be watching? We know the Fed put in the equity market, that's dead.
Yes.
They want higher yields in the bond market, that's dead. What about the credit market? So we saw a blowout in the investment grade credit spreads. We haven't seen that in a few years now. How sensitive will they be to that? Like, I know they want to tighten financial conditions, but there's only going to be so much that they can do before they cause severe damage.
Yeah, Alex. So in our view, really, again, the Fed put is not existent right now. What the Fed is going to be very mindful of is whether or not we see market functioning deteriorate as they're tightening financial conditions here. That's something that's going to be on their radar. We haven't really gotten to the point where we're seeing that yet. That's something that we and many others on the market are very focused on and you know, communicating with the Fed on what we're seeing. But ultimately, they need to see tighter credit conditions. They need to see a cooling in borrowing in order to, again, tame those more cyclical inflationary pressures.
Where does this leave the rest of the world, do you think? And what is the feedback, Lou, from what's happening in the rest of the world? We've got the Bank of Japan this week, got the Bank of England this week, got a big speech coming up from, and I think we've got 14 ECB speakers over the next few days. What's the feedback loop between one and the other?
So, you know, having been previously at the Fed myself, I can tell you that there is, you know, a strong degree of communication across central banks. We see central banks more broadly communicating this guidance that they're going to be fighting inflationary pressures together. And I would say that that message has really been reiterated across the board. The U.S. is certainly facing more of inflation stemming from demand than what we see from other regions, which puts the pressure kind of first and foremost on the Fed to lead the way and guide how the central bank policy response is going to be for this. But if the Fed can get inflation under control here in the U.S., that's obviously going to be helpful for managing inflation globally as well.
And Megan, we really appreciate it. Thanks for coming to the studio too. Megan Swiber, Bank of America, Global Research U.S. Rate Strategist. Thank you very much. All right, coming up, the thorn in everyone's side when it comes to inflation is really about commodities and oil. Well, today we learned the billionaire founder Harold Hamm is offering to take Continental Resources private in a $25 billion deal. We all kind of knew it was going to come at some point. We just didn't know when. We're going to talk about what this means for the broader oil industry. Rebecca Babin of CIBC Private Wealth Group joins us next. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
The moment you wake up, you're on your feet. But for the 1 in 4 adults who suffer from bunions, every step may be painful. And if left untreated, bunions only get worse over time. With the old way of doing surgery, bunions often returned. Lapiplasty 3D bunion correction is changing that. Lapiplasty's innovative approach realigns your toe and secures the joint to fix the root cause. There are risks associated with surgery. Find a Lapiplasty surgeon today and learn more about the Lapiplasty procedure at lapiplasty.com.
Another crazy day? Of course.
You're a CIO in 2022, but you're ready because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want. Your team, ours, or a mix of both with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
EY World Entrepreneur of the Year is the ultimate global competition for entrepreneurs.
Welcome to EY World Entrepreneur of the Year.
This year in Monaco, crowning the 2022 winner of EY World Entrepreneur of the Year.
Gaston Taratuda.
Because one person can make a world of difference.
This is a premium, hand-selected bacon-wrapped filet mignon that's aged for tenderness and trimmed to perfection. This is a necktie. What do you think Dad wants for Father's Day? Visit omahasteaks.com/TV to order the Dads Want Steak package today for just $99.99, and we'll include 8 additional burgers free. So get him this. Not this. This. Go to omahasteaks.com/TV today because Dad deserves it. Just a little Father's Day wisdom from Omaha Steaks.
Welcome to your world, your why. What drives you? What do you want to leave behind? That's your why. It's your purpose, and we will work with you every step of the way to achieve it.
This is Bloomberg Markets. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, Mark Lasry, the Avenue Capital Management CEO, joining Bloomberg Television, 3:30 p.m. New York time. This is Bloomberg. News from around the world. Here's the first word. I'm Ritika Gupta. President Biden will travel to Saudi Arabia in July and is set to meet the country's Crown Prince Mohammed bin Salman. An administration official says the trip is meant to mend U.S. ties with a nation Biden once promised to make a pariah over its human rights abuses. The Kingdom of Saudi Arabia issued a statement saying talks will cover cybersecurity, economic investment, food and energy security, and more. Hayes Fan, a member of Bloomberg News' bureau in Beijing, was released on bail in January, according to the Chinese embassy in D.C. It's been more than 1 year since she was detained on suspicion of national security law violations. Fan's case is said to be under investigation. Bloomberg editor-in-chief John Micklethwaite said, quote, "We will continue to do everything possible to help her and her family." U.S. natural gas futures plummeted after the operator of a key Texas export terminal said it may take 90 days for a partial restart of the facility after a fire earlier this month. Gas for next month delivery in New York tumbled as much as 17%. The June 8th incident resulted in the release of LNG, which led to the ignition of gas vapor and a subsequent fire, according to Freeport LNG. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. Let's stay with the energy sector right now. Billionaire oil wildcatter Harold Hamm is offering to buy the rest of Continental that he doesn't own for about $4.3 billion and take the shale driller private. Now, in a letter to the company, he wrote that we have determined that the opportunity today is with private companies who have the freedom to operate and aren't limited by public markets, similar to the way that we operated approximately 15 years ago, prior to becoming a public entity. Let's get more insight on what this means for the overall supply picture for oil. Rebecca Babin, a CIBC Private Wealth Group senior equity trader. Rebecca, when I saw this headline cross, the first thing I thought is that Continental is going to drill a lot, and it's going to drill hard and fast if this deal goes through. On a broad basis, is that what we're learning from the private companies versus the public companies?
I think that's exactly what we're learning. We're learning that as a public company, it's not acceptable and it's not going to be rewarded to really grow production and go back to that methodology they used 15 years ago, that really, really hurt many investors for several years. He's making a choice that is uniquely different than what the rest of the group is willing to do and what investors are going to allow. And he's making that choice so that he can maximize profits right now. How that plays out in the long run, I think, is yet to be determined, but he's certainly making a bet. I would definitely just hesitate to make a read through that this means that there's going to be wide, broad-based consolidation or buy-ins across the rest of the energy sector, because I think this is a really unique leader of a company in a unique situation.
Rebecca, that's a fair point. But in the near term, he's going to make potentially more money than the rest of the group. Isn't the temptation, if others see him doing that, for this kind of thing to be replicated?
So I think the temptation is always there, and I think that there's certainly with the crude strip where it is, there's a ton of temptation. However, you have to have the access to capital, and you have to have your investor base behind you to pull that off successfully. And right now, that's not really there for the rest of the energy sector. So although the temptation is great, the repercussions and the lessons learned from previous experiences doing this, I think, are outweighing that. Even though it looks super juicy in the near term.
Yeah, and I think that's basically what Harold was referring to in that letter. Basically, like, they needed more capital 8 years ago, and the market really liked them, and now the market doesn't like them anymore, and therefore they have to go private to kind of do what they want to do. In the meantime, I should point out that we're seeing oil stocks near record highs. Like, yes, they got hit yesterday along with everything else, but on a relative basis, they're getting hit the least, and even today they're in positive territory. Exxon had a record high last week, Chevron a 52-week high before that. And I'm wondering sort of how much more juice is left in that space. And is it fundamental? Is it supply and demand? Or is it like we missed a rally somewhere and we want to get in on it now?
So it's both. Supply and demand is a huge factor. I think the structural deficit in the market has been well talked about through several sell-side analysts talking about this trend of underinvestment, limited supply, and even in the face of moderating growth, still being in a situation where crude remains very resilient. So I think that that's kind of a medium-term trend that people are comfortable with. So that aspect is there. The fundamentals of the companies remain really strong. Through this period of not growing, they've reduced their debt. They've increased free cash flow. They have become stronger entities throughout the course of the past several years. So the fundamentals are very strong. And I think the third thing you mentioned is it's still a very small percentage of the S&P. Energy is now 5% of the S&P. Again, that's up a lot from 3% maybe 6 months ago. But there's going to continue to be a chase here. And I would also highlight that when everything else is not working, and this is the only thing that is working, it's going to capture those kind of rotational trades where, hey, I need to catch up and I need to protect myself. I've got to be somewhere that's making money, and it's going to capture a little bit of that as well. So I think you have supply demand. I think you have fundamentals. I think you have technicals. It probably continues to outperform. Will there be days like yesterday where everything gets grossed down and we see energy underperform? There will, but on a net over net basis, on day over day, if you look at this 6 to 12 months out, it's likely going to be a sector that continues to do really well.
Rebecca, I hear what you're saying, and a lot of people hear what you're saying, but I still get a lot of people saying to me, I'm not investing in energy because I've missed the boat. What do you say to those people? The gains have been really strong so far. This is a sector that is held up. To Alice's point, how much juice is there still left in this trade? Where is the risk reward in this trade?
Great point. And I think that you're definitely highlighting kind of where people are at on being afraid to jump in now because they feel like the easy money's been made. I would just say the crude strip on the back end of the curve continues to rise. And these companies continue to outperform, and they can continue to grow and do very, very well over the next several years. So yes, you missed a good portion of the trade. Does that mean you should not invest even though they still look good? No, it probably means, hey, these still look good and I might have missed what happened thus far. But if fundamentals are there and the supply and demand is there, it still makes sense. Are you going to have volatility? Yes. And I think that's the key is the volatility in the crude market what keeps people away and not being able to stomach it? And I think that's where we really have to think about where things are.
Rebecca, interesting answers. Thank you very much indeed. A lot to think about. Rebecca Babbitt of CIBC Private Wealth. Thanks for your time. This is Bloomberg.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training, optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? So next time you think print, remember, when you use Vistaprint, the print abilities are endless. Get started with free shipping at Vistaprint.com.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
At Fidelity, your dedicated advisor will help you create a comprehensive wealth plan for your full financial picture with the right balance of risk and reward, so you can enjoy more of this. This is the planning effect.
Align your portfolios to a more resilient future. Introducing Bloomberg Paris-Aligned and Climate Transition Indices. The new Bloomberg benchmarks are designed to help support net zero investment strategies and to meet the EU regulatory requirements. Be part of the transition to a low-carbon economy with a family of customizable equity and fixed income climate indices. Visit Bloomberg.com/PAB.
Hong Kong is still dealing with rising COVID cases. You now have to show a negative COVID test to enter a bar or nightclub starting on Thursday. Now, outgoing leader Carrie Lam says the city's hotel quarantine has weakened the city's position as a financial hub. She spoke with Bloomberg's Stephen Engel before she leaves office on June 30th.
I'm still in the position as the chief executive, and my personal view is there is no basis and no need to change the linking exchange rate system. It has served Hong Kong well and will continue to serve Hong Kong well. The reason why we have to make such a robust response is there's always speculations and rumors who try to exploit any uncertainty in order to sort of make profit or undermine Hong Kong's stability. But I think this one thing is very, very important, because when all over the world things are very fluid and even a bit chaotic, the certainty of Hong Kong's monetary system is important not only to Hong Kong, but to our country.
Do you see signs that the United States is weaponizing the dollar, or that there could be threats if there are further sanctions against Hong Kong, threats to Hong Kong's access to the SWIFT system, like we've seen in Russia and the like?
Well, some overseas governments are totally unpredictable, so I could not comment on that, and sometimes they are totally irrational. Up till this moment, I don't understand why, being a Hong Kong as a government official defending national security of the People's Republic of China, should be sanctioned by the US government. I just don't understand, except trying to bully and intimidate us for defending our own country.
Are you still paid in cash, or have you had your banking situation remedied?
I'm telling you, the one thing is I've not been spending money in the last 2 years without a credit card, but I can survive. I can survive.
How about after you step down? You will obviously be paid a pension.
Yes.
Will that be paid in cash?
Probably. I have only a very modest pension. Yes, it's a very modest pension because I left the government too early. Yes, because as a politically appointed official 15 years ago, I I was no longer paid pension based on a civil servant's length of service. But never mind, as I have been saying, I have no property in Hong Kong, very little assets, but I enjoy serving the people of Hong Kong, and I'm sure I will enjoy my retirement.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
What's on the horizon? The answers lie beyond the roads we know. We recognize that energy demand is growing and the world needs lower carbon solutions to keep up. At Chevron, we're working to find new ways forward through investments and partnerships in innovative solutions like renewable natural gas from cow waste, hydrogen-fueled transportation, and carbon capture. We may not know just what lies ahead, but it's only human to search for it.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
I was paying for in-flight Wi-Fi for months before I finally caught it. Truebill uncovers hidden subscriptions and notifies you when a charge is upcoming. From there, you decide if you want that service. And if not, cancel it right from the app with one tap. Download Truebill, the money app that works for you.
Tuesday, the 14th of June, European stocks are down again. So much for Turnaround Tuesday. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Minutes to the close. Price action looks like this. In equities, not so much of a bounce. Stock 600 down by 0.9%. We're trading 408. We're down by nearly 4 points. So no turnaround there. Euro dollar actually fairly flat right now. I think it's Wells Fargo talking about the idea that we could see parity within a month for euro dollar. Remember, we've got a lot of ECB speakers coming up over the next few days. You may get something on fragmentation from Isabel Schnabel speaking at the Sorbonne a little bit later on this evening. And the other story that I think you want to pay attention to today, this is the Dutch gas contract. The UK contract looks fairly similar. The fact that the Freeport plant is going to be out until later this year, 90 days, so basically late this year, is when we're going to start to see exports re-emerging, LNG exports from the United States over to Europe. It's going to take a lot longer. So US nat gas down, European gas up sharply. That just adds to the stagflation concerns, Alex, that we're seeing here. We're up by 15%. Huge swings in these markets.
Yeah, none of that an easy fix for any central bank. So here in the U.S., the damage done over the last 2 days, and now we're pretty much flat. S&P up by about 0.2%. I don't want to make a ton of it, though, because it's still energy and industrials and financials that are leading the way here. It feels like energy is the place to be at this point. You sell when it's a really bad day because you got to sell what you like, but then on the good days, that's what's going to lead the way. We are seeing, though, a little bit of selling pickup in the bond market, nowhere near the last 2 days, but we had seen some buying. Now the front end is moving up again by about 2 basis points. And here's my question, Guy. You have the VIX at 32. The highest it got to yesterday and Friday during all the turmoil was 35. That still perplexes me in terms of really measuring the appropriate amount of risk in the market. Maybe it's in Bitcoin now. I don't know. It must be somewhere else because that doesn't feel like a true expression of anxiety anymore.
No, maybe this is a reflection of what's happening in the hedging market. Maybe we've all hedged. Maybe we don't want to hedge. There's all kinds of factors at play here. But yeah, you would have thought, coming back to the question of the day, capitulation, you'd be looking to see that thing in the 40s, but it ain't there yet. Let's talk a little bit about the central bank story and the data that is being plugged in right now. Britain's labour market's showing tentative signs of easing up a little bit. We got the first drop in the median wage number in almost a year. The figures adding to reasons why the Bank of England may move carefully on rates. So basically what is happening here is you've still got a super hot labour market. We are starting potentially, I'm not entirely sure what that is, we are potentially starting to see some sign that it's easing up a little bit, but nevertheless, wages and the labour market remain strong. We have clearly super high inflation. That probably puts the Bank of England in a situation where maybe it doesn't want to go 50, but maybe does want to go 25. Let me talk to somebody who's probably going to put all this a little bit better. Bloomberg's European economics correspondent, Lizzie Burden, joining us now for more. Lizzie, talk me through the data and what it means to the Bank of England.
So you've got something in this for both the doves and the hawks. On the one hand, this jobs data this morning underscores the cost of living pain because wage growth was higher than expected, so too fast for companies, but the increases were swallowed up by inflation, so too slowly were the rises for workers. On balance, the spending power of UK households has fallen the most in at least 21 years. On the other hand, though, this morning's data show that the labour market's tight, but as you say, it's easing. The unemployment rate rose unexpectedly to 3.8%. That's driven by the drop in economic inactivity. So our economists at Bloomberg Economics reckon that you'll still get a 25 basis point hike on Thursday to 1.25%. There had been a question of whether it would be 25 or 50 basis points, but the GDP figures yesterday, which showed that unexpected contraction in April, probably mean that we're going to land at 25.
Lizzie, what's the expectation once they get the 25? I mean, here we're talking about 100 now, right? Like that's the rumor that's circulating in the money markets in the U.S. Once they do the 25, like then what? Yes, they started earlier, but they're dealing with a much tougher economic environment in some ways.
Yeah, and I think the fact that the Fed's moving so much faster than the Bank of England's expected to is part of the reason, of course, there's also the B word, why the pound is struggling so much today. But the plan ahead, the expectation ahead for the Bank of England's interest rates from Bloomberg Economics is that it gets to 2% by November and then pauses. And that's because our economists reckon that's the moment when the labour market is going to feel the effects of demand slowing down, and then actually you'll take the heat out of the labour market. So that's where you get the 2% pause.
Lizzie, politics is also playing a part here. There is the possibility of retaliation from the EU as a result of what is happening with the British government's new approach to Northern Ireland. Were that to happen, how does the Bank of England adapt?
It's a difficult question because who knows whether the EU is going to retaliate with a trade war. It would be hurting itself as well as the UK. And analysts that I'm reading this morning are saying that that's really a risk for the third or fourth quarter next year, potentially the second half, so the second quarter of next year, if the bill becomes law faster than expected in the UK. Of course, that is the Bank of England's time frame, but as I say, it depends on what's happening in the labour market. And the big question in the UK labour market is, where have all the workers gone? It's about 500,000 workers. And whenever I speak to ministers or economists, policymakers at the Bank of England, you hear them say that it's because people are taking sick leave, potentially because of mental ill health or long COVID, but also you've got older workers who have dropped out of the labour force, and there's just so much uncertainty about whether people are going to work from home. So that uncertainty will need to iron out in the labour market before the Bank of England gets a grip of what it's doing in the longer run.
Lizzie, I also feel like a few weeks ago, right, didn't Andrew Bailey say, please
Meta relatively just again today. You have specs sweepers into this week's 150 puts here as it breaks low day.
Would fly when the already high wage increases that we've seen is nowhere near the kind of inflation. I mean, I feel like that I understand the idea behind it from an economic sense, and from a practical sense, that's really rough to start telling people.
Yeah, it was controversial when he first said it, and he stood by it and said it again and again. To be fair, he's also said that firms need to be careful about price rises, and he said that he's not taking a pay rise, although he's on £500,000 a year, or thereabouts. It's not a message that has been received so well in the UK, but also the Prime Minister has echoed it himself. He says he's worried about a wage price spiral in the UK, and on the political side, you've got this the struggles over the strike action, and unions saying that they're going to join in with the other unions saying that they're going to join in when you've got such a disparity between private sector wage growth and public sector wage growth. And if they can't get pay rises in the middle of a cost of living crisis in the UK, when can they? So it's a difficult question all round, but you can kind of understand the hope behind officials begging for wage restraint.
Yeah, maybe Andrew Bailey can siphon off some of that to other people. Lizzie, hey, thanks a lot. We really appreciate it. Bloomberg's Lizzie Burden joining us there. So coming up next, we're going to get the market reaction into the BOE, the Fed, as well as the BOJ later this week. Vasilios Giannakis, Citigroup Global Head, Markets Head of European FX Strategy, will join us. And as we head to break, you were looking at President Biden delivering remarks to the AFL-CIO on the state of the labor market. And you can watch that speech by running live. Go on the Bloomberg. We'll also update you on any relevant headlines as they cross. This is Bloomberg.
Away in a short time. Do you remember when our economy
grade of HPE today at a competitor? Would you allow that there are some things in corporate America that are
great champion? Jobs, the last guy. In fact, so many Americans lost their jobs that my predecessor became just the second president in history.
Ooh, red box. Big drop there, sub 10.
CME Group, where risk meets
EPTN
opportunity.
Septon halted on a circuit breaker. Charlie Papa Tango November. At the highs, CPTN.
We empower those who act.
Up 51%.
Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's
3,000 Americans are dying.
Constant assessment.
FSR Fisker CEO said we are seeing sort of the end of the supply chain crisis.
Where risk meets opportunity.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction. All done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try.
UMC, United Microelectronics, the October 7.5 put at the bid, 10,000 contracts that uniform
Louis Vuitton, Hermes, Cartier, Tiffany, and more. All up to 90% off retail. They drop thousands of one-of-a-kind finds every day.
So I can change up my look as much as I want.
It's the sustainable way to shop luxury. Find your real.
Hundreds of luxury brands, up to 90% off retail, only at The Real Real. Shop now and get 20% off at therealreal.com. Terms apply.
Reduce carbon emissions, they say. When it comes to our planet, we need to do more. We choose positivity. We choose to change. tomorrow now. We'll learn, we'll try, we'll do and undo whatever it takes to get there. We don't have to commit, we choose to. We choose Earth. It's up to us, and that's our biggest power, the power to choose. Do you? EDP, changing tomorrow now.
The Fed says a 50 basis point hike is coming.
The Fed is telling the markets what it wants them to do.
But could it be 75?
We are looking at the possibility of a 75 basis point rate hike.
Some big questions about the next move, the one after that, and ultimately the destination.
Trust Bloomberg for the fastest coverage and exclusive analysis.
The press conference live. McKee in there. It'll be interesting.
Bloomberg surveillance. The Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
Let's talk about where we are with the pound. We were just referencing the data just a moment ago with Lizzie Burden. Let's talk about where we are with cable. 120, almost on the nose right now. 120.01. Remember, the flash crash took us down into the kind of 118 area. Are we going to get back down to those kinds of levels? How much further could we go? Let's try and answer those questions. Vasilios Giannakis, Citi's head of global FX, Citi's head of European FX.
So Sunny is P somewhat, but you're right. You're right. Not a lot of volume for a good reason. Technically,
right now, what's the
I'm watching this,
but cable could go to 115 or even below that. I mean,
normally will dry up as you approach an area of support or resistance. In this case, you can see right here it is, although it is right there at pattern or a little north of pattern resistance.
Second, if
it's
you look
right
at the
there
economy,
below VWAP and, well, pretty much you got three moving averages right there. VWAP 377 and the 200. So you've got a considerable amount of resistance intraday right there between 1744 and 1751.
You have
not saying that it can't get through there, but
now at the lowest,
it makes sense as far as why volume is dropping off as it approaches resistance. So this would be a situation where I would be very careful because at this point, UVXY's got a decision. Either it's going to, move up through that resistance, and we're going to get further downside in the market, or it's going to fall back in this pattern. But right now is not a time where I think it's advantageous to take any position short because of that setup right there.
Yeah, absolutely. I think that's a very good question, Alex. I think, look, the best way to look at it is look at Euro FSR Fisker CEO says work with a supplier to redesign a part to use a different chip that wasn't in short supply. That's Dr. Sandy Romeo.
Euro sterling is going to rise towards 90 or even a bit higher. And that's largely because, again, in terms of
CPTN shares resumed trading now after a circuit breaker halt, probably topic annual November.
Compared to the Eurozone economy. So if you want to talk about
CPTN hitting $1.30 to 1.84 at the high of 67%.
I would say that about 56% of that is definitely due to the strong dollar, and the rest of it is due to the idiosyncratic UK negative story.
Well, Alex brings up the dollar, so let's talk about it. Yeah. Is 75 bips now priced from the Fed tomorrow?
Well, it looks like we have moved towards that. So the market is being aggressively positioned for tomorrow and potentially for future meetings. So obviously, from a tactical perspective, as you go to the meeting, the risk now is to the other side, that the Fed actually doesn't sound as hawkish as the market is pricing in. But that's all purely from a short-term perspective and tactical. I think big picture, the Fed will have to deliver. It remains a big question, is it going to be as aggressive as the market is pricing, but I think over the next few months, you still see upside in nominal yields, still see upside in real yields, and upside in dollar.
And then on the flip side, though, economists are starting then to bet in 2024 rate cuts, because the harder you go now, the more pain you're going to feel later. That's the idea. So where are we in the dollar smile then in relation to that?
Well, I think right now we're in an environment where the market is pricing an aggressive Fed, and at the same time, global growth has been re-rated lower. So I think we are potentially close to one of the extreme. I suspect that potentially later in the second half of this year, potentially Q4 or even as we move into 2023, we start moving somewhere in the middle, at which point, you get some depreciation in the dollar, but we're not there definitely yet.
But let's just talk, let's just dig into that a little bit. If the Fed comes out tomorrow and signals that it is willing to accept some labour market softness in order to get inflation back under control, i.e. deliver some demand destruction, i.e. the US economy is probably heading for not a softish landing, but something a little bit more. Is that dollar negative or dollar positive?
I think at the beginning it's going to be dollar positive for two reasons. One, because it won't be perceived good by risk assets. And through the negative correlation, the safe haven status, you're going to see equity price declines, other risk assets declining, and therefore flows into the dollar. And the second thing is that if the US economy is heading for a hard landing, then so is the global economy. Yep. So, I mean, I've said this many times, the Fed is one aspect of the game. The other aspect is global growth. If global growth expectations are re-rated lower, this is going to be good for the dollar. If they're rated higher, this is going to be bad for the dollar.
I hear you on that. I just wonder that at the point where then we get worried about a U.S. recession, does the dollar then turn? And in essence, is it the only thing that can wind up supporting the yen at this point? I mean, eventually we see more of a safety bid into the yen sometime?
I think that's right to the extent that a potential U.S. recession or the pricing in of U.S. recession starts putting downward pressure on commodity prices and on oil prices. Because remember, another piece of the puzzle is oil prices. And what's happening here is that the yen has had no correlation with risk assets this year, and it has been driven by higher U.S. yields, but also the additional factor being Japan, a net importer of oil. It has basically put an additional pressure on the yen, and it hasn't acted as a safe haven. I think what you're suggesting is feasible and certainly possible, but I think it's a story that will be a bit later on. It's not going to play out immediately as the Fed starts being more aggressive on the hiking cycle.
Is the BOJ's yield curve control untenable at this point?
Well, so far they have managed to cap the 25.
Can they carry on?
I think that's a very good question. I think they can certainly carry on for a little bit, but I think at some point they're going to start loosening because they're going to realize that it's becoming increasingly more difficult to control yields.
And how does the yen react then?
I think, well, it will depend on how they actually move away from the yield curve control. If they do it in one go, if they say we abandon it, I can certainly see dollar-yen tanking. And potentially we can drop between 7 to 10 big figures lower in dollar-yen. If they do it in steps, meaning that we go from 25 basis points to 40, then of course the market is going to start pricing that in. I think dollar-yen will be a lot driven also by what's happening in U.S. yields, but I think eventually if we look, let's take, for example, Switzerland. In Switzerland, where we have negative rates, right? Yep. We have the 10-year of 1.3%. So if the market starts pricing that this is where the 10-year in Japan is heading, roughly these levels, 100 basis points. Yeah. I mean, if you get 100 basis points move upwards in Japanese 10-year, that is going to imply dollar-yen based on current correlations to around 125.
Oh, okay. Hey, Vasilios, we can't let you go without asking you about the euro. Wells Fargo coming out with a parity view for euro dollar. Spreads keep blowing out. What's your call right now?
So, to be honest with you, I've never been a big fan of parity in the sense that I don't think it's anything special other than a round number. I think right now, look, euro-dollar downside pressures persist because we have the fragmentation risks. The ECB, very hawkish on rates, but completely failed to address the issue of fragmentation. And personally, I think this is one of the things that I underestimated. I think until at least we get some credible solution of the fragmentation issue, I think the path of least resistance remains for some further downside in euro-dollar.
Always great to see you. Thanks for stopping by. Thanks for coming to see us, more importantly. We really appreciate it. Vasilios Giannakis of Citi, thank you very much indeed. Right, we're coming up against the equity market close. Credit Suisse hitting another fresh record low today. This after a Barclays analyst said the bank is under funding pressure. Maybe a capital raise is coming. We'll talk about that next. This is Bloomberg.
You'll always remember buying your first car and buying your starter home, or whatever this is.
But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. We believe that your investments should work harder for the future you imagine. And that's where our strategic investing approach can help. T. Rowe Price. Invest with confidence.
At Southern New Hampshire University, you can finish your degree faster and for less money. Transfer up to 90 college credits toward your bachelor's degree.
I was able to transfer a lot of my credits, and it made it easier for me knowing that I don't have to start all over again.
Definitely lowered the cost by being able to transfer those credits in.
Get more transfer credits, pay less tuition. Now that's something to celebrate. Next term starts soon. Visit snhu.edu.
100flowers.com just made my birthday. I can't stop smiling. Wow, it's so cute. And there's berries too? Hello. How can you compete with flowers?
It's like a whole garden, just for me.
Best birthday ever.
Thanks, 1-800-Flowers.
CDW. We get if your network power goes down, your business goes with it.
Thanks for calling. We are unexpectedly closed today.
CDW experts can keep you up and running with an APC SmartUps lithium-ion UPS from Schneider Electric. It offers cloud-enabled remote monitoring and 3 times the battery life, so you can get the performance and certainty you need to stay open for business. For resiliency at the edge, trust Schneider Electric and IT orchestration by CDW. People who get it.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
So another bumpy session for Credit Suisse today. The bank seeing its stock dropping earlier in the day to fresh lows. This after Barclays came out with a note effectively saying that the Swiss lender is suffering from funding pressures and probably is going to have to raise money. Joining us now, Tom Metcalf. He leads the team covering finance here in the UK and in the Middle East. Let's talk about what the Barclays analyst said and talk about what we're seeing at Credit Suisse. How near to the mark is the Barclays note? What is the financial position of Credit Suisse right now?
Yeah, the Barclays note, very interesting, because this has kind of been the question on everyone's lips. Shareholders do not want to have to go through another kind of equity raise if they can absolutely avoid it. So certainly Credit Suisse is not signalling at all that it needs this yet. But if you do run the numbers as the Barclays analyst has, it does look like they're getting closer to it. You know, we're talking, you know, the billions, you know, a few billion, and then they'll be starting to hit a level where regulatory-wise they might actually need to do this. So as we were saying in the break, it all kind of looks towards what happens next, right? Can Credit Suisse get a handle on this? Can they sort of reassure the market? But, I mean, you look at that share price, and that's just a painful, painful ride for them.
Yeah, Tom, you know, can they reassure markets? The stock market right now is telling you no. Investors are saying, no, you can't reassure us right now. So what would Credit Suisse have to do to quickly shore up the cash position or at least the equity price?
Yeah, it's a tough spot, right? I think from that story they're saying it's the lowest since Bloomberg started recording Credit Suisse shares in 1989, so extraordinarily low performance. And I think that's the trouble, right? You know, you need to build that trust with investors, that trust with the markets, which effectively requires time, right? They need to show quarter after quarter that there's no more nasty surprises, no more skeletons in the closet. So there's probably no easy way to do that, and it's just trickier as well with the sort of the difficult macro environment. So, you know, interesting to see what their next set of results bring. If that can kind of be a bit of a rebound, then there's probably a very different story they can start to tell.
Is Deutsche Bank the best comparison?
Yeah, I mean, it's certainly in terms of the time it took Deutsche to get back to where they are now is extraordinary. And if Credit Suisse
from a reputational point of view.
Yeah, exactly. Like, you know, they really went through a tough patch, you know, and this is what people now still say, oh, Credit Suisse, is that the new Deutsche Bank? Which shows how long those kind of sort of sentiments stick around in people's minds. So I think the message from Deutsche Bank is this is a long journey back for Credit Suisse, and that's obviously very bad news for the shareholders.
Yeah, it also feels like the message from Deutsche Bank would be Thomas Gottstein might not stay in that role. Any word on that yet?
No, it's still very much, you know, kind of everyone's favourite topic, but not much has changed there. You know, it's a difficult position he's in, but so far, at least institutionally wise, in terms of Credit Suisse, and we heard David Herro actually come out a few days ago and said he does currently back Credit Suisse's board, while he left himself quite a bit of wiggle room as well to say, hey, if they don't sort it out, then I'm open to changes.
Tom, great stuff. Thank you very much indeed. Bloomberg's Tom Metcalf on what is happening over at Credit Suisse, or not happening over at Credit Suisse. Let's take a look at what is happening with the European equity market as we head into the close. Turnaround Tuesday? Well, not so much. These are the numbers that we're looking at as we come through into the close. FTSE 100 largely being rescued by some of the commodity stocks. The DAX, though, is down by 0.7% today. The CAC 40 down another 0.9%. We're also watching very carefully what is happening in the currency market and in the commodity markets as well. The pound flirting with 120 as we come through to the end of the day here in Europe. A big spike higher in gas prices this after we see the LNG plant that has been outed recently likely to remain so for around 90 days. Its outage is going to continue. All of that contributing to the picture you see on the screen. The close is next. This is Bloomberg.
In a global economy, there are countless moving parts. If you want to grow, you've got to know. Vertex, cloud-powered tax tech that enables frictionless transactions, invoicing, and payments. Companies who know, go with Vertex.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, oh, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Last year, more homes canceled cable TV than ever before. Why? It's just too expensive. For half the price of cable, you can get Fubo TV and watch the live sports and TV you love. Try free at FuboTV.com.
4% of people have subscriptions they've forgotten about. Truebill helps you save money by finding recurring charges, notifying you when they're due, and easily canceling unwanted subscriptions. Download Truebill and take control of your money.
I'm embarrassed to admit it, but I can't tell you the last time I looked at my credit card statement. Hi, I'm Yaya, founder of Truebill, a simple app to help you stay on top of your spending, save money, and make sense of your finances. It's an automated accountant for busy people. Download Truebill today.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
No turnaround Tuesday for European stocks. This is the picture that we see right now. This is the map, as you can see. CAC 40 is being hit the hardest today. We'll come on to the reasons why in just a moment. The DAX is down by 0.8%. The FTSE 100 faring a little bit better. Some of the UK banks are doing okay today. Some of the energy stocks are doing okay today. Nevertheless, the market is in negative territory right now. So that's the picture from the main markets point of view here in Europe. Let's talk about how the session has developed and give you an idea of where we've been and where we are. So an initial sell-off, unsurprising, given the fact that we did see that late sell-off in the States. We priced that in, but then we didn't bounce. We've been basically bumping along the bottom here in Europe. There's been no clear conviction to take these markets higher. So an initial price in of the US late trade, and then no real move to the upside, which is a little concerning. 407 spot 65. We're down by around 1.2% on the Stock 600. Let's break it down from a sector point of view, just give you an idea of what is happening there. As I say, banks and energy, two areas where we have been seeing some strength today. Banks up by 1.7%. The energy sector up by 1.44%. Insurance up a little bit. Bottom end of the market. Construction's down, media's down, utilities down, retail's down, food and beverages down. Actually, some of the safer end of the market suffering a little bit more today in this market, but nevertheless, only 3 sectors in positive territory. Let's talk about why we're seeing some of the banks doing better. Some actually fairly positive comments coming through from Standard Chartered today on trading. And that's certainly being taken quite well by the markets. The Standard Chartered up by 4.11%. Not so for Credit Suisse. We've just been talking about it with Tom Metcalf. That stock actually off its lows today, down by 1.1%. A Barclays note talking about a potential capital raise. We've been here before, haven't we? The market unlikely to be treating that kind of news fairly well, so that stock dropping. And then we come to the reason why the French market is underperforming today. Atos, down by 22.37%. Ouch, that is a big hit that we are seeing right now. So the company's CEO, he's only been in post 6 months, departing, a new reconstruction plan for the company, splitting the business in two. That's likely to be expensive. And again, does that require more capital coming from shareholders? How is this all going to be done? So many questions, Alex, surrounding this whole story. And the market definitely shooting first and asking questions later. As I say, the stock down by 22% coming into the close.
Yeah, exactly. So let's get more on Atos. We're welcoming now Bloomberg's Benoit Berthelot from Paris. Benoit, why was this all announced today? And is there anything significant we really need to take away?
Yeah, so Atos is this big IT services company based in Paris, but with 100K employees worldwide. And they basically announced today, the board announced that they would split the company in two, keeping the part that's not going so well, will be going on under the name Atos, and spinning off the part that's doing well, that includes cybersecurity and cloud services. It's going to be renamed and listed in Paris next year. But the restructuring of the part that's not going well is going to cost a lot of money, 1.6 billion euros. And the very unusual part indeed is that the fact that the CEO, Rodolphe Belmer, who was just appointed in January this year, he announced he's going to leave the company in 3 months from now. He said basically there is no room for me between the two co-deputy CEOs that were nominated today. So I don't see why I would stay in the company, and that has been badly received by the markets and by analysts like Odo, saying that the guy who designed the turnaround plan is actually leaving without going through with this plan. So that explains what we've seen in the markets today.
Benoit, is this being taken as a sign that he doesn't have confidence in the plan, or that the plan is not a good plan? I'm curious as to why we're seeing such a big reaction based on his departure, if he says that there is no role for him in the new split business. If the company is going into two, it's going to have 2 separate CEOs. He will make that happen, and then there's no role for him.
Exactly. There has been investors today, was Capital Markets Day in Paris for Atos, and there was an investor saying you could have stayed 1 more year to actually see this transformation and help to achieve it. But he said that it was really bad to have the guy from the past and the guys that are going to lead the company in the future at the same time, and it wouldn't impose this to them, and thus he really said that it was his decision to quit the companies. But there are also strategic issues behind this, with Atos obviously being the target because of this low valuation of takeover interest. Bloomberg reported in February that Thales, the French defense company, has been teaming up with private equity for maybe a takeover of Atos, Thales being interested in that cybersecurity part. And there has been a report that there was disagreements between the board and the CEO on these strategic issues. He's saying in the end that it was his plan to split the company in two, but clearly it was not the best option for Atos to see him leave now, and there has been debate as of when he would leave.
Yeah, you can definitely see that, obviously, in the share price. Benoit, just quickly before we go, do they have enough money to make all this happen? Are we going to have to see an equity capital raise?
So exactly, they're going to have to finance this plan. Only the restructuring is going to cost more than 1 billion for the old French IT, the legacy part of the company. So they're going to have to raise money. They're going to sell assets too, like non-core assets. They are looking to sell their unified communication unit. They also announced yesterday they would sell their stake in Worldline that brought about 200 million euros. But it's obviously a question for the investors as of, is it going to be easy to raise this money in the coming months?
Benoit, really interesting, some great coverage today from Bloomberg. Thank you very much indeed for bringing it to us. Benoit Berthelot joining us from Paris. Let's check the European equity markets have finished the day. Just rolling over into the close, a little tick lower during the auction. These are the final numbers. London outperforming a little bit. Some UK banks doing a little bit better today. We've also seen some of the oil stocks bouncing back after yesterday's big move. Still down by 0.2%. The DAX down by circa 0.9%. But the CAC 40 with that Atos story weighing on it, down by 1.2% today. A big underperformance coming through there. A single stock largely responsible. Tune into The Cable Show. Alex and myself, 5 p.m. here in London. We're on DAB Digital Radio. You can also find us, of course, on all of your Bloomberg devices. The podcast available on iTunes and Spotify. This is Bloomberg.
Bloomberg Television is brought to you by Bank of America. What would you like the power to do?
What do you think healthier looks like? CVS can help you support your nutrition, sleep, immune system, energy, even skin. So healthier can look a lot like you. CVS, healthier happens together.
Them dimebacks are mighty poisonous. We should get you to a doctor.
Real cattle herd don't need no doctor. Let's drive this herd.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that? And that. And that. And that menu. And that's embroidery. But yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the printabilities are endless. Get started with free shipping at Vistaprint.com.
Teamwork. It's complicated. 29% of workers now belong to 10 or more cross-functional teams. Half of workers connect with 50 or more colleagues in a typical day. And the average worker spends half their day collaborating with departments other than their own.
That's why we created Atlas, the first teamwork directory to connect the dots across teams, their tools, and their work, wherever it happens. Because teamwork doesn't need to be complicated.
It's a mixed-up world, and the way we work looks a little different. But whether you embrace the new normal or just want to get back to the routines that feel right, X-Chair continues to be at the forefront of change, which is why we've launched the all-new X-Chair with Elemax. Elemax combines gentle body temperature regulation with stress-melting massage to increase your comfort working from home or at the office. Feel more refreshed in seconds with dual fans that actively deliver a cooling airflow. Or you can wrap your back in the soothing warmth of heat therapy and access 4 combinations of massage for deep relief from tension. Our patented dynamic variable lumbar support and SciFloat Infinite Recline technology remain unchanged. Order an X-Chair with Elemax today. Use code TV and get $50 off plus a free footrest. Hey, change happened, and we've made it a good thing with all-new Elemax from X-Chair. Now the future feels better than ever before. Order X-Chair with Elemax today. Use code TV and get $50 off plus a free footrest.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
This is Bloomberg Markets, the European close. I'm Rishika Gupta, and you're looking at a live shot of the principal room. Coming up, Brenda O'Connor, UBS financial advisor, joining Bloomberg Television, 3:30 p.m. New York time. This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. Hayes Ban, a member of Bloomberg News' bureau in Beijing, was released on bail in January, according to the Chinese embassy in D.C. It's been more than 1 year since she was detained on suspicion of national security law violations. Ban's case is said to be under investigation. Bloomberg editor-in-chief John Micklethwaite said, quote, "We will continue to do everything possible to help her and her family." Media rights for the Indian Premier League were reportedly sold for $6.2 billion. Businesses are competing for subscribers in a nation where cricket is popular. A venture between Reliance and Paramount Global won digital streaming rights for the Indian subcontinent, whilst Disney got TV rights. For the first time ever, streaming rights topped traditional broadcast bids. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Ritika, thank you very much indeed. Cricket is popular in this country as well, particularly this latest test match. Anyway, we'll park that for the moment. OK, let's talk about President Biden's trip to the Middle East. It's now been announced that he is going to Saudi Arabia. Bloomberg's Washington correspondent Anne-Marie Hordern joins us now. Anne-Marie, a lot of people pricked up their ears in the oil market when this news came out. My question to you is, will this trip deliver more oil? Can this trip deliver more oil?
I think there's probably an expectation that the Saudis will lean a little bit more into Washington's needs over, say, that of other members of the group when the president does touch down in Riyadh. I think you saw a window opening of that at the last OPEC meeting. The Saudis really carefully thread this needle between making sure that Russia, part of OPEC Plus, will sign on to this agreement, but at the same time, for the first time since the White House has been asking since August of 2021 to pump more oil, that they have finally acquiesced and heeded those calls. So that was really an olive branch and a first step. The issue is how much spare capacity and how much could Saudi really deliver. Right now, they're pumping around 10.5. To get to 12 is the most they've ever done, and they've only done it for 3 weeks. So while more oil is certainly needed, that's only one part of the problem. It's also a spare capacity part of the problem right now for refining capacity. Will going to Saudi Arabia fix $5 a gallon of gasoline? Not quite yet.
Yeah. And Anne-Marie, I mean, I think that that's a good point about the 3 million barrels, 12 million barrels a day for 3 months. And it feels like it's optics versus reality. For weeks, excuse me. It's optics versus reality, right? Does it matter if the Saudis can't actually deliver that? Because even if they could, it necessarily wouldn't help the prices at the pump. But the optics of what Biden wants to accomplish during this meet.
Well, when you look at the oil market, if the Saudis were to go to their all-out maximum capacity, and they consider themselves the central bankers of oil. They have this spare capacity along with Abu Dhabi, the Emiratis. The issue then becomes if you have everyone pumping at max, prices may actually rise because people will look at the market and say, we have nothing left in the tank. Where can we turn when potentially there's more demand in China, et cetera? That's one part of the issue. The second, of course, is the fact that when gasoline prices right now, so much of this is refining capacity, and the spare capacity for that is in China. We should also note that, yes, energy is going to be a major part of this trip, but the White House and the Saudis have made it clear that there are other deliverables when it comes to food security, when it comes to discussions of regional security and defense in the region, things like climate, space. There's a number of issues that the Saudis have laid out when they wanted to communicate and welcome their visit from the President of the United States.
Yeah, but you know, energy is the coolest part. All right, Anne-Marie, thanks a lot.
Probably the most important.
Bloomberg's Anne-Marie Hordern joining us there, which then puts the burden back, Guy, on U.S. producers. We have the actual capacity to get more out of the ground, but maybe not the will. And I thought that's why it was so interesting that Harold Hamm is now going to try and take Continental private. It went public before the crisis last time because they wanted to take advantage of a lot of free money out there to pump as much as they could in the Bakken. That's now changed. Investors don't want those companies to do that.
No, they don't. And in some way, he's relying on that. If everybody was to do what he was doing and we would see everybody pumping, then that would have a material impact on the oil price. This is probably where the few real reserves lie globally, and the capacity to get them out of the ground probably still does exist. But as you say, the financial imperative isn't there. And if everybody was to do what he was doing, I think Harold's plan wouldn't work. But if everybody doesn't do what he's doing, then the plan might actually deliver some returns for him. So there's a kind of tragedy of the commons kind of argument here. Maybe not tragedy of the commons, prisoner's dilemma kind of story developing here in terms of the game theory around all of this. So it's fascinating to see what's going to happen.
Yeah.
He's taking advantage of a market, a public market that doesn't want to see more oil being pumped in the United States.
No, exactly. But then again, even if he could pump as much as he wanted today, there's issues like frac crews, transportation, sand. There's tons of issues on that level as well. So Guy and I spoke earlier to Rebecca Babin. She's CIBC Private Wealth Group, a senior equity trader, and we talked about that idea of Continental going private and what it means.
I think that there's certainly with the crude strip where it is, there's a ton of temptation. However, you have to have the access to capital and you have to have your investor base behind you to pull that off successfully. And right now, that's not really there for the rest of the energy sector. So although the temptation is great, the repercussions and the lessons learned from previous experiences doing this, I think, are outweighing that.
That was an interesting conversation. Let's go from Rebecca to our next guest, Fiona Baum, the head of commodities, joining us now from S&P Dow Jones Indices. Thank you for joining us on set. So it's interesting. What we've got there is a compare and contrast. We're talking about the Saudis. How much spare capacity do they have? Maybe not so much, actually. Trying to pump at elevated levels for an extended period of time is not something they've really been able to do in the past. You look at what's happening in the States and what Harold Hamm's doing at Continental. Yes, there's the capacity in the States to maybe produce more oil, and maybe that's where the reserves ultimately lie, but there isn't the financial incentive to do so. So where does that leave us?
Leaves us in a bit of a pickle. You know, we've got to try and find maybe 1.5 million barrels a day of Russian oil. And as you said, you know, the Saudis maybe can take some of that, although I would caution, you know, their words versus their actions.
Yep.
They may, you know, be interested in saying that they're willing to pump, but on the other side, they've already raised prices into Asia into July, so not sure whether that tells you that they will pump eventually. And as you said, the cash is just not there in the US. The public markets are not willing to support new drilling. It leaves us in a really difficult spot.
Yeah.
Yeah, Fiona, if you take a look at the curve, I mean, just if you go back to 6 months ago, it's staggering what's happened to the oil curve. And I'm wondering if you think this oil curve stays in this intense backwardation where today prices are super high, but the whole curve is also re-rating up. Can energy keep doing that? Can it keep outperforming in that sense?
You know, if we look historically, we don't see periods of sort of super backwardation lasting for all that long. And you'd have to think that at some point we will see a demand reaction to, you know, oil with three figures, whether that's 120 or 150, we'll have to wait and see. But we know that these type of structures in the curve don't tend to last for very long.
Let's talk about another aspect of this market. And that is what is happening with refining. None of us use barrels of oil. Very few of us use barrels of oil, but we do use refined products that come out of refineries. And if we think we're short of barrels of oil, we're really short of refineries right now. Even if we produced more oil, even if we had more oil, do we have the capacity to turn it into gasoline and diesel and all the things that we need right now?
The short answer to that is no. And, you know, that's the biggest constraint. We could see another 1 million barrels a day of oil come online, but if there's nowhere to put it and nothing to do with it, we're not solving the problem of $5 a gallon gasoline.
Yep.
And we just haven't seen the investment in this type of infrastructure because it's been untrendy to be in the energy space, and for a lot of good reasons. But the public markets just are not interested in this type of capital investment.
So we are seeing, though, investors buy into oil stocks now. Do you think that oil stocks can continue higher if oil prices just stay around 120?
The performance of the oil stocks really depends on the hedging strategies of the individual companies. And I can't comment directly on those, but, you know, if they haven't hedged and they're enjoying the fruits of oil at 120, then, you know, then they may have some room to run. But it really depends on how they've hedged and what their long-term view is of oil prices and what their bankers think of oil prices as well.
But let's talk about another aspect of it. Oil's priced in dollars, the dollar's going up. If the dollar continues to go up, what happens?
Yeah, I think that's where you start seeing the demand hit. I think, you know, particularly in those poorer countries that are oil importers, you know, we will start to see demand get hit when they're having to pay for oil in dollars.
You're head of commodities for S&P Dow Jones, and I'm just curious as to what commodity is going to perform the best and the worst in the back half of the year.
I think energy and food are the commodities that we get asked the most about. Their moves to date have been largely related, whether that's due to ongoing supply constraints post-COVID, or more recently the war in Ukraine, which is traditionally the breadbasket of Europe. So they're the commodities that we get asked the most about, and I would think that that will continue into the second half of the year.
Can I just ask you before I let you go about gold? In theory, a rising dollar and rising yields should be bad for gold. Gold's down a little bit. It ain't down a lot. What's going on?
Yeah, it's been a really interesting one. I mean, traditionally, gold's been a pretty attractive inflation hedge, and this time around, it just hasn't worked. Now, is that to do with what we're seeing happening in crypto markets? That's a new entrant that we haven't seen in previous cycles. Is that just because it's non-yielding? Or is there something more fundamental going on with our sort of love affair with gold that's lasted for thousands of years? And, maybe
that is the store of value and it's not Bitcoin.
Maybe.
1,000 million gold bugs just cried as you said that. Fiona, thanks a lot. Fiona Bull, the head of commodities at S&P Dow Jones Indices, joining us there. This is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
Welcome to your world, your why. What drives you? What do you want to leave behind? That's your why. It's your purpose, and we will work with you every step of the way to achieve it.
Do you know how much your broker charges on margin loans? On a $100,000 margin loan, Interactive Brokers charges just 2.33%. Fidelity and Schwab charge over 3 times as much. E-Trade or TD Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
All right, sell-off really picking up now in the bond market, starting over in Europe and here in the U.S. Now we're up by about 7 more basis points on the 10-year. Abigail Doolittle is tracking those moves within the equity market. Abigail?
Yeah, Alex, we're waiting on the Fed. That seems to be the theme for both stocks and bonds, and now traders pricing in not just 75 bips for tomorrow's meeting, but for July's meeting as well. That has the S&P 500 moving up and down. Right now, down ever so slightly, down by about 0.1%. The VIX, or the fear index, gauging uncertainty, it's down, so it tells you that we don't know at the end of the day what way this is going to go. Anything seems possible. The 2-year break even, this is interesting, a forward-looking gauge of inflation. It has come in. That said, 2 years out, 4.29%. So really pretty incredible there. And then finally, when we take a look at natural gas, this is not intuitive to me, but down 15.7% on the delay of that Freeport
really
LNG
nice continuation in buying there from that sweeper. Just had a big push to higher.
Now, this is very interesting because this is a corporate CDX or a basket of CDX UBS. You can see blowing wide back in 2020 and then basically signaling calm. When it goes out, it's basically insurance against default. You can see it has gone sharply higher on yesterday's stock sell-off, almost at 100 basis points. So this suggests that credit investors are now a little bit more worried about the cycle, so to speak. As for some of the individual movers, these are incredible losses, Guy. Over the last week, we have the travel sector basically imploding, whether it's inflation fears, the idea that folks won't, traders are worried that folks won't travel, the rise in oil. It is really pretty incredible, this sell-off that we've had for the travel sector. That reopening trade simply not working right now, Guy.
Abigail, thank you very much indeed. You get the gas, we don't. UK net gas up by 28%. Here's what we're watching for the next 24 hours. A little bit later on today, ECB's Elizabeth Schnabel is going to speak at the Sorbonne. She's going to talk about fragmentation. Pay attention to that. Primaries in Maine, in Nevada, in North Dakota, and Alex, in South Carolina.
Yep, and then tomorrow we also get that Fed decision and Jay Powell's news conference. That's the main event. Plus, Christine Lagarde is going to speak in London. We get CPI, France and Germany, plus some retail sales as well. That wraps it up for me and Guy right here on television. Coming up, you have Richard Haas, Council on Foreign Relations President, joins Balance of Power with David Weston. And Guy and I are headed to the cable. This is Bloomberg.
At Lovesac, we design furniture for life. Real life. Messy life. Life that changes and brings us together for movie night. A life where batteries run down.
And SoFi had all that flow yesterday, as goofy as it looked like. It's the multi-legs and everything else. It kind of looked like a wrist
surround sound by Harman Kardon hidden inside. Upgradable, washable, and guaranteed for life. Don't just hear it, feel it. At a Lovesac showroom near you.
Some bonds last a lifetime. These are the bonds worth investing in. For over 50 years, PIMCO has reinvented fixed income to create opportunities in every market environment. PIMCO, a global leader in active fixed income.
This is Fubo TV. It's a better way to watch live news, shows, and sports without cable. Watch multiple games at once with Multiview. Try free at FuboTV.com.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at
U.S. airline industry tells Congress U.S. FAA must work to ensure that the air traffic control system is capable of meeting demand.
The pain and let Truebill do the work. Truebill finds clever ways to save you money, like canceling subscriptions you never use.
Who signed up for those?
Truebill also negotiates lower rates on bills.
Ooh, thanks.
So you don't ever have to hear this again. Give your finances the fix and download Truebill today.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com.
TSLA Tesla popping here.
Continuing higher
686, 87.
This is Lisa from
More
Ford
pull
Print.
activity
Yeah,
and
like
Tesla.
50 welcome
Tango
wows,
San
300
Diego
customer.
Alpha.
I love it, and 200 team member. Oh yes, certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. From the world of politics.
We have no idea of what it's going to be like in 2024. None of us know. And so what I would say to the president, keep doing your job.
To the world of business.
The gap between real interest rates, the instrument they can actually use to control inflation, and the inflation rate is as large as it has been since the early 1970s.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide.
AAPL, Apple, and Major League Soccer to present all MLS matches beginning around the world for 10 years,
occupied by
2023.
geopolitics, whether it's Ukraine or China or
AAPL.
now the President Biden's trip to Saudi Arabia. To take us through it all, we welcome now Dr. Richard Haas. He's president of the Council on Foreign Relations, author of the best-selling book, The World, A Brief Introduction. Richard, thanks so much for being back with us. Let's start with Ukraine. You have a piece in Foreign Affairs right now talking about really a long, hard slog. My words, not yours, but we have to have a long theory here. At the same time, we just had President Zelensky's advisors say, look, we know how to end this war. It's to give us parity on heavy weaponry, including things like 1,000 additional howitzers. Is he right? Could it end more quickly if we could get to parity in the heavy weapons?
SNOW, Snowflake expands native Python support and data access to advanced programmability in the cloud. Sandy November, Oscar Whiskey.
Weapons with a longer distance than what they can shoot would be that the Russians would not be able to gain a lot more territory. Perhaps they'd even lose some of the territory they had. But I don't think the ingredients are there for the end to the war. Wars only end, David, when one side can impose its will on the other. I don't see that happening. The other is when both sides think that they're better off with a compromise. Ukraine's not going to sign off on a compromise that leaves Russia in control of large chunks of its
RDFN, Redfin
territory.
says asking about
Putin's not
8%
gonna
of our
sign off on
employees
anything
to leave Redfin today.
Some would claim is a
Romeo
defeat
Delta
that
Foxtrot
proves
November.
this war was a mistake. So I think the smart money is that this war continues and then continues to continue.
Filing.
Do we, and by we I guess the United States and Western allies, have much influence over that? We've heard from President Biden it's really up to Ukraine to decide. Is that fully true?
Look, we can help make sure that Russia can't prevail, and that's by providing Ukraine with all the arms, ammunition, intelligence, training it needs. We can put much more pressure on Russia also in the way of economic sanctions.
Complete workforce reduction by the end of June 2022.
Hundreds of
SPY right here it broke this trend, but sort of what I look for. Prior support has become resistance. So watching to see if this is going to head lower. You can see right there it broke that trend, but cannot get back over that prior. Can't get back over that prior trend there to hold that as support, so that's become resistance. So we'll see, but trend continuation would be down below that 373.95, that prior low. That's turning into support at least right now. We'll see if it breaks that to the
downside. So we have an enormous stake here that Russia does not prevail.
What is the risk of our not being able to hold
could be
together our
facing
coalition? I guess I mean both
fewer
with
home
the
sales.
various elements
Asking
in
8%
Western Europe,
of
because there's
employees
some
to leave
indication
today.
of a difference of opinion about what the goals are there. But even our coalition, if I can put it that way, here in the United States, because we do have some Republicans now expressing some doubts up on Capitol Hill.
Well, there is a risk of what you might call war fatigue, both on this side of the Atlantic and the other. The danger is that countries will not give Ukraine the support they need, that certain countries won't agree to do certain sanctions against Russia. They'll basically say, hey, the Russians are going to prevail one day. We want to be on their good side. Here you have here you have Americans who are essentially either sympathetic to Russia or sympathetic to American isolationism, saying we should do less. But all of these things are bad for the principles we stand for. Where it's not simply that we're helping a fellow democracy. We're trying to show that.
Remember, statistics had a pretty big drop and they announced layoffs last week. Redfin gets any downside.
Charlie Michael Romeo Alpha.
The stakes are larger.
Richard, I have read in the press, I don't know if it's true or not, that you are one of the foreign policy experts that President Biden actually pays attention to, whether his own staff wants him to or not. So if you were giving President Biden advice right now, is there anything in his policy toward Ukraine right now you would change?
Well, I would put much more emphasis on what I just referred to, which is weaning the Europeans on gas.
Chimera now hitting $3.03 at the high.
On Russian gas coming into Europe, but I would look to accelerate the reduction in dependence there. I would accelerate the flow of arms to Ukraine. I'd also stop talking about this as a battle between democracy and authoritarianism. Most of the world is not democracy. We want this to be a war about principles that invasion cannot succeed. I think we're much more likely to get international support, David, if we make this about opposition to invasion than we do about support for democracy.
Well, when we talk about international support, let's go to the Middle East for a moment, because we hear now that indeed President Biden will go not just to Israel, but also to Saudi Arabia, maybe other places in the Middle East next month. What is a realistic agenda for him if indeed he does meet with the Crown Prince, Mohammed bin Salman?
Oh, I think he will meet with the Crown Prince. It's hard for me to imagine he goes to the kingdom and doesn't. I think from the American point of view, we obviously want increased Saudi output of oil. It'll make more of a symbolic difference than anything real in the markets, but it still would be somewhat helpful. We want to extend the ceasefire in Yemen. We want to coordinate policy towards Iran, which continues to march toward putting the prerequisites in place for nuclear weapons. We want to encourage Saudi normalization with Israel, and we do want to encourage improved Saudi human rights practices. So I think it's a pretty full agenda, and the question is whether after a period of what you want to call it, estrangement, David, between the two countries, particularly over the last 18 months, have the two countries, for their own reasons, the two governments decided this isn't working for us, and we need to find a way to live with our differences so we can focus on the areas we have in common.
So, Richard, you are a career diplomat, have had a lot of success. Give us an insight into how, as a diplomat, you conduct that meeting between the Crown Prince on the one hand and President Biden. You talk about estrangement, but President Biden said some pretty pointed things about the kingdom and about the Crown Prince, has he not?
And indeed, and I would say, look, we've had real differences. We still have them. Let's not go over all of them. Let's talk about a path forward. And I think, again, there are areas the two sides can cooperate on. Energy is one. Iran could quite possibly be another. Yemen conceivably a third. And I think from President Biden's point of view, he says, you've got to give me something. If you want us to continue to work closely with you on security, and you got to give me something on oil, you got to give me something on human rights. I have to have your word that we will not see any repeat of the sort of assassination we saw against a journalist, and then probably some understandings also about the war in Yemen. I think basically President Biden has to be able to walk away and say, I got some tangibles here, and I didn't sell out our principles. Saudi Arabia didn't agree to transform itself, but it did agree to make some desirable changes, and that justifies my going here.
Richard, finally, let's make that pivot to Asia. The United States seems to have trouble getting done. We have heard reports now that there have been some communications from the Chinese about the Taiwan Strait that the U.S. officials find somewhat disturbing. At the same time, Jake Sullivan, the National Security Advisor, has been meeting with his counterpart over in Switzerland. Where is the temperature level right now between the United States and China when it comes to things like Taiwan?
Temperature level is bad. This is about the worst U.S.-Chinese relations have been ever since the modern relationship was established. We can't find an area where we agree, not economics, not strategy, not global health, not climate, you name it. Taiwan, though, David, as you suggest, still remains the most likely flashpoint. Chinese rhetoric is much tougher. Their military capabilities are growing. So I think we need to push back. I've been advocating that we need to be clear about our commitment to Taiwan. We've also got to put greater assets in the region. We've got to improve the capabilities of our partners, beginning with Taiwan, but also Japan. China will never give up on its ambitions there. What we have to try to do, and it's a traditional role of foreign policy, is to shape their calculations, shape their behavior, and let them conclude, however reluctantly, that the costs of going after Taiwan would be greater than any benefits.
Which in part, as you suggest, Richard, I'm sure is dealing with our allies, but it's also having some direct communication, I would assume, with China. Are we reestablishing communications links? Because I've heard from some people who've been concerned we don't have the communication that we have had in the past.
No, we don't. We don't have the kinds of regular military-to-military communications we need. If there were to be a crisis, we want those links to be good. At the political level, there's been way too much public scolding of each side, public criticism. Nothing that comes close, David, to approximating what we in the business would call a real strategic dialogue, where the United States and China would sit down and say, hey, this is dangerous. This isn't working. We want to pry China away from Russia. We want China to be more responsible vis-a-vis North Korea. We don't want China starting something in Taiwan. We want to work out some of our economic differences. This is enormous agenda. This is the single most critical bilateral relationship of this era of history. It is off the rails right now. I would think there's no greater foreign policy priority than to get it back on the rails.
Richard, always great to have you with us. Thank you so much. That's Ambassador Richard Haas. He's the president of the Council on Foreign Relations. Thanks so much. Coming up, we go to Atlanta for a talk with its mayor. He is Andre Dickens, about guns, housing, and politics. This is Balance of Power on Bloomberg Television and Radio.
your
This
news.
is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The world sometimes feels like making a profit comes before the environment, that profitability and social progress aren't compatible. But what if another world were possible? A world where investments could drive companies to change. This is why Amundi offers investments that allow you to help build a different world. And you, in what world do you want to invest your money and your future? Amundi, confidence must be earned.
Yes, Amir, we diversified your concentrated positions without a huge tax impact.
Great.
Did I just hear our most demanding client happy?
Bigger smiles start with smaller tax bills.
Oh, direct indexing. I've heard of this.
When your clients directly own the securities in a passive portfolio, they get passive exposure with active tax management.
Think passive investing is all about ETFs? Discover custom direct indexing with Parametric.
When you're a small business owner, there's no such thing as 9 to 5. Days are longer, and business hours, well, they're anything but predictable, especially when you have clients like ours. When I considered payroll providers for my business, I looked for a solution that fit into my busy schedule. Sure Payroll makes running payroll easy, and its US-based customer service is there for me when I have questions, after hours, and even Saturdays.
Visit surepayroll.com for a 2-month free trial, because small business is our business.
Some places it. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. To keep you up to date with news from all around the world, we turn to Ritika Gupta here with First Word. Ritika?
Thanks, David. Ukraine's president says the war may stagnate and more people may die if the delivery of weapons to his country doesn't speed up. Volodymyr Zelensky told reporters during an online news conference today Ukraine needs adequate weapons to be able to hit targets from long distances within its territory. And Zelensky reiterated the war will only end when all foreign troops leave the country and its territorial integrity is restored. President Biden will travel to Saudi Arabia in July and is set to meet with the country's Crown Prince Mohammed bin Salman. And administration officials says the trip is meant to mend U.S. ties with a nation Biden once promised to make a pariah over its human rights abuses. The Kingdom of Saudi Arabia issued a statement saying talks will cover cybersecurity, economic investment, food and energy security, and more. The United Nations World Food Programme is cutting off aid to about 1.7 million people in South Sudan this year. The move comes as the East African nation faces its worst hunger crisis since 2011. Conflicts in the country have made about 60% of the population food insecure. The situation has been exacerbated by Russia's invasion of Ukraine and currency depreciation, which has sent food prices soaring. Hong Kong's outgoing leader, Carrie Lam, says the city's pandemic measures have weakened its position as a financial hub. In an interview with Bloomberg TV, Lam pointed to the fact that Hong Kong is still requiring 1-week quarantines for incoming travelers.
I'm a person who believes in relativity. So everything is relative. When people are opening up and Hong Kong is still imposing a 7-day designated hotel quarantine, that to a certain extent weakens our position as an international city.
Lam also conceded her government could have prevented elderly deaths with a stronger vaccination drive, but did not apologize. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thank you so much, Ritika. Well, Atlanta, Georgia, like so many thriving cities in the United States, has its own fair share of opportunities as well as a few challenges along the way. Since January, Andre Dickens has been mayor of Atlanta, and we welcome the mayor now to Bloomberg. So, Mr. Mayor, thank you so much for joining us. Let me jump in on one of the challenges that so many cities unfortunately face around the country right now, and that's violence, particularly gun violence. We now have legislation that looks like it's going to make it through Congress to at least have some curtailment of some ownership of guns. Would that make a difference in Atlanta? Would it save lives in your city?
Yeah, absolutely. I mean, gun violence is out of control across this country. As I sit with mayors at the U.S. Conference of Mayors, just last week, we all talked about how we needed Washington to do something to enact sensible legislation around gun control. And after 20 years, we're finally seeing politicians in Washington come up with something that should be supported in a bipartisan way for us to move forward on reasonable gun control that can save lives in our cities and across our country. So as a mayor of a thriving city, we do have incidents of gun violence, and I want to see it end. We're doing all we can with police and also with youth programming and outreach initiatives and a lot of things that we're doing to build community. But at the end of the day, a lot of the violence ends with a gunshot.
Well, I want to go to Mr. Mayor, I want to go to that building community because you came to office saying that's one of your top priorities, and people say that you're pretty fast out of the blocks there down there, if I can put it that way. At the same time, you had the Buckhead situation where they actually wanted to secede. They failed at it. But driven in part by violence, as I understand it, is it dividing our communities?
Yeah, absolutely. Right out of the gate, you know, I was a city councilman for 8 years, so when I took the helm as mayor, I went right into a balanced approach to safety and justice and making sure we had community-based programming, from my midnight basketball program to establishing a nightlife division to cut down on issues related to clubs, bars, and restaurants. We have youth working, 3,000 youth in our city working this summer through our summer jobs program. But at the end of the day, we've also made sure that we support our police officers and that we work diligently on improving beats and making sure we appropriate the right resources to the right spot, because it is a danger to the community when we have a proliferation of violence. Luckily, we've been able to curb some of it in some key places, but we have to do it across the board. And so we were facing a division in our city. A certain few people in our city wanted to divide, but luckily we held on, kept them close, and also worked diligently to earn their respect as this new administration came in. Now we have everybody at the table, and we're providing good government for everyone, and that includes public safety.
Mayor Dickens, another issue facing Americans across the country, and cities across the country, and I'm sure Atlanta as well, is inflation. You came to office really wanted to bring everybody together from all socioeconomic realms. How is that working for you? What are you doing? What can you do to help some of the less fortunate deal with this really high inflation?
Yeah, inflation is one of those things that right now everyone is feeling it, from your gas pump to your food costs to the rising costs of home ownership or rent. So people are finding themselves having more month than money, and that's a problem. So we've been doing a lot of things to help with rent stabilization and just trying to help people get through the end of the month and get on to the next. And so what we're trying to do is help people gain skills like technology skills or nursing, apprenticeships, to help them get more money through skills and new jobs. But at the end of the day, we really want to try to maintain this affordability across the nation that we had as a city. But now that's kind of fleeting from us as we try to make sure that our housing cost doesn't get out of control. Gentrification is real. The cost of rent in Georgia has risen, in Metro Atlanta has risen by 65% in the last dozen or so years. So what I've done is I made a huge goal of building or preserving 20,000 units of affordable housing. We've already broke ground or cut ribbon on about 1,500 of those units in the first 5 months. So we're aggressive about all the goals I have, trying to make sure people can age in place, because our seniors are having a tough time hanging on fixed income with all this inflationary cost that we're seeing.
Do you have any estimate of how long it will take before your efforts in housing will bear fruit in the form of more affordable housing? I mean, probably part of your problem, as I understand, is you're just so popular.
Yeah, I mean, people are flocking to Atlanta. I mean, we have a thriving tech center. Of course, we have the great universities like my alma mater, Georgia Tech. You have Georgia State, you know, Morehouse, Spelman, Clark, Morris Brown. So people love Atlanta, our entertainment scene, our music, our culture, our arts. It's a great place to be. And those people that have been here for 30, 40, 50 years, labored here to build it to what it is today, they should be able to enjoy it without all of this cost pressure pressure. So I'm sensitive to that as a native, and so I do all I can each day to try to provide some safety nets for them. But I tell you, right now, with all of the inflation, it makes it difficult. And so we have to do all we can to preserve some affordability in these cities and to give people upward mobility so that they can earn more money to be able to live a better quality of life.
One last one, Mr. Mayor, if I could, and that's politics. How divided is Atlanta politically? Because certainly we see across the country a lot of division. Georgia seems to be pretty badly divided. Where is Atlanta?
Yeah, you know, for the last 20 years or so, Georgia was a red state, if you will, largely controlled by Republicans, Republican governors for quite some time. But we saw in the Biden election and Warnock also, we saw that Georgia went blue. So right now, the theory is that we're purple. We're up for grabs. We got to work hard if you want to win an election in Georgia. A statewide election isn't given to you because you have a D or a R beside your name. Mayor's races are nonpartisan, so you know, I'm a Democrat, but at the same time, I had to make Republican friends because they want their city to be safe. So yes, the state is divided at this time, but I see it as more so that we are in it to make sure that we pick the right people to lead us into the future that we deserve. Georgia is the #1 state in the country to do business, and I think that it doesn't matter if you're a D or a R, you're going to have to do good by the business community, education, technology sector, and make sure that we have education and housing at its forefront. So we're off to the races in November. It's going to be a heated one to make sure that Senator Warnock and also Stacey Abrams and those competitive matches are really going to require a whole lot of competition, and we're going to see it right here. Georgia's the battleground.
Mr. Mayor, thank you so much for your time today. Really appreciate it. That's Atlanta Mayor Andre Dickens. Still to come, we go to the White House for its view on troubled markets responding to inflation. With the Deputy Director of the National Economic Council, he's Bharat Ramamurthy. This is Balance of Power on Bloomberg Television and Radio.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
What if you were a global bank who wanted to supercharge your audit system? So you tap IBM to unsilo your data and start crunching a year's worth of transactions against thousands of compliance controls with the help of AI. Now you're making smarter decisions faster, operating costs are lower, and everyone, from your auditors to your bankers, feels like $1 million. Let's create smarter ways of putting your data to work. IBM, let's create.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
This is a premium hand-selected bacon wrap filet mignon that's aged for tenderness and trimmed to perfection. This is a necktie. What do you think Dad wants for Father's Day? Visit omahasteaks.com/TV to order the Dads Want Steak package today for just $99.99, and we'll include 8 additional burgers free. So get him this. Not this. This. Go to omahasteaks.com/TV today because Dad deserves it. Just a little Father's Day wisdom from Omaha Steaks.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training, optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We had something of a wild day in the markets yesterday following those inflation numbers from Friday. Today feels a little calmer, but Kriti Gupta is here to tell us whether that's right.
Well, a little bit more muted reactions for sure. We just actually had a story across the Bloomberg terminal that hedge funds were really driving the sell-off yesterday. But if you actually look at what the market is doing today, you did open in the green, so you did see a little bit of that technical bounce. But a lot of it has been faded, and this is pretty normal on days before the Fed. The 2 days before the FOMC meeting, you do start to trade with a little bit of a cautious, a little bit of a risk-off tone. At least that's been the trend in the last year or so, and that's where, for our radio audience, you are seeing that decline, about 0.3% on the S&P 500. But take a look at this. The VIX is down as well. You're now looking at a 32 handle, so a little bit less volatility. Once again, speaking to that calmness, but I think, David, that all the action is in the bond market right now, and pretty natural ahead of the FOMC.
Because that's not calmer, it doesn't look like. I'm looking at the 10-year right now. It's now up at 8.5 basis points up. It's at a 3.444. Even while we've been talking, it's gone up a half a basis point.
It already has. Well, it's moving. You have 344 to your point on the 10-year yield, but that's also a number you're seeing across the curve. Take a look. This is the 2-year yield at 343. The 30-year yield, 341. I mean, that's not the kind of premium and that kind of separation in yield that you would expect further out in the curve, which brings me to a very key point here, the Treasury inversion. You have to look at these yield curves that we like to look at, the 2s, 10s, the 5s, 30s, as that recession risk indicator or barometer. A lot of them have inverted again, and all really comes down to the idea that the market is now pricing in 75 basis points. Even overnight, you did have several of these big Wall Street sell-side banks, JP Morgan, Goldman Sachs, Evercore, come out and side with the likes of Barclays, Jefferies, Nomura. The 75 basis points is what we're going to hear from Chairman Powell tomorrow.
Well, and it's not very reassuring about the economy overall, right? If we say we're pretty sure the Fed's going to raise rates, which will affect the short end, but we're not so sure about the growth on the long end, it doesn't say something very happy about the economy.
It doesn't, but you know, it's interesting how people are interpreting this. They're saying if you front load the hikes, does that mean that this is going to be essentially the straw that breaks the camel's back? You finally get that capitulation in the equity markets, or is this the sigh of relief? The Fed is finally going to tackle inflation.
We shall see tomorrow for sure. Thank you so much to Kriti Gupta for that report on the markets. You can catch Kriti again at 1 p.m. Eastern Time on Bloomberg Markets. Coming up, we talk with Wells Fargo economist Sarah House as we wait for that Fed decision tomorrow. And this is Bloomberg.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
At Lovesac, we design furniture for life. Real life. Messy life. Life that changes and brings us together for movie night. A life where batteries run down and get charged up again. Because now, Lovesac Sactionals can be upgraded with Stealth Tech and immersive surround sound by Harman Kardon hidden inside. Upgradable, washable, and guaranteed for life. Don't just hear it, feel it at a Lovesac showroom near you.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but 2 Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get 2 CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Say hello to Truebill, the #1 personal finance app packed with tools to help you manage your money. Like canceling unused subscriptions with just a tap. They also negotiate lower bills on your behalf. You can create custom budgets and see your net worth in one place. And you can even get your credit score for free. If you're ready for an all-in-one money management solution, then download the Truebill app today. Truebill, the money app that works for you.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. To keep you up to date with news from around the world, here's Ritika Gupta here with the first word.
Thanks, David. The House committee investigating the January 6, 2021 assault on the U.S. Capitol says it needs more time to assemble videos and exhibits. The panel has postponed tomorrow's hearing and moved it to Thursday. The hearing will focus on alleged pressure placed on Justice Department officials by former President Donald Trump to convince state election officials to reconsider and recalibrate results of the 2020 presidential election. Scotland will push ahead with a vote on independence. Scottish First Minister Nicola Sturgeon said today she will use whatever legal means possible as her government tries to reinvigorate the campaign to leave the UK. But British Prime Minister Boris Johnson is refusing to give Scotland another vote. In Brazil, lawmakers are taking steps to slow down those soaring fuel prices. The Senate approved a bill today to cap a tax on fuel, electricity and public transportation. High fuel prices are one of the main complaints against President Jair Bolsonaro as an October presidential election looms. Hayes Fan, a member of Bloomberg News' bureau in Beijing, was released on bail in January. According to the Chinese embassy in D.C., it's been more than 1 year since she was detained on suspicion of national security law violations. Fan's case is said to be under investigation. Bloomberg editor-in-chief John Micklethwaite said, quote, "We will continue to do everything possible to help her and her family." Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thank you so much, Ritika. Well, there are a whole lot of economists, both in the Federal Reserve and outside the Federal Reserve, trying to take a hard look at the economy right now and figure out what the Fed should do tomorrow when it announces its most recent decision on rates. Here to give us her thoughts is Sarah House. She's Wells Fargo's senior economist. Sarah, thanks for being with us. So you're not inside the Fed, unfortunately, but give us your views about how the economy looks to the people in the Fed right now and what that's likely to lead to.
So right now the economy remains red hot. So we're seeing personal consumption expenditures, even on a real inflation adjusted basis, looks like it's going to accelerate again in the current quarter. And of course, since the Fed last met in May, we've seen two upside surprises for both the inflation reports and the jobs reports. And so overall, we're still looking at an economy that remains exceptionally strong with considerable momentum that's putting pressure on inflation still.
So what's your projection about what the Fed does tomorrow?
So we think that given the upside surprise in the CPI data we got on Friday, along with the big jump that we saw in inflation expectations coming out of the Michigan survey, as well as just some of the news articles that were printed yesterday about the potential for a surprise, we now expect the Fed to raise rates tomorrow by 75 basis points. So that would be the biggest move that we've seen in 27 years. And I think it underscores that the Fed is certainly feeling that it's behind the curve, and it's trying to demonstrate that it is nimble and try to restore or at least maintain what credibility it does have as an inflation fighter.
Sarah, as I understand from economists, it's important what the Fed does. It's also important how much faith and confidence we have in their ability to get this under control. If they go up by 75 basis points, does that make us feel better because they're taking strong action? Or does it make us feel worse because they say, why were you behind the curve to begin with?
Well, I think it's better late than never. So I think to the extent that they are showing that they are very serious about bringing down this inflation, that they're acknowledging that there still remains tremendous momentum in these price pressures that's not going to be easy to break or painless, I think should ultimately help give comfort. But it's going to create obviously some turmoil along the way. So we've already seen that in financial markets. But at the end of the day, it needs to be done to restore that price stability, to put the labor market on a more sustainable path. I guess the question is, restore it when? I'm sure there's no precise answer to the question, but in general, what is the lag between monetary policy tightening, such as, for example, 75 basis point increase, and an effect on prices? So in terms of inflation, so it is quite a lag. So inflation in itself is a lagging indicator, but I think we are starting to see some of the effects of tighter monetary policy. So I think you need to look no further than the housing markets, where we've seen mortgage rates jump up, and we've seen mortgage applications are down about 30% from their highs over this year. Home sales have fallen in double digits as well. So you're starting to see that. But in terms of when that shows up in terms of these inflation measures, it's going to be a while. So there are some areas, like if we see a cooling in travel services, that could be seen very quickly in these inflation measures. But what we're seeing in the housing front, even as we see activity begin to cool, that's going to take essentially more than a year to show up in some of these inflation measures. So it's going to be a while before I think we see the meaningful relief and that clear and consistent progress that the Fed is looking for in terms of inflation coming down.
Sarah, we heard from James Gorman, the CEO of Morgan Stanley yesterday, saying he thinks the economy is in better shape than perhaps we give it credit for, because people have a lot of money in their pockets, or at least in their bank accounts. They saved a lot from the pandemic relief. Is that good news because it means that they can keep spending and keep the consumer part of the economy going, which is by far the largest part? Or is it bad news because it means that that lag will be even longer before we see it really show up in reduced inflation?
Well, it's good news in terms of the near-term spending path for consumer spending, which obviously is such a huge driver of the U.S. economy. And so it means that the economy is not going to fall out of bed by any means because of these inflation numbers. But it does suggest that the Fed is going to have to work harder to rein some of those pressures in, to recalibrate where demand is versus the supply, and that's leading to this inflationary pressure. So in many ways, it depends on where you sit. You know, if you're a borrower and you see rates rising, that's not a great thing. But in terms of aggregate demand, I think that's keeping things from really slowing down too abruptly, as consumers do have strong balance sheets that they can lean on. We've seen it in the revolving credit data, willingness to take on more debt and fund some of these purchases. But eventually, the party will have to stop on that front, and that's set for a more notable slowdown in consumer spending as we move through this year.
How much of the inflation we're seeing is within the Fed's power to influence or control, and how much is not? I mean, the Fed says, and everyone says, when it comes to energy, for example, when it comes to food, the Fed can't affect that very much. How much of the inflation we're seeing is because of things that are within the Fed's control?
Well, if you just look at the core index, which is more consistent with what is in the Fed's control. So over the past 3 months, the core CPI is running at 6.3% annualized. And so that's actually above the year-over-year rate, suggesting that we're going to see an acceleration. And so even the parts that are within the Fed's control continue to run well above levels that are consistent with their 2% PCE target. And also, I think at the end of the day, it doesn't necessarily matter what exactly is or not in their control. Ultimately, they need to restore price stability, and we've seen Powell come around to that he's not going to look at some of the nuances of some of this inflation data. But if you have inflation expectations rising to a 14-year high, and you're still seeing inflation, even core, above 6%, that they need to act. So it doesn't matter whether it's a favorable or unfavorable supply shock in this case that we're seeing. The Fed needs to respond.
Several commentators and analysts are asking the question of Jay Powell, would you rather have recession or inflation if you have to make a choice? If, in fact, they raise it by 75 basis points, is that a partial answer to the question, said we'll live with the recession if we have to?
So I think it's an acknowledgement that they need to bring inflation down, and even if that comes with some unfavorable costs like potentially higher unemployment rate, that's the medicine that they need to take, at least for right now. I think, though, that when we consider whether they have to get inflation exactly back down to 2%, I'm not sure they do. And I think if it comes to a trade-off between recession and getting inflation exactly down to 2%, I think you might see the wind shift where they're willing to put a little bit more emphasis on growth versus inflation, if it's at least no longer unbridled as it seems to be today. But I think near term, the focus is on inflation and understanding that might come with some pain. So it'll be interesting to see if the summary of economic projections in tomorrow's FOMC meeting illustrates that acknowledgement that we're likely to see some pain when it comes to the labor market as we look further out into 2023 and potentially even 2024, given the need for more aggressive policy in this inflation environment.
Sarah, it's always good to have you with us. Thank you for your time. That's Wells Fargo's senior economist, Sarah House. Coming up, we talk with Bharat Ramamurthy of the White House for his take on the economy and whether the markets are getting it right. This is Balance of Power on Bloomberg Television and on radio.
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers. Invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated platform.
To your world, your why. What drives you? What do you want to leave behind? What do you want to give back? What do you want to be remembered for? That's your why. It's your purpose, and we will work with you every step of the way to achieve it. At PNC Private Bank, we'll help you take care of the how. So tell us, what's your why?
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that? And that. And that. And that menu. And that's embroidery, but yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the print abilities are endless. Print it all at Vistaprint.com.
You asleep? Do we have enough life insurance?
Don't worry. Just go to ethoslife.com to get your personalized quote in seconds and apply online in minutes.
Hey, I just got my free quote from Ethos.
Get a free personalized quote at ethoslife.com.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's Enterprise Solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, the markets have stabilized a little bit today, at least, but it's been a wild ride since those inflation numbers came out on Friday, which might indicate to some that the markets are telling us the economy's in some pretty rough waters right now. To get a view from the White House of the economy and how it's doing, we turn now to Bharat Ramamurthy. He's Deputy Director of the National Economic Council. So, Mr. Ramamurthy, thank you so much for being with us. As I say, if you just look at the market, you'd say we're headed for really tough times in the economy. Is that what you're seeing? Is that what you're telling the president?
Well, look, I think if you could take a step back, what we have now is a global inflation problem, not just in the United States, across the world, United Kingdom, the Eurozone, Canada, all looking at extraordinarily high inflation, driven in large part by Putin's actions in Ukraine. What distinguishes the American economy from the rest of those economies is how strong the fundamentals are here and how well prepared we are to face these headwinds. You look at consumer spending in the United States, you look at business investment, all of those numbers are very robust, and I think it paints a picture of an economy that's in very good shape and well equipped to handle the challenges that are facing us.
Might well be, and we certainly hope that that's all true. At the same time, if you have a 401k out there, or if you're a retiree on a fixed income, it's pretty rocky right now, given what we're seeing with the inflation eating into your returns, as well as the market's down. What do you tell those people?
Look, the president is deeply sympathetic to that. His number one priority right now is tackling inflation. He's made that clear for several weeks, several months for now. But I think what we need to take a step back and look at is that American households as a whole are doing very, very well. If you look at where we were before the pandemic and where we are right now, wages have been up. Obviously, direct government support has been up, and American households are doing very well. The labor market is extremely strong as well. what the president has been clear about is the need for Congress to step up to the plate and tackle some of these cost issues. We've actually made some really good progress on that just yesterday. The House passed a bill that is now heading to the president's desk that will bring down the cost of ocean shipping. And that may not seem like such a big deal, but all those goods that come across the ocean from Asia to the United States, the prices of those are going to be affected by this bill. Ocean shipping costs were up 1,000% during the pandemic. This bill will crack down on those types of excessive prices, which means that apparel, appliances, all those goods that get imported to the United States, we're going to pass along some of those cost savings to consumers. So that's some concrete progress heading your way.
We have a Federal Reserve decision coming out tomorrow, and I know there's strict independence between the executive branch and the Federal Reserve, and we both want to respect that. At the same time, it may well be that a decision has to be made at some point between risking recession on the one hand or runaway inflation on the other. From the White House's point of view, as a matter of policy, which is the bigger risk, inflation or recession?
Look, as you said, we have deep respect from the president on down for the Fed's independence. What the president has done is put in place leadership at the Federal Reserve that he has trust in. Tackling inflation is their top priority, and it's his #1 priority. He's going to let them do their work. That said, our hope is that there's not that choice, that we can walk that fine line between transitioning from the extremely fast recovery that we've had to date to more stable, steady growth without causing huge disruptions in the labor market. Chair Powell has talked about his view that we can walk that path in part because of the strength of the U.S. economy, and our hope is that we can do that as well.
Mr. Ramamurthy, hindsight's always 20/20 and often not profitable. Sometimes you need to know what went wrong to know what can go right in the future. It's pretty clear that there was a misestimate at the Federal Reserve as well as at the White House. In fact, we've had Secretary of Treasury Janet Yellen admit they were off on the inflation expectations. In the military, you do an after-action report to figure out what went wrong. Are you doing that right now at the White House to figure out what went wrong?
Well, look, I think if we're being honest here, what we have to look at is that in March, April, May of last year, across the board, people's projections were for inflation to temper by the end of that year. What we couldn't anticipate, and I don't think it's fair for us to have anticipated, is #1, a set of COVID variants that had enormous effects on supply chains, and most importantly, Russia invading Ukraine, which is responsible for a huge portion of the inflation that we are seeing today. Just to give you one example, since the beginning of the year, when we saw Russia began threatening Ukraine, gas prices are up nearly $2 a gallon at the pump. And a huge percentage of that is attributable to those actions. So we have to be clear that, yes, it's always good to go back and look at what we could have done better. But there's a set of things that happened that have had a massive impact on inflation that were impossible to project at the time that we were passing the rescue plan.
No question about that. Some things happened that no one could have anticipated. At the same time, there were some people back last March who were saying we're really looking at inflation because of the size of the fiscal stimulus. I mean, Larry Summers has been on our air a fair amount saying that. So, but I want to make sure I understand. Are you saying you've looked at it and decided nothing went wrong with the models?
What I'm saying is that we are facing a global inflation problem right now that is spurred on in large part by Russia's actions in Ukraine, exacerbated by lockdowns in China that disrupt supply chains. And I, for one, am extraordinarily thankful that in March of 2021, we passed a rescue plan that provided a significant amount of support to middle-class families in the United States, and that have allowed them to weather these ups and downs much better than middle-class families in other countries. The world in which we did not pass the rescue plan, we would still be looking at historically high inflation if you look at what's going on across the globe. Just our families would be much worse positioned to deal with that inflation. So I'm very glad that we passed the rescue plan. I think it was the appropriate size and the appropriate design, and it was appropriately designed in part because we knew that there were some unexpected twists and turns to come, and we wanted to make sure American families could weather that. That's what they've done.
One of the things that's feeding sort of headline inflation right now is energy, and some of that is prompted, of course, by that Russian invasion of Ukraine. The president was out on the West Coast last week, and he really condemned some of the energy companies, I think called out Exxon specifically for some of the excess profits. Is there serious consideration at the White House right now of an excess profits tax on oil?
Well, look, we're open to a number of different ideas to tackle the energy situation and to provide additional relief to American consumers. As the president noted, in the first quarter of this year, the five biggest oil companies made $35 billion in profits. That's 4 times what they made in the first quarter of the year before. And if you drill down on that, sorry for the pun, drill down on that a little bit, what you can see is that a lot of the issue is at the refining level. To give you a little bit of context on that, And the last time that the price of oil was $120 a barrel, the cost at the pump was $4.25 a gallon.
Right.
Now it's nearly $5 a gallon. Where's that difference coming from? It's coming from refiners and the huge margins that they're racking up in particular.
That makes a case, as I listen to it, for possibly an excess profits tax on oil. Is that on the table? I'm sure you're not going to say you're going to do it today, but is it at least on the table, up for consideration at the White House?
We're not ruling that out of consideration. We've made that clear. When we have an announcement, we'll make that announcement. But what the president has made clear is that there's a real issue here with the level of production by the oil companies and the profits that they are making right now after the Russian invasion of Ukraine. And as I've said, the real issue, if you look carefully at it, is at the refining level.
Okay, this has been very helpful. Really appreciate your time. I know you're terribly busy. That's Bharat Ramamurthy. He's Deputy Director of the National Economic Council at the White House. Coming up, we're going to hear from Carrie Lam on the eve of her stepping down as Chief Executive of Hong Kong. This is Balance of Power on Bloomberg Television and on Bloomberg Radio.
Tune in to today's Options Insight, sponsored by Thinkorswim by TD Ameritrade.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
EY World Entrepreneur of the Year is the ultimate global competition for entrepreneurs.
Welcome to EY World Entrepreneur of the Year.
This year in Monaco, crowning the 2022 winner of EY World Entrepreneur of the Year.
Gaston Taratuda.
Because one person can make a world of difference.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus a satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
If you invest in the S&P 500, your portfolio may be too concentrated in big companies. This can leave it imbalanced and exposed when performance varies. Invesco's S&P 500 Equal Weight ETF RSP is spread equally across the S&P 500, which reduces potential concentration risk and helps keep your portfolio in balance. Stay in balance with Invesco's RSP. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
Dad is someone you look up to. He shows us what it means to have courage and gives us the confidence to be who we are. Dad is someone who is always there, no matter what. Celebrate Father's Day with 1-800-Flowers.com.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Hong Kong Chief Executive Carrie Lam is stepping down at the end of this month after a tumultuous 5-year term that included protests in the streets, a new national security law, and also, of course, COVID-19 and the shutdown that entailed in Hong Kong. Bloomberg's Stephen Engel sat down with outgoing Hong Kong Chief Executive Carrie Lam and asked her about what is in store next.
Despite some skepticism and cynicism about Hong Kong's future, I remain very optimistic and confident of Hong Kong's future. And one of the reasons for my confidence and optimism is Hong Kong's unique strengths under one country, two systems. Is Hong Kong's high degree of autonomy to conduct her external affairs, particularly on the international arena. So we have the autonomy to set up our own overseas economic and trade offices. We could enter into bilateral agreements on free trade, avoidance of double taxation, investment protection. So I do want to conclude my term by reinstating the importance of Hong Kong's international connectivity. and her status as an international city.
But is the damage already done?
Well, yes and no, because if you look at the past 2 years, that is before the fifth wave hit us, for a period, Hong Kong was ranked the world's #1 in terms of normalcy. That is when other countries and places were imposing the stay-home permits and lockdowns and closed the airport and so on. We were by and large operating normally. Okay, but since the fifth wave hit us, and it hit us very hard, particularly in terms of the number of deaths.
We went from 300 deaths
so we
to
have
9,300.
to be extremely cautious. And at the same time, because of the transmissibility of Omicron and the mildness of this virus, then other places are opening up. So by comparison, I'm a person who believes in relativity. So everything is relative. When people are opening up and Hong Kong is still imposing a 7-day designated hotel quarantine, that to a certain extent weakens our position as an international city. But mind you, during my term, while the daily cases were still quite high on the 25th of March this year, I already announced the gradual opening up. In terms of social distancing, it's a 3-stage relaxation. We have done the 2 phases. And in terms of coming into Hong Kong, I lifted the ban on the 9 countries. And then I reduced the designated hotel quarantine period from 14 days to 7 days, and then made other adjustments in the test and hold at the airport, facilitating people to come back. So prior to the 1st of April, and for almost 2 years, the daily arrivals at our beautiful Hong Kong International Airport was a few hundreds. Now it's back to 3,000 plus. So I hope that gradually we're able to progress on this route of normalcy.
That was outgoing Hong Kong Chief Executive Carrie Lam in conversation with our very own Stephen Engel of Bloomberg. Check out the Balance of Power newsletter on the terminal and also online. Coming up, Balance of Power continues on Bloomberg Radio. And in our second hour, we're going to talk with economist John Cochrane of the Hoover Institution about whether the Fed has the analytic framework in place to tackle inflation at this time. This is Balance of Power on Bloomberg Television and on radio.
This is Sandra. She gets her financial advice from her mother. This is Tony, who gets his financial advice from his old college roommate. And this is where Frank used to sit. He got smart about retirement at smartasset.com. They matched him with vetted fiduciary financial advisors to help turn his retirement priorities into a retirement reality. Everybody sure misses Frank.
Can someone get that?
smartasset.com. Take our free quiz and be matched with up to 3 vetted financial advisors. Get smart about retirement.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
What are you gonna do?
Here! Grab onto me! We can double up!
No, don't worry about it. I'm good. I don't want to detract from your experience.
Just give me your hand!
No, don't sweat it. Probably just a passing thing. The harness fits great, though. Snug.
Sometimes you just need some help. So if you need therapy, find a licensed therapist at BetterHelp.com.
Hi, I'm Jim Furyk. My father, Mike, has been my coach my entire career.
Yeah, it's been a while.
So this Father's Day, I'm getting him a gift worthy of that kind of commitment. A custom club fitting at Club Champion. Their tour-level process is guaranteed to deliver more distance, greater accuracy, and much lower scores, instantly. Now through Father's Day, you'll receive a bonus on all gift cards. So what do you think of this, Dad?
Beats a necktie.
Club Champion. Better fit, lower scores.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Enjoy the magic of freshness from nuts.com. Fresh nuts, dried fruits, sweets and treats, freshly roasted, freshly dipped, freshly seasoned, and delivered fast with free shipping. Nuts.com. Fresh snacks from our kitchen to yours.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the crypto chaos shows no signs of letting up. Bitcoin continues its descent, more jobs being cut while the fortunes of billionaires are vanishing as quickly as they were made.
And the dual crises of Terra and Celsius are shaking up DeFi in ways that may have serious repercussions for the sector. We'll discuss with investor Mike Alfred, who's been sounding the alarm on Celsius for months.
And are there any bright spots left for crypto? We'll scour the market with venture capitalist Nick Carter of Castle Island Ventures for potential opportunities.
Looking forward to those conversations ahead, but first let's get a snapshot of the market because we know it has been several consecutive days of brutal selling for Bitcoin. Actually, its longest losing streak going back to 2019 with losses of now 3% today. We're trading around $22,400, $500 or so. That is the lowest level going back to December of 2020. So if you bought Bitcoin from the start of 2021 onward and you're still holding on to it, you have lost money. It's been really, really difficult. Ether is down about 1% as well. One outlier, one standout to the upside today is Solana. It's up about 4%, trading just under $30. And then, of course, one crypto company in particular we are monitoring is Coinbase, cutting 18% of its workforce due to the crypto winter. That stock is down about 0.6%, and we'll have more on that story in just a moment. But first, let's get the take of some market watchers who have been viewing the action over the last 2 days and trying to make sense of the mayhem.
Macro conditions are unprecedented.
In a market decline, everything goes down.
Crypto has not really existed with this sort of macro backdrop.
The institutional investor continuing to shy away from that as an asset class.
It's not surprising that something that is as ephemeral as crypto would go down.
There's just a lot of risk there.
We are certainly nearing the bottom.
Expect ups and downs, especially before we get a better regulatory framework in place.
I don't think people are going to basically abandon the whole concept of cryptocurrencies just because the market's down for the last couple of weeks.
All right, let's kick off this whip with some technical analysis. For that, we go to Bloomberg's Abigail Doolittle. Abigail?
Well, Matt, the crypto plunge really is incredible. And when I first started to look at the Bitcoin charts, which is down 70% from its all-time peak, I thought it was going to be set up for another plunge. That's not the case. This is the monthly chart, a long-term chart. You can see an uptrend. That tells you the long-term buyers are in. We're looking at Bitcoin relative to its 200-month moving average. Those are the buyers who bought years ago, back in 2010, 2009, and they've stuck with it. Right now, we see that Bitcoin holding that support, suggesting we could see a bounce. So maybe Bitcoin is close to the bottom. Maybe these last eight down days, that's capitulation. Now, when we put it together with the fundamentals, inflation as an inflation hedge, of course, also happening, this is Bitcoin relative to oil. So into 2021, Bitcoin outpacing oil. But then as inflation really came into the story, you see that oil has actually done much better than Bitcoin, the overall trend down. However, Kaylee, take a look at this. Bitcoin relative to oil finding support around the bottom of this trend channel. It may just suggest that in the near term, maybe the Fed meeting could be the impetus. We could see a pop for Bitcoin relative to oil.
All right, so maybe some more optimistic signs in the technicals. Thank you so much to Abigail Doolittle. But in another sign of the worsening crypto downturn, we had Coinbase announcing today it will lay off 18% of its workforce, following in the footsteps of other crypto-related businesses that have recently cut staff. Vildana Harik, Bloomberg cross-asset reporter, joins us now for more. So, Vildana, obviously Coinbase is not alone. We've seen other firms doing this as well. It's emblematic, it's symptomatic of the crypto winter.
Exactly, and that's what a lot of these companies have been citing. So Coinbase is just the latest. It's the newest one that we've been hearing from, because if you'll remember over the last couple of days, we also heard from Gemini, we heard from BlockFi. It's really a growing list of crypto companies that have been announcing either that they're laying people off or some sort of hiring freeze. Just a couple days ago, it was Coinbase that had rescinded a bunch of offers from a lot of people who had, we all saw these headlines, who had been deciding between working in traditional finance maybe or working at Coinbase, and then they went with Coinbase and had those offers rescinded, and that was making a lot of waves.
Yeah, and a lot of them
big
had
splash.
already left their jobs, already moved to this country. Pretty painful news. This could also get painful for Michael Saylor at MicroStrategy, right? He's one of the most famous Bitcoin evangelists. I think he spent almost $3 billion amassing a war chest of the crypto for his company. And we're hearing now that he may face margin calls if it drops below 21,000.
Well, that was the big fear. So I know yesterday, amidst everything that was happening with the big sell-off that we were seeing, I had a lot of people reaching out to me saying this is something to keep your eyes out on. Still, we had strategists at BTIG, for example, coming out today and saying those fears really were overblown. We also had, if you looked on Twitter, Michael Saylor tweeting saying a lot of this is overblown, that when he had created this strategy of buying Bitcoin for his company, that he was looking ahead, foreseeing that crypto can be volatile, that Bitcoin can be volatile. I think he said something like he was hodling through adversity, which is just a term to say he's going to be holding on to these assets even during turbulent times. And we also had him telling Bloomberg that the company has ample collateral to pledge if necessary.
All right, Vildana, thanks very much for joining us on this. All of these challenges coming as a crisis at the Celsius lending platform causes fresh concerns of systemic risk in the crypto ecosystem. Sonali Basak has been tracking the meltdown.
Yeah,
Sonali?
there have been some signals here. News at Celsius is now rattling a market that has been trying to shake off the chill of a crypto winter. There's a hawkish Fed, red-hot inflation, mounting lawsuits, investigations, and also hiring freezes and job cuts. And let's not forget the implosion of the Terra stablecoin just last month. The meltdown has now turned attention to decentralized finance projects that offer super high yields. Celsius is one of the biggest lenders in crypto and a key player in the world of DeFi, the largely unregulated answer to traditional finance. And on Sunday, the company announced that it was pausing withdrawals, swaps, and transfers following weeks of speculation that it would be unable to pay out the significant returns it promised on its products. The move effectively halted a platform with registered entities across the globe and billions of dollars worth of digital coins under management. Now, while Celsius is a centralized platform with operations and staff that sets it apart from DeFi, its deep involvement in the space is intensifying doubts about its own viability and raising the risk of contagion. Now, rivals like BlockFi and Nexo took to Twitter in the hours after Celsius's announcement to soothe the nerves. And Nexo went a step further in its efforts to project strength. It said it would offer to buy Celsius's remaining qualified assets, and followed by tweeting that it had sent Celsius a formal offer for that deal.
All right, Sonali, thanks very much. Sonali Basak there with some of the Celsius story. Coming up, we're going to speak with an investor who's been sounding the alarm over Celsius for months. Mike Alfred joins us from Eaglebrook Investors.
And we'll get insight on Ethereum's blockchain revamp, the merge with Nick Carter, founding partner at Castle Island Ventures.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This
EASS,
is
Golf
Bloomberg.
Alpha Sandy, and under $10 buy from Zax. Golf Alpha Sandy,
Bloomberg Crypto
GASS.
is brought to you by Crypto.com, the world's fastest growing crypto app.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
You asleep?
Do we have enough life insurance? How would just one of us afford the house, car, Jason's college?
Ethos Life.
Ethos Life?
Go to ethoslife.com and get your personalized quote in seconds and apply online in minutes, often without a medical exam. And Ethos is
Way to
very
repeat a bulletin
affordable.
to Apple.
Hey, I just got my free
The
quote with Ethos.
624 140 calls are paying $1.11.
Sweetie? Get a
It's
free
next week's
personalized
140
quote
call.
at ethoslife.com.
Welcome to your world, your why. What drives you? What do you want to leave behind? What do you want to give back? What do you want to be remembered for? That's your why. It's your purpose, and we will work with you every step of the way to achieve it. At PNC Private Bank, we'll help you take care of the how. So tell us, what's your why?
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
DME, GameStop getting a pop here. Golf Michael Echo.
This is Bloomberg Crypto. I'm Kaylee Lyons with Matt Miller. Well, SEC Chief Gary Gensler is warning investors of crypto lending platforms promising high returns. Speaking at a conference earlier today, he said, quote, "How does somebody offer 4.75% in the market today? I caution the public. Think about it.
Also,
Sometimes if it
AMC
seems
starting
too
to
good
move
to be
higher
true,
now,
it
$11.86.
just may as
Alpha.
well be too good
Michael
to be true."
Shirley.
Joining us now is Mike Alfred, Eaglebrook Advisors founding board member. Mike is a crypto wealth manager and investor who has been sounding the alarm over Celsius for months. And of course, it is Celsius really that inspired these remarks, Mike, from Gary Gensler. As we say, you've been warning about this for some time now, yet it doesn't seem that everyone kind of caught on to the warning signs. What were they? What did you see to see this coming?
Thank you, Caitlin. First off, I just want to say I take no joy whatsoever. This is a very unfortunate set of circumstances that will affect a lot of people. You know, at the very top
NIO,
here,
NEO
you
hitting new highs now,
these businesses are essentially
$18.90.
shadow unregulated shadow banking businesses. They take advantage of a regulatory loophole. Since they don't accept USD deposits, they don't have to be regulated as banks. And they're offering yields historically that are well above what the market yield should be in a normalized environment. And so you just look at that and you say, okay, if interest rates are negative in Europe and interest rates are close to zero in the US and somebody's offering 17% or 20%, that's usually a red flag right off the top. Then when you look below the surface, what I noticed was that Celsius had actually been fired from two major tier one custodians in crypto already because they were uncomfortable with the amount of speculation and leverage that was going on within the platform. Then when you dig a few layers deeper from that, you discovered things like the former CFO was arrested while traveling in Israel related to a previous crypto scam involving a gentleman named Moshe Hogeg, who was also arrested. And it was a close associate of the founder and CEO of Celsius. And so again, there's layers and layers and layers here. But after I saw 4, 5, 6, 7, 8 of these things, I started to look more closely and I thought it might collapse.
So why didn't anyone else,
TLM walked away and GME is popping.
wise up to this?
We
We just saw the CEO of Celsius 2 days ago, I think, tweeting out that there would be no withdrawals or saying like we haven't had any blocks to withdrawals yet. And then the next day, they put the gates down. How come we didn't have anybody else wising up to this earlier?
Look, I met Alex 8 years ago. He was the CEO of Novotel Wireless, and he used to claim that he invented VoIP, right? He invented a bunch of other technologies. You know, he's a very evasive guy. When you talk to him directly, he goes on and on and on, doesn't let anyone else get a word in. And there's a lot of signs that he's kind of living in his own reality distortion vortex. And so most of us knew in the space that there was something going on here. But if you talk about it in Twitter Spaces, it's not necessarily mainstream, right? The Wall Street Journal wasn't covering this, but we were covering it last summer in our Twitter Spaces. And so why didn't anyone know this was going to happen sooner? I would say people did, right? And I'd say that it wasn't just me, right? I was definitely one of the people talking about it earlier, but there were a lot more people than me that saw that there were issues here.
Okay, so obviously we're talking about Celsius specifically here. Is this unique to Celsius, or do you have similar concerns about other crypto lending platforms, other companies in that space?
I have. Last summer, BlockFi got trapped in a Grayscale Bitcoin Trust trade. And the thing I need to point out here, I think, is that we're at the very tail end of a decade-long bull market. Everybody's lost their head. This is not just a crypto problem. People were buying
TSHG performance
Shopify,
shipping spiking here,
Netflix, and
90
Carvana
cents,
at
up
50 and 70 times sales.
Papa
So the
Sandy
fact that they
Hotel
wanted
Golf,
to speculate on early-stage companies is
32%
not surprising, right?
now.
Tiger Global got caught in the same
Also,
trades, right? And these are
other
supposed to be the most
shippers
sophisticated people on
moving
Wall
now.
Street.
TOPS
And
top
so it's not really any one company's fault. It's that the entire foundation of this market has shifted because interest rates were so low and there's too much liquidity. We printed too much money, so everybody's trying to buy BlockFi stock and BitGo stock and Galaxy stock, right? And some of these companies were just overvalued, right? And so the investors had to be in those names. I saw several investors who invested in BlockFi and Celsius last year who felt they had to be in, but they didn't do enough due diligence. And if they did, they said, you know what, I can't miss this.
Okay, so now that Celsius has collapsed, Mike, do you see how large of a risk do you see a broader contagion?
Inside EV says Rivian
I think it's going to be pretty well contained. So Celsius was probably the worst of the group in terms of their risk management frameworks. I mean, they're still to this day speculating on DeFi protocols. As we are talking right now, there are hundreds of millions of dollars shifting back and forth on chain, even as the customer assets are frozen. So this is completely irresponsible behavior that you would never see, in most sophisticated large firms. The other firms like BlockFi, they already paid $100 million settlement to the SEC. They've mostly ceased these type of activities. The CEO came out and said
Groupon press release. Groupon is streamlining its technology platform
so I think some of these other firms
and embracing
got
automation.
And so even though they made mistakes, I don't think they go bust. Whereas Celsius, it's an open question. We may need to wind Celsius down in sort of an orderly receivership type of scenario.
Mike, I want to ask you about staked Ether. There were concerns about
says foundational improvements expected to accelerate the pace of product development.
Celsius was a big holder of staked Ether as well, and now the difficulty bomb has been delayed. What do you think about the merge and how far it'll be pushed off?
EDD,
I'm not sure, right? I made a joke the other day on Twitter.
The
blue
looked like
it was
building 13%.
had a bunch of
coverage. Seeing activity in the June
Ethereum staking ecosystem.
16.6
I mean, they lost $75 million.
We're up above the 80
rejected it all but and that was just a loss of keys, right, by the people managing the protocol.
Both
so I'm
from
not
a
going
flow
to make any
standpoint
predictions
and a chart
specifically
standpoint,
about
UVXY and the VIX
what
both
happens
look a
there,
little
but I do
bit
think they need to stop
on the weak
compounding
side.
the errors and the mistakes. They've blown a hole in their balance sheet. It started last spring. They blew a $40 million hole in their balance sheet in the spring.
But
they
you're
bailed
getting
themselves
pockets
out
that are
with
performing
equity,
very
but
well.
they can't do that anymore.
It's like
because
right
they
now
keep
the
losing
Dow
more
was
and more and more
was
money
really
the more
really
they try to
lagging.
do to save the assets. One other thing I need to bring up. They also have a duration and sort of a liquidity mismatch problem because they have investors that want their money back now, but I believe they may have taken some of that money and put it into this e-liquid mining business. And you cannot take a mining business public right now in spite of them filing an S1 a few weeks ago, which I actually found to be a huge red flag because nobody in their right mind would try to do that in this environment.
All right, Mike, it's been great to get you on. Hope we can talk to you again soon. Mike Alfred there of Eaglebrook Advisors talking to you about
374 million, 1 million shares came blocking in at 374.28.
Founding partner of Castle Island Ventures.
So that was about 10 minutes
exclusively on public blockchain research.
That's a pretty significant dark pool. That is a great candle.
This is Bloomberg.
We're getting more BitSide puts coming in. Call into Oxy, call into Coin.
Heavy downside in
BitSide put Amazon at the $500,000 on the bid.
Joel, since Kansas, we've taken our own path. We've
Another
never
BitSide
done
put
what everyone
Amazon.
else did. We took on the fear. We ignored the doubt. We loved the excitement. We
SPY
believed.
377.
Even when our
Out to
path didn't make sense to
200
everyone
something
else, we kept going. We keep going until
Now they
our
want to come
path
in and they're trying to
the
short
one they
this
wish
candle on
they'd
SPY.
taken.
This big little explosion here. They're trying to short it down. Just over there doing vertical things. It's like, fuck it, we can go down 8%.
Roulette bullish and NST this week's 91 calls are paying 75 cents. 45,000 behind it.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access
So right
to
now,
NASDAQ
we're
100
waiting
innovations
on
like
Dow
real-time
stocks to pull it
CGI.
together.
Okay.
Yeah, don't worry, I got it.
And that's a nice handle over on SOXL. Semis, if we can get a push in any capacity on semis with as oversold as they are, and
$100flowers.com just made my birthday. I can't stop smiling.
sector-wise, I just don't know how much cheaper it can get.
Hello. How can you compete with flowers? It's like
By 376 out to August,
Best
half
birthday
mil.
ever. Thanks, 1-800-Flowers.
The put flow that you're coming in, that you're seeing come in now is not all that heavy. Open my own mouth to come in and just slam it right back down.
DWAC, Digital World Acquisition shares selling off here sharply, hitting a low of $29, down 22%.
I don't think these things are disappearing. Their values will fluctuate for sure. Sure, if you bought it at $60,000, you've lost a lot of money. And I'm not saying these are great investments, but I think these are investments that aren't going to go away. And I don't think the whole crypto economy is going to collapse, nor do I think blockchain is going to disappear. I don't think people are going to basically abandon the whole concept of cryptocurrencies just because the market's down for the last couple of weeks.
Carlyle Group co-chairman and co-founder David Rubenstein joining us to talk about the sell-off in crypto a little bit earlier. I want to get to Nick Carter right now, Castle Island Ventures founding partner, one of the first research analysts on Wall Street before that.
We're into phase
Nick, it's great that you
page
could
out
join
to
us.
December,
I
the
have
160s, 1 million.
So
Bits I
many
put
kids
Disney,
recently
call
that
Tesla, more
had
calls
jobs
Tesla.
on Wall Street leave for blockchain
Couple
or
of puts,
DeFi
Tesla.
opportunities that now look like they're going to evaporate, and so many people in their 20s and 30s that have had almost all of their wealth tied up in crypto devastated by the drops that we've seen recently. What does this do for confidence in the entire crypto universe?
Yeah, I think we're seeing sentiment at pretty much an all-time low. I don't think I've ever seen people feeling this negative about the industry. All of that said, there are still plenty of crypto firms that are hiring.
On that, Zach's
we were seeing layoffs for sure, but the sort of core ideology that powers this movement is intact, right? You have to look at these things in contrast to the fiat currencies that they seek to replace, the traditional financial infrastructure they seek to replace. And those fiat currencies to me look like they're being debauched right now. So while of course we're having a leverage flush in the industry, I think the core ideas are still pretty intact here.
So in terms of institutional interest, which has been one of the big drivers on the way up until November, do you think those players are still going to take part in crypto?
It really depends. We're seeing some institutions are getting burned. If you look at Celsius, which we were just talking about on the prior segment, Canada's second largest pension fund is an investor. So not all institutions are the same. Some will exit the market and become disillusioned. Others will rebalance and double down here, which I expect to provide maybe a floor on the valuations of some of the highest quality assets
some
here.
nice continuation
the
of that long wedge
institutionalization of the industry is an ongoing trend. Which I
The
certainly
Verge
don't
reporting
expect to
Microsoft
reverse
working
anytime
on
soon.
games.
when I stepped away, has reclaimed
Microsoft
VWAP
Teams,
and
Microsoft
3759, which has been a strong support and resistance area for.
Okay, so Nick, you talked about Celsius, and of course that followed just weeks after the
like
collapse of the
the
Terra stablecoin, the Terra Luna ecosystem as a whole. How much of what we have seen, the pain we have seen in crypto, is due to some of these specific events versus just a broader macroeconomic environment that has turned away from high-risk assets
Apple
like
also broke that pennant consolidation to the upside.
Yeah, it's easy to ascribe these sell-offs to singular events, but I think you're right. It is, to me, it's more of a broader macro picture here. We're looking at yields rising relentlessly.
PINS, Pinterest,
we're looking at
August
bonds selling off alongside
$20 calls,
Amazon, clearly the financial sector as a whole is experiencing enormous distress as liquidity is being withdrawn. And things that aren't going to happen in financial markets are happening. We're going to have the Fed
Another
hiking
bits I
into
put on
potentially a
SPY.
recession
Another
here.
call into Tesla.
These are, situations that no living investor has ever lived through, frankly. It's pretty unprecedented
put on
stuff.
Qualcomm to 130s
So the fact
for this
that,
week.
a pretty frothy asset class
Another
is
tap
getting
into the
crushed
Apple
here, it's not really
138s.
that surprising. But yeah, to me, there is a
Bits I put
leverage,
UBL.
deleveraging occurring with Celsius and Terra and things like that. But I believe it's really more sort of the broader macro context which matters here.
Okay, so do you see any reason to be optimistic, or are there certain bright spots or pockets of opportunity still, Nick?
Absolutely. We're still investing actively. We're deploying. There's a huge amount of dry powder actually raised by venture funds on the sidelines here, which I expect will be deployed into the market. I'm not seeing enthusiasm stemmed there at all. Fundamentally, the story is intact. Bitcoin offers a sound money, and if you look at its alternative, the dollar, inflation is 8.6%. You're looking at other sort of blue chip currencies like the yen being crushed. And we're looking at the potential and position of serious monetary repression in this country. So I think if you're considering sound monetary
Calls
assets,
as we're moving up here and they're coming back in with puts.
contrast
Be
to what's
aware.
happening in the financial system.
Talks
If you're
of
looking at
21%
stablecoins, you're going to see
surtax on oil profits
crypto-dollarization
to blunt
continue to
inflation.
occur as we have potentially a wave of sovereign defaults here, crushing emerging market currencies. All these things. The broader macro
$1 million
context,
bits I put on Tesla.
hurting us in terms of liquidity being withdrawn, but it makes the fundamental case
28%
for these assets
huh?
stronger than ever.
Well, one of the
More bits I
one of the
put
big
Tesla.
tailwinds was the idea that we could get greener by switching from proof of work to proof of stake. That was going to happen with Ether. Maybe still will, but it seems to be delayed again.
Watch
right?
your oil
We've
names
had
on that.
concerns about Lido, too much of the stake being held by one custodian, and now the difficulty bomb being delayed. It's very jargony, but when is that going to happen, or is it going to happen?
Well, yeah, I mean, I expect it to happen. You're looking at, late this year, early next year. Certainly do expect that transition to occur. But I think you also nailed the problem with proof of stake, which is why it's not necessarily desirable to move away from proof of work to proof of stake, is that proof of stake allows for concentration of control, and it gives the largest stakeholders control over the network. So, while that will occur for Ethereum, it's not something I would prescribe for Bitcoin, for
So
instance.
they were selling
and I do think
calls
proof of work still
and
has
smacking
sort of key
some
benefits
puts
here.
right up
All
there
right,
near
well,
high
we'll
a
still be
day.
waiting and waiting.
Getting this
and
pull
waiting.
back
We'll
down.
see
Watch
when
the
and if it actually
UVXY right
happens.
here
Nick
as it
Carter
moves
of Castle
along this
Island Ventures, great to get
downtrend.
your
It's
insights.
not
Thank
over
you
it
so
yet.
much.
To
It's
break
I really
under
enjoyed the
right here.
conversation with Nick today,
Right,
as
it
well
has
as with
resistance
Mike on
right here
Celsius.
at
We should
the
mention we
21
did
and
reach out to
34,
Celsius, see
17,
if they'd like
13,
to talk to us for
17,
an interview. We
17
didn't
is where
hear
I
back,
have
but
them
Celsius,
right
if you're out there, if you're
But watching that,
we'd love to have you on next week.
definitely
We'll be back
watching
here Tuesday at
this
1 p.m.
downtrend
If
right
you're
here on
still there,
UVXY.
we'll still be here. Coming up next week, Amy Wu, head of ventures at FTX, and Delta Blockchain Fund founder Kavita Gupta joins us to talk more about crypto.
Apple.
This is Bloomberg.
It's another bits I put on Micron.
Bloomberg Crypto is brought to you by Crypto.com.
A little put on the
the
XLE,
world's
the
fastest growing
8550s
crypto app.
for this week.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Why pay over $100 a month for cable when it's half the cost for Fubo TV? Get the channels you want with the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results?
Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Yo, dude, you need some help? Don't worry about me. Yo, there's no shame. No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
With your finances?
Yeah.
Save yourself the pain and let Truebill do the work. Truebill automates your personal finances by canceling subscriptions you're paying for but never use.
Who signed up for those?
Give your finances the fix and download Truebill today.
Nice.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of
DWAC, low day, you have a spec sweeper into the 22.5 puts, 54,000.
Welcome to the BNN and Bloomberg audience. I'm Mark Crumpton with First Word News. President Biden says the United States is working on a plan to get wheat through other countries by rail. But there are challenges with Ukraine's train system.
We're going to build silos,
More beer.
temporary silos, in the borders of
More
Ukraine,
beer.
including in Poland, so we can transfer it from those cars into those silos, into cars in Europe, and get it out to the ocean and get it across the world.
The president made his remarks at the AFL-CIO convention in Philadelphia today. The House committee investigating the January 6, 2021 assault on the U.S. Capitol says it needs more time to assemble videos and exhibits. The panel has postponed tomorrow's hearing and moved it to Thursday. The hearing will focus on alleged pressure placed on Justice Department officials by former President Trump to convince state election officials to reconsider and recalibrate results of the 2020 presidential election. Scotland will push ahead with a vote on independence. Scottish First Minister Nicola Sturgeon said today she will use whatever legal means possible as her government tries to reinvigorate the campaign
You don't think we can do that? Okay.
British Prime Minister Boris Johnson
Sam, man, all these DMs, it's like, mom, mommy. I'm like, relax.
Every mother in here just like chunk their mouse at their computer screen.
To the country's economy. About 6,800
not during
truckers
summer.
rallied at various sites across the country as the protest entered its 8th day. Officials estimate the strike has already cost more than $1 billion in damages. Striking truckers are calling for an increase in the
if you
minimum
DM
wage
someone when they're in the trade and ask about that trade,
again,
Mel, you can all the parents and all the parents can identify with this. It's like when you finally get to go in the bathroom, you're trying to do your business, and then all of a sudden the kids come and they're knocking on the door and they're sticking their hand under the door and all that stuff. It's like, look, chill out. It's like, I'm in the bathroom. I'll be right out.
I'm John Olof, and welcome to Bloomberg Markets.
And I'm Kriti Gupta. Let's dive into the price action here because it's been a little bit of a quiet session, but it's interesting to see that ahead of the FOMC meeting tomorrow. A little bit of muted reaction. We did open in the green. That technical bounce was there, but John, nevertheless, we are down 0.1% on the S&P 500. Totally natural to see a little bit of a risk-off mood, a little bit of caution ahead of that FOMC meeting. Take a look at the VIX. So you do have a 32 handle. So once again, volatility is staying put. You aren't seeing a decline in the VIX, which really tells you perhaps investors not quite confident that the risk-off mood is over just yet. The 10-year yield is where I want to go next. 3.45 on the 10-year yield. If you look across the curve to the 2-year, to the 5-year, the margin, the premium doesn't look that different. We're going to hit that. A big theme here is, do you start to see that risk premium? Is it worth going out further on the curve? And lastly, with those higher yields comes a stronger dollar, John. That, of course, having ripple effects across the entire market.
It has been a headwind for a lot of companies, but what is keeping us close to the flat line today are some corporate stories of encouragement. FedEx going through a big management overhaul and some dividend news that has excited investors to the tune of a 14% pop in the stock. Oracle, with its cloud business, really sending a vote of confidence to the markets. And then, of course, we have that continued interest in energy stocks, names like Occidental Petroleum, a top holding for Berkshire Hathaway. But, of course, it is that elevated price of oil right now, Critty, that is one of those key concerns for the broader economy around the world.
Certainly a big concern. Another big concern is volatility. It's gripped financial markets ahead of tomorrow's FOMC decision. Bloomberg spoke to Ed Al-Husseini of Columbia Threadneedle earlier today about the pressure felt in the Treasury market.
I think there will be a point at which we're seeing right now the curve start to invert, but that inversion would become more aggressive and we'll actually get outright bid for the long end of the Treasury curve. When that happens is a critical question. I think what we're searching for here as market participants is really the level of neutral. Once the Fed is priced to go
I'm still over here on me.
I'm
just still over here on me laughing there.
The safe haven bid returns to the long end.
I threw the chocolate at your head.
That triggered. We see a little bit of hesitation on the bond side in the Treasury market. Let's talk about the equity market.
I threw the chocolate at your head and you just barely dodged it. I heard it. I heard the wind coming.
Stop joining us now for more on that side.
Oh, it would be hilarious if we were all working in the same space.
Anna, thank you as always for joining us.
For you.
The last 24 hours
President Biden tweeting now. We've got about 790 or so billionaires in America.
Turned into 75 basis points. But is that
their
a
average
negative
tax rate is
or
about
a positive
8%.
for the stock
Says
market?
no billionaire should be paying a lower tax rate than a teacher, firefighter,
Is there any narrative here
electrician,
where
or
that can be
cop.
seen as a
Tweet
good
from
thing for equities?
President Biden.
I definitely think there is a positive aspect to that, Critty. If we get 75 bips tomorrow, which is our view as well, along with a lot of the market, that means that the Fed is moving forward. They are acknowledging that inflation above 8% going forward is something that we need to get a control on. The question becomes, if they don't, if they sort of, let's say, be more dovish than the market expects and go 50, that actually could spook equity markets even further, giving fears that later on we're going to fall behind and we have to even more aggressively catch up. So we actually see
S&P futures continuing to pull back now, 37.45.
And against that backdrop, walk us through how you're thinking about the next 6 months. Obviously, there are starting to be some greater concerns about whether the U.S. consumer can weather the storm. Let's say we see that kind of hike in rates, and obviously people are feeling the pinch in their pocketbooks. What's the wild card for you as an equity strategist?
Well, I can't say it's just one wild card at this point, John. I think it's all the factors put together. Now, we know with inflation, it's definitely taking a bite out of people's spending power. When you have that inflation, your real purchasing power gets decreased. And also, you're seeing that people are becoming more price conscious, and they're seeing and they're feeling those energy prices, the food prices. On the other hand, too, remember that equities are a large part of household wealth. Almost 25% coming into this year of household wealth was tied to the equity market. A lot of that was accelerated during the pandemic when we're all stuck at home and people got involved in stocks. Now with the market an official bear market, you have to imagine the possible impact it has on household wealth there. I think that's another factor that we want to remind investors. So as you see the consumer weakening and as you also see other impacts that are outside really of our domestic control, these are all factors that could lead to less spending, less earnings growth, which also gives it a tougher time for the equity market.
And I want to ask you about what is actually driving the market here. For so long, it was operating margins. Then it kind of turned into a valuation story. How much of the story right now is liquidity, and how much of that is going to continue to be the story in the face of quantitative tightening?
Well, that's a great point you bring up, that liquidity aspect. When you see a lot of volatility, people start moving their books
64 puts, they're paying 34 cents, 40,000 behind it.
Shifting what is considered value style, what is considered the growth style. For us going forward, we're focusing on low volatility. We think that as you see slowing corporate earnings growth, a place to be is more defensive stance. And a lot of that reopening trade, the cyclicality we liked coming into the year and for the last year, I think a lot of that's been played out. I do think that people will still consider spending on services and travel, but it won't be as robust as we saw it in last year. So for us, pivoting towards more low volatility stance, looking at those stable earners and stable price growers, I think that's what we're preferring for our portfolio
Wow,
right
the
now.
10-year, just I hadn't
And
looked
real
at it
quickly,
today, but
Anna,
the
just
10-year
on
is up
the
here at
areas where margin
3,448.
pressure could be greatest, what are the sectors you're going to be watching closely?
I think where you're going to see margins really come in is that combination of items
velocity
that
of the
consumers
moves
don't
that we're
really
getting in the
need,
bond
that
market
really
is,
rode that pandemic lockdown. And now in the discretionary sectors, not a real focus
Super
for people
bullish.
to spend on top of the issue with continuing supply chain problems. I think those are the kinds of markets we would avoid. Also, that low quality parts of the market, companies that have high leverage, that have high volatility. Look for these more across the spectrum than necessarily focusing on just sectors. That would be my recommendation.
Anna Hahn, equity strategist at Wells Fargo Securities. Her first time on our show. Of course, we are looking forward to having her back. Thank you, as always. Coming up, we're going to talk about the other issue plaguing markets, supply chain disruptions. Well, they're affecting the finance sector, too. Our guest is Jason Recate, Citi Global Head of Corporate Banking. That conversation coming up next. This is Bloomberg.
FlexShares exchange-traded funds, managed by Northern Trust. Visit flexshares.com.
Accenture. Let there be change.
EY World Entrepreneur of the Year is the ultimate global competition for entrepreneurs.
Central Time, 12:17 at 3:75:10.
World Entrepreneur of the Year. This year in Monaco, recognizing one individual who has raised the bar in
just from
sustainability.
today. We'll just call it that 375 area. We have 5.8
Because one person
million.
can make a world of difference.
That's definitely a bigger level.
What about this couch?
Watching this 375.
It's awesome.
Just to put it in context there, CNBC was talking about just now the range.
Dude, I need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that. Plus, I earn triple cash rewards.
Where do I sign up?
What about this guy?
He's dead to me.
Get your upgrade card at upgrade.com.
In the future, we'll travel to incredible places with the help of magical technology. But what about today? I want my magical future now. I have places to go. Rocks to climb. Sights to see. And flights to catch. I can't wait for what tomorrow will bring. But in the meantime, let's enjoy the ride.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
This is a premium, hand-selected bacon-wrapped filet mignon that's aged for tenderness and trimmed to perfection. This is a necktie. What do you think Dad wants for Father's Day? Visit omahasteaks.com/TV to order the Dads Want Steak package today for just $99.99, and we'll include 8 additional burgers free. So get him this. Not this. This. Go to omahasteaks.com/TV today because Dad deserves it. Just a little Father's Day wisdom from Omaha Steaks.
This is Bloomberg Markets. I'm Kriti Gupta with John Ehrlichman. Supply chain issues, rising rates. There are many reasons why corporations could be facing a cash crunch, leaving investors on the sidelines when it comes to capital raising. Bloomberg Sonali Basak is here with an update. Sonali, walk us through some of these issues.
Yeah, let's bring some of these issues together, because when you look at supply chains, let's just take one input, that's shipping costs. That even though they have come down from their highs, they're still drastically elevated from where they were not just 2 years ago, but even 1 year ago. Kriti, if you see that blue line over there, that is the spot rate from Rotterdam to Rotterdam from Shanghai. And the line below that is the spot rate from LA to LA from Shanghai. Now let's move that over as well and talk about this in terms of financing, because this is just one input cost for companies. But then there are others as well, as we know that they're facing an extraordinarily inflationary environment. That's a complicated picture when it comes to the debt story here, because the cost of financing is also going to be rising. Take a look here at the high yield spreads. This is the Bloomberg average high yield spread here. It has shot back up to 4.8% on average. That is, of course, a cost that is expected to only get higher as rates rise. And remember, these are riskier borrowers. The question is how much that spreads into other companies as well.
No doubt. Sonali, stay with us. We want to stay with this theme of the supply chain and get some perspective in the banking sector. Citigroup's head of corporate banking, Jason Recate, joining us now. His unit helps companies get financing to make sure operations continue in the wake of these prolonged logistics issues. Jason, thanks for being with us. And Sonali outlined a number of considerations, I would imagine, that are key with your clients right now. Can you tell us from your vantage point where the financing needs have been greatest?
Sure. I mean, to your earlier point, all of these are the major themes right now: inflation, supply chain, whether or not recessions are coming. It's all in the minds of our clients, so it's top of mind. I think the financing is interesting right now. There's some optionality in the market. The bond market's still receptive, particularly for the investment grade borrowers. So if they need to term out, if they need to refi, that's still available to them. But what we're seeing is actually a little bit of a move into more borrowing from banks. It's been sort of a tepid market for bank loan growth in the last couple of years. Sort of coming out of some of our clients are looking at more bank borrowing, so we are seeing borrowing levels tick up a bit.
What about the companies, Jason, that are not investment grade? However, there's a whole host of companies, you know, and we saw when markets got choppy in 2020, they very quickly became fallen angels, and they quickly lost a lot of good standing with investors. So how do you think about this in terms of anyone that has any sense of risk?
Right. I mean, listen, I certainly don't mean to suggest there's no risk in the system. That there is some, and I think for those that are more highly levered, who are more dependent on floating rate facilities, this is a little bit of a nerve-wracking period as we watch rates tick up. But you know, the bank market is still there. I think that's helpful for them. And what we're generally seeing is higher levels of liquidity across the spectrum. That's been a theme since early COVID. I think a lot of our clients decided to put more cash on sheet right at the beginning of the pandemic, and really haven't brought that liquidity down as much as we might have expected. So in a market where, you know, inflation is compressing margins a bit, and the sort of ability to fund across the spectrum is a little more challenged and certainly a little bit more expensive. We're not seeing a lot of concern quite yet, just because the health of these balance sheets is providing some cushion.
So what about investors as they think about investment grade versus high yield? Are they finding some place for cover? Is investment grade a relative safe haven here? And do you expect that to continue to be true if things get a little worse?
I think the investment grade companies are in great shape. They have certainly, you know, around their own P&L performance, they're going to have some challenges in the next sort of 12 to 18 months. We'll see where the recession, whether and how deep a recession we see in Europe or in the United States. So that could be, you know, a demand impact, and the supply chain issues are still there. But like I said, with the health of these balance sheets, I think that will keep this recession from being as severe as it might have otherwise been. This is we're going into this in relative health for the large corporates in particular. So I feel pretty good about that. But you know, with sort of open eyes around the fact that this is going to be a more difficult, you know, sort of near-term outlook for everybody.
Jason, let's head back to the supply chain story, because one of the big conversations has been in the wake of not only the trade war, but of course the pandemic as well. A lot of corporate American, I should say multinational companies around the world looking into nearshoring. So bringing output or bringing production lines from China into, say, Vietnam or Mexico. What are the geographic trends that you're seeing in your business?
Yeah, it's certainly a trend sort of aspirationally. I don't think we've seen quite as much of supply chain moves as we might have expected. There are reasons why people would like to move around, and we see interest in Southeast Asia. We see interest in India, in Canada, South Africa. These are places that some of our clients maybe previously didn't look at as closely, but now would like to. The reality is that China is still a very major part of the supply chain. They provide services and manufacturing and ability to sort of source materials and handle logistics very well. The current lockdowns in China are actually sort of accelerating in some cases these trends, this interest in moving out and looking more in a more determined fashion for other places to manufacture. The general sense in supply chain, though, is it's still severe. I mean, it was always we had pre-invasion by Russia into Ukraine. There were certainly some difficulties around things like chips, but with the soaring energy prices. And continued short supply of chips, we're now seeing sort of more tightness across lots of other commodities.
Jason, really good to get your perspective. Thanks for the time today. Jason Recate, Citi Global Head of Corporate Banking, and our thanks as well to Bloomberg's Shonali Basak. We are going to take a quick break. When we come back, we are taking a look at the restaurant industry in the wake of the pandemic. More on that coming up next. This is Bloomberg.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Welcome to your world, your why. What drives you? What do you want to leave behind? That's your why. It's your purpose, and we will work with you every step of the way to achieve it.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
ESG is responsible investing. Who's responsible for building ESG into your investments? At PGIM, the pursuit is on for outperformance. As active investors to outdeliver with customized strategies, integrating ESG best practices into our investment decisions. As asset managers and fiduciaries to outserve with our commitment to better ESG outcomes. Join the pursuit of outperformance at PGIM, the investment management business of Prudential.
If you struggle with mobility, the sturdy and comfortable Hurricane helps you walk on any surface and truly stands alone. It comes with a worry-free 100% money-back guarantee plus free shipping. Get America's #1 selling cane at hurricane.com.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the printabilities are endless.
This is Bloomberg Markets. I'm John Ehrlichman with Kriti Gupta. Obviously, we've looked at so many industries, Kriti, of late. The U.S. restaurant industry is in the spotlight as owners now are grappling with rising food and labor costs. Let's get some more perspective now from restaurateur and chef Melba Wilson, owner of Melba's Restaurant in Harlem. And as a former New York resident, I missed the opportunity, Melba, to make a stop. But, you know, it's been such a challenging time for the restaurant industry coming out of the pandemic and now dealing with a new set of challenges. What would you say about where the restaurant industry is right now?
John, I would like to tell you that it's really a pandemic on top of a pandemic. You're right. The pandemic was extremely devastating for, the restaurant industry, which by far is the second largest private employer in the country. But on top of that, now we have the labor shortages, which are just everyone's experiencing that in this industry, and the rising high cost of goods. Me being a local community business, it's always important for me to really try and be inclusive of the neighborhood. We want to make sure that people that live in our communities are able to dine at our establishments. However, when you're looking at the price of goods somewhere north of, let's say, 45%, it makes it very, very difficult for me to keep my prices.
Melba, this is the second time in 18 years that you've raised your prices. I have to ask, though, are you starting to see signs of demand destruction? That's something we talk a lot about on Bloomberg Television, this idea that fewer people are going to look at those prices and say, you know what, we're just not going to eat out today.
Yeah, I had someone that came in the other day and I had to raise the price of a cake by $10. And they brought the cake, but there was a little bit of grumbling, and I understand that. However, when we look at the job market, the fact that we're paying people more, we have to, because the labor shortage is so limited right now, as well as the increase in everything has gone up. everything from from produce to flour to sugar, everything. As well as the items that we package these goods in as well. So we don't have a choice. In order to stay in business, we have to increase our prices. But I can tell you that the majority of the people that come in, they understand it. They're very savvy people. They're always reading and watching, and they know what's going on. So they know that it's not just us. So it kind of makes it a little easier for us to deal with.
And Melba, we just did a segment on lending. During the pandemic, just having access to capital was key for the industry. And it would seem today that still is a key issue for a lot of these owners of restaurants, certainly the smaller ones as well.
John, can you say that one more time? Access to capital. Okay. The restaurant industry is a very difficult industry to start with. Our profit margins are extremely slim. And the reason that most restaurants fail is because we don't have access to capital. Me, when I opened up Melba's in 2005, I actually saved up money under my mattress, literally. And I hate to tell you guys that, but that's what I did. But no bank would give me a loan at that time. Times have changed. I can now get a loan based on the fact that I've been in business for 18 years. But when we look at businesses that are restaurateurs that are looking to start out in this industry, it's very, very difficult for them to get access to capital. And during the pandemic, wow, the PPP loans, there are many times that I was on the forefront, myself and the New York City Hospitality Alliance, fighting for smaller businesses and local businesses to have access to the PPP loans. So that's still an issue with us.
Melba, we have about a minute here. Can you talk to us a little bit about sourcing some of your ingredients, sourcing some of your food as those food prices get higher, even in the spot market from a financial perspective, but even at grocery stores, at retailers, you are starting to see food prices really increase. How do you combat that from a restaurant perspective?
Well, it's very difficult to combat because it's not like we have a choice. We don't have an option. We need to buy these items to keep them on our menus, and we need to keep our customers coming in. So I think the only thing we can do is just swarm them in service. Smile a little brighter, be a little kinder, and also be generous. Oftentimes my staff will send over a dessert or something for a guest. So it's just letting people know that we care. People are happy to be back out right now. And we realize that people do need people. And it's always good to sit down and enjoy a great meal with family and friends.
Melba, such a positive thought. Thank you as always. Of course, John and I are going to hold you to that waffle offer. We, of course, looking forward to visiting your restaurants. Restaurateur and chef Melba Wilson, thank you as always, John. As we go to the next show here, we are seeing S&P 500 down 0.5%, a little bit of a risk-off mood. Does it continue into the close ahead of that much-anticipated FOMC meeting tomorrow? John Ehrlichman, I'm Kriti Gupta in New York. This is Bloomberg.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
Guys, got hair loss? I know what you're thinking. Should I shave my head? Comb it over? Wear a hat? Just stop. This isn't 1970. Keep your hair and your confidence because Bosley, America's #1 hair restoration experts, can give you your real hair back permanently. Check them out today because they're giving away an absolutely free information kit and a free gift card to everyone who texts WILD to 234-234. Dude, you don't have to look like your dad because this isn't your dad's hair loss treatment. People all over the country trust Bosley because they're ahead of the curve. They use the latest technology to give you your real hair back. And the best part, Bosley's permanent solution is protected by the Bosley Guarantee. Let them show you for free how awesome your hair could look with an absolutely free information kit and a gift card for $250 off. Text WILD to 234-234. Ask about the Bosley Guarantee. That's WILD to 234-234.
Now keeping you up to date with news from around the world, here's the first word. I'm Mark Crumpton. Ukraine's president says the war may stagnate and more people may die if the delivery of weapons to his country doesn't speed up. Volodymyr Zelensky told reporters during an online news conference today Ukraine needs adequate weapons to be able to hit targets from long distances within its territory. And President Zelensky reiterated the war will only end when all foreign troops leave the country and its territorial integrity is restored. President Biden will travel to Saudi Arabia in July and is set to meet with the country's Crown Prince Mohammed bin Salman. An administration official says the trip is meant to mend U.S. ties with a nation Mr. Biden once promised to make a pariah over its human rights abuses. The Kingdom of Saudi Arabia issued a statement saying talks will cover cybersecurity, economic investment, food and energy security, and more. The World Health Organization's top monkeypox expert says the UN health body is attempting to prevent the onward spread of monkeypox, saying the agency is worried about the continued spread of monkeypox in rich countries and was evaluating how it would help stem the disease's transmission there. Outbreaks can be stopped, he says.
We have a concern about this disease spreading in Europe, but I certainly didn't hear that same level of concern over the last 5 or 10 years. So I think this is a lesson. These diseases will continue to emerge. They will continue to pressure. They will continue to cross the species barrier. The question is, are we in a position to collectively respond?
And the World Health Organization is officially renaming monkeypox. Last week, more than 30 international scientists said the current name of the mild form of smallpox is discriminatory and stigmatizing, and there's an urgent need to change it. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
It is 2 p.m. in New York, 7 p.m. in London, and we are live from Bloomberg's World Headquarters. This is Bloomberg Markets at Close. I'm Caroline Hyde.
I'm Taylor Riggs. And I'm Shonali Bassick. Romaine Bostick is out today.
And he misses another healthy dose of volatility, continuing to grip the markets. Trader sentiment fragile ahead of the all-important Fed policy stance. Taylor on the Treasury tumult, Shonali on the credit carnage. We've got you covered. 75, it's the new 50. Money markets now pricing in a 0.75 percentage point Fed hike this week, which would be the largest since 1994. Now, JP Morgan is seeing a 100-point hike as a non-trivial risk. We debate the about turn. Plus, inflation in focus. U.S. producer prices still surging last month. We discussed the impact of supply chain pain, labor shortages on the agricultural business in particular, with the president of berry giant Driscoll's. First, though, we check those markets. And, I mean, no big bounce up after yesterday's significant sell-off. We are still down 0.4% on the S&P 500. Some of the healthcare names being under particular duress today. We see the two-year yield once again being pushed higher as we await a Federal Reserve and just how high they could put the overall Fed funds rate in just one fell swoop. We're looking at US dollar once again, the main haven of choice at the moment, up just 0.33% at the moment. And natural gas futures, we will discuss this more, but in the US, they tumble. In Europe, they spike ever higher, as this time it's the closure of that all-important export terminal in Texas being offline now for 3 months. But once again, we just think about the supply chain being upended, Taylor.
Well, and before we get to, Caroline, some of the market setups, I want to bring in Shonali quickly, if we can, for a quick chat. I know that here I'm looking at the two-year yield, but you've also been looking at some of the credit markets, right? And some of the private markets as we think about how we're discounting all of these valuations.
Yeah, you're seeing spreads back come up again past 4% when you're looking at the high-year yield. That's not that level, guys, that you saw. A lot of worries among the biggest bankers here, but it is a level at which you are starting to pay more for the riskiest borrowers in the United States, back to levels you saw a couple of years ago.
We're going to have a great credit chat, I know, coming up in about 20-25 minutes time. We correctly showed that two-year yield. If we can also show that terminal chart that I had as well, we're thinking not only about a 68 basis point move in the last 6 days on two-year yields, but Caroline, as you said, is 75 the new 50. I read maybe 4 or 5 market notes this morning. Wells Fargo, Goldman, they're all saying that I think we're a go for 75, at least the Federal Reserve maybe communicating, leaking some information to try to prepare the market for a big day tomorrow.
A new Fed whisperer. Many of us read that particular note. Meanwhile, Taylor, with the perfect setup, joining us in the house, I'm pleased to say, Mike Vogelzang is the Chief Investment Officer of Cap Trust. It is wonderful to have you right here with us, Mike. And I mean, what an extraordinary time to be trying to allocate money at the moment. How worried, you know, obviously the CPI print was pretty ugly on Friday. Right. How right do you think it is to now be girding ourselves for a 75 basis point?
There's no question. I mean, I think the market is digesting, of course, obviously negatively what happened in the sort of reset. The market was clearly caught by surprise. The market thought we had peak inflation, and we were sort of coming maybe on the downside of the slope, and whoa, wait a second, we've got a big slope ahead of us yet. So that's what's really driving some of this challenge. You know, again, you see that in the 2-year. That's the most sensitive to that setup. Look, I think the Fed's in the box. They don't really have many options in terms of what they're trying to accomplish today, right? They have to fight the Fed. Or rather, they have to fight inflation at the Fed.
So if you're looking for more volatility ahead, what is the risk here of not getting back in at some level in the market? What is the risk of getting back at too high of a level if things start to recover?
Look, there's a great old phrase on Wall Street, right? The negative people seem smart, the optimists make money, right? And so it's really easy to be negative. There's plenty of negativity around. Everyone knows what's wrong. Everyone knows we have a recession. Everyone knows the Fed's in the box and it could drive the economy into recession. We know corporate earnings are probably going to slow from here. The question is, how much of that has been discounted? And at what point do you begin to nibble? We're beginning to nibble. We've been underweight equities in our exposure for the last 3 or 4 months to good effect. And at some point, it's time to add a little bit of equity risk back in your portfolio.
Where are you doing that? What sectors?
Right now, we're really not thinking about sectors. We're just adding equity beta back, right? So we took it off. It is the debate, right? Do we think about being in conservative, consumer, sort of consistent grower, quality kind of stuff, or do we think about some of the tech wreck that's out there, the stuff that's down so much, and maybe that's the place to find some value? We're trying to avoid that at the moment in the sort of heat of the battle. Let's just get some equity exposure back on.
What does that look like there for individual names, or how do you get that?
It depends on the accounts, right? So if we run individual stock portfolios, and in that case, we're just simply adding that back across our existing portfolio.
From cash?
From cash, yeah, from cash. And in other places, we're adding simply, our exposure in our allocation buckets, the way we normally do. What I think is interesting is that given the fact that we have, we're creeping back into equity risk, we're also extending our treasury duration. Now that rates are back up, so we've been really short, we've been really cautious, we've been really liquid. We're keeping that liquidity, but moving it out on the duration spectrum now that we're getting paid for it.
How far out do you go?
It depends on our portfolio, right? We run some money for institutions where we can go out longer. We also run a lot of money for wealth clients, so we keep that a little shorter, more intermediate term. So anywhere from sort of 8 to 15 years. So we're selling and moving out of the 2-3 year area where we've done really well and extending that duration. That does a couple things for us. One is it allows us to get back into the equity risk market, but if the Fed over-tightens, slows the economy down, we pick up the duration rally in the treasuries.
Is that the bet you're making? Bond yields have peaked?
Well, it's not the bet, right? The point is, anyone who tells you they know is wrong, right? I mean, it's very clear. This is uncharted territory. This is no question. We haven't seen this before. We're coming off a pandemic, the stimulus, we got the war in Ukraine. I mean, there's any number. China's locking down. All of those things are adding to the sort of opacity of what we're seeing here. And so the question is, you need to build a portfolio that's resilient, that can take advantage of multiple circumstances. So we don't have the answers, but we understand what's going on. We're trying to understand and build portfolios that respond well in multiple circumstances.
How quickly do you think the Federal Reserve will have to go and cut again? Because as swiftly as we bake in 75 basis points for tomorrow, we're baking in 75 basis points cuts in a couple of years. Yeah, we've actually been arguing in our investment committee. We've been arguing, personally, I've been saying, let's just get there, right? The Fed knows what its terminal rate needs to be. We don't need to. What is it? It's probably another 175 or 200 higher. So if that's the case, let's do 100 and 100. I'd be fine with that. The market would be surprised, right? And Jay Powell's not going to do that. But my point is, the market is as set up for this as they're going to get, right? We saw a little indigestion going from 50 to 75. Right? I don't think it's that far of a stretch to say, hey, we just need to get where we're going to be. So in case the economy slows down, we have some dry powder. That would be our take.
So we asked you about what you are buying now, but what about hedging? Is the cost of hedging right now appropriate? Do you think it's too high, actually, to protect yourself on the downside?
Yeah, what's interesting is that the sort of left tail risk that is supposed to hedge big, large drawdowns hasn't been working particularly well. That's because we haven't seen panic. I was talking to the Bloomberg radio guys this morning, and the challenge there is, we were talking about it, the fact is this has been a very orderly, nice, sort of perfect decline, right? We haven't seen this sort of deep panic like we saw in March of 2020, when it wasn't just financial panic, but it was, oh my goodness, am I going to live, right? I mean, there was real existential crisis in March of 2020, and as a result, you saw massive amounts of panic, and those hedges work beautifully. They haven't been working so far, so it'll be really interesting to see how that hedging prices out.
Mike, really great to have you here.
Great,
I'm glad that you managed to spread you across radio and TV. Mike Vogelzang is Cap Trust CIO. We hope he travels through New York soon. Meanwhile, coming up, we'll take a deep dive into the credit markets, as we're just saying, ahead of tomorrow's Fed decision. Of course, former partner over at Apollo is going to be joining us. Plus, how inflation is affecting food companies. Our guest, Soren Bjorn, president of Americas for Driscoll's, the world's largest supplier of fresh berries. Got plenty of them in our fridge. Meanwhile, in these volatile markets, we'll get insight on the distressed investing from Mark Lazary, of course, billionaire, Avenue Capital Management, co-founder and CEO. All that and so much more coming up. This is Bloomberg.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much? With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
Flex shares are carefully constructed to go beyond ordinary ETFs and strengthen client confidence in you. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully.
Discount.
I'm just saddled with so much credit card debt right now.
You need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
For our business, what works is I don't mind a 90% probability of failure if there's a 10% chance of changing the world.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
It is another sign of the worsening crypto downturn. What are we calling it? The crypto winter? Coinbase announced today it's going to be laying off about 18% of its workforce, following in the footsteps of other crypto businesses that have also recently cut some staff. Let's bring in our very own Bloomberg's Katie Greifeld for more. And the email was very interesting to employees, talking about how they sort of misjudged all the big hiring spree that they went through and now having to reverse that as they prepare for what could be a significant downturn.
Yeah, I mean, we know that Coinbase has been hiring aggressively. It added 1,200 people this year alone. It's cutting about that amount. So really, they built up really aggressively, now paying the price a little bit. But think about me, too. If you think about the reports that we got from Walmart, from Amazon in particular, saying that they had overstaffed. So
Compass, Redfin.
Exactly. So it's not necessarily a Coinbase-specific problem or even a crypto-specific problem. But obviously, this is playing out especially dramatically in the crypto market.
It's a huge sell-off Sunday into Monday. It has really started to taper off a little bit. We talk about capitulation in terms of the equity markets, but what would it look like for crypto markets?
It's a great question. I imagine it would look broadly the same. And if you think about the reporting that's been done by Bloomberg's Vildana Hyrick, for example, she's been all over this. If you look at sort of the prices that people came in, these sort of short-term holders, they're pretty much all underwater. So that's one peg that sort of has to break. But I mean, we'll see what tomorrow brings, because crypto, obviously, it's dealing with all these macro concerns in addition to sort of the company-specific and sort of maybe a little bit systemic concerns that we had yesterday with Celsius.
And talk about systemic concerns that sort of edge into the world of stock market as well, because we've of course been keeping a close eye on MicroStrategy, that particular company that many trade for exposure in crypto, and it's talk of potential margin calls. We're yet to hear from Michael Saylor on whether that's a reality, whether they've already been bringing some crypto across to meet that collateral. But what do you make of the performance of crypto exposed businesses right now?
MicroStrategy, I feel like so much attention has been paid on MicroStrategy because we have been watching that sort of 21,000 level. We did hit it last night or early this morning. Haven't heard much in terms of whether that did trigger any sort of margin calls at MicroStrategy. We have heard from the company that they could post more Bitcoin at collateral. And you heard from BTIG in particular saying that MicroStrategy still has 96,000 Bitcoin available to it. So maybe some of those fears are overblown. Notable that MicroStrategy is higher today, but if MicroStrategy did have to sell some of its Bitcoin hoard, I mean, that looks like systemic for the crypto industry.
I'm glad you brought that up, BTIG, that note saying there's a lot of factual inaccuracies floating around in social media and the financial press. So at least they sort of have a better sort of view of maybe what's going on in the company. I think sort of big picture, I think the big question has been, and I hate to come back to macro, but how difficult it has been to forecast in a fast-growing environment. You feel like there was massive hiring, and now there's sort of big layoffs, and the tough ability to forecast growth and what actual jobs are needed coming out of the pandemic, and then now maybe peaking and rolling over just a little bit. How are you hearing about the way some of these cryptocurrencies, the companies are managing through that volatility and doing a better job of accurately forecasting what actually they need on their company?
Well, I mean, it's a really interesting point that if you think about the crypto sort of ecosystem, it hasn't really lived through a Fed tightening cycle as a mainstream asset that it is now. And to your point, that makes it really hard to forecast how the different coins will behave, what it means in terms of market cap lost. I mean, the total crypto market cap right now, it's below $1 trillion. It was as high as $3 trillion as recently as November. So it's sort of these amazing drawdowns that we can see. Taylor, to your point, that makes it really hard to forecast. And again, these aren't crypto-specific problems in terms of layoffs and hiring freezes, but it definitely feels more dramatic in this industry.
Katie Greifeld giving some levity and indeed some insights into what's really going on cross asset for us, as she always does so well. Coming up, flashing red, we're going to go cross asset a little bit more for you. The credit markets in particular, signaling some possible big market impact from the Fed's rate decision tomorrow. We discuss with a former Apollo partner, Sachin Kajuria. That's next. This is Bloomberg.
At Lovesac, we design furniture for life. Real life. Messy life. Life that changes and brings us together for movie night. A life where batteries run down and get charged up again. Because now, Lovesac Sactionals can be upgraded with stealth tech and immersive surround sound by Harman Kardon hidden inside. Upgradable, washable, and guaranteed for life. Don't just hear it, feel it at a Lovesac showroom near you.
Fortitude Gold, producing high-grade, low-cost gold in Nevada, USA. A gold investment delivering monthly cash dividends and substantial yield. Fortitude Gold.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that, and that, and that, and that menu? And that's embroidery, but yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the printabilities are endless. Get started with free shipping at Vistaprint.com.
Caroline, I was joking a little bit yesterday when we were taking a look at investment grade and high yield spreads, and we hadn't gotten the update until yesterday when the market closes and our BVAL sort of index adjusts. So alas, we woke up this morning and really got a good view on sort of the turmoil yesterday with the CDX and of course those sort of the cost of hedging, if you will, against some of this credit, Shanali, rising up to sort of key levels that we haven't really seen since the pandemic. So at least on this measure, one way to measure sort of the fear and the volatility that we got yesterday.
And the question is, how does that spill over into private markets? And joining us to discuss this now is Sachin Kajuria. He's former Apollo partner and author of 2 and 20, How Masters of Private Equity Always Win. He now runs his own firm, Achilles Management, after leaving Apollo. Thank you so much for joining us, Sachin. You know, the question here is, do they always win? We are seeing so many new crossover investors get into private markets and see some declines, albeit not as big as the declines we're seeing in the public markets right now.
So I think you need
to look at the major firms. If you look at the major firms, I think they are winning. And if you think they've done well through the pandemic and the last few years, I think as valuations get cheaper, they're going to do even better. And so I think they are always winning. And there's a reason for that, which is I think they have a common mindset, a winning mindset. If you look at the macro climate today you guys have been discussing, they're not just looking at whether we have 75 basis points coming or 50 or 100. They're zooming out and they're looking on the other side and saying, when we need to reduce rates? If there's a recession, what do we do? And so I think they're not going to let this opportunity in front of them go to waste. I think for people coming into the industry new, it's tough because it's a people business. It's nothing automated. There's nothing that AI or artificial intelligence can run for you, or machine learning or quant trading. And so you need to have the experts at play, particularly in tough markets like this.
There's been some disconnect, though, between how maybe the public markets have re-evaluated a higher discount rate, but the private markets seem a little bit hesitant to start to cut some of those valuations. Are we closing that gap?
So I think they have the luxury of taking a slightly longer term view. And so because the investments are generally illiquid, they're not marking to market every day, although they do find, particularly for the major firms, that they have, quarter to quarter valuation changes. I think what's important for them is the outcome. So they'll look at changes within the quarter, but also look at whether those changes are transitory, and they should be reflected in a spike in valuation one quarter and a crash in valuation the next, unlike the public markets. And that's why I think more people are turning to them to look to see if they can form part of their investment portfolios going forward.
What's been interesting is particularly distressed debt investors, but sort of the awaiting of a zombie company to finally become one, the awaiting of like the punch bowl to truly be taken away, and the prices to reevaluate in some way. How will we know that private equity has won, if you know what I mean? What's going to be the tell for you? Is it going to be the performance that we have to look at? Is it going to be what assets they start buying?
I think it's mainly the performance, because that's why they're there. I think, you can blame documentation for zombie companies never actually getting into trouble for quarters or even years, but that same documentation can prevent new deals happening. And so I think what we'll see as we get through the tough economic times ahead is the best players are taking full advantage of that by buying credit, by restructuring companies, by doing all the things they've, like you said, probably been waiting the best part of a decade to do at scale, couldn't really do in huge scale during the pandemic, and are now wondering whether the cycle will help them do that.
How much do the public markets matter when you think about credit markets here? You are seeing some signs of stress, and of course, private equity borrowers are huge borrowers when it comes to credit markets. Is that going to start spilling over?
So I think it depends how they've been conducting themselves over the last few years. If you've been borrowing high yield at 5%, and now you're looking at treasuries above 3%, and you're wondering whether your business model for that buyout relies on you continuing to borrow at 5%, that's a tough place to be.
Really? Yeah, another question here for you also. I mean, the other aspect of it is, can you keep these companies afloat by simply just investing in them?
Yeah, look, I think that generally, because they're taking a longer term view, the best private equity firms are going to do very, very well. I've actually never been more optimistic than I am now on the major firms. I think, like you said, people are crossing over into this industry. They're going to find it tougher because it's a people business, because it's very hard to get those characteristics of success. It's not just something that you can quickly replicate by hiring a bunch of folks from one firm to the other. You have to form a culture, you have to have a common set of principles, and that can take decades, and that's what the major firms have.
And one that I'm sure you're building at your new firm as well. We thank you so much. It's great to have some time with you. Sachin Kajuria, author of 2 in 20, How the Masters of Private Equity Always Win. Now with Achilles, we thank you. Meanwhile, S&P 500, let's have a quick look at where we are doing in those public markets. We're down, again, 0.4%. Nowhere near some of the churn we saw yesterday in terms of equity markets, Taylor, but certainly in the bond market, we are still seeing that fragility.
Relentless. I mean, I think I should correct myself. I said 68 basis point move in 6 days. That number could be 78 basis points, I think, when we take a look at the price action today. Shonali, huge moves within full faith and credit.
Your NASDAQ 100, though, is still in the green, at least for now, guys. It's a long road ahead.
Dollar, your only haven of choice, really. There's the Bloomberg.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
What does COVID done to AI initiatives in the workplace?
Massively accelerated it. I was with a CIO last week in Atlanta, and he was telling me they have Steve. And Steve apparently has gone out to win some company award.
Okay.
Steve is actually a robot, right? Like, no one knows that in the
Wait,
company.
so a robot is like employee of the month?
Yes.
This is Lenovo Late Night IT.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner. And we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Hello to Truebill, the #1 personal finance app, packed with tools to help manage your money, like canceling unused subscriptions with just a tap. If you're ready for an all-in-one money management solution, then download the Truebill app today.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. However, we can't do it alone. Find out how you can help.
This is Bloomberg Markets, the close. It is 229.41. It is almost the time that we check in on the commodities close, because we are really tracking at the moment the way in which certain asset classes have been affected. I mean, the notable one is gas. We'll turn to that in a moment, but we will also be looking, of course, at what's been happening with the likes of gold prices and indeed what's been happening with wheat, with oil. But Taylor, we are going to dig in first and foremost to what's happening with the gas prices right now.
Yeah, huge moves, Caroline, when we think about sort of where we are, not only with oil, but then of course going to the nat gas market. And really every day Bloomberg TV has been talking about sort of the best of Bloomberg intelligence. We also want to take a look at the best of Bloomberg New Energy Finance and some of the great research coming out of that team. Of course, as Caroline mentioned, really looking at the nat gas space today. You had U.S. futures plummeting and European prices surging. Now, this is after an operator of a key Texas export terminal said that it may take now just about 3 months to partially restart that facility following the fire that we'd been talking a lot about on this program last week. Let's do all of this and more with Enrique Gonzalez, our Bloomberg NEF analyst. Really appreciate you being here. What has been sort of the state of the market that has been in such turmoil and really looking at that fire in that plant down there in Texas?
Thank you. So yes, before we got to this event, we were in an environment where the markets were very tight. There was a lot of inflexibility in both the supply and demand side. For example, despite the very high prices, we've had very muted production growth. And then on the demand side, there's been a lot of resiliency. So in the power sector, the hot weather during the summer has really been pushing gas consumption, plus the low levels of coal stocks have also helped push this dynamic.
Yeah.
And then, of course, we've had before Freeport LNG facilities consuming gas at full capacity to export it into Asia and Europe.
Yeah. So what is the impact here? Because obviously we saw the dramatic effect on the price point with the prices of natural gas tumbling here in the United States, but rallying more than 20%, up to 30% in UK and Europe. Is there a way of filling that gap? If Freeport's offline for 3 months, are other US plants going to be able to step in? Is it more that we turn to Nigeria, to Algeria to help the European supply crunch?
Yeah, so at least from the US perspective, the other plants, like I was mentioning, are already operating at full capacity. So it would be very difficult for them to really ramp up the amount of gas they're already exporting. And at the same time, in terms of impact, the 90 days would be approximately 180 BCF of gas that won't be exported into Europe or Asia anymore. And at the same time would be available for the domestic US markets. So we'll see international markets sort of tightening while the situation may improve for the US gas markets.
Really appreciate it. Thank you so much. Enrique Gonzalez, of course, over there at Bloomberg NEF, keeping us up to date on, well, some of the nat gas prices. And Caroline, you want to talk about volatility. This is, gosh, so many sad components to this as well when we think about food inflation and the pressure that this is putting on households. I think, well, the title sort of says it all. I might as well go out and eat, because the food at home prices versus food away from home prices, which is in white. Now, both of them have risen significantly, 17 to 12% or so, but it really has been the food at home up about 17%. Now, this is normalized going back since about March of 2020, but the massive sort of input costs that the food producers are experiencing, passing them on to sort of the big staples companies that then we're still feeling at that grocery store. Food inflation certainly has been a huge topic of discussion.
It has been across the board, and we're so pleased to be able to have an expert who's at the front lines of some of these price increases. Soren Bjorn is with us, president of the Americas for Driscoll's. It's the world's largest supplier of fresh berries. Of course, we've seen some of the prices have to go up, Soren, to a certain degree. What exactly is perhaps driving the inflationary pressures that you find at your business level?
Yeah, I think it depends a little bit on which segment of the food business you're in. You know, in our business, we made plans a long time ago for how much food we're going to have available this year, back in an environment where there was no inflation and no outlook for inflation. So actually today we have really good availability of berries, which means actually our prices have not really gone up that much this year. Obviously, that's very different in other segments of the food industry, where you more immediately pass on the inflationary pressures. We really can't do that in our business. Whatever number of berries we have today, they got to be gone by tomorrow. We got to sell them all.
Do you have any concerns that the prices could rise further in the future for any reason? And what would those factors be that could put prices up more for you?
Yeah, I mean, clearly all the farming inputs will ultimately have to get passed on to consumers, right? Where maybe in the short term, we can't pass it on. In the long run, we would have to account for all the cost increases. So packaging is up, you know, a lot of the growing inputs are up, transportation is up, and now farmers are looking at, you know, higher interest rates to finance their production. So that would all have to get passed on.
How are you thinking about the own labor shortage that you're feeling it at your company, not even to mention some of the food inflation as well, but the labor shortages?
Yeah, I mean, agriculture, our labor shortage is now almost chronic. It's been going on for, I would say, 10 years. And unfortunately, you know, we really lack immigration reform in this area. It's badly needed. Americans are not going to pick our crops. That's the reality. It has been the reality for a long time. And so we need some help in this area from Washington, D.C. In the short run, I mean, we are actually in pretty good shape today. You know, it looks like everything is going to get picked. But in the long run, we need reform to continue to do that.
I'm going to ask sort of a different question, which is equally hard to navigate in many ways, and it's down to sort of our environment. Talk to us about bees, about the pollination, about how that is something you're tackling. We've heard from Canadian growers in particular that that's become a bit of a dramatic impact on their business.
Yeah, I think there are many nuances to climate change that are impacting our crops. Berries in particular really depend on microclimates. I'm sitting here in Watsonville, California. It may be one of the coldest places in the United States today because we get this marine layer and the fog in every morning, and then the sun comes out in the afternoon. And if that fog bank just shifts a couple of miles, you all of a sudden have branches that are no longer viable for strawberry production. So it can be very, very minor changes in the climate will have a huge impact on where we can grow berries. And we see this all over the world. And that's not that easy to change, obviously, in the short run. And so we are looking at mountaintops throughout the world where the climate looks more like the coast of California to see what we might be able to produce in the future.
It's so interesting because with all of these uncertainties right now, with the climate and with inflation, I'm wondering how you plan for the future. How do you invest in farming technologies and other technologies to kind of protect yourself from some of these issues ahead?
Yeah, I mean, technology is a huge enabler of our business. It always has been. We develop all our own varieties. There's a lot of new technology in that world. And while we are committed to conventional berry breeding, we're still using a lot of technology to become more efficient at that. And we also are using a lot of AI to try to become better at forecasting our business. You know, in the end, as I said, we have to sell every berry that we grow. And the best way to sell them is if you know how many are coming. And we get very impacted by short-term changes in the weather.
Yeah.
And so we are doing a lot of work on AI to really try to help our forecasting.
Of course, Søren, I've seen your products all over the world, and you're a man who's led businesses all over the world. We've got about a minute left, but you had an Australian-based joint venture, and you start up in China. Are these still, is geographically the expansion the focus for you still?
Yeah, absolutely. I mean, we want to go everywhere where there is a legitimate consumer base for fresh berries. And that's gone really well for us. We now sell in 65 countries around the world. We grow in 23 or 24 countries around the world. And I think you can expect more of that from us.
Really appreciate Søren Bjorn Driscoll's president, of course, of the Americas, talking berries, and Caroline artichokes in Watsonville, California, in that Central Coast. Don't forget those. Really appreciate it. Thank you. Still ahead, of course, shares of Oracle jumping the most in about 6 months. We're going to be breaking down what fuels the optimism, and that is all happening in our Stock of the Hour next. This is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers. Invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated platform.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Reduce carbon emissions, they say. When it comes to our planet, we need to do more. We choose positivity. We choose to change. Tomorrow now. We'll learn, we'll try, we'll do and undo whatever it takes to get there. We don't have to commit, we choose to. We choose Earth. It's up to us, and that's our biggest power, the power to choose. Do you? EDP, changing tomorrow now.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We're going to continue to invent, we're going to continue to be insurgent, and we have a lot of work to do to get to where we think we ultimately can get for customers.
Time now for our stock of the hour, and let's look at one of the best performers in the S&P right now, Oracle. Of course, seeing amid yesterday the sell-off as we saw the fall apart of many a valuation question, but then, of course, now it's having its best day in 6 months after the fourth quarter cloud sales topped estimates. Abigail Doolittle joins us now to just remind us why the numbers were so strong coming from Oracle.
Yeah, it was a really strong quarter. The licensing numbers, both for the cloud and the database, very, very strong, beating in a big way, 18% growth. And, you know, this is an old school tech company, and yesterday selling off, that was how bad the sell-off was. But today, really reversing that in a big way on this strength. Now, relative to the cloud, that's where they're trying to steer their customers. And obviously, the biggest competitors, Microsoft, Google, Alphabet, Amazon. The CEO, Katz, though, he's saying that companies save money by going with Oracle. Now, they derive excuse me.
Do not take away our female CEO.
No, absolutely not. Let's not do that. But they derive 44% of their revenue from abroad. So it's so interesting that that is not something that they're talking about as a problem. But I think that the biggest takeaway from this is because the license upside was so strong that IT budgets are okay right now, despite these macro headwinds.
And big relief from that.
Yeah, big relief. Big relief. Yeah, absolutely.
Really appreciate it. Our very own Bloomberg's Abigail Doolittle. We want to pivot a little bit here and talk a little bit about some of that other rate volatility that we're experiencing this time, of course, in the muni market. Munis at one point yesterday and today having some of the worst days that we haven't seen in more than 2 years. This is, again, all amid a huge rout in bonds that have been triggered by speculation that the Fed will move more aggressively to fight that inflation. Joining us now for a preview, Rob Amadeo, head of municipals for Western Asset Management. And Rob, what is some of the rate volatility that you've experienced in your world of munis that has surely been triggered by full faith and credit?
Yeah, sure. It's a pleasure to be here, Taylor. Thank you for inviting me. You know, the market correction that we've seen throughout this year has been severe. It's it's hit every part of the marketplace. Real yields are higher, credit spreads are wider, and the severe penalties attached to the poor liquidity type securities like lower coupons has been absolutely severe. So there really was no place to hide. I would say that, you know, for the most part in our portfolios, we've been focused on those securities with credit ratings that are single A or better. We've been fading risk in the lower quality as lower quality has been underperforming higher quality and keeping our durations in check. I think it's been important in the marketplace to be mindful of how sensitive your portfolios are to changes in interest rates. And so with that, we've been keeping our durations in check and very close to our benchmarks. And more importantly, the structure of our securities. You know, a large part of the bonds in the municipal bond market today were brought to the market last year, low coupons, 3%, 4% coupons. And those structures are now subject to severe illiquidity in the marketplace, and the discounts have grown so wide that the outsized price discounts are now subject to de minimis penalty, which is an ordinary income tax.
How do you think then about places to hide in the future? If you think about credit, if that duration doesn't look attractive, where is that trade-off?
Yeah, so for us, at the beginning of this year, we were mindful of valuations relative to the strong fundamentals. You know, I think we have to be mindful this is not a credit crisis, but we're also being very cautious in the adding risk to our portfolio. So with that, stick with the single A and better securities. You can find really good value there. Fade the triple Bs that are still full valuations and be mindful of the high yield, like the big, more liquid high yield names that get caught up in these bouts of rate volatility. I think you want to fade those types of risk in this marketplace. Obviously, structure is key. You want to stick with the higher coupons as well.
We're waiting to hear, of course, from the Federal Reserve tomorrow. A lot of economists think that we'll start to see a little bit of a downgrade on some of the GDP estimates. Many economists looking for maybe some sort of recession in 2023. How then do you think about state and local government budgets, hiring, the way that they operate, and maybe could be a downturn even if it is a small downturn?
Yeah, there's a lot of cross-cutting issues in the market as you're describing. I think the latest inflation data is clearly showing we're not making any progress toward lower inflation. The inflation pressures will be felt in the upcoming fiscal year, which is starting for most municipal governments in July. And I think the good point is, though, the sizable budget surpluses that we've seen over the last few years have really led to sizable cash reserves, which can be used to offset elevated cost or potentially a softening in the tax revenues, which have been coming in really strong. So I think the fiscal situation is in such great shape. The financial flexibility is really strong, that inflationary pressures are likely to pressure budgets and potentially valuations, but not derail the solid credit fundamentals in the public finance market.
Really appreciate it. Thank you for your time and perspective, as always. Ram Abadeo, Head of Municipals for Western Asset Management. Coming up, we're going to pivot and go global for you. Hong Kong Chief Executive Carrie Lam leaves office at the end of the month after a tumultuous 5-year term. She discussed the city's international standing as a financial hub. That conversation is next. This is Bloomberg.
CME Group, where risk meets opportunity.
You've got a larger dark pool print and plug, 831.
At Lovesac, we design furniture for life.
But
real life.
Going through some of the flow that came
messy
in,
life. Life that
a
changes
larger position closing out
and
of
brings us together for movie
17,
night.
50s.
A life where batteries run down and get charged up again. Because now, Lovesac Sactionals can be upgraded with Stealth Tech. And immersive surround sound by Harman Kardon hidden inside. Upgradable, washable, and guaranteed for life. Don't just hear it, feel it at a Lovesac showroom near you.
The world needs now is people. People who see flight a little bit differently. So it takes less fuel to bring people together and make faraway places feel a little closer.
All I need is a parked Tesla somewhere to spontaneously combust.
Because seeing a better connected world isn't far in the future.
Obviously with nobody.
We're building it now. GE, building a world that works.
100flowers.com just made my birthday.
I can't stop smiling.
Wow, it's so cute. And there's berries too?
Hello! How can you compete with flowers?
It's like a whole garden, just for me.
Best birthday ever.
Thanks, 1-800-Flowers.
What if value and values could coexist? They can. ESG investments are changing the world, powering the shift to a fairer, more sustainable global economy. Bloomberg helps investors and businesses navigate the changing landscape and adapt to evolving regulation. With data you can trust and insight you can act on to unlock ESG opportunities.
Hong Kong saw more than 9,000 deaths when the Omicron variant swept through its under-vaccinated elderly population earlier this year. Hong Kong Chief Executive Carrie Lam spoke with Bloomberg's Stephen Ingle to discuss the city's future.
Despite some skepticism and cynicism about Hong Kong's future, I remain very optimistic and confident of Hong Kong's future. And one of the reasons for my confidence and optimism is Hong Kong's unique strengths under one country, two systems. Is Hong Kong's high degree of autonomy to conduct her external affairs, particularly on the international arena. So we have the autonomy to set up our own overseas economic and trade offices. We could enter into bilateral agreements on free trade, avoidance of double taxation, investment protection. So I do want to conclude my term by reinstating the importance of Hong Kong's international connectivity and her status as an international city.
But is the damage already done?
Well, yes and no, because if you look at the past 2 years, that is before the fifth wave hit us, for a period, Hong Kong was ranked the world's #1 in terms of normalcy. That is when other countries and places were imposing the stay-home permits and lockdowns and closed the airport and so on. We were by and large operating normally. Okay, but since the fifth wave hit us, and it hit us very hard, particularly in terms of the number of deaths.
We went from 300 deaths
so we
to
have
9,300.
to be extremely cautious. And at the same time, because of the transmissibility of Omicron and the mildness of this virus, then other places are opening up. So by comparison, I'm a person who believes in relativity. So everything is relative. When people are opening up and Hong Kong is still imposing a 7-day designated hotel quarantine, that to a certain extent weakens our position as an international city.
Hong Kong Chief Executive Carrie Lam speaking with our own Stephen Engel, and here to continue some of the focus on that conversation and indeed broaden it out for our emerging markets coverage. It's Emerging Action with Bloomberg's Sherry Ann, co-anchor of Bloomberg Daybreak Asia. Fascinating interview. Did she admit to any sort of mishaps, mistakes, particularly about the vaccination rollout?
Yeah, our Stephen Engel actually pushed her on that if there was anything that she wanted to apologize for during her single 5-year term. And she said no, if she owed an apology, it would be to her sons and husband for the sacrifices they had to make so she could serve the Hong Kong people. She did admit, though, that that vaccination drive was not as much as she could have done, that she could have perhaps saved some of the elderly people that died during the Omicron wave if the vaccination drive had been implemented at full speed. We know that more than 9,000 people died in the city. About 20% of the over 80s were vaccinated at around that January timeframe when already vaccines were plentiful in the city. But miscommunication, distrust really led to a lot of people actually not getting vaccinated. She did talk about, as we heard, about how these quarantines in the city have also weakened the city's status. Of course, they have really hitched the ride with China's mainland COVID-0 campaign.
From vaccinations to lockdowns, what can you say in terms of any setbacks being seen when it comes to lockdowns and the progress being made here?
Yeah, I mean, we have seen the economy slowly start to reopen, but these infections have crept back into, say, the cities like Shanghai and Beijing, and that's really led to some of those restrictions being lifted, being actually delayed. So we are now expecting tonight a set of economic numbers. We are expecting the collapse to continue. Retail sales to decline more than 7% in May from a year earlier, according to consensus. Industrial output also to drop around 1%. The last time that China actually recorded 2 consecutive months of these numbers contracting was back during the height of the pandemic in 2020. Now, factories, yes, they're resuming production, but given, of course, that these restrictions continue, sentiment is really sour, and they can't really get back up to full speed, not to mention that this stop and start restrictions being lifted, the reopening has led to a lot of the consumption sentiment being worsened. You wouldn't spend when you don't know when you're going to go back into lockdown. So perhaps some of the bright spot, the export numbers, and also tonight we do have the 1-year loan prime rate being decided. The PBOC may cut a loosen policy a little bit.
We're going to be talking a lot about that in our triple take, of course, in a couple hours, and sort of highlighting some of those key economic data pieces. It was interesting, though, about 24 hours ago, we were talking to you about sort of the massive sell-off that we're seeing in the U.S. and sort of what that was meaning for some of the Chinese equities as well. How did that turn out in sort of a decent rebound?
It was an exciting session, wasn't it? Because, yes, you said it. We came from this huge sell-off when the S&P 500 entered bear market, and then we went to China. We're down more than 20%, and the CSI 300 rebounded about 1% already. So we are now seeing these key gauges in Hong Kong also above their 50-day moving averages. Caveat, overseas investors have become net buyers. Domestic sentiment still sour. Margin financing still declining this year.
Really appreciate it. Our very own Sherry Ann, co-anchor at Bloomberg Daybreak Asia. We speak about the markets here in the U.S. Shanali, we can't make up our mind. We were lower than as much as 1% higher on technology. We roll over back again.
Yeah, absolutely. We are seeing the markets not making up their minds, but the NASDAQ now flipping lower. NASDAQ 100, that is, tells you where it's at.
We still have some buying out there. I mean, the fact that we've now slipped into the red in that respect. Some companies holding their gains, the likes of FedEx with a new dividend, Oracle with its numbers looking slightly better, but really the mood has soured. And it seems to be all about, of course, what yields are doing.
The bond market.
It's your market.
Another day for me.
Owns it.
This is Bloomberg.
Them Diamondbacks are mighty poisonous. We should get you to a doctor.
Real cattle herd don't need no doctor. Let's drive this herd.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
at Vanguard, you're more than just an investor. You're an owner. That means that your priorities are ours, too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner. And we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
In today's busy world, managing money is hard. That's why I started Truebill, an app that brings your entire financial picture into focus. Truebill also saves you time and money by canceling subscriptions you no longer want and getting you lower rates on your bills. Download Truebill and start saving today.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, Shanali Basak in for Romain Bostic, we miss. Meanwhile, joined by our colleagues Carol Massa, Tim Stenovic. We come together with our audiences, TV, radio, YouTube, to discuss, once again, souring sentiment into this close and volumes only higher in the S&P, Carol.
Yeah, no souring sentiment, though, with, you know, a sector I like to talk about, the Chinese names that trade here in the United States. They are among our top names in the NASDAQ 100 today. But again, the NASDAQ Golden Dragon China Index up more than 6%. No real news, except the CSI did show a rebound overnight where there's some stories about President Xi and President Biden maybe talking. So there's just some maybe optimism about the sector going forward, Tim.
Not so much optimism when it comes to what's going on with real estate here in the United States. I'm watching home builders today. The S&P 500 home building index is down 0.5 percentage point, but I'm watching them because we've gotten so much news about the real estate market here in the U.S. today. Home builders falling after Compass and Redfin both said that they're cutting jobs. Given
but let's see what we get, folks. Beware those 350
shenanigans. 10% of its workforce.
Welcome
Redfin
to Power Hour. Will it be strong?
The company saying that
sour?
in a regulatory filing
Let's
today,
get
though.
that cash,
Bloomberg
folks.
did report the Compass news earlier.
Already starting to see the effects of companies foreseeing a slower economy, a cooling economy, and indeed that's what the market braces for as they await the Federal Reserve as soon as tomorrow with that all-important rate hike. S&P 500 off by 0.8%, we're down 29 points. The Dow off by 0.9%, so actually almost the laggard on the day after yesterday being your relative outperformer, but all were underwater. The NASDAQ had been in the green, Shanali so rightly points out, now turning into the red, off by 0.2% as well. And the Russell 2000 is your laggard. You're off by almost 1% in your small caps, down 16 points, Shanali.
Yeah, absolutely. Let's get into some of the sectors here in the S&P 500. We have utilities down more than 3.4%. We only have one sector in the green, guys, and that's infotech up 0.25%, so not by much. But you are seeing consumer staples and healthcare also leading the sector lower aside from utilities.
I'm also taking a look at some of the big movers I do pull core just for Romaine, of course, desperate for a pool. And, well, Jeffrey's coming out and saying waning demand. Pool core falls 6% on the day.
So it's finally happening. All this backlog,
so that means he won't have to wait
issue.
a couple years for a pool anymore.
I know.
If demand is coming down,
Maybe
now's
you
your
only
chance.
need to wait until 2023 rather than 2024, do you think?
Romaine's on the wait list. I think
All
he's
right.
thrilled. I'll keep moving us along here. Align is certainly another company I'm following, because I mentioned this yesterday during the huge market rout. The third worst performer for the year, off 63%, and you fall an additional 3% today. Sort of a symbolic of some of these big high-flying sort of tech stocks, if you will. Then I wanted to point out Caesars and American Airlines. In the last 5 days, these two companies are down 22 and 24%, as you're really thinking about sort of this rotation out of some of the big travel stocks as well.
Meanwhile, we all have our eyes on what the bond market is doing, Taylor's bond market, and what it is pricing in terms of the FOMC meeting tomorrow. Could they go as fast as 75 basis points? This is a beautiful chart for our radio audience, really showing that at the moment the July hike is also pricing. So we've got 75 basis points priced in for June, 73 for July, and then we're going down to about a 50 basis point for September, but then again above 75 basis points for December. This market is expecting a Federal Reserve to go hard, Carol.
Yeah, absolutely, right? They are expecting an aggressive Fed in the meeting tomorrow. I mean, less than 24 hours from time, we will be all over that Fed decision. And, you know, some are expecting Jay Powell to kind of have his Paul Volcker moment in that he will be aggressive, just like Volcker was back in the 1970s. Seema Shah has been talking to Bloomberg. She's the chief global strategist over at Principal Global Investors. She's talking to Bloomberg, addressing the market volatility we're seeing today. She says the volatility today is a testament to the uncertainty going into the FOMC meeting, as well as concerns about the impact such an aggressive ramp of tightening could have for the economy. The 75 basis point possibility was a far-flung risk this time last week, so market participants are having to quickly revisit Fed, economy, and market forecasts. I mean, we're all scrambling. What's crazy is, did you guys see this story on the Bloomberg? That traders are betting the Fed will cut rates in 2023 after steep hikes. So get ready for some continuation of wild swings.
Well, you know, we're talking to Frances Donald, economist and strategist at Manulife Investment Management, and she made the point that the average time between the last rate hike and the first rate cut is traditionally 8 months. So it's not necessarily too soon for investors to be thinking about that.
You know, it's interesting that you mentioned this too, because I've been reading all this data from the Journal of Financial Data Science, thanks to Barry Ritholtz. And the problem for a lot of investors is that they don't know when to get back into the market. So will they survive until that point where they can get back in, or will they not make it through this time around?
We will learn the age-old adage, right? Time in the market versus timing the market, at least for some of those long-term sort of institutional investors who have the time period of going long, Caroline. But it has been sort of a quick move higher. When you think about some of the flattening of the yield curves that we've talked about, huge now highs of the day for yields, a 5-year and a 10-year, that's up an additional 12 basis points. Well, I think I was throwing out a statistic earlier, one of the biggest one-day and even weekly moves that we've had since 2008 on the front end. And I'm just astounded at the rate of change. When the facts change, you have to change with it.
Meanwhile, I loved Katie Greifeld's piece out today, just showing that actually the wild ride, the white knuckle ride that you're getting in treasuries is far surpassing some of the turmoil that you're seeing in terms of the standard deviation move in crypto. So your beloved treasury market at the moment, Taylor, giving whipsawing to the market far more than crypto is for once. So I thought that was a remarkable story.
Yeah, it was a great story. And meantime, it's really tough for investors, right? Because you've got stocks going down, you have bonds going down. So this traditional portfolio of diversification of bonds and stocks is once again not working, making it really, really tricky, Tim, for investors.
Okay, well, so here's what surprises the markets at this point. It really seems like investors are expecting 75 basis points tomorrow, but what if the Fed comes out with and says 50, or perhaps even gets more aggressive?
JP Morgan thinking that.
Yeah, I would argue most of the notes I read this morning, Wells Fargo, NatWest, Piper Sandler, all saying that why 75 isn't a slam dunk. The fact that it's on the table and maybe was communicated by the Fed's communications office yesterday to the Wall Street Journal shows that it is being seriously considered, and that that actually could be more of a base case than we think.
That part is, that's pretty remarkable, and it's a point that Frances Donald made to us too. The fact that during a dark period, this news came out.
A classic Bernanke, always to the Wall Street Journal.
Right.
It's incredible.
You still have the VIX over 30 here, and you've got to wonder whether no news would bring some volatility down. Once again, we have, of course, seen a volatile VIX, and the question is if it remains this high, is the market still going to just be stifled for a while here?
But interesting, the VIX down today. Like, it just feels like we have volatility, and yet, you know, the VIX is an indicator. I just kind of scratched my head a little bit over it. All right, we're going to come back in less than an hour's time, continue the market conversation, our simulcast, our cross-platform coverage on radio, TV, and YouTube. We will count you down to the close on this FOMC Eve on this Tuesday.
Meanwhile, we bring you more market analysis. We welcome in Catherine Rooney-Vera, friend of the show, head of global macro and chief investment strategist for Baltic Capital Markets. Weigh in here, Catherine. 75 basis points. What if we get less than that?
Well, if we get less, the market might actually react to the downside. I think the damage has been done. The markets are reflecting the 75 basis points. This is an inherently dovish Fed. I mean, they've been, you know, yearning for inflation for years now, and we get it. And I think the Fed has realized that they went way past their expiration date with regard to the accommodative policy, which ran up and through March of this year. Remember, the Fed was still buying bonds at that point. So 75, 50, you know, for me, it's a flip of a coin now. The Fed has to basically choose between high inflation or kind of recession, bringing it forward or giving it some time to play through. Recession is an inherent and intrinsic part of the economic cycle. Historically, however, when the Fed hikes too aggressively and too quickly, that can bring it forward. So it's either, you know, curb inflation, about which really the Fed doesn't control all of it. It doesn't control, of course, prices at the pump, food prices. A lot of it is out of the Fed's control, and bring upon, you know, economic contraction, or let inflation kind of really get out of control and lessen the probability of near-term recession. So the Fed is in a really complicated position. I think the question for me is not even 50 or 75. It's what do they do on quantitative tightening? Because remember, this meeting, this month, is when the Fed is supposed to launch the quantitative tightening to the tune of about $46 billion in roll-offs per month, accumulating to $95 billion in roll-offs per month. That's huge. Yeah. So this is a double-barreled approach of both aggressive rate tightening, rate hikes, with quantitative tightening, which in my view, the current economy cannot withstand. Yeah. So something's got to give.
I'm curious, though, historically, equities have been the place of keeping up with inflation, still outperforming on slow and steady rate hikes. Has that narrative changed?
The correlation is so strong now that I think you talked about this in your last segment. The 60-40 portfolio is really, really hurting people. There is no hedge now. So bonds are selling off, equities are selling off, and really inflation is what has taken this kind of house of cards, you know, apart. So I think that the too much monetary policy, too long in the tooth on fiscal policy, inflation rearing its ugly head in a sticky and structural way, I think it has us defensive and should have people in those sectors that we at Baltic have been recommending for at least a year. You know, the ones that outperform in stagflationary scenarios, which are and have been and will continue to be energy, utility, staples, and healthcare. Those are our top picks since the beginning of the year.
To that, Catherine, I was just going to ask you, what's the role of commodities when you're thinking about a 60-40 and shifting some of that mix?
Commodities are an alternative, you know, within the alternative spectrum. So I would strongly recommend, and have been for some time, in fact, incorporating alternatives into a diversified portfolio, both for institutions and ultra high net worth individuals, both of whom we service at the firm. So, so certainly I think we need to consider real estate, infrastructure, private credit, even think about, you know, cryptos or at these levels. Definitely commodities, but I think you do have to play the diversification card and incorporate in that alternative asset classes.
Dig into that, Catherine, because we know you've done a fair amount of work in crypto. Is it just Bitcoin and Ethereum you look at? Do you look at the rest of the DeFi space? Are you waiting for other shoes to drop?
No, look, I think one of the things that I've been talking increasingly with clients about is What I'm looking for with the crypto talk is some alternative asset class that can hedge us in the future. For example, in your last segment, you talked about the 8-month difference between hiking and cutting, and the possibility that the Fed in 2023 actually cuts rates. In my view, things have to get really ugly for the Fed to cut rates. So we're in recession. What does the Fed do with quantitative easing? Do we get back to quantitative easing? Is it possible that the Fed in 2023, when it's cutting rates, is also buying bonds? If that's the case, then we're just exacerbating and aggravating the current situation, which has to unwind. So I think that the next risk, in my view, is a crisis in fiat money. And to that end, I'm looking at precious metals. I'm looking at alternatives to what is fiat money. And I think that's something that we need to increasingly bring into the conversation. Another thing that very few people are talking about is the fiscal aspect. We still have double-digit fiscal deficits to GDP. So there's a lot of liquidity out there. The Fed there's a big risk of policy mistake, not just now, but in 2023.
What then are the opportunities globally?
Look, globally, I think you might be referring to emerging markets or other developed markets. I think, we're facing serious headwinds. There are tactical opportunities, I would say, in the next few months with juicy yielding assets that have plummeted due to political risks. For example, in Colombia, Mexico, and Brazil, there are possibilities there. But these are tactical opportunities within the emerging space. I also think that Chinese consumer discretionary has been overdone in terms of its collapse. So these are areas that I would tactically be allocating capital, and tactical, of course, meaning short-term in nature, not a buy and hold.
Catherine, really cross-asset for us you went. We thank you, Catherine Rooney-Vera, of course, Head of Global Macro, Chief Investment Strategist for Baltic Capital Markets. We'll let her get back to bracing her clients for tomorrow and what to expect. Coming up, we'll get insight on the distressed investing market. China, maybe sprinkling more of crypto. We're going to be hearing from hedge fund titan Mark Lazary, Avenue Capital Management co-founder and CEO. Plus, we'll look at the state of global supply chains and what to expect the rest of the year. Michael Falekas is with us, the CEO of E2 Open. And be sure to catch today's Triple Take. We push ahead to the eagerly awaited central bank announcements, not just from the Fed, remember. You've got the Bank of England, you've also got the PBOC. We're going to be looking at China, the data that we're also going to be getting with the managing director of the China Beige Book International. This is Bloomberg.
This is what confidence feels like. Go to TommyJohn.com.
To adapt in a fast-changing world, you could hire a professional pit crew.
Sorry. Oh, okay.
They deliver real-time data and business forecasts when you need it.
I think it was fine how it was.
To help you stay ahead of the curve. Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster.
On the other hand, we had a great fourth quarter.
For an accelerate your decision-making world. Workday for a changing world.
Take the world by cloud. Accenture, let there be change.
What have we got to look forward to?
I always think about this William Gibson's quote about the future, that the future is already here. It's just not very equally distributed.
I'm more interested in parallel versions of what might happen. My practice in art and research is just posing some of these questions to imagine more of these different singular possible futures.
Hyundai Motor, connecting art and technology.
The Fed says a 50 basis point hike is coming.
The Fed is telling the markets what it wants them to do.
But could it be 75?
We are looking at the possibility of a 75 basis point rate hike.
Some big questions about the next move, the one after that, and ultimately the destination.
Trust Bloomberg for the fastest coverage and exclusive analysis.
The press conference live. McKee in there. It'll be interesting.
Bloomberg surveillance. The Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
This is the countdown to the close here on Bloomberg Markets. About 42 minutes ago, at the lows of the session, you now have a Dow and an S&P significantly below a 1% drop, and a NASDAQ still off about 0.6%. What that means here for the markets, tech is actually the relative outperformer, but household and products, we think about some of those sort of inflationary, low-margin companies here, by far some of the worst performers on the day. Those are off about 3.6% or so. A VIX is interesting. That actually declines by about a point. So you're at 33. But nowhere near sort of the panic elevated levels here that we've had. And you talk about a 2-year yield, which is pretty unbelievable. After a huge move yesterday, Ira Jersey said some of the biggest moves that he's seen in his 20 or 30 career. Another 9 basis point climb higher here on the day. In the meantime, time now for our options insight. Just about 40 minutes at closing bell. Want to get you up to speed with the day's options trading. And well, Abiel, we talked about the wild ride in bond markets, but that doesn't quite compare to the wild ride in nat gas, right?
Yeah, Taylor, it's hard to know which one is more wild because the moves in both areas are simply stunning. Natural gas on the day down more than 15%. This, of course, having to do something with the LNG Freeport terminal down in Houston and the capacity coming back partially in 90 days. And it's a really interesting situation for sure. Let's bring Carly Garner into the conversation. Of course, founder of DeCarlyTrading.com. And it's not intuitive to me, Carly, in terms of natural gas plunging on that, because you would think if there's less supply, it would bring the price up. But when we bring it in with Europe and trying to take out Russian supply, it makes more sense. But let's focus on Taylor's question. What's more volatile, bonds or natural gas, or is it hard to say?
At this point, it's a toss-up. I wonder if we are going to look back at this period, let's say if we survive a year or two, and wonder if ETFs were like the kryptonite to futures markets, just like mortgage-backed securities were to mortgages, back in the financial crisis. I mean, there's a lot of weird things going on. My personal opinion is that ETFs are contributing to all of this wild volatility. I mean, there's a lot of moving parts. I'm not saying that's all of it, but it feels a lot to me in treasuries, some sort of capitulation, a lot like what we saw in March 2020 near the oil lows, which was USO blowing up, and then a lot like just what we saw in March 2022 when crude oil went to 130 and then dropped $20 a few days later. There's a lot of ETF inflow and outflow that's really messing with the markets, and it's exacerbating volatility, and it's not pleasant.
Yeah, not pleasant at all, especially if you're trading it. I have a lot of sympathy, having done a little bit of trading back in the day. This has got to be a pretty tough time. But, relative to that volatility, in your notes, you compared natural gas to 2007. And then you're saying, I know when we spoke previously, that bond volatility is greater than it was even back in 2008. So which feels worse to you right now?
Right. So there's a couple things to keep in mind. This feels, in regards to energies and commodities, this feels a lot like 2007, 2008, which if you pull up some charts, you'll see that basically right around this time of year, June, July, crude oil and natural gas topped out, and we went from like dramatic top outs from $13 in nat gas to $3, crude oil from $150 to $30. At the time the markets were rolling over, the narrative was extremely bullish. No one could even imagine a pullback, let alone a crash. I'm not saying we get that kind of crash, but it's just important to keep in mind that we shouldn't be complacent because things can move quickly. If you also look back at a very long-term chart, let's say a monthly chart of treasuries, you'll notice volatility expanded wildly beyond the financial crisis. And I think it's probably because of, one, maybe ETFs, but also because of quantitative easing. All that extra liquidity in the market has really done a number on volatility.
Right.
It used to be 10 or 15 handles in bonds was a big move. Now that's like literally child's play. So it's just a different game.
Well, we were just looking at that bearish divergence in natural gas, which is pretty stunning. But the board that is up right now, it blew me away when I saw it. That 2-year yield over 5 days up 73 basis points. I would have thought that this was, a 5-year board. So you think that this is capitulation in terms of the selling. Talk to us about how you trade both energy and bonds in a somewhat conservative way through options. options?
Sure. So as someone that's been long and wrong treasuries, it really feels like capitulation. I'm really starting to question myself here. That said, if you want to participate, but not with all the wild risks, you can simply buy call options in the 10-year note futures. You can buy a September 118 call for $500-600. It's a little cheaper than it was this morning. And you have unlimited profit potential, limited risk. And if energies top out, treasuries will actually bottom and move the other way. I know it's hard to imagine, but trust me, things happen fast. It's not impossible.
Well, I do have lots of trust in you, Carly. You've been great through the years. Carly Garner, founder of DeCarlyTrading.com. Thanks so much for joining us for Options Insight today. Great perspective as always. And from New York, this is Bloomberg.
Today's Options Insight is sponsored by Thinkorswim by TD Ameritrade.
The best pizza of your life.
You have the best cheesesteak in the world.
Lasagna is an amazing feat.
The best chocolate cake I've ever had.
From Goldbelly, it could be in your belly very shortly.
Order today at goldbelly.com and get free overnight shipping anywhere nationwide.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Assalamu alaikum.
It's great to see you.
Welcome to the Qatar Economic Forum powered by Bloomberg.
Some people say that there's a de-globalization going on, but I prefer to think of a re-globalization.
Our accomplished speakers, from heads of state to business and policy leaders, will discuss evolving technologies, education, culture, sustainability, and the impact on the economy.
Sentiment is dire. That, of course, is one of the sort of key major takeaways from B of A's latest fund manager survey, really showing that global growth optimism falling to a record low. You have stagflation fears jumping to the highest level that we've seen since 2008. And so when you think about some of the key takeaways, Caroline, that really is it. And then it really comes down to positioning from that. Some of the positioning in the most crowded trades, not surprising if you're thinking about long cash, right? Short treasuries. But then there was long Bitcoin. Can you explain that to me?
Maybe still buying the dip. Or it was just positioning, I suppose, to a large extent. Maybe people, but I mean, long cash, definitely. We had still long ESG, and actually that's been another area that's kind of flipped a little bit as well in terms of questioning really some of the, well, whether some of the ESG bets you're making are truly ticking the environmental, social, and governance boxes all at one time. Short China stocks as well, I feel, is one that's kind of passé, because everyone sort of got out now seems to be saying maybe it's the time to be investing.
So many of these are essential hedges, right? Long dollar, long cash, long Bitcoin, I guess, right? But at the same time, is at what point do these hedges actually work as hedges? And
I love that you're still seeing Bitcoin as a hedge.
Well, you know, we heard now 2 or 3 people say it in a row. And, you know, this idea that the dollar will one day break down, you don't see it in the market today, but that is still clearly on the minds of investors.
We talk about the market today, certainly off maybe some of the deep lows of the session, but significantly in the red when we thought about some of the wild swings that we had, Caroline, earlier, up as much as 1% or so, when all of that has unraveled ahead of that big Fed decision tomorrow.
I mean, really, the fact that we now have the NASDAQ off by 0.4%. Shonali, you were showing that earlier it was in the green. And 2-year yield now up 9 basis points again.
Huge.
Relentless. Good word. It's a Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
What's on the horizon? The answers lie beyond the roads we know. We recognize that energy demand is growing and the world needs lower carbon solutions to keep up. At Chevron, we're working to find new ways forward through investments and partnerships in innovative solutions like renewable natural gas from cow waste, hydrogen-fueled transportation, and carbon capture. We may not know just what lies ahead, but it's only human to search for it.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
I started Truebill because I hate paying for subscriptions I'm not using. Find something you no longer want? Truebill can cancel it for you.
Truebill is an all-in-one finance app that tracks and categorizes your spending and alerts you if anything needs your attention.
Download Truebill, the money app that works for you.
Last year, more homes canceled cable TV than ever before. Why? It's just too expensive. For half the price of cable, you can get Fubo TV and watch the live sports and TV you love. Try free at FuboTV.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
For our business, what works is I don't mind a 90% probability of failure if there's a 10% chance of changing the world.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Less than 30 minutes to go. We count you down to the close.
A market really struggling here with the volatility. Can't decide if it wants to go higher or lower.
We're pretty close to session lows here, Taylor, and we take a look at the sectors from today because we have almost everything in the red. The information technology sector has been flipping in and out of the green, only up 0.4%. You have utilities down 3% now, leading the sector much lower, but you have healthcare and consumer staples also more than 1% lower, almost 1.5% lower.
And you talked about technology in the green. I know that Bitcoin doesn't really count as technology, but when we think about some of the volatility that's been going on within maybe some of the fintech, some of the certainly the alternative asset space, take a look at this. Some of the classic sort of Bitcoin trackers, if you will, Riot Blockchain, MicroStrategy, actually still sort of in the green. green for today. So it certainly has been a volatile, wild ride as we digest some of the big headlines coming out of that crypto space in the last 24 or 48 hours. Trip.com is interesting. Now, Caroline, this isn't TripAdvisor based in the U.S. This is Trip Group, which is thinking more really based in China. But when you think about sort of the reopening trades, this certainly has been a stock that has been, well, sort of a measure of that. And Oracle, that was our stock of the hour. We were watching that up in 9-10% in the aftermarket yesterday as well. When you think about sort of the big pivots to the cloud in this space that sort of is benefiting from that pie that is growing.
A glass half full kind of a chart there, Lev, managing to weed out all the good stocks that are in the green today, whereas maybe I go glass half empty. Dare I do it? I do a Taylor Treasury story for you right now, because look at the inversion in the yield curves. Now, I'm not going to get overblown about it. These are technical indicators, and maybe they don't always say that a recession is imminently upon us. But it's certainly signaling us something, isn't it? The fact that we are having an inversion when you look at your 530s curve here in the yellow down. We're negative 17, 18 basis points on that particular curve. You're looking at a blue line, or teal, whichever one you want to call it, 5s, 10s curve, also negative to the tune of 12. The 2s, 10s had hit zero. We then, of course, bounced back off that. We're about 4 basis points overall. But this is a market that braces itself for the Federal Reserve as soon as tomorrow, Taylor. If it doesn't give us 75 basis points, some saying that inversion is going to get a lot worse.
That's a good question. When we think about sort of all the volatility as well that the Federal Reserve has sort of given these markets, I'm really pleased to say that we're going to get some more insight on investing in these volatile markets all ahead of that important meeting tomorrow. We want to welcome in now hedge fund titan Mark Lasry, co-founder and CEO of Avenue Capital Management, which has about $12 billion in assets under management. You may also know him as the co-owner of the NBA's Milwaukee Bucks. And we could do sports with you later, but I think our audience is so front and center right now on these markets. And curious, in the last couple of days, if you're, been seeing a lot of this forced selling, or has the volatility in the equity markets to you appeared to be a little bit more orderly?
No, people are nervous. So one, thank you for having me on your show. But at the end of the day, people are just very nervous, and everybody's trying to figure out what the Fed's going to do. I think for us, what we're trying to do is just find situations where we can get overpaid for the risk. And, we're buying a number of fixed income instruments, bonds, that I would tell you 6 months ago were trading at 75, 80, and today we're buying those same bonds somewhere around sort of 35, 40 cents on the dollar. One situation, Excella Technologies, we're buying those bonds at 35. You've got an 11%, 11.5% coupon. So we're buying them around 35. You're making around 33% current. So, we're getting paid quite a bit. And everybody's worried as to what's going to happen with the company. We think it's fine. So I could give you examples, of these situations over and over again. But I think for us, we're seeing a huge amount of opportunities out there.
Distress is where the opportunities are, Mark, which has taken some time to get to. Are you seeing that the distress we've seen in selling, maybe it be forced selling or not, that's gone into the public markets, has that come to a crescendo, do you think, yet? Have we hit some sort of bottom, or is there further to shoot a drop?
No, I think there's more to drop. I mean, I think part of it is, people are trying to figure out what the Fed's going to do and how high inflation gets. So, whereas I would have told you a week ago, everybody assumed the Fed was going to raise rates at the max 50 bips. Now the market's telling you that the Fed needs to raise it by 75 bips. So I think you're going to have more selling. You're going to have more pain. It's going to continue. It'll continue between now and the end of the year. And I think part of it is you've got to sort of start getting involved in the market, buy things that you're comfortable with. Doesn't mean it's not going to get cheaper. But I don't think you can ever time a bottom. So you want to get invested if you can.
And if you're not thinking about just timing, Mark, what about the actual levels here? What is the low when you think about the S&P, and how wide do spreads get, especially in the high yield market?
Oh, I think the market could go down a little bit more, whether it's an extra 5 or 10%. But you're getting there. A lot of it is getting priced in. So I think the summer is usually just very slow. And then you'll have the next Fed meeting I think after that, that's when you'll get close to the low. Everybody knows we're either getting into a recession or it's going to be close to a recession. So I don't think there's a lot more negative news that's going to come out. The question really is going to be, how long is the recession? Is it 3 months? Is it 6 months? Is it a year? I think ultimately it's going to be pretty short because the economy is doing okay. It's just rates are making things more expensive. Like, just think of your home. The average home is $300,000. That's the mortgage. I mean, everybody's interest cost has gone up because of this, anywhere between 50 to 100%. That's going to have a bigger impact on people than sort of inflation.
So if the market is sort of hinting that they want to look at a 75 and a 75, if the Fed does 50, what does that mean in terms of being a dovish surprise for your markets?
I don't know. I mean, I think at the end of the day, the market wants it to be higher because they want the pain to come and go as quickly as possible. I think the fear then ends up being, if it's 50, is the next one 75 and the one after that 75, right? I think the market wants certainty, and that's not what it has right now. But you may get some of that tomorrow when the Fed announces where they are and what they're raising it and the reasons why they didn't do 75 or the reasons why they did do 75. I think people love the guessing game. I like to just wait. I mean, I know if I don't think a company is going to file for bankruptcy, if I think a company is going to be fine, I'm going to buy those bonds or I'm going to buy that stock because I know it's going to do well and it'll turn once all the bad news is out on the macro side.
Talking of, well, bad news and some forced selling, we have seen a lot of pain suffered in the crypto market. Yep. And Mark, I know that you're someone who looked at BlockTower, for example, analyzing crypto firms. Yep. How much further have we got to go in that particular area?
Oh, that one, it feels like you've got more room. And the simple reason is just, I think people viewed it as being a really safe instrument. And nobody thought Bitcoin was going to go as low as it has, or Coinbase, or a number of those. So because of that, a number of people now are very nervous and they're trying to figure out, should they get out? So I don't think you have natural buyers. I think you have natural sellers today. And nobody knows what the bottom is for that. But I think you'll still have a bit of pain in the crypto space.
What about all the institutional money that was meant to come in? What about the $4 billion raised by a venture capital fund such as Andreessen?
I think that money's there. And I think it'll start coming in slowly, but what's the harm in waiting a month or 3 months? Like, there isn't any harm. So I think you do have a bunch of money on the sidelines, but you've got a bunch of money on the sidelines in a number of sectors. So I think people right now are just saying, I'm going to come in, I'll come in slowly. Because I have time, because the news that's coming over the next 3 to 6 months, best case is it's flat, and worst case is it's negative, right? So what's the rush?
Speaking about rush, to what extent are you ready to rush into investing in stocks tied to China? Is this the time to buy, or do you see more pain ahead as well with Chinese stocks?
I think for us, we're looking at things in Asia more than in China, because I do think, when you look at what's happened in the U.S., where you had the reopening because of COVID, and we've gone way past that, right? Because that all started taking place last year. You're going to see the same thing happening in Asia, because China ends up dominating that. As China keeps opening itself up, because they've been closed for quite some time because of COVID, and much, much worse than I think the U.S. ever went through. Because in China, because of the regime, you're able to sort of keep people in their homes and close businesses. I think as that opens up, you're going to see quite a bit of demand that starts coming out of China, and out of Asia. So I think you'll see some positive momentum there.
Big picture, does 2 and 20 still work?
I sure hope so.
Well said.
Mark, we could go on so much longer with you. We thank you so much for that time and indeed for your investment hypotheses right now. Come back to us with some of the other bonds that you're buying in a 35 and we can keep on talking about it. Mark Lasry, Avenue Capital Management, co-founder and CEO. Meanwhile, we analyze the further public market moves. We see an actual bounce off these lows. We're seeing suddenly the NASDAQ back into the green just ahead of the closing bells. Could we see a little bit of dip buying as once again we see pressure in these bond markets? Stay tuned. This is Bloomberg.
Reduce carbon emissions, they say. When it comes to our planet, we need to do more. We choose positivity. We choose to change. Tomorrow now. We'll learn, we'll try, we'll do and undo whatever it takes to get there. We don't have to commit, we choose to. We choose Earth. It's up to us, and that's our biggest power, the power to choose. Do you? EDP, changing tomorrow now.
This is a premium, hand-selected bacon-wrapped filet mignon that's aged for tenderness and trimmed to perfection. This is a necktie. What do you think Dad wants for Father's Day? Visit omahasteaks.com/TV to order the Dads Want Steak package today for just $99.99, and we'll include 8 additional burgers free. So get him this. Not this. This. Go to omahasteaks.com/TV today because Dad deserves it. Just a little Father's Day wisdom from Omaha Steaks.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
To your world, your why. What drives you? What do you want to leave behind? What do you want to give back? What do you want to be remembered for? That's your why. It's your purpose, and we will work with you every step of the way to achieve it.
At PNC Private Bank, we'll help you take care of the how. So tell us, what's your why?
We have a little over 15 minutes until these market close, and we are actually trying to find some sort of bottom. The S&P 500 now bouncing off, and we have up just, well, still under pressure, but certainly off of its lows. We're down by 0.3%, but really the pressure has been so front and center in the bond market today, Taylor.
And I think you nailed it, Caroline, when you think not only about a bond market, but King Dollar, the move to cash, the relentless climb higher. I heard someone this morning on the open talk about within a month euro-dollar parity, which says nothing about euro weakness, but everything about the dollar strength.
And to what extent is that being used as a hedging strategy here, I think is very interesting here. Also, look at those natural gas futures, still completely slammed, guys.
Yeah, I mean, that was an extraordinary commodity story that almost gets brushed under the carpet because we're all focused on the Federal Reserve. But this is sort of a dialing back of gas prices in the US, but an absolute spiraling higher over in Europe. And once again, that fire in Texas, that key terminal exporter that's going to be offline for 3 months. What that means for supply chain pains, what that means ultimately for central banks.
And traders.
Let's talk about those central banks. 230s, it reinverts once again. This is Bloomberg.
a one-man stitchwork master, but your staffing plan needs to go up a size. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
How can your bold vision be transformed into long-term value? Is your technology moving fast enough to realize your ambitions? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Realize your transformation with EY.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We're going to continue to invent, we're going to continue to be insurgent, and we have a lot of work to do to get to where we think we ultimately can get for customers.
This is Lisa from 4imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes. Certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Is Fubo TV. It's a better way to watch live news, shows, and sports without cable. Watch multiple games at once with Multiview. Try free at FuboTV.com.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs.
And I'm Shanali Bassick. Romaine Bostick is off today.
And while he's missed a pretty rough start to the week over the last couple of days, what an extraordinary move that just accelerates. And therefore, it means over the last 5 trading days, we've basically been down some 10%. It's rough out there in stocks. It's rougher out there, Taylor, in bonds.
It is. Well, is it more rough in Bitcoin or bonds? It could actually be a key question. Let's get a quick update with our very own Bloomberg's Katie Greifeld here. And relentless climb higher, a 360 on the 5 years. And I'm looking at further inversions on the 530, now negative 18 basis points.
It is pretty remarkable. At what point, I mean, I know we've had this dramatic repricing, but if you look at the short end and some of the moves we're still seeing there, nothing compared to yesterday, but still the move higher in yields. At what point does this terminal rate get priced in? I know that we're talking about 4%. That is new information in the market, but you have to wonder how high yields can go at this point. Right now, it doesn't feel like there's a ceiling.
No ceiling in terms of rates. What about if we don't? How many people are you speaking to at the moment that are trying to hedge if we don't get a 75 basis points?
I think that's why you're seeing such movement, because, I mean, this time last week, 75 basis points, that was you'd get laughed at if you said, seriously, I think this is going to happen. That all changed about 8:30 on Friday. At this point, I think you're still seeing some positioning shifts. I mean, usually ahead of a Fed meeting, what, 3:51 p.m. the day before, you're not really, all the hay's in the barn. That's not the case this time around. The real interesting question becomes, what happens if they don't hike by 75 basis points tomorrow?
Pricing in, you know, you're talking about stock market pain, but what about bond markets? You're seeing that read through, you just wrote about it, into the bond ETFs. So is there a signal there that can show you that bond markets can get choppier as some uncertainty exists even after tomorrow?
So if you look at the measures of credit risk, we know that the corporate credit market is finally joining in on this sell-off. It had been kind of quiet up until now. Now you see those measures of risk really starting to blare loudly, I would say. And I always look at the ETFs, because when you see the bond ETFs close at a discount to their underlying holdings, that's when you know things are pretty stressed. So if you look at the largest high-yield ETFs, they closed at the largest discounts yesterday to their underlying bonds since March 2020, which just, again, tells you that this is a stressed market. There's a lot of volatility out there. When that happens, it becomes more difficult to trade these ETFs and to trade the underlying holdings, and that's what we saw yesterday.
Katie Greifeld, our ETF queen, we thank you so much. We continue the conversation with Brenda O'Connor, who is with us, financial advisor at UBS. It's always wonderful to have some time with you, Brenda, and talk to, I'm reading, as Taylor brings to our attention, Bill Ackman, of course, bit of a legendary investor, got in on the SPAC game, saying, look, you should now have 100 basis points tomorrow and in July. What are you expecting? What are you bracing yourself for from the Fed tomorrow?
Right. Well, thank you for having me. And I have to say, after Friday's CPI print, we are talking about only negative downside scenarios with our clients. Listen, it was one data point, but it really just crystallized how pervasive inflation is and just how difficult, if near impossible, it's going to be for the Fed to achieve that soft landing. We thought that there were going to be price increases in energy and food. We saw that, but we saw increases in rents and in services. Tomorrow, there 75 basis points is on the table. Our view is 50-50 there, but more importantly, there's going to be higher rate hikes in the coming months, and that's going to be bad for equity markets. So we're positioning for UBS's downside scenario, which is 3,300 on the S&P for the end of the year.
Really interesting, because we just heard from Mark Lazary as well, talking about an additional 5 to 10% downside from here, but saying that a lot is priced in. So when you think about some of those downside risk targets, what is or is not priced in at this moment?
Yeah, well, I mean, I think the biggest thing for us, so obviously the Fed is what we're paying attention to most closely. The two other risks that I think are related that we're monitoring are obviously what's happening in Ukraine. Listen, Ukraine, we have to remember that whole region is responsible for 1/3 of the world's wheat, 10% of the world's petroleum, and 12.5% of the world's calories. Wars go sideways all the time. You know, there are scenarios here where that could keep inflation higher for longer. And then obviously earnings. Earnings are not pricing in what we're seeing here. I mean, management conversations have changed in the last few weeks. Now, managers are now concerned with, you know, discounting inventories, sales activity. So lots of these things haven't been priced into the estimate. So I don't think that those kinds of risks have been fully priced in yet.
You know, I'm curious also, to the extent that there are places to nibble on the market a little bit, you're seeing energy turn green, infotech turn green on the S&P, but most everything else in the red. Do you think that there is time to pick up some sectors now?
Right. So I can talk about both, but let me start with energy. You know, there have been very few places to hide this year. The US dollar and energy have been two of them. WTI over 120, up 60%. We still think that there's up to 10% upside from here. You know, in addition to it being a great inflation trade, here are two other reasons we like it. Number one, even if there is a resolution tomorrow in Ukraine, it's going to take a year plus for that Russia supply to come back and be restored completely. Also, you know, there could be demand destruction at home home here with the U.S. consumer, but we think that this could be partially offset at least by, normalizing global travel and China coming back online. So we do think that there's upside for energy.
Interesting. Where else? I mean, are you looking for also a reasonable inflation hedge? Is that, the fact that gold hasn't been there in any way, we've actually seen that pull back as everyone anticipates a more hawkish Federal Reserve overall. Is energy the only place to be playing that, or is it more about the US dollar?
We haven't stayed close to gold. US dollar, we think that a lot of that is priced in. Again, and I've talked to you guys about this before, but alternatives is where we've seen outperformance this year. In our portfolios with clients that give me the full mandate to do everything, I've been allocating up to 30% in alternatives. This has paid off this year. These portfolios are down 8 to 9% to the end of May versus the 60-40 portfolio that's down in the mid-teens. And listen, if you need any more justification of why alternatives, why real assets, why commodities, why private equity, think about hedge funds. Hedge funds have outperformed equities in almost every year the market has fallen in the last 20 years. So if there's a place to hide, I would also look to alternatives.
Is China still uninvestable?
So China was one of our big calls earlier in the year. I know that's fallen to the wayside a little bit, but China has all the dynamics that I think make the market attractive. They're one of the few economies that have loose monetary policy. They're coming back online. You'll see a lot of demand there. So on a relative basis, it hasn't done as badly as the rest of the market. I mean, it's not Brazil, but I do think that thematically allocating to China, which most clients, by the way, are already under allocated to, is a good play this year. But for now, we're not jumping in right now.
Yeah, short China have been one of the most crowded trades, according to the latest B of A survey. Fascinating as always. Great to get some of your takes. Brenda O'Connor-Juanes, as always, thank you, financial advisor over at UBS. Meanwhile, we look at what has been quite a significant move lower in bonds once again, Taylor. And Shonali today, more of some sort of stability in stocks, but it's been volatile.
Volatile, and you can see some of the pressure under the surface with what our guests are saying.
We are moving closer towards that closing bell now, guys. Full market coverage right here, cross asset as always on Bloomberg, as we take you to the bell and beyond.
Beyond the bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Shonali Basak is in for Romain Bostic. We count you down to the closing bell, and here to take us beyond that very bell, it's our global simulcast. Carol Massa, Tim Stenovic, bringing together TV, radio, YouTube audiences for Bloomberg to dissect what has been a pretty volatile day of trade and actually bouncing off our lows as we head towards it, Carol.
Yeah, and I've got a provocative thing to share with you, and I know both Tim and I want to do it. Megan Horniman of Verdant's Capital Advisors was just on our air moments ago, and she said, you know what, I don't know that the Fed's going to do 75 basis points. I know the market expects it, but Jay Powell said he would not at the last meeting, and maybe they use the balance sheet more aggressively to really affect the markets more.
But she said it's all about credibility, because Jay Powell said that 75 basis points was pretty much off the table. I pushed back and I said, but the data has changed, but she said that the Fed needs to remain credible.
Yeah. Yeah, indeed.
What do you think?
He said
Don't you think this is interesting?
Yeah, I'm not sure about the balance sheet. I'm not sure about the balance sheet. The point is also, why not? It all comes down to a question of whether or not it was indeed a leak from the Fed or not. Because if it wasn't a leak from the Fed, then they remain credible. If it was, then why on earth leak it if they could have just signaled it in their talk with journalists after the decision?
After the decision, you're talking about 75, the news that came out yesterday?
Yeah, why
because they're not really
later?
supposed to be talking right now, right?
Right, which is why they leaked it through the
if they did leak it.
Like, what is this? Or is this like...
This is such a journalist conversation.
Right?
It is.
Well,
get us
trader
outside
conversation, right? I mean, is there going to be anybody truly caught off guard by what happens tomorrow is what I want to know. You heard Mark Lazary say he'd rather not guess. He'd rather just wait and see what happens.
Some calmness perhaps maybe reigns today, at least when we think about, Caroline, some of the sort of major markets here after huge volatility yesterday. A little bit lower here, underperformance from the Dow and S&P that closes off about 0.4%. Tech finally sort of a big outperformer, and NASDAQ up about 0.2%. And, well, some calmness as well, but some underperformance in the Russell 2000 off about 0.4%, Carol, as we think about some of those more domestically focused stocks here and how the impact of the Federal Reserve indeed sort of impacts them.
Yeah, and amid all this volatility, some of the outperformance among the transports, the Dow Jones Transportation average up about 2.2%. Thank you, FedEx, for raising your dividend and lowering CapEx FedEx. And then C.H. Robinson Reuters basically saying DSV interested in the company's global forwarding business. So we did see some movement to the upside when it comes to some of the transport names.
And when you're talking about names, let's talk about sectors for a second here, because you did see most of the major sectors still red on the day. You were led lowers by utilities more than anything else. Consumer staples still had a very rough day. You had a little bit of green on the screen. Auto, transportation, software, services, semis, tech. But, you know, again, mostly red on the day, but there were some buying opportunities.
Yeah, absolutely. We did see some buying going on. And I'm going to go back to the transports and that FedEx name because it was up pretty much near its highs, closing at its highs of the session, up more than 14%, as we said, topping the S&P 500. The company raising its dividend and also announcing some board changes. They have had an activist investor, D.E. Shaw, kind of asking for some moves, and they're complying, and investors liking what they got from that company. Oracle, Caroline was breaking down those earnings after the closing bell yesterday. This was topping the S&P 500, again, closing just off its highs today, up more than 10%. We did talk about the earnings reporting results suggesting the increasing move into cloud definitely paying off, and they're seeing some momentum. And then check this out, Zoom, top in the NASDAQ 100, up about 3.5%. Exactly. No real news here. There's some things about a fund boosting its holdings in the company and some different things going on, but nonetheless, this name, though, is down a lot. As we know, it's been a lot of pressure, a lot of selling.
All right, you got the gainers, Carol. I got the decliners. Let's start with the second worst performer in the S&P 500 today on a point basis. That would be Procter & Gamble. Credit Suisse cutting its fiscal year 2023 earnings estimate, giving it a street low of $5.96. This is about inflation. The company saying in a note, quote, signs of slowing category growth as consumers feel increasingly squeezed by inflation and retailers pushing back on manufacturers' price increases will exacerbate an already difficult operating environment. Also, keep an eye on shares of Redfin today, falling by 4.9%. This after the company said it would cut 8% of employees immediately. These companies are cutting their workforces, Compass as well, as rising interest rates cool a U.S. housing market that reached a frenzy during the pandemic. Think back to just a year ago, Redfin shares traded as high as $97 a share, and look at that, down to $8 a share.
Amazing.
And then Digital World Acquisition Corp. This, of course, is the SPAC bringing Donald Trump's media venture public. It fell for a second day in a row, more than 28% today, fell more than 13% yesterday, tumbled today after saying yesterday that the U.S. SEC expanded a previously disclosed investigation and issued another subpoena related to that merger.
Meanwhile, I look at what's been a bit of a sea of red today for once, and it's actually the commodity space. So let's go cross-asset for a moment for our audience. With radio, I'm looking, of course, at some of the massive volatility we saw in natural gas prices. In Europe, spiking up more, 20, 30%, if you're looking at UK and Europe, and in the US, falling some 15%. The reason is all based on the same bit of news, the fact that this key export terminal in Texas is likely to be offline for another 3 months after a key fire. Of course, LNG from the US, about 3/4 of it has been going across to Europe to alleviate the supply issues there. No wonder, therefore, prices up across the Atlantic, and why prices pull back here, because we're going to have a bit of an excess supply as the expectation. Steel falling 1.6%. This is interesting, though. WTI crude down 2%, $118. Why? Actually, a great interview that our own David Weston did with one of a key White House economic advisor, and talking about the fact that maybe we could see any tax on excess profits of big oil companies. Now, that is something we've seen the United Kingdom do already to put more money into the hands of the consumer base, and it's something potentially being thought about here. And we saw oil just down that little bit as we think more about some legislation that could put some pressure on oil. Overall, we also see what has been a story of dollar strength once again. The British pound up by weakening 1.25%, Taylor. The reason, well, you've got Brexit concerns, you've got worries about overall risk sentiment, and of course a strong US dollar. That means basically your Canadian dollar lower, loonie weakening, unsurprising if oil's going to be on the downside, and all those commodity-related pairs in the red as the US dollar is at the highest since 2020.
Okay, Romaine's gone, so I want to do his pop quiz. Carol, how many basis points have yields jumped in 2 weeks? 100.
I was gonna, okay.
100 basis points in 2 weeks.
Yeah.
For the 2-year yield, that is incredible. That's effectively priced in 4 rate hikes in the last 10 trading sessions or so. I know usually here we do sort of an intraday chart. Okay, 86 basis points. I cheated a little bit, but you get the point, right? When we're thinking
Just
about sort of
rounding
the
it up, right?
rate of change and the huge moves that we've seen in the bond market, coming off some of the biggest moves, the biggest weeks that we've had since 2008. It continues again today. Intraday moves of 6 to 11 basis points across the curve. These in the last 2 weeks has just been unbelievable when we think about a Federal Reserve, as Bill Ackman would say, that has totally lost its credibility, and the markets need to see 75, maybe 100 to do it and be done.
All right, speaking of credibility, let's go back to that discussion. If Jay Powell says at the last meeting, I'm not doing 75 basis points, and maybe he regrets having said it, we're just speculating here. Like, does he have to stick to it so that, you know, investors really believe every word that he says at those press conferences? How important is that?
I think he also said at that press conference, though, he would monitor the data.
That's what I said.
Has changed.
That's how I pushed back, and I said the data has shifted. I mean, inflation obviously did not peak. It's obviously not transitory.
Right.
And look at the hot print that we got on Friday morning. That changes the game.
You know what's amazing, though? I mean, to Taylor's point, 100 basis points in just a couple of weeks. It makes you wonder, is there more upside there than even traders are expecting right now, given how quickly things have changed?
Well, is the market just doing the Fed's work for it? Look, we've already got the financial conditions coming down. We've already got dramatic moves in the bond market, in the stock market. You've got already companies signaling that they're going to pull back in terms of their labor. We've got an economy that is already slowing. And the key question, though, is at what point are prices going to be starting to pull back to?
That one. I mean, I had heard from a real estate investor last night that said that with the pace of increases in real estate, you would think inflation should be higher right now. So the question is does it keep on floating higher?
Well, and that's a big one, right? Watch that housing market, which we've seen already impacted by higher rates, right? Certainly in terms of mortgages. I mean, how dramatically does that come down? And that is a sector that, right, trickles throughout the economy because you're buying stuff for the house. There's just so much related for it, and that could certainly lead to some significant downside.
All right, senior commodity strategist Mike McGlone said something controversial on our air earlier today. He said that oil prices will start to come down soon, and we can check in with him in a week, and he'll say that he's wrong if they are indeed higher.
He also thought the Fed might overdo it by doing 70.
He did. He thinks 50 tomorrow.
See? We'll know, though, tomorrow, right? And we'll know the market reaction. All right, that's going to do it. Right.
Who's counting? Yeah.
Tick, 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 tock. All right, that's going to do it for our cross-platform coverage. Radio, TV, YouTube, we call it Beyond the Bell, our simulcast on radio and TV. We will see you again, Fed Wednesday, tomorrow, same time, same place.
Oh, well, we'll be talking the Fed so much more with Carol and Tim. Right now, we're going to be discussing the market reaction ahead of that all-important decision. Stick with us. There's the Bloomberg.
Today's countdown to the closing bell was brought to you by Fidelity Investments.
At Fidelity, your dedicated advisor will help you create a comprehensive wealth plan for your full financial picture with the right balance of risk and reward, so you can enjoy more of this. This is the planning effect.
Welcome to Lenovo Late Night IT, where insiders share stories straight from the trenches. How much did the cyber criminals pay you to write that article?
I think we're actually witnessing the end of ownership.
AI by itself is actually fantastic, but doesn't really do the job.
Yeah, it'll be like a robot dance.
Like this?
This is Lenovo Late Night IT.
Another crazy day? Of course. You're a CIO in 2022, but you're ready because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want, your team, ours, or a mix of both, with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
We've been talking a lot about the fear gauge in the credit markets, the CDX flashing red, sort of in anticipation of a rate rise shock from the Federal Reserve. And while really thinking about investors, how are they hedging some of these risky bets? Let's bring in Liz McCormick, our Bloomberg chief correspondent for global macro markets, and take a look at LQD, HYG, the CDX that I mentioned that got up to about 100 basis points yesterday. How are some of the credit markets, before we get to full faith in credit, thinking about anticipation for that big meeting in 22 hours?
Well, like you said, people are kind of jumping into hedges against default risk. So for now, we haven't seen defaults be very high, but as this kind of torrid pace of pricing in of Fed hikes and inflation being sticky, you're seeing that. Like you said, the CDX spread going out to 100. So remember, for a while we were talking that even as things were getting, troublesome in the equity market and rates were going up in sovereigns, credit was holding in pretty well, and now we're really seeing kind of more red flags building there. So, higher rates, and we're seeing higher real rates, you can only weather that for so long until companies are hurt by it. We're seeing high yield pick up, right? Which is the weaker credit, right?
But the Fed wants higher real rates, right? They want that transmission mechanism to work to a certain degree. What happens, the people you're speaking to at the moment, what happens if we now don't get 75 basis points tomorrow? And what if we go lower for the first idea?
Oh boy, well, everyone keeps saying, oh, there's just no way the Fed can do that after they've kind of teed this up in a way. But I think we were talking about this with some of my colleagues, that if somehow the Fed surprises us and goes 50, say, some people say, well, won't bond yields fall as it's lower? But, maybe that'll be a knee jerk. But most of us think, and investors seem to think, that if they go less than expected, you're going to see long end rates especially kick up, because how can you feel confident in the Fed's credibility to fight inflation if there was all this kind of teeing up of a big move and then they go less? So I think that's a bigger risk. I see it very unlikely, but I don't think in the long run that would be good for the bond market.
You're having Bill Ackman online talking about 100 basis points tomorrow in July and thereafter being better. And then on the other hand, you have this prospect of 50. So I'm wondering, what's the risk here that traders get caught off guard, and how levered are they? You and I, the basis trade, right? I mean, how levered are they to their wagers here?
Well, there's always, for good or bad, a decent amount of leverage in there, right? We had highlighted some people kind of buying 2-year notes a bit ago and doing it on leverage. And I'm thinking, oh my goodness, is that a painful trade now, right? And, Sonali, that when things like this happen, we have these big swings, that's when things start to fall out, right? Funds that were over levered getting hurt. So I think if this keeps up, and maybe already we've seen some, you're going to continue to see these investors that were hurt, just went too far. And it just seemed like for a while, everyone said, oh, the 10-year yield can't get above 3.25. And here we are, way above it, right? Credit spreads were doing okay. Now things are widening. I just think there's kind of, talk about a lot of pain to be had, right? Some people are on the right side of this, of course, but some people are underwater at the moment.
Liz, yesterday we learned that 75 was the new 50. Bill Ackman today would argue that 100 is the new 75. What do you think?
Right. Well, remember yesterday early, somebody floated, I won't get into it, but, one strategist, maybe it's 100. And at first it seemed like, oh, that's crazy, right? And then, it kind of got leaked that the Fed may do 75. And then you see more and more strategists saying, okay, my call is 75, but maybe 100 would be better. I don't know. I think the odds are not that strong that they do 100, because it was already like, remember Powell set up for months, we're going to do 50, we're going to do 50 in June, we're going to do 50 in July. They love forward guidance. They love to kind of tell you and tell you and tell you. And then, like, I think you were talking in your simulcast, Tim was saying the data changed, they had to change. So they've kind of gotten, you know, that leaked out a bit. But if they go 100, maybe that's a bit much. I don't know. They may. Maybe they got to put the gauntlet down and go far, you know, fast, like Ackman says, and kind of get to neutral very quickly, which will not take too long if they start with 100 tomorrow.
Not a non-trivial risk. JP Morgan seeing that 100 basis point move as a non-trivial risk.
Right.
Ms. McCormick. It's always great to catch up with you. You're such a busy woman at the moment. So we appreciate you spending some time with us. Thank you. Meanwhile, let's keep you up to speed with what's going on outside the world of business for a moment. In the rest of the world, it's the First Word with Mark Crumpton.
Caroline, thank you very much. Ukraine's president says the war may stagnate and more people may die if the delivery of weapons to his country doesn't speed up. Volodymyr Zelensky told reporters during an online news conference today, Ukraine needs adequate weapons to be able to hit targets from long distances within its territory. And President Zelensky reiterated the war will only end when all foreign troops leave the country and its territorial integrity is restored. In Washington, the House committee investigating the January 6th, 2021 assault on the U.S. Capitol says it needs more time to assemble videos and exhibits. The panel has postponed tomorrow's hearing and moved it to Thursday. The hearing will focus on alleged pressure placed on Justice Department officials by former President Trump to convince state elections officials to reconsider and recalibrate results of the 2020 presidential election. The World Health Organization will convene an emergency committee of experts to determine if the expanding monkeypox outbreak that has mysteriously spread outside Africa should be considered a global health emergency. WHO officials spoke to reporters today in Geneva.
So we don't really know whether it's too late to contain. What we are, WHO and all member states are certainly trying to do is to prevent onward spread. So it's really important that we collectively all work together to prevent onward spread through contact tracing, outbreak investigation, isolation for people who have a diagnosis of monkeypox and symptoms.
Ms. Pike added of monkeypox, quote, "Right now this is an outbreak and outbreaks can be stopped," end quote. Declaring monkeypox to be an international health emergency would give it the same designation as the COVID-19 pandemic and mean that WHO considers the normally rare disease a continuing threat to countries globally. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
EY World Entrepreneur of the Year is the ultimate global competition for entrepreneurs.
Welcome to EY World Entrepreneur of the Year.
This year in Monaco, crowning the 2022 winner of EY World Entrepreneur of the Year.
Gaston Taratuda.
Because one person can make a world of difference.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
We're all horrified by what's happening in Ukraine. Hundreds of thousands of civilians are fleeing for their lives, and an estimated 12 million people need humanitarian assistance. I'm Sienna Miller, and I am the Global Ambassador for International Medical Corps. Our teams have been on the ground in Ukraine since 2014, when conflict first broke out in Crimea. Now, with attacks by Russian forces across the country, we are scaling up our relief efforts inside Ukraine, as well as in Poland, Romania, and Moldova, to provide medical and mental health services, protection for women and children, and clean water, sanitation and hygiene. The needs are immense and the situation is worsening by the day. You can help. Please visit internationalmedicalcorps.org to find out how. Thank you.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
So we've been talking about the labor issues that also in some way muddy the supply chain concerns that have already been upending inflation and how we get our goods delivered. Union negotiations, of course, continuing between dock workers, ports on the West Coast as a contract over 22,000 employees at 30 docks expires next month. Both sides say they are working hard to avoid any sort of strike, and one is unlikely even if no deal is reached. Joining us to discuss, well, how we navigate all of these supply chain
surprises that the market is not factoring in right now?
I think consumption is going to remain under a lot of stress. And this is where zero COVID comes into play. Because on the one hand, the moment you see lockdowns being imposed, the first thing that suffers right away is consumption. Households obviously cannot spend, even if they want to spend. But that leads us to number two, where it really hurts household confidence. So because there is uncertainty about when, again, you might have to go under a lockdown, even if it's just your residential compound or your community, well, that will obviously act as a constraint on spending. So I think consumption is going to be the first place where we should be looking for continued pain.
Continued pain. It's interesting. We were just talking to a bit of a legendary hedge fund manager, Mark Lazary, sort of hoping for momentum in the opposite direction. Just wait a moment and have a listen to what he had to say, Shehzad.
As China keeps opening itself up, because they've been closed for quite some time because of COVID, and much, much worse than I think the U.S. ever went through. Because in China, because of the regime, you're able to sort of keep people in their homes and close businesses. I think as that opens up, you're going to see quite a bit of demand that starts coming out of China and out of Asia. So I think you'll see some positive momentum there.
Mark Lazary there, looking for positive momentum. Shehzad, you're of course like the world's sort of only large-scale independent data on China. Is there any sign of the momentum coming back? Is there any sign of some of these supply chains becoming unclogged?
Not at the moment. I think parts of the investment community are becoming more and more optimistic on China, but the ground realities have not changed, I think, to substantiate that. Again, it's very important to keep in mind, COVID-0 as a policy is not going away anytime soon, at least not till the Party Congress takes place in the fall, which means that be prepared for repeated lockdowns, even if they are more targeted, even if they are more localized, and that's going to impact manufacturing, and consumption is going to impact the entire expanse of the economy, really. So I think we can't just simply bet on the second half taking off, assuming that COVID-0 is somehow gone, or we're not going to get these lockdowns reemerging again.
We've sort of had a lot of analysts come out at one point and say China was uninvestable, a lot because of the regulatory risk. With the stroke of a pen, Beijing can change the rules of the game and not give anyone a heads up, and there's no sort of accountability. In that lens, when you think about the markets, when you think about investors looking at the economic data, does it feel still sort of uninvestable?
I don't know if we ever agreed really that uninvestable was the right term. You get these very polar opposite views on China. People are very, very bullish. People are incredibly negative, very bearish. But I think we can't assume right now, again, that somehow that regulatory crackdown that took place is behind us. I think fixing the economy is certainly a priority right now because of what has happened in the aftermath of these lockdowns through the spring and early summer right now. But that doesn't mean that we can't see a return to a stricter regulatory framework, especially as we get through the Party Congress. I don't think there's any evidence right now to suggest that the crackdowns are over for good, as some have suggested. I think that's a very risky play. I would certainly suggest adopting a more nuanced view on that.
When you're looking at the risks ahead, what are the greatest ones as well, and where do geopolitical risks really fall into the spectrum here?
So the first thing is, continue to believe that COVID-0 is hands down the biggest market risk. That as a policy will create the most amount of uncertainty, and it will really limit the PBOC's policy to do much. So you can keep bringing down, your loan prime rate, and you can keep doing RRR cuts, as it's made it very, very clear. It is not spurring corporate borrowing. It is not spurring household borrowing either. It's not having the stimulative effect that is intended. So that remains, I think, it's all packaged together, but that's really hands down the biggest risk. Geopolitics, look, there might be some fine-tuning of the tariffs, if you will, in coming weeks or so. We're still not clear on that. I don't think it's going to have much of an effect. The geopolitical tensions are going to remain. The Biden administration has very clearly struggled to come up with any type of coherent China policy. The Congress hasn't been able to succeed either, but I think there's a lot more movement in Congress at the moment in terms of how they want to shape outbound investment to China, technology transfer, and so on and so forth. So continue to expect tensions there. We've got an SEC which has taken a very aggressive stance on the delisting of Chinese companies that cannot be audited. Continue to expect tensions there. So geopolitics will remain front and center, even if you're not getting much concerted action out of the administration or out of the White House specifically, I should say.
Shahzad Kazi, it's great to have some time with you. Really illustrative and dissecting the data, maybe putting some of our optimism back in its box. Managing Director of China Beige Book International, we thank you. Stay well. Meanwhile, coming up, we dig further into some of these, well, uninvestable calls we're just saying made about China. We discuss the risk for Chinese stocks. It's our third take. You've got to stay with us. This is Bloomberg.
Bitwise, the world's leader in crypto index funds.
The 2013 Bitcoin, but the rest, I really need something well-balanced.
Very good, sir. May I suggest a blend?
That's exactly what I was thinking.
Wonderful.
Ask your financial advisor about Bitwise.
Do you know how much your broker charges on margin loans? On a $100,000 margin loan, Interactive Brokers charges just 2.33%. Fidelity and Schwab charge over 3 times as much. E-Trade or TD Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
You'll always remember buying your first car, and buying your starter home, or whatever this is. But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. We believe that your investments should work harder for the future you imagine. And that's where our strategic investing approach can help. T. Rowe Price. Invest with confidence.
The moment you wake up, you're on your feet. But for the 1 in 4 adults who suffer from bunions, every step may be painful. And if left untreated, bunions only get worse over time. With the old way of doing surgery, bunions often returned. Lapiplasty 3D bunion correction is changing that. Lapiplasty's innovative approach realigns your toe and secures the joint to fix the root cause. There are risks associated with surgery. Find a Lapiplasty surgeon today and learn more about the Lapiplasty procedure at lapiplasty.com.
This is Triple Take here on Bloomberg today, of course, really focused on the global growth picture. So far, we've discussed a lot about the divergence of central bank policy between the Fed and the PBOC, as well as what to expect from the next batch of data coming out of China. Of course, to our third take, and Caroline, you're taking a look at that big U-turn when it comes to some of these Chinese stocks.
Yeah, I'm not talking about the U-turn when it comes to the Fed and how fast they're going to rate hike. I'm looking at the U-turn. I mean, I'm pretty sure many of our 401ks are not looking like this since March, but it's actually been the place to be putting your money into Chinese-related stocks, particularly those that are currently here in the United States trading. And we look at something like a China Golden Dragon Index, and I have to say our colleague Carol Massa cites it time and time again as we go to our simulcast every day. The outperformance, look how much we've rocketed, particularly in the month of June. We've come down from our highs, but up 41%. And interestingly, it's not really just been about some of the more riskier taking viewpoints coming from the stock market. Have a look at some of the economists out there, some of the money managers, and what they're saying in terms of the turnaround. HSBC weighing in.
It seems like we've hit a bottom, and that with the lockdowns easing a little bit, that things are starting to improve. So on the margin, I would say things are getting a little bit better on that front. On the other hand, if you look at sentiment in the market, that is really poor for Chinese assets. Regional funds, global funds, everybody is underweight or at best neutral in those assets.
Joining us now for more is our very own Bloomberg's Yi-Chin Shen. So great to have you here. And I think Caroline and I were joking because the big U-turn that I've been thinking about has been the way we're thinking about this Federal Reserve. But to her point, the big U-turn really here on sort of a bottom-up fundamental analyst sort of view has been the big U-turn on basic equities when it comes to some of these Chinese stocks. How are you thinking about the way that we've really seen a big pivot here from some of these analysts?
Yeah, sure. So I would say just recently there have been a string of very positive calls and reports from big Wall Street banks, from HSBC to JP Morgan, also Goldman Sachs. They're all saying, you know, the wars might be over for this China equities. This is the time to buy, and their shares are bottoming out. So I would say the main driver is actually the improving regulatory sentiment, because just last week, Beijing released a string of new video game titles, for example, and there was a ban on them last year. So this is definitely a positive. And then there's a separate report about a potential conclusion into the probe into DD Global. That's another sign investors seeing, oh, okay, China maybe is finally walking back from its very tough, very harsh regulatory crackdown to the tech industry to now more collaborative approach with big firms from Baobao to JD.
So they're essentially calling the bottom here by saying that things are getting better regulatorily, but what are the big risks to that kind of thinking?
Sure, I would say COVID lockdown remains to be the biggest risk because a big part of this market confidence is based on the China reopening play. However, we've seen this week there are new cases coming along, and some part of the cities also put back to the lockdown mode, right? And the bigger question to investor always, as long as China sticks to this zero COVID approach, then this risk will remain, and it's hard to predict when and if that will happen again, and how much that's going to impact companies' business plans and the economic growth.
And it's exactly what we're just hearing from the China Beige Book International MD saying, look, you know, people getting a bit too optimistic. This is COVID zero is going to remain in place for some time.
Yeah.
What about just the general cheapness? I mean, have we eroded that? We've seen the performance since March. We're up 41%. How have the easy pickings sort of gone now, do you think?
Right, so I would say one thing I'm hearing a lot from fund managers is the risk-reward profile in China equities is looking a lot more better now, right, compared to 6 months ago. Because if you truly believe the war is over and the regulatory outlook is cleaner, then look at the valuation. They're really cheap, right? Take Alibaba as an example. It lost more than, half of its market cap over the past year. So if it is now the time to focus on fundamentals, then investor could find a good, attractive entry point in terms of valuation.
We love chatting fundamentals on this program. We love chatting with you. So great to have you, our very own Bloomberg's Yi-Chin Shen, of course. And stick with us because we're going to be back with our final take, which is next. This is Bloomberg.
Wherever you go in the world, one airline goes further to make it feel exceptional. Qatar Airways, going places together.
At Southern New Hampshire University, you can reach your goals faster. That's because you can transfer in up to 90 credits toward your online degree.
I was able to cut my time in half.
Apply free at snhu.edu.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
Fortitude Gold. Producing high-grade, low-cost gold in Nevada, USA. A gold investment delivering monthly cash dividends and substantial yield.
Fortitude Gold.
Imprint, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer. I love it.
Promotional products from 4imprint are certain to deliver yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
America's most iconic foods are now shipping nationwide. So if you want the best New York bagel, legendary Texas brisket, Ina Garten's famous chocolate cake, Chicago's iconic deep dish pizza, seafood from Seattle's most famous market, or the viral sensation pie cakin', Goldbelly, shipping the greatest food gifts in the world to your door. Order today for Father's Day and get free shipping anywhere, nationwide.
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's Enterprise Solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
For our final take in, Caroline, it continues to be, I think, just the shock and awe of these divergent central banks and the path forward.
I know, and when we're basically confronting both the same issues across whether you're in the US or China, is monetary policy doesn't really work for either side. Whether you're trying to stimulate the Chinese economy, you can't do it if you're in lockdown, and whether you're trying to cool down the demand here in the US, it's the supply side issue.
So much out of the Fed's concern, so much out of the PBOC's concern, and the cross currents. Very smart guys on the different asset classes that are being swept up into this.
I'm focused on one asset class. That is the bond market. This is how the markets are pricing in 75 for June, 73 for July, and 81 for November. That is the huge pivot, the real U-turn that I continue to watch on these markets.
Shall we start making bets?
Making bets. The market has made its bet, I think, hasn't it? I mean, I'm not going to...
Over under.
Everyone's decided that they are going to fight the Fed, but they're going to fight the Fed in the other direction. And we're going to be going big if he's... See what Jay Powell does as soon as tomorrow.
Used to be a very unloved bet, right?
Meanwhile, that does it for Triple Take. Bloomberg Technology is up next in the United States. You have a good evening on this Fed Eve. This is Bloomberg.
EY World Entrepreneur of the Year is the ultimate global competition for entrepreneurs.
Welcome to EY World Entrepreneur of the Year.
This year in Monaco, crowning the 2022 winner of EY World Entrepreneur of the Year.
Gaston Taratuda.
Because one person can make a world of difference.
What do you think healthier looks like? CVS can help you support your nutrition, sleep, immune system, energy, even skin. So healthier can look a lot like you. CVS, healthier happens together.
Hi, I'm Jim Furyk. I hold the record for the lowest score in PGA Tour history of 58. And that was even before I'd heard of Club Champion. A custom club fitting from Club Champion helps any golfer level up, even pros like me. And with greater accuracy, more distance, and fewer putts, you're guaranteed to lower your scores instantly. Trust me, these guys are the best. So schedule your custom fitting today and see how low you can go.
This Father's Day, give Dad the gift of golf with a 15% bonus on Club Champion gift cards.
Deep in credit card debt? Did you know Credit Associates can help you reduce that debt? It's not nearly as complicated as you think. Let me show you what I mean. First, there's the total amount of credit card debt you owe. Whoa! We can reduce that by almost half. Second, how about those decades you'll be in debt? We reduce that down to as little as 24 to 36 months, giving you up to 20 debt-free years back. Lastly, how about the endless hours of stress and anxiety from being in debt? We can help reduce that too. It's easy to get started. Call now to see how credit associates can reduce your debt and save you thousands. The information is free and there's no risk to call. 1-800-600-1994. Call Credit Associates now to start living better, debt-free. 1-800-600-1994.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
I kept seeing this shoe brand all over TikTok. It's called Kizik.
Look at this.
Bam! Bam! Look at that! These are absolutely amazing. The whole purpose behind this shoe is that it's completely hands-free.
Oh, no!
They're so easy to get on.
No tying, no pulling, no heel crushing, no hands.
Kizik. They are no ordinary shoe.
Time to step up your shoe game and step into Kizik's. Get 15% off today at kizik.com/TV.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, stocks are set for the longest losing streak since January over concerns the Fed's aggressive policy to combat high inflation will throw the U.S. into a recession. Plus, it is another sign of a worsening crypto downturn. Coinbase announcing it'll lay off 18% of its workforce, following other crypto companies that are also cutting staff. And my exclusive interview with Cisco CEO Chuck Robbins on where he sees the economy headed and how the company is navigating the downturn and supply chain pain. He'll join me in an exclusive interview later this hour. We're going to get to all of that in a moment, but first, U.S. stocks on their longest losing streak in 6 months, with the S&P 500 falling for a fifth straight day. But tech faring better with a late-in-the-day rebound, helping put the sector in the green. Bloomberg's Ed Ludlow here with the latest. Ed, what changed for tech today?
Yeah, it was really a session that was gripped with volatility, swinging between gains and losses. But you do see the NASDAQ 100 up 0.2%, snapping 4 straight days of declines. And within that, there's pockets of outperformance. You look at semiconductors up 0.6% on the Philadelphia Semiconductor Index. Mega caps really interesting as well. Mega caps and US listed shares of Chinese tech companies pushing the NYSE FANG Plus Index higher. But the story's the same. The bond market leading the equity market by the nose. Yields continuing to push higher. We're up 11 basis points in the US 10-year yield, pushing even further to 3.5%. And there's all eyes on the Fed and the key Fed meeting on Wednesday. You come with me into my Bloomberg terminal and look at this chart of the NASDAQ 100 on a quarterly basis. And the right-hand side of the screen is scary, Em. That's scary. Look at that performance on a quarterly basis. Go back to 2008, financial crisis. Go to the far left-hand of the screen, the dot-com bubble. We're in that territory. That's the discussion we're having. But I point out the green on the screen of the equity markets and the tech sector. There's hope that if the Fed acts decisively, sets out its stall, then the yields will come under control. And if yields come under control, then perhaps we'll see that pain in the technology sector of the equity market easing. Final thought, interesting to look at the movers, right? Some of the names that were performing well during Tuesday's session. Tesla up higher, Apple up 0.7%, Oracle the outperformer on strong earnings. You and I are going to discuss that later in the show. But there are voices out there saying valuations have come down in the tech sector. Look at companies with strong free cash flow, and that's the difference. That's why this might not be the same as the dot-com bubble, because the fundamental is very different. Amazon down 1.3%. Insider intelligence analysts saying 2022, the year that they lose market share in the e-commerce industry. Very different story for them.
Interesting, Ed. Thank you. Meantime, the bear market for Bitcoin has entered its, quote, deepest, darkest phase, according to industry watcher Glassnode. Even long-term holders who had toughed it out until now coming under extreme pressure. Bloomberg's Sonali Basak now joins us to explain. And obviously, this on top of the Coinbase layoffs doesn't look good for the crypto market right now.
Yeah, so let's talk about some of the pain here, because that nibbling you saw in the tech industry, you did not really see it today in the Bitcoin market. You saw a massive decline yesterday of more than 15% into the 24 hours through yesterday. You didn't see that big of a decline today, Emily, but you did see a more than 5% decline over a 24-hour period, so still a significant enough move. Let's talk about what this means in terms of Coinbase now, which had that huge announcement, as you said, that 18% layoff figure, and you actually did not see Coinbase shares fall as much as you saw Bitcoin itself fall. So that's an interesting thing, Emily, because a lot of days that you see Bitcoin fall, you see Coinbase fall further. You see these equities linked to Bitcoin have a steeper decline. But Coinbase today, actually, it was fluctuating. It was fluctuating between gains and losses, meaning you don't know how investors feel about something like job cuts, fiscal discipline, worries about hiring plans in a market like this when hiring plans were so ambitious. Now, let's talk about the other crypto cuts we're seeing here, because as we know, Coinbase is not alone. We have BlockFi, 20%, Gemini, 10%, Crypto.com, another 5%, and this doesn't even include Robinhood. So you are seeing a lot of pressure here in the hiring market. The question is this contained to certain areas? Is it contained to DeFi and brokerages? Or are we going to see some of this carnage really start to float into other areas? And will it start putting more pressure into a lot of the growth plans for these companies, Em?
Right, big questions to consider. Shonali, thank you. We'll get to you later in the hour with our crypto report. I do want to dive deeper now into the markets as we wait for the Fed's decision Wednesday. Leo Kelly, CEO of Verdance Capital Advisors, joining us now to discuss. So what are you expecting from the Fed tomorrow, Leo, and how is that impacting your strategy?
Well, the Fed has to be aggressive. There's no question about it. They are well behind the curve. They have been for some time. We never really bought into the transitory inflation nonsense, and this has gotten far beyond anyone's expectations. So our expectation is they act aggressively for the first time. While I think we all want them to take it carefully and slowly, the reality is they will do more damage if they're not aggressive than if they don't. So we think the Fed is aggressive. We think the market expects that. I don't know that tomorrow is going to impact our long-term strategy regardless. It's really about the trend of inflation and prices, the trend of interest rates, which we think are breaking a secular 40-year bull market and starting to turn into a secular long-term bear market for bonds. So there's a lot happening right now, and the Fed is just one piece of that puzzle.
Where do you see the biggest risks in tech specifically?
Well, in tech specifically, the problem is there's still a lot of speculation. To wear out speculation in any market, in any bubble type market, and when we look around at things like crypto, or we look at stay-at-home stocks back in the COVID years, there was tremendous speculation, there was tremendous stories. And it takes time, and it takes multiple, let's just say, shots at that speculation before you wind it completely out. So more than likely what you see is you see these massive downturns, you probably get some oversold recoveries, but then you return back, and until you get the last bit of hope out of the market, you don't see actual bottoms. There was a great statistic I just heard in the introduction that these companies have cash flow, and so this may be a little different. I would say back in the dot-com bubble, Microsoft had cash flow, Cisco had cash flow. And if you look at something like Cisco, it was at about $90 at the top of the dot-com bubble, got to $9, which was well below what its fair value was, and it took decades for it to come back before we started to see reasonable prices. So I think tech you have to be careful with.
Interesting that you use Cisco as an example, because I'm going to speak to Chuck Robbins, the CEO of Cisco, later this hour. I also spoke to Amazon CEO Andy Jassy last week. We spoke about the economy, his thoughts on rising inflation. Take a listen to what he had to say.
I think the real challenge for us there is on the cost side, and there have been several things that have happened, some of which are more controllable than others. You know, I think the part that's less controllable is really around inflation. And I think we thought that inflation would start to attenuate in 2022. And with the war in Ukraine, it just went the other way and has significantly accelerated.
You've got these massive companies like Amazon that have no control over where these numbers are going. You know, what do you think the long-term impact is going to be on a company like Amazon and other companies that, you know, rely on the health of the consumer?
So history shows us that when the cost of capital exceeds the return on invested capital, we go into a recession. And the cost of capital is rising rapidly. And so we're going to see a significant profit recession in the marketplace from companies like an Amazon and many others. And so if you're not inflation sensitive, this is going to be serious pressure on earnings. So some of these reliable growth companies that have steady growth patterns are going to start to see those patterns get disrupted, and that's going to affect PE multiples. The reality is with inflation that we have it. It's accelerating, and one of the reasons is we're not addressing the problem. We have to go to the core of the problem of inflation, and until we do that, inflation will continue to surprise us. We cannot answer a supply-side inflation event with more demand. And so far, that has been the method of replacing and repairing inflation. So the Fed has to get aggressive, and we cannot afford policy errors coming out of Washington that stimulate more demand. I mean, that's the bottom line for inflation.
All right, lots to continue to watch. Leo Kelly, Verdant's Capital Advisors, thank you for giving us your input there. Well, for the first time since agreeing to buy Twitter, Elon Musk will address Twitter employees. On Thursday, he'll speak virtually at a company-wide meeting, and he's going to take questions. Twitter has been in a chaotic state since the deal came together in April. While Musk has a passionate contingent of employees who support a takeover, another contingent is openly critical. Some employees frustrated by Musk's ongoing questions about spam bots and think it's Musk's attempt to renegotiate his $44 billion deal. Twitter executives, however, have told employees they plan to enforce the agreement. Coming up is the future of streaming sports. We're going to talk Apple, Disney, Netflix, and the future of streaming with Rich Greenfield. Up next, this is Bloomberg.
When you're a small business owner, there's no such thing as 9 to 5. Days are longer, and business hours, well, they're anything but predictable, especially when you have clients like ours. When I considered payroll providers for my business, I looked for a solution that fit into my busy schedule. Sure Payroll makes running payroll fast and easy, so I can spend extra time with these guys.
Visit surepayroll.com for a 2-month free trial and find out what makes us different. Because small business is our business.
At Fidelity, your dedicated advisor will help you create a comprehensive wealth plan for your full financial picture with the right balance of risk and reward, so you can enjoy more of this. This is the planning effect.
Join the savvy customers who for decades have been using rockauto.com to access the info hidden behind parts counters. Take advantage of reliably low prices.
All the parts your car will ever need, Rock Auto.
Reduce carbon emissions, they say. When it comes to our planet, we need to do more. We choose positivity. We choose to change. Tomorrow now. We'll learn, we'll try, we'll do and undo whatever it takes to get there. We don't have to commit, we choose to. We choose Earth. It's up to us, and that's our biggest power, the power to choose. Do you? EDP, changing tomorrow now.
You'll always remember buying your first car and buying your starter home, or whatever this is. But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. We believe that your investments should work harder for the future you imagine. And that's where our strategic investing approach can help. T. Rowe Price. Invest with confidence.
As Netflix looks to turn around an already rough year, it is hoping Squid Game will be its savior. Just days after announcing the second season of its most popular series of all times, Netflix is now turning it into a reality competition. It is called Squid Game, The Challenge, and the streaming service boasts it'll have not only the largest cast in reality TV history, but also the biggest lump sum cash prize. 456 real players will hope to win $4.56 million. If you've seen the show, you know the significance of that number. But unlike the original series, there won't be any gore, they say, with the worst fate anyone will face, going home empty-handed. While Apple is betting big on sports, the company just signed a 10-year deal to exclusively stream Major League Soccer on Apple TV beginning in 2023. Back in March, Apple reached a deal with Major League Baseball to air Friday night games also on Apple TV. This deal coming just one day after Disney lost out on a bidding war for the streaming rights to the popular Indian Premier League. Rich Greenfield of Lightshed Partners with us now to discuss it all. And if you're a baseball fan, you know having those Friday sports rights are pretty important. Is sports going to be the next big streaming differentiator or the big streaming differentiator?
No, I think the reality is all of these streaming platforms are realizing just how difficult it is, not just to attract subscribers, but to re-engage them and to make sure they don't churn, Emily. And it's hard, right? There's a reason why Netflix spends $17 billion a year on content. It's not like they do it because they want to spend too much money and they just toss and burn capital. The reality is the difference between the old cable days that you and I grew up on. Remember, you wanted to cancel your cable service, like you had to literally call up Comcast or back in the day, Time Warner Cable. You probably spent the better part of your day on hold being transferred around to departments. If you actually got through the retention department and tried to quit or cancel, then you had to go return your equipment and stand in line. Like it was being tortured. Now, if you want to cancel a service, it's point and click and cancel. And you can sign right back up a few days later. So I think in many ways, sports is being used as a tool that all of these companies are looking at to bring in new subscribers and to retain existing subscribers. And I don't think any of these will be all sports. I think that's a very hard business model. And I think it's one of the reasons ESPN hasn't converted to over the top yet. But I do think that they're all looking at sports as yet another tool to drive subscribers and retain existing ones.
How big a deal is Apple picking up Major League Soccer or Disney losing out on cricket? Do you see these wins and losses as more, not necessarily big deals?
I think Apple is a huge deal. I think every single person that invests and looks at the media space or runs a media company should be thinking about what Apple is doing, because, the only thing holding the traditional media bundle, big video bundles, cable and broadcast networks, the only thing holding these bundles together, Emily, is sports. All the best entertainment programming. Think about it. Name one big show, new show, that's aired on linear TV in years. Like everything is now starting its life on streaming. I don't care whether we're talking about Squid Games, which you just talked about, or Mandalorian on Disney, or Murderers in the Building on Hulu. Like everything is happening on streaming. So the only thing sort of left has been sports. And yet, look what just happened. Amazon has just taken the #2 TV series on linear TV, broadcast TV, in Thursday Night Football this fall only on Amazon Prime. And then you see this deal with MLS today. Like you're just every day, the last pieces that are holding together the TV bundle are being stripped away. And that means two things. One, more and more cord cutting, less and less viewership for these TV programs. And all of that means, the bottom line is that these legacy media companies are facing more and more pressure because most of them are built around broadcast and cable networks. It's going to be very hard.
How much M&A do you think we're going to see? I know you don't think a Netflix Roku deal is going to happen. Would you say there's a 0% chance?
Look, I hate zeros. I've learned never to. I've learned never to say never. I mean, I think if we had been on here if you said 8 weeks ago, was Netflix going to do advertising, I would have said there's no chance. So you should never say never. Everything is up for debate. I think the odds of Netflix buying Roku are very hard to imagine. Why would you want to be in the device business? I think Netflix benefits from being available on every device and not competing. Buying Roku would put them into, battling against companies like Samsung and Vizio. And that's just very hard for me to believe. And I think Netflix is very focused on sort of an asset-light approach initially to advertising, outsourcing. There was a story out today that they may be doing, this is the information, reported they may be looking at using Comcast's freewheel product. We think that makes a tremendous amount of sense. And look, they're going to connect into lots of platforms and use lots of players. They'll work with Roku's, they'll work with Trade Desks, but I'd be very surprised if Netflix was going to go out and make a very significant acquisition. That's just not their style at all.
They are turning this Squid Game success into a reality competition. What are your thoughts on that? I mean, is right now is now culturally the right time for a competition like this?
I mean, with the world melting down, if you watch Squid Games, the sort of the depressive nature of the world, it sort of feels like the right time for a Squid Game reality series, to be honest. But leave that aside, I think you're bringing up a greater issue. Netflix isn't broken. None of the streaming services are broken per se. The reality is it's all about content. Consumers are going to gravitate to the services where they spend the most time and where they have the most content that keeps them entertained. And, the reality is Netflix still is by far and away the biggest service. 25% of all time spent on connected TVs is on Netflix. But I do think they need more iconic shows. And Stranger Things has been huge coming back. All 4 seasons were the top 4 most watched shows on Netflix a couple of weeks ago. So there's no doubt that franchise zeitgeist content is critical. And I think that's why you're seeing Netflix lean into doing more, not just a second season of Squid Games, but how can they build this franchise even broader? I think that makes a lot of sense. And I think you're going to see Netflix pivot from having, instead of just volume of series, really making sure that they have a good number of series that really are zeitgeisty and really water cooler conversation that create the buzz that they need. Because I think they haven't had enough of that. And that's part of the reason why they've suffered over the course of the last couple of quarters.
We've seen a few Disney stories over the last week, more sort of Game of Thrones, Chapek firing Peter Rice, his head of content. Apparently it only took 7 minutes. How optimistic right now are you about Chapek's leadership and the culture he is trying to create, given the challenges that he's faced?
Look, Chapek came in at a very hard time, right in the middle of the pandemic was no easy task. The theme park business was just, he was very much behind before he became CEO. He's obviously having an incredible resurgence. They literally can't keep up with demand and they're raising price. But I think the real question for Chapek is, what is his plan? Is ESPN and sports the future? Clearly, they just bowed out of sports on streaming in India, as you brought up. The IPL rights went to Viacom 18, which is owned by Reliance Jio and James Murdoch and others. But, certainly bowing out of digital or streaming in India is a big deal. And it sort of points to this larger existential question for Chapek of what is the future of Disney? Is it about Disney Studios, meaning the film studio and the TV studio, the theme parks and consumer product, which all really work well together? Do they need to be in the ABC broadcast TV business? Do they need to be in the ESPN and FX business? I think there's some very big decisions for Chapek, and I think we're all waiting. I mean, the reality is there a future for Hulu, or do they just put more and more of that content onto Disney Plus? There are some really big structural decisions. Maybe that's what the board is waiting for, to sort of see what Disney ultimately looks like. I will say I was surprised the board came out with a comment sort of endorsing Chapek, but didn't just renew his contract. His contract expires in February 2023. I'm not sure what they're waiting for, either renew his contract or tell us they're bringing in a new CEO. It does seem strange that we're sort of sitting here waiting to figure out what happens next. The stocks obviously suffered, but the whole group is down substantially. I think investors really want to know, what is the structural future of Disney? What are the assets that are they keeping? What assets are they getting rid of? And we really haven't gotten that sense from Disney over the last 6 months.
Yeah, it was certainly interesting to hear from the board, but you make a very good point. Lightshed's Rich Greenfield, always good to have you, Rich. Thank you.
Thanks for having me,
stopping by. All right, coming up, as we continue to watch this very volatile market, we're going to hear from Khosla Ventures founder Vinod Khosla on concerns about a recession and tech valuations. We'll hear from him next. This is Bloomberg.
Picture a car that not only knows where your favorite coffee shop is, but also anticipates when you'll have time to grab a cup. Today's connected cars do much more than just drive.
With electrification, automation, and always-on connectivity, 5G-enabled cars have become mobile living rooms and offices, a place to relax, entertain, and be more productive.
This digital transformation has fueled immense growth. Automotive sales reached $2.7 trillion in 2021. The Snapdragon Digital Chassis, a unique set of cloud-connected platforms that support safety and digital experiences, reimagines the car of the future and opens up revenue streams. Automakers can offer new services because the connected car can be customized and upgraded throughout its life. They can work long-term with suppliers, partners, and consumers and create immersive experiences.
The Snapdragon Digital Chassis presents a huge opportunity to transform automotive business models and speed up innovation.
Upgrading or migrating your Oracle or SAP software can waste resources. Instead, join over 3,000 organizations who've already made the switch to Rimini Street. Other companies do software, we do support. Rimini Street.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
We're Carvana. We've created a brand new way for you to sell your car. Go to Carvana, answer a few questions, and our techno wizardry calculates your car's value and gives you a real offer in seconds. We'll come to you, pay you on the spot, then pick up your car. That's it. At Carvana.
Can a handyman fix my leaky faucet?
Home questions don't have to keep you up at night. Get peace of mind with Thumbtack. We'll connect you with local pros for any home project. Thumbtack, the easy way to care for your home.
Investor Vinod Khosla believes we will have a techno-economic war over the next 20 years, most likely between the U.S. and China. He talked about tech valuations and what it takes to be a VC on this week's episode of Bloomberg Wealth with David Rubenstein.
Well, the way I look at it is what is the underlying innovation that's going on and how large a market is it addressing? If it's large, then the valuations will look large. If you look at a Google, it's a great valuation. I would think it'd come back, but it's a 20-some% growth company, not a 50% growth company. The early stages of most venture, 30-40% would be considered low growth. When you're in that world and you're addressing large markets and you have a proprietary advantage, then the valuation metrics are very, very different. And traditional valuation approaches don't really work. But continuing to apply them as companies mature is a mistake.
And is the deal valuation so high that it's going to be hard for people to get the returns that they want out of venture investing?
So I do think, given the hype we've seen the last 5 years, we will see a decline in returns. Not for everybody. The good firms continue to be disciplined about valuations, but I do think in general for the industry we'll see a decline. The best firms will still do well.
So Khosla Ventures will do okay?
I hope so. We have to earn our keep.
Vinod Khosla there with David Rubenstein. Coming up, Cisco.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at Tovala.com.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Imprint, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer. I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain. With your finances?
Yeah. Save yourself the pain and let Truebill do the work. Truebill automates your personal finances by canceling subscriptions you're paying for but never use.
Who signed up for those?
Give your finances the fix and download Truebill today.
Nice. Hi, I'm Jeff from Nuts.com. When my grandfather started this business, he relied on freshness, quality, variety, and service. He still delivered the freshest nuts, dried fruits, snacks, and sweets to families all around the country. Nuts.com. Enjoy free shipping on your first order.
If you're serious about training for an in-demand career, we are too. That's why Universal Technical Institute is making more than $15 million in scholarships and grants available this year to those who qualify. Visit uti.edu to learn about scholarship opportunities.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
I sleep hot.
Or cold.
No problem. The Sleep Number 360 smart bed is temperature balancing, so you both stay comfortable and can help you get almost 30 minutes more restful sleep per night. Save 50% on the Sleep Number 360 limited edition smart bed, plus 0% interest for 36 months. Ends Monday.
Why pay over $100 a month for cable when it's half the cost for Fubo TV? Get the channels you want with the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Stocks falling even further on fears that the Fed's aggressive policies to fight inflation will throw the U.S. into a recession. Is this rightful cause for alarm? Where are we headed for the next half of the year? I want to get into all of this and more with Chuck Robbins, CEO of Cisco, who is joining us now from Cisco Live 2022 in Las Vegas, the company's first in-person conference in 2 years. Chuck, it's great to have you back here on the show. How's it going? Bring us the atmosphere from the floor. How does it feel to be back in person?
Well, Emily, thanks for having me. And, you know, we're saying this week we're putting the live back in Cisco Live. We got 16,000 of our closest friends here. We have a lot of our partners back here that are demonstrating. There's lots of education going on. We had a slew of great product announcements this week. And so I think everybody is just, as you would expect, excited to be together in person. I think everybody's been longing for it. And we joked today that we're so glad that we're not doing this over video in a stale, room somewhere where we're getting no feedback. So it's a lot of energy.
Now, Cisco has always been considered a bellwether for the economy, and I have to wonder what your customers are telling you and how inflation and what's happening in the markets is impacting how they're spending.
Well, you know, we talked today with our customers and partners here about the fact that over the last 5 or 6 years, we've dealt with a global trade war and tariffs. We've dealt with a pandemic. We've dealt with social justice issues. We've dealt with supply chain issues. We have a war in Ukraine. We have inflation. So our customers, while it's not the new normal, I think they're dealing with the reality that there's always something going on in the world, and technology has proven to be so effective during the pandemic at keeping the global economy and the global productivity at a great level that I think technology is going to remain strategic for our customers, and most of them say they're powering ahead, so we'll see.
Elon Musk says he has a super bad feeling about the economy. Jamie Dimon said he's preparing for an economic hurricane. How does Chuck Robbins feel?
Well, I remain optimistic, but I'm thinking specifically about the importance of technology to our customers and how they're.
Looks like we lost Chuck Robbins there, joining us from Cisco Live 2022. We'll work to get his shot back up. Right now, we're going to head to break. Coinbase slashing 18% of its workforce, hinting at darker days ahead. Are there any bright spots left for crypto? We'll discuss. This is Bloomberg.
A number of people now are very nervous and they're trying to figure out should they get out. So I don't think you have natural buyers. I think you have natural sellers today, and nobody knows what the bottom is for that. But I think you'll still have a bit of pain in the crypto space.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Throughout history, I've observed markets shaped by the intentional and unforeseeable. For investors who can navigate this landscape, leveraging gold, a strategic and sustainable asset. The path is gilded with the potential for rich returns.
When you see value in all directions, you add value in all directions. Accenture, let there be change.
How will your business adapt to change? You could hire an office full of Peyton Mannings.
What's up, Peyton? Morning, Peyton. Hold for Peyton.
They'd huddle.
Welcome to the Peytonverse. Such a visionary.
Game plan.
You go. No, you go.
And call audibles.
Double our investment in Omaha. Omaha! 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 Omaha!
Or you could use Workday. Omaha. The finance, HR, and planning system used by over half of the Fortune 500 for a be agile like an MVP world. Workday for a changing world.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists. What has COVID done to AI initiatives in the workplace?
Massively accelerated it. I was with a CIO last week in Atlanta, and he was telling me they have Steve. And Steve apparently has gone out to win some company award.
Okay.
Steve is actually a robot, right? Like, no one knows that.
Wait, so a robot is like employee of the month?
Yes.
This is Lenovo Late Night IT.
We're seeing sentiment at pretty much an all-time low. I don't think I've ever seen people, feeling this negative about the industry. All of that said, there are still plenty of crypto firms that are hiring. We were seeing layoffs for sure, but the sort of core ideology that powers this movement is intact.
That was Nick Carter, founding partner at Castle Island Ventures, earlier on Bloomberg. Now, the dual crises of Terra and Celsius shaking up DeFi in ways that may have very serious repercussions for the crypto markets. I want to talk about all that and more with our crypto contributor, Sonali Basak, and with Sheila Warren, CEO of the Crypto Council for Innovation. Sheila, great to have you here in person. So look, there's chaos in crypto markets, in markets more broadly, but especially in the crypto markets. Just how low are we going to go here? Where's the bottom?
Well, it's hard to know. It's impossible to know. But we are seeing real-world consequences. We're seeing real job loss affecting real people. We're seeing real people losing real money. And that's in the context, of course, of record high inflation, erosion of purchasing power for families. So all in all, it's not a great picture. That being said, as you noted, we're hardly immune. It's hardly just the crypto market being affected here. It's really a much broader global economy meltdown that we're seeing.
So when you see Coinbase, first a hiring freeze, now slashing 18% of its workforce, this on the back of the stock plummeting, what's your reaction?
My reaction is that we're in a contraction phase. There are other firms who are hiring. There's a lot going on in the market that's adjacent to crypto as well. And I think what we're seeing is a pivot towards core principles and ideologies. Building a brand new financial and technology ecosystem is not easy. It takes stamina. And I think if I were new to this industry, I would be nervous. But over the 6 and 7 years I've been here, I've seen a bunch of these cycles come and go. And so I think that what we're just seeing is, again, a refocusing on strategic priorities. And my hope is that we're going to come out of this the way we have before.
You know, you had mentioned real people losing real money, and I want to steal your former lawyer hat for a second. I mean, how does the SEC look at something like this and want to protect investors after so much money has already been lost?
Well, frankly, that's a source of frustration, I think, for the industry, is that we really have been looking to agencies. The industry has been calling this for quite some time, to say we do need the ability to distinguish some of the scams that do exist in this space from the very legitimate projects that also exist. And instead, what we're seeing is intense litigation, enforcement actions against legitimate actors for relatively minor kinds of infractions, rather than some sort of clarity, which is what the industry really needs. So I have to say, wearing a lawyer hat, I'm not super thrilled about what the engagement that we're getting from the agencies that are here to really support and help all of us.
I mean, even that lack of clarity, how much of a hangover does that give the ecosystem when you don't know what you can build? How do you then invest in projects when you don't know what's possible?
Well, I think that's exactly right. And what we're kind of seeing a response to right now is where there is this high degree of uncertainty around what is going to eventually be kosher, to have built and to have engagement with. People aren't sure what to do. And we've been asking for many years for guardrails, for guidelines on how to engage. We want to work collaboratively with regulation and with policymakers. And, in some cases that's happening. We are seeing a lot of support from the legislative side of the House. We are seeing an approach. Senators Gillibrand and Lummis had their recent bill that kind of is trying to clarify CFTC, SEC jurisdiction. A lot of engagement abroad from the Europeans, from APAC countries, seeing this. But here, the SEC maybe not taking quite the same approach.
Well, I'm sure there's lawmakers who are looking at what's happened with Terra and looking at what's happened with Celsius and are like, I don't know about any of this anymore. I mean, these are companies that structures that seem to be very legitimate, but are having major issues. What do you say to reassure them?
Well, I think it's actually not that hard to differentiate some of these things from other things, right? There's a reason Celsius has a particular lending platform they were engaged with. Unclear to me, and maybe to others, maybe others know, whether they are, what kind of insolvency we're seeing here. Is this cash flow insolvency? Is it balance sheet insolvency? But I think there's a reason that Coinbase, for example, scrapped its lending, right? And kind of said it's not the right time. We don't have regulatory clarity that we need to see around some of that engagement. As far as Terra, it's a pretty highly differentiated algorithmic stablecoin. It does not reflect the broader crypto ecosystem in any kind of meaningful way. So I do think the thing to note is that education is really important here. Crypto is not a monolith. Every crypto L1, Layer 1 platform has a very different approach to what it's thinking about doing. Every stablecoin is different. The reserves are held differently. And all of that nuance is critically important for us to understand as we move towards more regulation and policy environment.
So what crypto projects are you most excited about? Where do you see legitimate high potential?
So I'm really excited about the ones that are focusing on real problems, solving real problems for real people. I think it's not a surprise we've seen crowdfunding of a wartime defense of Ukraine, right, in this environment. We've seen massive amounts of outlays to India during COVID relief. We've seen examples where this institutions were really focusing on real problems. We also know that we've got 1.7 billion people in the world without access to basic financial services. It's a massive gap that legacy institutions have not solved. So projects that are focusing in those places and understand that there's a gigantic market there that needs to get these basic baseline checking account kinds of services. Those are the projects that I personally think you're going to see longevity and stamina, and you're going to see those emerge from this particular moment that we're in stronger than ever.
All right, Crypto Council for Innovation CEO Sheila Warren, thanks for sharing your view on the landscape we are facing. Our own Shonali Bosick. Shonali, thank you for joining us as well. Coming back up, Chuck Robbins, Cisco CEO, once more from Cisco Live for more of that exclusive conversation. He'll be with me next. This is Bloomberg.
Bloomberg's Crypto Report is brought to you by Grayscale Investments, building the future of financial legacies.
You'll always remember buying your first car and buying your starter home, or whatever this is. But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. We believe that your investments should work harder for the future you imagine. And that's where our strategic investing approach can help. T. Rowe Price. Invest with confidence.
Can a handyman fix my leaky faucet?
Home questions don't have to keep you up at night. Get peace of mind with Thumbtack. We'll connect you with local pros for any home project. Thumbtack, the easy way to care for your home.
We're back now with Chuck Robbins, CEO of Cisco, and this week's Techonomics. Chuck, we were talking about the economy. Elon Musk, of course, has said he has a super bad feeling about it. Jamie Dimon is preparing for an economic hurricane. How do you feel? How would you phrase it?
Well, I remain optimistic, but I also understand there's a lot of complexity in the world. And I think that, we're focused on delivering the technology to our customers, focused on delivering for our shareholders. And we'll have to see how things play out. There's certainly a lot of complexities. I think the Fed's going to move tomorrow. The question is, how far do they move, and what does that mean? But I think, we're just preparing for what we can control, and then we'll respond accordingly to things that we can't.
So are you preparing for a possible recession? I mean, you have to be planning for different scenarios.
We are always planning for different scenarios, but we've been around long enough and been through enough downturns that we have playbooks, and we know how to deal with those appropriately. So we'll see. I'm trying not to borrow any trouble right now, even though I understand it's a very complex environment that we're operating in.
So let's talk about the supply chain. What do you see that's still being impacted, especially when it comes to Cisco? What problems are starting to unwind, and how long will these problems in general be with us?
Yeah, I think on the supply chain front, right now we're obviously still seeing capacity issues around semiconductors, because every product on the planet now seems to have one or more semiconductors in it. And that's probably in the 2023 time where we start to see some capacity come online. We've seen, obviously, the PC demand is kind of slowed, which we think has freed up some components in the marketplace. And we're starting to see inventories at brokers increase a bit, which they build their inventories from oversupply that suppliers have acquired that they don't need. So that's actually a positive sign. So we're starting to see some good signs, but I still think we're 3, 6, 9 months to where we really get this thing resolved in a way that's acceptable to our customers, honestly.
We're now in a period where the big debate is, do you go back to work full-time or not? WebEx, of course, one of Cisco's top products, helps enable remote work. What is Cisco's policy at this point on remote work? How are you thinking about it, and what it means to the company and your investors?
So there's two things. Number one, we've opened our offices, and we actually are leaving it with the manager and their team to determine how many days a week do you need to be in the office as a team to drive your productivity. And then if you say that's 2 days, then which days do you want to come in as a team? We don't think, in our case, we don't think it makes sense to mandate days where people are coming in the office. Before the pandemic, we had almost 15% of our employees work from home full-time anyway, and a great majority of our teams have distributed team members, so they're going to be interacting over video anyway. And so we're leaving it up to the teams, but we're also building a whole set of products and a solution portfolio for our customers who are trying to solve this hybrid work issue, because every customer has a different approach that they're taking, and we believe we have a lot of technology that can help them.
So do you think Elon Musk calling workers back to the office, is he going to be on the wrong side of history?
Well, every company, I think, is different in what they need, and there are like groups within our company that have decided they need to be in the office more often. So our engineering teams that want to collaborate and whiteboard and build products together, they're spending more time in the office than perhaps some of our other teams. So it'd be very difficult for me to critique another CEO's decision about what they believe they need their employees to do. But for us, we think this strategy is working so far, and we've seen the innovation continue to pour out of the organization. The teams are doing a phenomenal job, so we're quite comfortable with where we are.
If the future of work is hybrid, security is even more important, and I know that's one of the focuses of Cisco Live. talk to us about the threat landscape you see out there for businesses and the vulnerabilities they still face in terms of shoring up their defenses, getting their systems ready and able to enable this kind of work for the long-term future.
Well, the complexity that's been created over the last few years, every customer we have now is dealing with employees that are massively distributed. Their applications are running in multiple places, public clouds, private clouds, SaaS applications, as well as data is now being distributed. And now we have IoT really becoming real, so we're bringing new devices onto the network. And so it really creates a new paradigm around how our customers need to defend in security, which is why we announced our strategy around Cisco Security Cloud this week, Continued Trusted Access, Secure Connect Plus. So we're bringing out technologies that help for this new environment. And at the same time, I think it's just imperative for all of us that we have to stay focused on employee hygiene, because the people and the passwords and all those things that we count on everyone to do properly every day continues to be one of the biggest risks in the system.
What's your view on M&A right now with valuations coming down? Are there any areas you're interested in, potential targets you could share?
Well, we have, I've been asked a few times if our M&A strategy has changed because of the valuations, and I've said our strategy hasn't changed. The openness to talking to us might have changed on the other side, but you know, we remain interested in the same areas we have been interested. You know, we're always on the lookout for security. There are emerging areas around observability, but you know, we start with, is it a strategic fit for our technology portfolio? Is it a cultural fit, and is it good for our shareholders long term? And as long as those three work, the valuations certainly make a lot more assets actually fit in that criteria, a lot more so than perhaps 6 months ago.
Any chance Cisco would make a competing bid for VMware?
I'm not going to comment on that, but I think we are constantly looking at all of our potential targets out there, and you know, we build partnerships with companies, we acquire, and we do lots of our own innovation and internal research and development. We're going to continue to focus on all of those.
So look, Chuck, you've been in this industry for a long time. You've been working at Cisco for a long time. One of our guests earlier in the show pointed to Cisco stock and what happened in the dot-com bust and how it's taken decades to get back to where it was. From a historical perspective, how do you see this downturn fitting into the, you know, longer-term picture? I'm just so curious how you're evaluating it.
It's funny you say I've been around for a long time. You actually were one of my first interviews when I became CEO. I think, look, what's happened is there's now a higher value put on being profitable, clearly. There are a lot of similarities in some of the companies that had great ideas, you know, similarities with the dot-com bust. And I think I've heard people talk about it today and over the last few days, is that there were certainly quality companies that emerged. And I think what will be realized out of this is that what are the real valid business models that are going to emerge that have the ability to make money over the short term and over the long term. But it's clear right now the market is going to reward real companies that build real things and make real earnings. And our current quarter, the low end of our guide we gave at the last earnings call, is a record EPS year for Cisco. So we're pretty happy with where we are.
So look, you know, as you're mapping out your plans, what's your sort of strategic advice to yourself in terms of how you get from, you know, this point to the end of the year, dealing with all of these unpredictable forces?
Well, my advice is look back at what you've done over the last 2.5 years, because they've just been different crises, and we're just dealing with yet another one now. And, you know, we focus a lot. It sounds cliche, but we focus a ton on the stuff we really can't control, and I've been that way almost all my life. The things that I can't control, I monitor and we plan for, but we don't worry about them. And so we're going to continue to do what we can do, continue to execute, and continue to deliver technology that we think our customers really need right now, as everybody's trying to modernize and really build their architectures for the new world, and candidly to deal with the next crisis and be ready, because so many of our customers were not ready when we went into the pandemic.
All right, Cisco CEO Chuck Robbins. I remember that first interview you did with me as CEO. Appreciated the time then. And now, thank you for joining us. We'll let you get back to Cisco Live.
Great.
All right, I want to get now to another big enterprise company, and that is Oracle, after it sank to a 16-month low in Monday market's fall. But now having the best day in 6 months after fourth quarter cloud sales topped estimates. Our Ed Ludlow has been taking a deep dive on that. Ed, what do you see?
How quickly things change. I mean, Oracle's interesting because they set their stall out right. They were like, we want to move into cloud. And cloud is less than a quarter of revenue. And they performed. You know, cloud grew 20% in the quarter. They're giving a really bullish outlook about growth. You know, 25% in the current quarter, 30% of the year, at a time where everyone's worried about recession. It's kind of similar to Cisco. You know, they're not the sexiest companies, with respect to Chuck. If he's just listening, if he's still listening. But they're really important as a read on the economy because this is where businesses also spend their money.
Well, so you heard what Chuck Robbins said there.
Yeah.
He's optimistic, but it's complicated. There are a lot of things that they can't control. What is Oracle saying about the economy?
There are macroeconomic headwinds, but I think what's really interesting for them is that they, just like Cisco did, they're kind of maintaining the idea that the demand is there, that even smaller businesses are willing to spend on moving to cloud infrastructure. Why? Because over the course of the pandemic, they learned that investing in moving to cloud is cost efficient. You know, it might be an upfront cost or it might be a brave decision, but when the world is changing, you're not labored with a lot of hardware or a lot of servers that will be obsolete in a few years' time. So it seems like the smart choice.
You still need technology to keep remote workforces connected, for the example, as Chuck was pointing out. You know, Larry Ellison, of course, you know, we don't talk about him enough. Last we were talking about his plans for Lanai. You know, talk to us about the significance here of, you know, a guy and a company that we don't actually talk about very much, but is still a giant in this industry.
You know, it's interesting. We talk about him more as a Silicon Valley kind of name than we do as the CEO of a really big company, and he owns a really big chunk of Oracle, which is worth remembering. He has a vested interest in its success, but, you know, he is participating in these earnings calls. He stepped down from the board of Tesla, which is a news item of the last week. He's an ally of Elon Musk. He's a reported backer of Musk's bid to buy Twitter. He's on his island in Hawaii, but he's also running a really critically important tech company in Oracle.
Yeah, interesting to see how his career has evolved. Ed Ludlow, thank you for that quick update. And that does it for this edition of Bloomberg Technology. We're going to continue to stay on top of all of this market mayhem. Full coverage right here on Wednesday of the Fed meeting. We are expecting those rates to rise 75 basis points. Coverage starts live 1:30 p.m. Eastern Time, 10:30 a.m. Pacific. Also, we're going to be joined by Victoria Green of G Squared for market reaction tomorrow, and Meltem Demirors, Chief Strategy Officer of CoinShares, talking crypto. That's all coming up tomorrow. I'm Emily Chang in San Francisco. This is Bloomberg.
Bloomberg's Technomics is brought to you by Qualcomm, inventing the tech the world loves.
Picture a car that not only knows where your favorite coffee shop is, but also anticipates when you'll have time to grab a cup. Today's connected cars do much more than just drive.
With electrification, automation, and always-on connectivity, 5G-enabled cars have become mobile living rooms and offices, a place to relax, entertain, and be more productive.
This digital transformation has fueled immense growth. Automotive sales reached $2.7 trillion in 2021. The Snapdragon Digital Chassis, a unique set of cloud-connected platforms that support safety and digital experiences, reimagines the car of the future and opens up revenue streams. Automakers can offer new services because the connected car can be customized and upgraded throughout its life. They can work long-term with suppliers, partners, and consumers and create immersive experiences.
The Snapdragon Digital Chassis presents a huge opportunity to transform automotive business models and speed up innovation.
Upgrading or migrating your Oracle or SAP software can waste resources. Instead, join over 3,000 organizations who've already made the switch to Rimini Street. Other companies do software, we do support. Rimini Street.
What do you think healthier looks like? CVS can help you support your nutrition, sleep, immune system, energy, even skin. So healthier can look a lot like you. CVS, healthier happens together.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids.
Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
Do you hear that beautiful sound? That is the sound of the world's simplest back pain relief. The Chirp Wheel Plus. Get yours at gochirp.com.
Say hello to Truebill, the #1 personal finance app, packed with tools to help manage your money, like canceling unused subscriptions with just a tap. If you're ready for an all-in-one money management solution, then download the Truebill app today.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
A very good morning. Welcome to Daybreak Australia. I'm Heidi Stroud-Watts in Sydney.
I'm Annabelle Drewlers in Hong Kong. We're counting down to Asia's major market opens.
Good evening from Bloomberg's world headquarters in New York. I'm Sherry-Ann. The top stories this hour. Markets betting the Fed is set to abandon gradualism and move more forcefully to stamp out inflation with a bigger rate hike than previously anticipated.
That's seen a sell-off in U.S. stocks and bonds intensify as investors fear the Fed's approach will lead to recession.
And Hong Kong's outgoing chief executive Carrie Lam admits to Bloomberg that a stronger vaccination drive could have prevented COVID deaths.
Had we adopted the more aggressive measures at the very beginning and protect the elderly better, especially in the elderly homes, then perhaps we would see a lower number of deaths.
U.S. futures higher at the open here in the Asian session. This, of course, after the S&P 500 saw a fifth consecutive session of losses. We are talking about anxiety ahead of the Fed decision on Wednesday. And, of course, bear markets traditionally take a lot of time in order to rebound. We're in the fourth bear market in the last 20 years. In the last two, we had to wait another 1,000 days to recoup those losses. Still, we saw the NASDAQ 100 outperforming. We are seeing those futures higher as well. The likes of Oracle and FedEx gaining ground. FedEx seeing its best day since 1986 after boosting dividends. We had the two-year yield continuing to gain ground. We are talking about 2007 levels, the biggest three-day gain since 1987. And May PPI numbers also coming in stronger than expected, and that really leading to more concerns about Fed tightening. Crude prices in the Asian session rebounding a little bit. In the New York session, though, we had a little bit of pressure and below that $120 a barrel level, given that we are hearing perhaps more legislation could be in the works for energy, the White House mulling potentially an oil profit tax. But take a look at the crypto space, because it's really about that flight away from speculative assets. We continue to see the plunge with Bitcoin now at the lowest level since December of 2020, headed towards that $20,000 level. This, of course, after more anxiety over perhaps risks in the ecosystem overall, with lending platform Celsius now halting withdrawals. We also had Coinbase now saying that they will cut about 18% of their workforce. So we are watching, perhaps, Bell, this crypto winter could be in the cards.
Certainly seems to be the case, Sherry, but volatility is the name of the game really here in Asia as well, because we are setting up for a weaker start. So New Zealand just coming online a little bit to the downside, though we are now in a bear market for New Zealand stocks, closing more than 20% lower from their January 2021 peak. Australian futures also looking weaker at the start here. We did see the ASX 200 yesterday tumble by the most in more than 2 years, and Saxo Capital Markets weighing in on this and saying that we can expect a sharper pullback in stocks, more market shocks set to continue here. Now, the yen very much in focus as well, because we are past that 135.19 mark for the first time in 24 years. Implied volatility for the yen also at its highest since the start of the pandemic, but Heidi, 140, that is the level that our survey indicated could force the BOJ to intervene and change the course of their policy direction.
Belle, you see that complete disintegration in sentiment and confidence, right? Be it you talk about what we're seeing across equity markets or across the bond markets, but it is really this fear of stagflation, Sherry. Take a look at this new BFA survey, which sees really the responses showing us that the stagflation fears have surged the highest since the 2008 financial crisis. Global growth optimism, in the meantime, has plunged to a record low. So global profit expectations, in the meantime, also dropping to 2008 levels. Strategists at BFA noting that prior troughs in earnings expectations occurred during other major Wall Street crises. We're talking the likes of Lehman Brothers, the bursting of the dot-com bubble. So these are not great kind of events to be setting precedent in terms of the level of sentiment dipping that we're seeing now.
Especially as we continue to see really real yields driving those gains when it comes to Treasury yields climbing, right? And this is important because we are talking about real borrowing costs that are affecting companies out there, households borrowing. And we're talking about that level adjusted for inflation soaring back to pre-pandemic levels, causing damage to, as you say, cryptocurrencies and, of course, money-losing tech companies as well. Not to mention the impact on some investors that have been buying those short-dated bonds on the expectation that the Fed's rate hikes have been largely priced in. But, of course, we will be watching that Wednesday decision very closely. Let's cross to our cross-asset editor, Andrea Papuk, and welcome our global economics and policy editor, Kathleen Hayes, for what to expect. First of all, Andrea, let's go through the markets today because we saw tech stocks seeing a little bit of a rebound.
Hi, Sherry. Yeah, that's right. I mean, I don't think we can read too much into that. There was that Oracle effect from their outbid forecast, which you mentioned before. But look, really, nobody knows what's going to happen at that Fed meeting tomorrow, much less how markets are going to react. But what we do know is that there is this entrenched fear of stagflation, as Heidi mentions, that Bank of America survey showing the stagflation concerns at the highest since 2008. You also have large investors now dumping stocks, with hedge funds basically selling at the fastest pace on record, according to Goldman Sachs. So what we have is increased levels of volatility, investors fearful and really just not knowing how to navigate going forward. So, you know, Jerome Powell's press conference tomorrow is going to be incredibly crucial. But look, we're in for more pressure today in Asia. And as you mentioned, as long as those real yields go up, pressure is going to continue to be on the equity markets.
Kathleen, you've got markets sort of frantically pricing in 75 basis points this week. We've got more high-profile Wall Street names hopping on board. Who are we hearing from, and what are they saying?
Well, let's start with what is being said. Markets, I just have to show you that. Let's start with this chart, because within about 36 hours, the bond market has gone from pricing in, well, 50, 50, 50 in September to 275s June and July, and then moving to September, something that looks more like 50, 200 basis points over the next 3 meetings. And remember, it was not long ago that for the whole year, the market was looking at about 190, maybe 200 basis points for the whole year. This is a huge thing. Why? Let's move on to another chart. We know that inflation came in a lot higher, 8.6 year over year in the latest CPI report for the U.S. But this is something that is a very unwelcome surprise, even worse than that to the Fed, and it's inflation expectations, because the New York Fed survey shows that rose to 6.6% year over year in March. That is a new record. The Fed has warned over and over. We're confident expectations aren't rising. We can't let inflation expectations rise, and now they are. So former New York Fed Bank president, now a Bloomberg opinion writer, Bill Dudley, speaking at a Wall Street Journal event today, said he sees a 75 basis point rate hike, definitely. The Fed needs to do it. In fact, he said if they could do 100, it would be even better. But Pershing Square's Bill Ackman, noted investor, he likes to tweet about things, and he's also on board with a more aggressive Fed because the Fed needs to get to the point where they're going to have more confidence because they've let inflation get out of control. Equity and credit markets have lost confidence, and confidence can be restored with 75 basis points tomorrow, and then in July, a commitment to do it again. And he says, like Bill Dudley, that the 100 basis point rate hike would be even better. Again, people give it a slim chance, not ruling it out if the Fed wants to really show that it's going to put pedal to the metal to stop inflation that just keeps rising.
So, Andrea, where do we see Treasury markets going from here?
Yeah, look, I mean, what we've seen in Asia is you know, some sort of stabilization in after sell-offs overnight. So it's going to be, you know, investors are going to be watching that really, really closely. It's you know, if the markets do start to sort of price in 100 basis points, then you're probably going to see that sell-off continue. But look, like with everything right now, it's pretty much a guessing game. I think the only certainty is that there's a lot of volatility. There is a lot of uncertainty out there for investors.
And Kathleen, given that we're talking about 75 basis points hikes, 100 basis points, if the Fed comes out with 50, wouldn't they sort of disappoint and lose credibility on the inflation front?
Sure. I don't see how they win, and maybe they would win both ways. I don't know. A 75 basis points, 100 basis points, how could the markets not react to something like that? But if they don't, markets are geared up for it. However, Vince Reinhart, who was the head of the Division of Monetary Affairs at the Federal Reserve Board of Governors, he's now at Dreyfus Mellon, where he's chief economist, but he says, you know, Powell had to work really hard to get a divergent set of views, really dovish to really hawkish, to agree on let's do 50 basis point rate hikes. Boy, at the time it really seemed aggressive, didn't it? He said that they had a plan, they might stick to it. Contrast that with Stephen Stanley over at Amherst Pierpont. He says, I love this, over the last 6 months, the Fed has, the bond market shifted from fully confident the Fed can get inflation under control to a full-blown hair on fire inflation crisis view. He says that they have to do something aggressive to start regaining credibility. But finally, Heidi, one more thing I'd like to add. People are saying to themselves, maybe, well, how come we don't have Jay Powell giving a speech somewhere and confirming 75 or turning out, you know, kind of turning off that view, or Jim Bullard on the hawkish side, or Mary Daly on the dovish side? Well, because it's the Fed's blackout period. About 10 days before every Fed meeting, they cannot speak publicly about anything that has to do with Fed policy, with monetary policy, with their deliberations. It is against the Fed's own rules and regulations. So the fact that they haven't spoken out doesn't mean that they wouldn't want to. It doesn't mean that they're not trying to push back or encourage this views. They can't. And that's something I want to make sure everybody understands, because this is such a crucial moment for the Federal Reserve and the markets.
Kathleen always giving us that great context there with Bloomberg's Andrea Papuk as well. Let's get over to Vonnie Quinn in New York with the First Word headlines. Vonnie.
Heidi, thank you and good morning. Oil saw its rally sharply reversed amid signals that Democrats are considering new energy legislation. Sources say Oregon Senator Ron Wyden may propose a surtax of up to 42% on companies that record a profit margin better than 10%. And the White House confirms President Biden has not ruled out the idea of taxing excessive oil company profits.
We're not ruling that out of consideration. We've made that clear. When we have an announcement, we'll make that announcement. But what the president has made clear is that there's a real issue here with the level of production by the oil companies and the profits that they are making right now after the Russian invasion of Ukraine.
China's securities regulator has issued guidelines on pay to the nation's brokers and funds to avoid what it calls excessive short-term incentives and to prevent financial risks. However, the CSRC denies setting limits on bankers' compensation. On Monday, Bloomberg reported that the regulator had asked global banks, including Credit Suisse, Goldman Sachs and UBS, for details on how they pay their top staff. Hong Kong has marginally tightened its virus restrictions amid a rise in cases. Residents will now have to show a negative COVID test result within 24 hours of entering bars and nightclubs. Around 350 cases have been linked to clusters from the city's bars since venues reopened recently. A leadership transition next month has raised uncertainty about Hong Kong's virus strategy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Heidi.
Well, Hong Kong's outgoing Chief Executive Carrie Lam says hotel quarantines have hurt the city's status as a financial hub. She's also conceded that her government could have prevented elderly COVID deaths with a stronger vaccination drive. However, in an interview with Bloomberg's Stephen Angle, Lam refused to apologise.
If you look at the past 2 years, that is before the fifth wave hit us, for a period, Hong Kong was ranked the world's #1 in terms of normalcy. That is when other countries and places were imposing the stay-home permits and lockdowns and closed the airport and so on. We were by and large operating normally. Okay, but since the fifth wave hit us, and it hit us very hard, particularly in terms of the number of deaths.
We went from 300 deaths
so we
to
have to be
9,300.
extremely cautious. And at the same time, because of the transmissibility of Omicron and the mildness of this virus, then other places are opening up. So by comparison, I'm a person who believes in relativity. So everything is relative. When people are opening up and Hong Kong is still imposing a 7-day designated hotel quarantine, that to a certain extent weakens our position as an international city.
In hindsight, is there something you wish you had done better? We talked about the number of deaths went from 300 to 9,300.
Vaccination. Vaccination. Well, looking back, if you ask me, had we adopted the more aggressive measures at the very beginning and protect the elderly better, especially in the elderly homes, then perhaps we would see a lower number of deaths.
Outgoing leader Carrie Lam with our Chief North Asia correspondent Stephen Angle. And Steve joins us later this hour for more on his discussion with the outgoing Chief Executive. Also ahead, in just under 2 weeks, NASA will hold its first commercial launch outside the U.S. for decades, and its chosen Australia will be speaking exclusively with the CEO of Arianespace, the country's sole provider for commercial launches. But first, as we count down to the Fed decision, Windcrest Capital says higher rates may cause demand destruction for discretionary items. We'll discuss that next. This is Bloomberg.
I graduated top of my class in business school. I lead a team of over 100 people. And since I joined the company, my department has increased revenue by 35% year over year. Also,
I make 18% more than her. It's time to close the gap on pay equality.
Let's all do our part.
Every day, big decisions are made without full information. Overloaded by data. Compounded by complexity. Better decisions are made in the light. With clarity and confidence. Aon is in the business of better decisions.
This is a premium, hand-selected bacon wrap filet mignon that's aged for tenderness and trimmed to perfection. This is a necktie. What do you think Dad wants for Father's Day? Visit omahasteaks.com/TV to order the Dads Want Steak package today for just $99.99, and we'll include 8 additional burgers free. So get him this. Not this. This. Go to omahasteaks.com/TV today because Dad deserves it. Just a little Father's Day wisdom from Omaha Steaks.
Choose proven quality sleep from the Sleep Number 360 smart bed because it can gently raise your partner's head to help relieve snoring. Ah, that's better. And can help you get almost 30 minutes more restful sleep per night. Save 50% on the Sleep Number 360 limited edition smart bed. Plus 0% interest for 36 months. Ends Monday.
The Fed says a 50 basis point hike is coming.
The Fed is telling the markets what it wants them to do.
But could it be 75?
We are looking at the possibility of a 75 basis point rate
Some
hike.
big questions about the next move, the one after that, and ultimately the destination.
Trust Bloomberg for the fastest coverage and exclusive analysis.
The press conference live. McKee in there. It'll be interesting.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
U.S. futures trading early in the Asian session are seeing some upside, but this after the S&P 500 fell again for a fifth consecutive session. Of course, we have a lot of anxiety out there given that we're headed towards a Fed decision. Markets now pricing in 75 basis points rate hikes on Wednesday. This would be the largest since 1994, and this coming at a time when we also saw today those May PPI numbers just underscoring those inflationary pressures. We continue to see NASDAQ futures gaining ground. We saw NASDAQ 100 outperforming today with the likes of Oracle and FedEx outperforming. Let's bring in our next guest, who's short on discretionary consumer stocks as she expects higher rates to cause demand destruction. With us now is Barbara Ann Bernard, CEO and CIO at Windcrest Capital. Great to have you with us. I have to ask you, though, what about the fact that people do have some savings, especially during the pandemic? Would this help offset the downside pressure on those discretionary stocks?
I think that's the popular narrative, but those savings are not evenly distributed. If you just look at, there was a Gallup poll that came out that reported that 17% of households who earn less than $40,000 a year are now reporting that they are concerned about not having enough money to pay their normal bills. So when you talk about these excess savings, I think they're skewed towards the more wealthy segments of society who are less impacted by $5 gas and higher and double-digit inflation in food items.
So today, at least, we saw those tech names gaining ground, despite the fact that, of course, we do have some of those more expensive names in that basket as well. Where do you see tech stocks going, especially when you have yields just continuing to surge?
Yeah. Look, innovation, there's always room for it, but these companies need to be profitable. Profitless prosperity is done. You know, you have over 600 companies in the U.S. that are zombies, which means there isn't enough EBITDA to pay their interest expense. And in a rising rate environment, it only gets more and more expensive to fund this debt. So if you are a tech company and you are running profitably and there's a moat around your business and it's sustainable, that is fantastic. But there are a number of companies that benefited from an era of free money that is over. And I do not see them reflating.
Barbara, you say that given the markets have already priced in 75, they should just go for it. Should they just go for 100 and get it over and done with?
I don't spend a lot of time thinking about this, but what I do know is that rates are going higher. The Fed believes, rightly or wrongly, that raising rates is the way to get ahead of inflation via demand destruction. I think they're doing a good job of demand destruction. I'm not sure that raising rates is going to solve all of the sources of inflation today. So the trajectory is definitely up. How quickly they do it, do they front-end load it, is entirely up to them. But what I will tell you is bad certainty is better than uncertainty. And that's what you saw yesterday and today in the markets. The markets hate uncertainty. So the sooner they can be clear about how quickly are they going to raise rates, and more importantly, what is an acceptable rate of inflation for them, the sooner markets will calm down.
How much certainty do you have over the upcoming earnings season? Because we've seen previously, increasingly, investors and the markets are demanding more, right? Even a reasonable set of numbers is not a guarantee of stock outperformance anymore. How much are we going to see that punishment play out in the next earnings season?
So unfortunately, that's why I'm still pretty bearish on markets. Although you've seen the multiple on the S&P contract to 18.4, what you have not yet seen is earnings estimates come down. For example, if you just look for Q3 and Q4 of this year, earnings estimates are still over 10% for the S&P. And that's comping a plus 37 and 28% Q3 and Q4 in 2021, respectively. It's not comparable. It's not going to happen. And so particularly in the retail sector, you just see analysts, just assuming this double-digit growth in perpetuity, and I don't see it. So this is the next leg to fall on the market. And, historically, everyone's saying, well, where's the bottom? Recessions can take 20 months on average. The 1-month recession during COVID was the anomaly. And markets normally bottom out at an 11.7 times multiple, not an 18 times multiple. So both in terms of multiple and EPS expectations and estimates, I think we still have room for compression.
Barbara, great to have you with us. Barbara Ann Bernard there, Windcrest Capital CEO and CIO. You can get a roundup of the stories you need to know to get your day going. Today's edition of Daybreak. Terminal subscribers can get that at DayBgo. You can always customize those settings so you just get the news on the industries and assets that matter to you. This is Bloomberg.
When you're a small business owner, there's no such thing as 9 to 5. Days are longer, and business hours, well, they're anything but predictable, especially when you have clients like ours. When I considered payroll providers for my business, I looked for a solution that fit into my busy schedule. Sure Payroll makes running payroll easy, and its US-based customer service is there for me when I have questions, after hours, and even Saturdays.
Visit surepayroll.com for a 2-month free trial, because small business is our business.
Welcome to your world, your why. What drives you? What do you want to leave behind? What do you want to give back? What do you want to be remembered for? That's your why. It's your purpose, and we will work with you every step of the way to achieve it. At PNC Private Bank, we'll help you take care of the how. So tell us, what's your why?
Here's a quick check of the latest business flash headlines. Coinbase is to lay off 18% of its workforce in another sign of a worsening downturn that shaved off trillions in the total cryptocurrency market value. The largest U.S. digital asset trading platform follows in the footsteps of Gemini and BlockFi, which both cut staff, citing the arrival of a crypto winter. Goldman Sachs is preparing to offer foreign exchange prices that last for days to shield big clients from market swings. The bank has already been quoting rates that last 4 minutes and plans to extend this in coming weeks. But clients will pay a premium in the form of an added spread to reflect the risk that rates will move against Goldman's position. Credit Suisse shares hit a record low after analysts flagged a potential equity raise, saying the bank was suffering from funding pressures. Barclays analysts say raising more equity could help Credit Suisse soften the impact of upcoming funding headwinds. The Swiss lender has been hurt by the Archegos and Greensill scandals and a string of profit warnings.
Let's take a look at the day ahead for Australia now. And more than 2.6 million Australians on award and minimum wages will find out how their pay packets could change when the Fair Work Commission makes its annual decision in just a couple of hours' time. All of that, of course, feeding into the wage growth outlook for the RBA, where Governor Phil Lowe vowed to do whatever is necessary to bring inflation back down to its 2 to 3% target. And Australia's finance regulator has told banks that they'll need to consider buy now, pay later plans and university debt when assessing lending lending applications. We do have lots more ahead here on Daybreak Asia, including a conversation with the Hong Kong Chief Executive Carrie Lam. She admits that Hong Kong's COVID restrictions have damaged the city's status as a global hub. We have our interview with the outgoing leader next. This is Bloomberg.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner. And we would have saved 6 months of, of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Today's busy world, managing money is hard. That's why I started Truebill, an app that brings your entire financial picture into focus. Truebill also saves you time and money by canceling subscriptions you no longer want and getting you lower rates on your bills. Download Truebill and start saving today.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks,
magazines, podcasts. Script, it's awesome.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
We're a few hours away from a raft of economic releases from China, including industrial output and retail sales for May. The data is expected to show how the country continues to teeter on the brink of a contraction as weak demand, a housing slump, and strict virus controls keep hammering growth. And of course, we have seen Hong Kong very much tied to China's COVID-0 policy, despite Chief Executive Carrie Lam saying the city would not further tighten its COVID restrictions before she steps down in 2 weeks. The city will now require bar and nightclub patrons to show a negative rapid COVID test result to get in starting Thursday. For the latest, plus more in his interview with Carrie Lam as well, let's bring in our Chief North Asia correspondent, Stephen Engel in Hong Kong. Steve, how is this going to be enforced?
Oh, that's the big question, obviously. And of course, Carrie Lam has said that in the waning days of her administration, which ends at the end of this month, she would not necessarily tighten these COVID restrictions on society. She'll leave that all up to the new incoming chief executive, John Lee, when he takes over July 1st. However, as I was doing that interview with her yesterday, lines did cross that Sophia Chan, who's the health secretary, announcing that rapid antigen tests would be required for all bar and nightclub patrons within 24 hours of entry. They have to show a photo of the results. They have to provide their name and the date and time they took the test. Cases have more than doubled since May, since restrictions were relaxed, including clusters from Nightlife District, in Lang Kwai Fong here in the Central District. 752 new local cases were found on Tuesday. Travelers inbound accounted for 97 of those. So there are domestic cases that are on the rise, and that is a concern. Police will said to be stepping up enforcement efforts to uncover non-compliance at those bar and nightclub establishments. Meanwhile, on a broader, bigger picture, scope, we talked to Carrie Lam, where she reiterated her estimation that Hong Kong has to resume its status as an international hub. Quarantines, she says, have damaged that reputation. That being said, she's leaving all the hard work, the hard lifting to recover that reputation to incoming John Lee. Here's part of my interview with Carrie Lam.
Despite some skepticism and cynicism about Hong Kong's future, I remain very optimistic and confident of Hong Kong's future. And one of the reasons for my confidence and optimism is Hong Kong's unique strengths under one country, two systems. Is Hong Kong's high degree of autonomy to conduct her external affairs, particularly on the international arena. So we have the autonomy to set up our own overseas economic and trade offices. We could enter into bilateral agreements on free trade, avoidance of double taxation, investment protection. So I do want to conclude my term by reinstating the importance of Hong Kong's international connectivity and her status as an international city.
But is the damage already done?
Well, yes and no, because if you look at the past 2 years, that is before the fifth wave hit us, for a period, Hong Kong was ranked the world's #1 in terms of normalcy. That is when other countries and places were imposing the stay-home permits and lockdowns and closed the airport and so on. We were by and large operating normally. Okay, but since the fifth wave hit us, and it hit us very hard, particularly in terms of the number of deaths.
We went from 300 deaths
so we
to
have
9,300.
to be extremely cautious. And at the same time, because of the transmissibility of Omicron and the mildness of this virus, then other places are opening up. So by comparison, I'm a person who believes in relativity. So everything is relative. When people are opening up and Hong Kong is still imposing a 7-day designated hotel quarantine, that to a certain extent weakens our position as an international city. But mind you, during my term, while the daily cases were still quite high on the 25th of March this year, I already announced the gradual opening up. In terms of social distancing, it's a 3-stage relaxation. We have done the 2 phases. And in terms of coming into Hong Kong, I lifted the ban on the 9 countries. And then I reduced the designated hotel quarantine period from 14 days to 7 days, and then made other adjustments in the test and hold at the airport, facilitating people to come back. So prior to the 1st of April, and for almost 2 years, the daily arrivals at our beautiful Hong Kong International Airport was a few hundreds. Now it's back to 3,000 plus. So I hope that gradually we're able to progress on this route of normalcy.
Hong Kong Chief Executive Carrie Lam speaking to Bloomberg's Stephen Angle. You can catch more from that interview on Bloomberg TV. A conversation with Carrie Lam premieres July 1st at 5 p.m. in Hong Kong, 7 p.m. in Sydney. Let's get you a look at Asian markets. This is how we're shaping up when it comes to Australian futures. Of course, what a horrible session we had in the previous session as we saw Aussie markets playing catch down after the long weekend. Looking to extend those losses, though, we're seeing futures down by about 0.7%. We're seeing the Aussie dollar kind of holding its ground more or less, but firmly below 69 US cents. Now, this as we continue to see that strength in the haven demand for the US dollar play out across Asian currencies. Kiwi stocks are down by about 0.3%. We're looking like a pretty mild to lower start to trading here in Asia. Taking a look at Nikkei futures that are flat at the moment. Of course, as always, watching dollar yen at the moment. We're actually starting to see just a little bit of yen strength trickling in. Remember, we've been talking about some of these really key yen crosses that suggest that across the Gen 10 basket, basket, and certainly across the Asian basket of currencies, that despite the headline yen strength that we see, that perhaps is actually a little bit more when it comes to haven demand now, playing on that theme of the stagflation and the recession risks that we've been talking about. And these are really the fears that are gripping financial markets. And now a major bank is warning that consumers are starting to pull back. Let's bring in Annabelle now for morning calls. And Belle, what are we hearing?
Yeah, this call is from Barclays this morning. So they're taking a look at their high-frequency credit card data. And basically what it's showing is that not only are we seeing a pullback in consumption at the lower end, we're also seeing it at the higher range as well. So some broad-based changes here. Now, Barclays is also pointing to weakness in the savings rate and also in the jobs market. But looking at the savings rate, Barclays strategists saying that that is well below the levels that we saw pre-pandemic. And the bank says that markets are yet to price this in. So retail sales data is due from the US later Wednesday. And Barclays saying that markets will be disappointed by that, and Sherry also disappointed by the US consumer over the coming months. Yeah, and another well-known investor also expecting more pain for markets through the end of the year. That's right. We did hear from Mark Lasry earlier. He's the CEO of Avenue Capital Management, and he says that markets really do have further to drop here. The issue being, of course, that really investors are trying to figure out how high inflation will go, what exactly the Fed's response will be. He did also tell us that a lot of the negative news is already priced in, and as for recession risks, well, here's what he told us.
Everybody knows we're either getting into a recession or it's going to be close to a recession. So I don't think there's a lot more negative news that's going to come out. You know, the question really is going to be, how long is the recession? Is it 3 months? Is it 6 months? Is it a year? I think ultimately it's going to be pretty short.
Well, just how much lower can we go? Mark Lasry also expecting another 5 to 10% drop in stocks. We are already in bear market territory for the S&P 500, which is the fourth such bear market over the past 2 decades. Now, the question here is, how long will it take for stocks to recover? So if you look at this terminal chart here, you can see that the COVID route took just around 3 months to see a rebound. But looking back at the GFC and also in the .com 9/11 era, we were looking at more than 1,000 days to claw back those losses. Heidi.
Well, the Reserve Bank of Australia governor says he'll do whatever is necessary to bring inflation back down to the bank's 2 to 3% target. Phil Lowe says that could mean cash rates climbing to 2.5%. Bloomberg's Swati Pandey joins us now to discuss the RBA's next move. And Swati, we are just getting the likes of Goldman's revising expectations for an even more hawkish set of moves from the RBA. In fact, 50 basis points again going into August and September versus a prior 25 basis points from Goldman. Is this on the back of this kind of whatever it takes and the warning that we had from Phil Lowe that we could see inflation up to 7% by the end of the year?
Yes, good morning, Heidi. First of all, it was a very rare interview. The governor does not do one-on-one interviews, so it was quite unusual for him to make that appearance. The signal from him was pretty hawkish as well. He did not push back on market pricing, which is for 3.6% by December, and he kept reiterating that it was important to bring inflation down. That was the kind of message that he gave. He expects inflation to in fact start coming down only from the first half of 2023. So a lot of hawkish signal there and a lot of concerns around inflation becoming a problem in Australia.
So what's the consensus call right now by economists, given everything that Governor Lowe has said on where rates go this year?
We are yet to see all of the reactions from economists after yesterday's interview, but economists were kind of turning towards the hawkish side and expecting a 50 basis point increase again in July. That would be the first time ever the RBA would do 50 basis points back-to-back increase. So the situation is quite, it's quite interesting from, the economics perspective, how things are moving, how quickly things are moving here, and how concerned the Reserve Bank has become suddenly from not signaling an interest rate hike last year to, signaling back-to-back rapid tightening this year.
Swati, the household debt-to-income ratio in Australia is about 186%. Does Governor Lowe have concerns about how consumers are going to be able to handle higher mortgage payments and cope with higher inflation at the same time?
The governor was asked this question last night, and while he said there might be some individuals who would have problems with their debt, the vast majority would be fine. He kept reiterating that the economy was pretty resilient, that households were pretty resilient, household savings are still pretty high, and there is still a lot of room for households to run down those savings. The average Australian is also 2 years ahead in their loan repayments. So from that perspective, he does seem comfortable, and he seems like the Australian economy will be able to absorb the interest rate hikes.
Bloomberg's Swati Pandey there with the latest on the RBA. And coming up, Australia's race to space. NASA is set to launch 3 rockets from the country's northern territories in late June. We'll speak exclusively with the Arianespace CEO, Stefan Israel, next. This is Bloomberg.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
Search for high-quality meat ends here. With ButcherBox, you get 100% grass-fed beef, organic free-range chicken, humanely raised pork, wild-caught seafood, and so much more. Sourced from partners who believe in doing things the right way. Together, we can make a difference, one meal at a time. Join ButcherBox now and get free bacon for the life of your membership.
Upgrading or migrating your Oracle or SAP software can waste resources. Instead, join over 3,000 organizations who've already made the switch to Rimini Street. Other companies do software, we do support. Rimini Street.
I'm Vonnie Quinn with First Word headlines. Prices paid to U.S. producers surged in May, underscoring persistent inflationary pressures across the economy. PPI for final demand increased 10.8% from a year earlier, led mainly by a jump in goods prices stoked by the surge in energy costs. The latest data will add to expectations that the Fed will keep raising interest rates aggressively. President Biden will seek to mend ties with Saudi Arabia during a trip there next month. The visit marks the reversal of his pledge to make the kingdom a pariah over its human rights record. Biden's Saudi tour will cap 4 days of travel in the region that also includes stops in Israel and the West Bank. He'll meet Israeli Prime Minister Naftali Bennett and Palestinian Authority President Mahmoud Abbas. China's embassy in Washington says a member of the Bloomberg News Bureau in Beijing was released on bail in January. Hayes Fan was detained more than a year ago on suspicion of national security law violations. The embassy says her case remains under investigation pending her trial. Bloomberg News has been unable to contact Fan, but Bloomberg editor-in-chief John Micklethwaite says he's encouraged to learn that she's out on bail. Western Australia will retire all state-owned coal power plants by 2030. Government officials there say about $2.7 billion will be invested in new green power infrastructure, including wind generation and storage. It's the latest effort by the nation to curb emissions and overhaul its aging energy infrastructure. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Heidi.
Well, in just under 2 weeks' time, NASA will launch 3 rockets from Australia's Northern Territory. This is the space agency's first commercial launch outside of the US in decades. It's seen as a milestone in the creation of a sovereign space capability prioritised by the new Australian government. To discuss about these opportunities, we're joined by a firm that's been the sole launch provider for Australia's commercial satellites for over 20 years. Ariane Space CEO Stefan Israel joins us here in Sydney. Stefan, great to have you with us. So tell us about the opportunities and what sort of collaboration there is with the government.
Yes, in fact, we have had a great success story with Australia Ariane Space. Ariane Space is a launch service provider, and we happen to have delivered for Australia 8 satellites, 6 for Optus, the Australian operator, 2 for the Australian government through NBN. So 100% market share and 100% success, and we will launch Optus 11.
And the thing about Australia is that the geography is advantageous, right? There was a shift to French Guinea at some point over the past few decades. Do you see an opportunity to move that capability back to Australia?
So it's true that the European launcher sector has started its journey in Australia, because in the 60s, from 1964 to 1970, we made the test of the predecessor of Ariane, Europa. It was done in Woomera in Australia. We made 3 tests, but it has not been a successful project, and in the 70s we have decided to go with Ariane to the Guyana Space Center. To come back to your question, it's not so easy to take our capabilities in Australia, because it's very heavy industry, very heavy facilities. But we are ready to partner with Australia, with Australia startups. So there are many very dynamic startups when it comes to space in Australia. So we are ready to have this kind of partnering, but it will not so be easy to have Ariane in Australia.
So how does Australia compare to some of your other customers? Because, of course, you have customers in Asia like Indonesia, Japan, Singapore, Thailand, and the likes. What do you see in Australia that could be unique, and what sort of partnership do you want?
So Australia has a very ambitious space program. With Optus, there is a commercial operator, and again, we have launched all Optus commercial satellites since now almost 35 years, and we will launch Optus 11. But there are also very ambitious governmental projects. There is a very important project which is called the GP project, which is about secure telecommunication. It will be for the end of this decade, and we will be in competition to launch this project. There will be also Earth observation project. So definitely there is a lot of ambition in Australia, and with Ariane, with our rocket, we are ready to deliver for the country and to have partnership with local players.
So, Stefan, when it comes to other companies, who are your biggest rivals at the moment, and what do you make of newcomers like SpaceX?
Well, you know, we can speak about SpaceX for hours, but what is important today is Ariane Space and Ariane. You know, in April, I was in the United States of America during the symposium of Colorado Springs, and we have sold 18 rockets, 18 to Amazon, which is one of the most powerful companies for its constellation Kuiper. So SpaceX is SpaceX, but Ariane is here for now more than 40 years. Again, we have a unique track record. We have deployed for NASA the James Webb Telescope. It was the day of Christmas 2021, and it is the most ambitious telescope ever launched. We have done it with an over-precision which has doubled the life expectancy of the telescope. So we are very proud of what we do, and today it's for Australia, where I am in Sydney.
Stefan, how much are you thinking about geopolitical risk given the events of this year? Because there were concerns that Russia would pull out of the ISS. There's certainly concerns that operationally there's an impact from sanctions on Russia. Is that sort of a factor in your decision-making more now?
Yes, for sure. Space is about cooperation, but space is also about geopolitics. We used to operate the Soyuz launcher, but after the invasion of Ukraine by Russia, this cooperation unfortunately has stopped. So we are not going to launch in in the foreseeable future the Soyuz launchers, but we have our European launchers, Ariane and its little sister, more Italian, Vega, which is more for Earth observation satellite. But for sure, space is about geopolitics, and we need all the partners to cooperate as much as possible to have ambitious projects. There is the Artemis project from NASA to go back to the moon. Europe is part of it. Australia is part of it. So geopolitics is everywhere, for sure.
Just about every industry that we can think of as being impacted by
is turning around our industry, for sure. We have some risk here of increase in costs. So I would say that today it is the main danger more than logistic or other parameters. But for sure, inflation is here, and we will have to cope with that and to see how to master it in the best way possible.
Stefan, great to have you with us. We appreciate your time. Ariane Space CEO Stefan Israel here in Sydney. Let's take a look at the scenery when it comes to trading in sovereign bonds here in Australia. Take a look at the 3 and the 10-year at the moment. The 10-year rising to just over 4%. That is a fresh 8-year high. We've seen that upside pressure continue to be extended when it comes to yields, not just, of course, here in Australia or New Zealand, but, of course, being said by the tone of what we see in Treasuries trading. The 3-year Aussie yield also seeing a big jump there as well, 10 basis points to 3.55%. So we really see the extension of the fresh sell-off overnight in US bonds and Treasuries, Sherry.
And of course, Heidi will have plenty more on Bloomberg Radio as well. Hear more from the day's big newsmakers, get in-depth analysis from the Daybreak team, now broadcasting live from our studio in Hong Kong. Listen via the app, Radio Plus, or BloombergRadio.com. Plenty more ahead. Stay with us.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
This is a premium, hand-selected bacon wrap filet mignon that's aged for tenderness and trimmed to perfection. This is a necktie. What do you think Dad wants for Father's Day? Visit omahasteaks.com/TV to order the Dads Want Steak package today for just $99.99, and we'll include 8 additional burgers free. So get him this. Not this. This. Go to omahasteaks.com/TV today because Dad deserves it. Just a little Father's Day wisdom from Omaha Steaks.
I sleep hot.
Or cold.
No problem. The Sleep Number 360 smart bed is temperature balancing, so you both stay comfortable and can help you get almost 30 minutes more restful sleep per night. Save 50% on the Sleep Number 360 limited edition smart bed, plus 0% interest for 36 months. Ends Monday.
In a global economy, there are countless moving parts. If you want to grow, you've got to know. Vertex, cloud-powered tax tech that enables frictionless transactions, invoicing, and payments. Companies who know, go with Vertex.
A number of people now are very nervous and are trying to figure out should they get out. So I don't think you have natural buyers. I think you have natural sellers today, and nobody knows what the bottom is for that. But I think you'll still have a bit of pain in the crypto space.
Avenue Capital Management CEO Mark Lasry there, and we continue to see that flight away from speculative assets with Bitcoin now at the lowest since December of 2020. We continue to see the downside, of course, after Coinbase also said that they would be laying off about 18% of their staff, warning of another crypto winter. Take a look at U.S. futures rebounding slightly after the S&P 500 fell for a 5th consecutive session. NASDAQ 100 futures, Heidi, as well, up 0.3%.
Coming up in the next hour of Daybreak Asia, Sherry will be speaking to Standard Chartered. They say investors should be taking advantage of higher yields with a multi-asset income strategy. We have more on that just ahead, but that is it for Daybreak Australia. Daybreak Asia is next. This is Bloomberg.
Discount you.
I'm just saddled with so much credit card debt right now.
We need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? So next time you think print, remember, when you use Vistaprint, the print abilities are endless. Get started with free shipping at Vistaprint.com.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at Tovala.com.
That's right, Dan. You got broad passive exposure without triggering a large capital gain. Bye for now.
How'd you do that?
When most people think passive investing, they think
exchange-traded funds. Yeah. ETFs.
But my clients want broad exposure with active tax management, ESG screens, flexible charitable giving.
That doesn't sound like an ETF.
Now you're getting it.
Think passive investing is all about ETFs? Discover custom direct indexing with Parametric.
Vibe isn't one size fits all. That's why we focus on styles for just you. Stitch Fix, we're so you. Sign up to get $20 off your first purchase.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
Hi, I'm Shannon Storms-Bador. When we started selling my health products online, our shipping process was painfully slow. Then we found ShipStation. Now we're shipping out orders 5 times faster. And thanks to ShipStation's discounted rates, we're saving a ton. Honestly, we couldn't do it without ShipStation.
Join over 100,000 online sellers who get ship done with ShipStation. Go to ShipStation.com/try and get 2 months free.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not 1 but 2 Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get 2 CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
You're watching Daybreak Asia, coming to you live from New York, Sydney and Hong Kong.
We're counting down to Asia's major market opens. And the top stories this hour, markets betting the Fed is set to abandon gradualism and move more forcefully to stamp out inflation with a bigger rate hike than previously anticipated. The sell-off in stocks and bonds intensifies ahead of the Fed, the dollar rallying and the yen sinking to a 24-year low. Plus, Hong Kong Chief Executive Carrie Lam admits her government's COVID policies have weakened the city's status and cost lives.
Had we adopted the more aggressive measures at the very beginning and protect the elderly better, especially in the elderly homes,
All right, we are getting South Korean jobs numbers. When it comes to the labour market, the unemployment rate seasonally adjusted for May coming in at 2.8%. That's actually a little bit higher than expectations of 2.7% and shifting higher from the previous April reading of 2.7%. We are looking at really the number of 935,000 jobs added in May from a year earlier. So missing expectations a little bit, but overall the jobless rate remaining low in what is really being seen as a sign of resilience in the economy. The labour market is seen to be holding up in the face of accelerating inflationary pressures. Of course, rising interest rates, the same story there as well. We are really seeing inflation as being the biggest headwind for South Korea, and it has prompted, of course, the BOK to remain open to the idea of a big step rate hike, the likes of which, Belle, we've been seeing from increasingly more global central banks.
That's right, and all eyes on the Fed, of course, with those chances of a 75 basis point hike at the upcoming meeting. But we're tracking how that's also playing out in the bond space here in Asia, because we did see Treasuries extend their route in the previous session, particularly that 2-year yield hitting a level we haven't seen since 2007. So we're definitely keeping a watch here on these shorter duration bond notes as well. Australia 3-year yield, particularly rate sensitive. And we did have those quite hawkish comments from the RBA Governor, Phil Lowe, in an interview with the ABC, saying that higher rates will be necessary to slay, he said, the 7% inflation rate. Now, off the back of that, Goldman Sachs has also changed its forecasting for rate rises, now seeing half-point moves in August and September. That's up from 25 basis points and would take the key rate to 2.35%. Flipping the board now for a check also on how we're setting up for equity markets, because those Treasury moves also setting us up for quite a weak start across the board here in Asia. New Zealand just extending those losses already in a bear market. Sydney also pointing to a weaker start, and the yen here a key focus for us as well. Traders increasing their bets on that 3/4 point move from the Fed, and that is seeing further weakness building into the yen. Sherry.
Yeah, and Belle, take a look at what U.S. futures are doing, because, of course, we were seeing anxiety in the New York session with the S&P 500 falling for a 5th consecutive session, given, of course, that we're headed towards the Federal Reserve rate decision on Wednesday. In the U.S. futures session in Asia, we are seeing a little bit of upside, a little bit of recovery there. NASDAQ 100 futures also gaining ground. We had seen NASDAQ 100 stocks actually outperforming in the New York session. We saw the likes of Oracle and FedEx really rallying today. We are watching the Treasury space. As Belle mentioned, the 2-year yield at the highest since 2007. When it comes to the 3-day gain, we're talking about the biggest since 1987. The 10-year yield also at that 2011 high. We continue to watch oil prices because it's extending the declines from the New York session. More fears about more energy legislation here in the U.S. The White House now considering perhaps an oil profit tax, Heidi.
Yeah, that fear gauge, though, Sherry, for U.S. credit markets flashing red in anticipation of a rate rise shock from the Fed. The spread when it comes to high-grade credit is at its highest since April 2020. That's as the 75 basis point hike garners even more support, and we have talk about 100 as well. Let's cross over to our global policy and economics editor, Kathleen Hayes. Our MLife strategist, Mark Cranfield, joins us as well. So, Kathleen, I'll start with you. More high-profile Wall Street names are hopping on board. Who are we hearing from, and how do they gauge the chances that we'll see an outsized hike?
Well, you know, I just want to quickly comment on the credit spread. That is something the Fed has to watch closely. Stock markets can sell off and tighten liquidity conditions. That's something that could be a big red flag for the Fed. In terms of the size of the hike, I think it has a lot to do with the fact that people are concerned about the Fed being behind the curve, losing credibility. They have to do something. They have to catch up. And in the last 36 hours, now the markets see in just 3 meetings, 2 75 basis point hikes, another 50 basis point hike, a total of 200 basis points. You know, just about a month ago, they saw only about 190 basis points total of hikes this year. Huge change. And it's because the inflation numbers are getting hotter. Inflation expectations are suddenly rising. They are not going down as the Fed has said they must. So this is a danger sign. New York Fed President, or former New York Fed President Bill Dudley, a novel opinion writer, talking to Wall Street Journal event today, saying 75, he's betting on it. He thinks they have to do it. The conditions have changed. 100 will be better. Bill Ackman, Pershing Square, noted investor, he thinks that a 100 basis point hike would raise people's confidence, investors' confidence. What is the opposite side of the coin. One thing, Sherry, that I think people are talking about, if they think there's any chance they'll do 50 as advertised, is that the Fed had to work very hard to get to the point where it is now. And of course, it has allowed inflation to get out of control. There's that loss of confidence, could be restoring it with 75 basis points. And they had a lot of hawks on one end and doves on the other to agree even on 50 basis point rate hikes. Can they not go ahead with that plan? Can they not still do the 50 basis point rate hike? Vince Reinhart, a former economist of the Federal Reserve Board of Governors, he's going to be on 24 hours from now with us, right, in these shows. But he thinks there's a chance the Fed might stick to it, and that chance is bigger than markets are betting on right now, Sherry.
Mark, so what is right now the expectation about the market reaction? So if they're pricing in 75 basis points and the Fed goes and does 100, will that calm the markets and reassure them that there is some credibility about what they're trying to do with inflation, or will they spook them and think, oh my gosh, inflation is really out of control?
I think traders would see it as a sign of panic if the Fed goes by 100 basis points, because if they suddenly go from 50 to 100 so abruptly, then people will be thinking, what are they going to do next? 150, 200 basis points? Where does it end? I suspect, knowing that the traders are more used to the Fed going in incremental moves, already changing from 50 to 75 would already be seen as quite significant. And probably the Fed messaging needs to be something like, we're moving to 75. We see room to do something similar if inflation is still high come the next meeting. So something with a more gradualist approach, but showing that the Fed is open to being more aggressive than if it needs to be. That would probably be taken better by the market than suddenly going from 50 to 100 basis points, which would smack of something that we're losing control. We don't really know what to do. That never works well in financial markets. And the rise you've seen in bond yields may get even worse as people completely dump long-end bonds because they fear that inflation is totally out of control. So probably some kind of moderation, something in between, would be seen as a better step for financial markets.
Mark, the gulf between US and Japan rates, particularly in light of the Treasury sell-off overnight, continuing to drive dollar-yen trading. How much more weakness do we see, given that it's fallen to that 24-year low?
Yeah, I mean, it's hard to see where the high for dollar-yen will be. Just yesterday, the Bank of Japan was increasing bond purchases right across the curve. They were going as far as the 30-year sector, saying that they would buy specifically 25-year plus bonds and allocating a bigger proportion to that, plus the 10-year bonds, which they've been buying for some time. So the Bank of Japan is trying to stabilize the whole yield curve, even the super long section ahead of the Bank of Japan meeting on Friday. So as long as the Bank of Japan is continuing with this super easy policy and the Fed is going to raise by however much they do so, then the safety valve is dollar-yen. Dollar-yen really doesn't have a limit until Japan's Ministry of Finance gets much more aggressive, either with the verbal intervention or shows that it's willing to support the yen with specific purchases. For now, the market can just see interest rates getting wider and wider, and the net effect is that the yen goes up.
Bloomberg's Mark Cranfield and Kathleen Hayes with our top stories today. Let's now get to Vonnie Quinn with the first word headlines. Vonnie.
Sherry, thank you. Oil saw its rally sharply reverse amid signals that Democrats are considering new energy legislation. Sources say Oregon Senator Ron Wyden may propose a surtax of up to 42% on companies that record a profit margin better than 10%. And the White House confirms President Biden has not ruled out the idea of taxing excessive oil company profits. President Biden will seek to mend ties with Saudi Arabia during a trip there next month. The visit marks a reversal of his pledge to make the kingdom a pariah over its human rights record. Biden's Saudi tour will cap 4 days of travel in the region that also includes stops in Israel and the West Bank. He'll meet Israeli Prime Minister Naftali Bennett and Palestinian Authority President Mahmoud Abbas. Truckers in South Korea have reached an agreement with the government ending a week-long strike that added to the strain on global supply chains. Drivers will immediately resume their duties after agreeing to extend a freight rate system that guarantees minimum wage. Under the agreement, the Transport Ministry will also provide subsidies to alleviate surging fuel costs. Hong Kong has marginally tightened its virus restrictions amid a rise in cases. Residents will now have to show a negative COVID test result within 24 hours of entering bars and nightclubs. Around 350 cases have been linked to clusters from the city's bars since venues reopened recently. A leadership transition next month, though, has raised uncertainty about Hong Kong's virus strategy. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Heidi.
Hong Kong's outgoing chief executive, Carrie Lam, says hotel quarantines have hurt the city's status as a financial hub. She's also conceded that her government could have prevented elderly COVID deaths with a stronger vaccination drive. However, in an interview with Bloomberg's Stephen Angle, Lam refused to apologise.
If you look at the past 2 years, that is before the fifth wave hit us, for a period, Hong Kong was ranked the world's #1 in terms of normalcy. That is when other countries and places were imposing the stay-home permits and lockdowns and closed the airport and so on. We were by and large operating normally. Okay, but since the fifth wave hit us, and it hit us very hard, particularly in terms of the number of deaths.
We went from 300 deaths
so we
to
have
9,300.
to be extremely cautious. And at the same time, because of the transmissibility of Omicron and the mildness of this virus, then other places are opening up. So by comparison, I'm a person who believes in relativity. So everything is relative. When people are opening up and Hong Kong is still imposing a 7-day designated hotel quarantine, that to a certain extent weakens our position as an international city.
In hindsight, is there something you wish you had done better? We talked about the number of deaths went from 300 to 9,300.
Vaccination. Vaccination. Well, looking back, if you ask me, had we adopted the more aggressive measures at the very beginning and protect the elderly better, especially in the elderly homes, then perhaps we would see a lower number of deaths.
Hong Kong's outgoing leader, Carrie Lam, with our chief North Asia correspondent, Stephen Angle. And Steve joins us later this hour for more on his discussion with the outgoing chief executive. Also ahead, crypto's winter gets even colder with more job cuts and Bitcoin's bear market taking the digital coin to December 2020 lows. But first, here, why Stand Chart's Manpreet Gill remains positive on risk assets with the base case that the U.S. dodges a recession. That's next. This is Bloomberg.
My name's Amy, and I bought and financed my car through Carvana. Everything was all good, but then things hit a slight snag. Okay, so they were trying to verify my employment status while I was at work in a giant hole in a mine. But then something amazing happened. Hello. Carvana worked with my shift manager and got everything sorted out, so I didn't miss out on the car. Super helpful. I was over the moon, even though I was underground.
We'll drive you happy at Carvana.
This is the planning effect. This is how it feels to have a dedicated Fidelity advisor looking at your full financial picture. This is what it's like to have a comprehensive wealth plan with tax-smart investing strategies designed to help you keep more of what you earn and set aside more for things like healthcare or whatever comes down the road. This is the planning effect from Fidelity.
In any business, you ride the line between numbers and people. What's right for the business and what's best for everyone who depends on it. Solving today's challenges while creating future opportunities. It takes balance. CLA, CPAs, consultants, and wealth advisors will get you there.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
For our business, what works is I don't mind a 90% probability of failure if there's a 10% chance of changing the world.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Everybody knows we're either getting into a recession or it's going to be close to a recession. So I don't think there's a lot more negative news that's going to come out. You know, the question really is going to be, how long is the recession? Is it 3 months? Is it 6 months? Is it a year? I think ultimately it's going to be pretty short.
Avenue Capital Management CEO Mark Lasry there talking about recession risks. Well, the hottest U.S. inflation in 40 years will push the Fed to raise rates more aggressively, and a recession may not be far behind. These are the signals that are certainly coming from the markets. But our next guest remains more optimistic. His base case is that the U.S. avoids recession. Inflation comes off at least moderately later on this year. Standard Chartered's private bank's Manpreet Gill joins us now. Manpreet, I think with all of the panic selling that you're seeing, I read your notes this morning and felt a calm descend. What's making you think that everything's going to be okay?
Well, I think it all comes down to what inflation does in the second half of the year, because if you go back to our base case, I mean, we do expect inflation to come off at least moderately from where we are today. And I think that's, a key cornerstone, because if we do see that happen, in the coming months, that feeds into many other factors. Obviously, the Fed's reaction, where we've seen the opposite, of course, in the last couple of days, and obviously the asset market reaction beyond that. So I think for us, it's about, whether the Fed delivers on what is already priced in because of what inflation does, or whether they feel the need to continuously, tighten those expectations further. And I think that really is at the heart of, what we see as our base case, where the more optimistic scenario is based on inflation peaking, or whether we end up in a more pessimistic scenario where the Fed needs to keep sort of repeating what we've seen the last couple of days. And I think there are some optimistic signs. If you look at energy prices, for example, they've at least stopped rising, but I think that's really the central variable here.
For the longest time, we've seen safety being found in the preference to developed markets, in particular US equities, right? Are you starting to veer away from that? Throwing up this chart, which takes a look at the sell-off is being extended here in Asia, and we're also seeing financial conditions are tightening in Asia as well, which is adding to the volatility. But do you see the growth scenarios and the inflation scenarios somewhat more optimistic in this part of the world?
Yes, we do. And I think there are two different factors driving here, right? I think one is the global sort of environment, which, as you mentioned, look, I don't think Asian equities can escape that completely. But I think Asian equities, particularly led by Chinese equities, have been under a downdraft for a much longer period of time. And I think what makes them interesting is that if you look at the Chinese policy cycle, it's almost a mirror image of what the Fed and the ECB and other major central banks are doing. I mean, inflation's not the problem, growth is. And we're seeing a lot of policy effort, increasingly so, to support growth. So from our perspective, from an equity market perspective, that's really what drives our preference for Asia ex-Japan equities. And I think China's sort of one big part of that. And we think what will be the catalyst for starting that gradual outperformance. But I think it's a great way to diversify equity exposure away from just focusing on, all sort of views being ultimately correlated back to what the Fed does, and in turn what U.S. inflation does. So those combination of factors against what we think is a pretty attractive valuation backdrop is what makes us more positive on Asian equities.
And Manpreet, let's talk a little bit about what currency markets are doing, because the Japanese yen, of course, continues to weaken with that gap between what the Fed is doing and what the BOJ is doing. Where do you stand on where the yen goes from here?
Well, the yen, I mean, it depends which factor you think will be predominant, right? And I think if you look at interest rate differentials alone, that argues that the yen is getting weaker, as does sort of where oil prices are going. But I think what makes the yen trade particularly difficult is that that's obviously one strong driver on one hand, but clearly, we have policymakers that could sort of step in at some point, and that would come against the backdrop of what has been pretty one-sided positioning along this entire move from sort of the 115 levels. And that's the reason why, to be honest, in a base case, you could see how the yen sort of keeps getting weaker, but that's why it's also not our favorite trade. It's got low visibility, because any sort of policy intervention, for example, regardless of a view on its long-term sustainability, just introduces a huge amount of volatility when positioning sort of is at one side, one extreme. And that's why in FX markets, Our picks are more so in commodity currencies. Perhaps less exciting, perhaps less smaller moves, but I think you get a much more supportive fundamental backdrop, whether that's their own interest rate hikes or an eventual growth, bottoming out in China. I think that's a more visible and I think a little bit more predictable outlook compared to what we've got around the yen at this point in time.
So when it comes to the volatility that we're seeing, whether it's the currency markets or the equity markets, how do you really take advantage of the long-term opportunities, and where do you go?
Well, in our view, the real opportunity has been created in any type of income asset. I mean, it's another debate whether treasury yields have topped out or whether we have a little bit further to go. But I think it's interesting that when you look at income assets, whether in fixed income or even in dividend equities or non-core assets like REITs or convertibles, I mean, the level of yields is now reaching a point where, where we think the risk reward is starting to look quite interesting. So our preference, of course, is through a diversified multi-asset income strategy. Our own model yields are now well above 5.5%. Which is not a level we've seen at least since 2020 and not for many years before that. So, one factor is that I think that does provide a bit of a buffer even if treasury yields have not topped out. But I think that sort of basket also takes into account a lot of our preferences within fixed income for high yield, for emerging market bonds or other asset classes where credit spreads are already quite wide and sort of a mix of floaters. So we think that diversified basket is where the risk reward starting to look interesting. It's not as high octane a bet as sort of equity markets alone, depending on how inflation pans out, but at least we're getting a yield level which we think provides quite an interesting buffer and risk reward.
Manpreet Gill, always good to have you with us, Standard Chartered Private Bank Head of FIC Investment Strategy. And all of those stories that we talked with Manpreet, you can actually find them on today's edition of Daybreak. Terminal subscribers, go to DayB It's also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get the news on the industries and the assets that you care about. This is Bloomberg.
I'm always interested in the idea that where we are really defines our kind of outlook and the way that we engage with the world.
Which world do you live in?
We all live in our own worlds. There's no reason to think of virtual communities as in any form lesser than a physical community. They are open in a way that doesn't mean you need to travel somewhere.
Hyundai Motor, connecting art and technology.
Nobody does anything perfectly the first time, or the second, even the third. We learn from mistakes. But when it comes to retirement planning, who can afford mistakes? Smart Asset can help you avoid those unpleasant mishaps with a free guide, The 7 Crucial Mistakes of Retirement Planning. We also match you with up to 3 vetted fiduciary financial advisors who can help you achieve your retirement goals. Using Smart Asset is free with no obligation. Discover what others learned the hard way at smartasset.com.
Hi, this is Lisa from 4Imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes, certainly. We got some brand new woohoos.
Dial up the wow factor with promotional products from 4Imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4Imprint, for certain.
A quick check of the latest business flash headlines. SoftBank is said to be planning to list some of its stake in chip designer ARM on the London Stock Exchange, switching from an earlier plan to only use the US market. Sources say the company will still likely list the majority of what it offers for trading on US exchanges, and that plans for any London portion have not been finalized. Goldman Sachs is preparing to offer foreign exchange prices that last for days to shield big clients from market swings. The bank has already been quoting rates that last for minutes and plans to extend this into the coming weeks. But clients will pay a premium in the form of an added spread to reflect the risk that rates will move against Goldman. Credit Swiss shares hit a record low after analysts flagged a potential equity raise, saying the bank was suffering from funding pressures. Barclays analysts say raising more equity could help Credit Suisse soften the impact of incoming funding or upcoming funding headwinds. The Swiss lender has been hurt by the Archegos and Greensill scandals, and a string of profit warnings have ensued. Sherry.
And Heidi, the bear market for Bitcoin is now in its darkest phase. That's according to industry watcher Glassnode. The leading digital coin appears to have stabilized a bit after its worst three-day drop since March 2020. Bloomberg's Sue Keenan joins us now here with the latest. And Sue, we are hearing more warnings that this may be another crypto winter.
Yeah, you know, there's a wide range of views on where we go from here, but the one point of agreement is that we are clearly in Bitcoin winter, kicked off by a number of events. The Fed rate hikes and macro situation clearly has been negative for crypto. We've increasingly seen the cryptocurrency trade in sync, lower with tech stocks. Then you had the Luna meltdown, the Terra Luna meltdown, and now the latest problems with Celsius. So where does it go? Bitcoin has fallen 30% this month, 21% in just the past 3 days. If we can look at that 5-day chart, you can see the steep drop. And the Nuveen chief investment officer says if it can move 20% in 2 days, it can move another 20% in the next 2 days. And the Bitcoin bull and billionaire Mike Novogratz believes that 20,000 is probably the bottom, and we've come pretty close to that in the last couple days.
At the same time, you've got big crypto firms like Coinbase, right, laying off workers. At least one Bitcoin bull is saying that he can handle the volatility.
Yeah, that would be MicroStrategy's CEO, who says that his stocks lost some 25%, that he can handle the volatility going forward. Quickly to look at the companies that are cutting, Coinbase cutting 18%, joining the round of companies that are adjusting to this Bitcoin winter. Back to you.
So Keenan there with the latest on crypto. Lots more to come on Daybreak Asia. This is Bloomberg.
Last year, more homes canceled cable TV than ever before. Why? It's just too expensive. For half the price of cable, you can get Fubo TV and watch the live sports and TV you love. Try free at FuboTV.com.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
With your finances?
Yeah. Save yourself the pain and let Truebill do the work. Truebill automates your personal finances by canceling subscriptions you're paying for but never use.
Who signed up for those?
Give your finances the fix and download Truebill today.
Nice.
I was paying for in-flight Wi-Fi for months before I finally caught it. Truebill uncovers hidden subscriptions and notifies you when a charge is upcoming. From there, you decide if you want that service. And if not, cancel it right from the app with one tap. Download Truebill, the money app that works for you.
You're watching Daybreak Asia. We're half an hour away from the opens in Japan, South Korea and Australia. And ahead of that, we're having a look at how the yen is trading, of course, at a 24-year low against the greenback this morning. But we are seeing signs of risk aversion just creeping into common yen crosses as well this morning. The Aussie yen, a typical barometer here of risk sentiment. We are seeing it down 4% off this year's peak. The euro yen, meanwhile, just reclaiming that 140 level as the session in New York winds down. Changing to the terminal now, because let's have a look at how that weakness in the yen, it has been a real boost for Japanese stocks, though they did slump more than 3% in the previous session. We are seeing, though, that blue chip Nikkei 225 outperforming the S&P 500. So whilst it's risen around 7% from its March low, the S&P 500 has lost around 12% in that same period. Heidi.
Well, Blue Bay Asset Management, Bell, is betting that the Bank of Japan will be forced to abandon a policy that's increasingly looking out of sync with global peers. Senior portfolio manager Russell Matthews told Bloomberg that the pressure is growing on Governor Kuroda and the central bank to capitulate at some point.
We definitely still biased to be playing duration markets from the short side here, but we're very selective and I think it's important to pick your spots. I think that if you look at what's priced into the US now, it's approaching fair value. It's not asymmetric anymore, and we think the same thing in Europe. Where we think there's more scope for yields to move higher, as I said earlier, is in the UK and in Japan. We do think the BOJ are going to be forced to capitulate at some point. We think that the second quarter Tankan report is going to be a key determinant of that. We'll see inflation expectations rising there. That comes out at the beginning of July. We were really more focused on sort of the autumn as the point at which the BOJ does capitulate. But depending on how hard the Fed goes on Wednesday, depending on what happens with the Bank of England, the pressure's growing on Kuroda. I think he's facing political pressure. We saw reports over the weekend and last week that the Duma is becoming more concerned, and in the media there's more rhetoric around what needs to be done to contain inflationary pressures and also to contain what's happening with the yen. So we think that point may even be coming forward a little bit here.
Blue Bay Senior Portfolio Manager Russell Matthews there. And we're also counting down to a raft of economic releases from China, including industrial output and retail sales for May. The data is expected to show an economy teetering on the brink of a contraction. Let's bring in our Chief Asia Economics Correspondent, Enda Curran. And we really haven't seen 2 months of contraction and really collapse of these numbers in quite a while. What are we expecting today?
Probably expecting to see some form of improvement over the month of May, Sherry, mostly because that's when the lockdowns began to ease. So in particular, some more production was allowed to come on stream by the factories, and we know that transportation and logistics started to improve as well. So there's expected to be a better tone in the numbers now. Year on year, industrial production and fixed asset investment will still be down, of course, but heading at least in the right direction. Now, the real number to keep an eye on is retail sales. That's expected to show another drop of over 8%. And that really speaks to just how COVID-0 is hollowing out consumer sentiment and consumer confidence across China. And I think that's the key indicator in terms of just the depth and the scale of how far this recovery will have to go. So I think the May activity indicators are going to are in some ways almost too soon really to call a rebound, but nonetheless it'll probably show, look, it's coming off its knees at least.
What further action do we expect from the PBOC in light of the widening policy divergence we continue to see here?
Well, I think, first of all, we're going to have to get a handle on how things are going in June, Heidi. I mean, is there reopening allowing the economy to get back on its feet? Are we seeing momentum going again? We saw exports rebound pretty quickly, so will we see investment and production and retail story come back pretty quickly? If that does happen, it will speak to the idea that, wait a minute, China's got control of the virus again, and the authorities don't have to do as much as maybe we thought they would have to do, say, back in April. At the same time, though, they are facing now this very stark divergence with the Fed, which is quite unusual. If the Fed does go by as much as they're expected to on today, then that will obviously put downward pressure on China's capital flows story. It will lure investors away from China, and that's probably not what China wants at a time when its economy is under pressure. So it does put a PBOC in something of a dilemma. They will, of course, continue to support the economy, but it's a question of how much easing can they do when there's already so much downward pressure on both the exchange rate and on investor flows out of the country. It's going to be a tricky one for them to balance.
Our Chief Asia Economics Correspondent Enda Karan there with a preview. And Hong Kong has again intervened to buy its local currency to defend the greenback peg as the Hong Kong dollar fell further towards the weaker end of its trading band. For more on that and his interview with the city's chief executive, let's bring our Chief North Asia Correspondent Stephen Engels. So let's start off with the dollar peg. What did Carrie Lam say about that?
Yeah, well, first of all, in the short term, at least, there has been capital outflows from the Hong Kong dollar, pushing against the weaker end of that very narrow band of between 7.75 to 7.85 on increased bets, obviously, that the Fed is going to be increasingly hiking rates. So there's that capital flow issue on the short term. But on the longer term, where I really talked to Carrie Lam, and probably some of the most interesting bits of my interview yesterday with the chief executive was about the dollar peg and whether she saw any scenario that could potentially depeg the Hong Kong dollar from the U.S. dollar. Now, there's been increased chatter, at least discussions. This is usually an untouchable subject where Hong Kong says the linked exchange mechanism with the U.S. dollar is unflappable. But there's at least some discussions going on now, whether it's at the HKMA and Eddie Yu, the chief executive there, essentially saying they need to prepare for all scenarios going down the road. But also Financial Secretary Paul Chan recently talked about what he saw as the U.S. weaponization of the U.S. dollar, especially in light of actions taken when Russia invaded Ukraine. So I posed these kind of questions to Carrie Lam in this interview, and as I say, it's some of the more interesting bits of our discussion.
I'm still in the position as the chief executive, and my personal view is there is no basis and no need to change the linked exchange rate system. It has served Hong Kong well and will continue to serve Hong Kong well. The reason why we have to make such a robust response is there's always speculations and rumors who try to exploit any uncertainty in order to sort of make profit or undermine Hong Kong's stability. But I think this one thing is very, very important, because when all over the world things are very fluid and even a bit chaotic, the certainty of Hong Kong's monetary system is important not only to Hong Kong, but to our country.
Do you see signs that the United States is weaponizing the dollar, or that there could be threats if there are further sanctions against Hong Kong, threats to Hong Kong's access to the SWIFT system, like we've seen in Russia and the like?
Well, some overseas governments are totally unpredictable, so I could not comment on that. And sometimes they are totally irrational. Up till this moment, I don't understand why, being a Hong Kong as our government official defending national security of the People's Republic of China, should be sanctioned by the U.S. government. I just don't understand, except trying to bully and intimidate us for defending our own country.
Are you still paid in cash, or have you had your banking situation remedied?
I'm telling you, the one thing is I've not been spending money in the last 2 years without a credit card. But I can survive. I can survive.
How about after you step down? You will obviously be paid a pension.
Yes.
Will that be paid in cash?
Probably. I have only a very modest pension. Yes, it's a very modest, because I left the government too early. Yes, because as a politically appointed official 15 years ago, I paid pension based on a civil servant's length of service. But never mind, as I have been saying, I have no property in Hong Kong, very little assets, but I enjoy serving the people of Hong Kong, and I'm sure I will enjoy my retirement.
Would you apply or find a way to apply to the United States to get off the sanctions list?
Definitely no.
No? Why not?
Definitely no. Why should I? I'm not keen to go to the United States. I have no assets in the United States. If my family members have been hurt, they have already been hurt, and they stand by me. So why should we go to apply for any relaxation of sanctions. I hope one day the U.S. authorities will realize that they have done something wrong, that they should rectify their own mistake.
Hong Kong Chief Executive Carrie Lam speaking to Bloomberg's Stephen Engel. You can catch more from that conversation on Bloomberg TV. A conversation with Carrie Lam premieres July 1st at 5 p.m. in Hong Kong, 7 p.m. in Sydney. Let's now get to Vonnie Quinn with the first word headlines. Vonnie.
Sherry, thank you. China's embassy in Washington says a member of the Bloomberg News bureau in Beijing was released on bail in January. Hayes Fan was detained more than a year ago on suspicion of national security law violations. The embassy says her case remains under investigation pending her trial. Bloomberg News has been unable to contact Fan, but editor-in-chief John Mickleswaite says he's encouraged to learn she's out on bail. China's securities regulator has issued guidelines on pay to the nation's brokers and funds to avoid what it calls excessive short-term incentives and to prevent financial risks. However, the CSRC denies setting limits on bankers' compensation. On Monday, Bloomberg reported that the regulator had asked global banks, including Credit Suisse, Goldman Sachs and UBS, for details on how they pay their top staff. European gas prices surged as much as 21% on disruptions to supply from Russia and the US. Western sanctions have left a crucial turbine for the Nord Stream pipeline stuck in Canada. Gazprom reduced flows through Nord Stream by 40%, blaming the missing parts. A longer than expected outage at a US LNG terminal also added to price pressure, but Germany says supply is currently guaranteed. Western Australia will retire all state-owned coal power plants by 2030. Government officials there say about $2.7 billion will be invested in new green power infrastructure, including wind generation and storage. It's the latest effort by the nation to curb emissions and overhaul its aging energy infrastructure. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Sherry.
Right, Vonnie, coming up next, we hear from KSK Group CEO Joanne Kwa about launching a high-end branded residence in an already competitive Malaysian market. That exclusive interview just ahead. This is Bloomberg.
How can your bold vision be transformed into long-term value? Is your strategy ambitious enough to drive transformation at scale? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Realize your transformation with EY.
The best pizza of your life.
You have the best cheesesteak in the world.
Lasagna is an amazing feat.
The best chocolate cake I've ever had.
From Goldbelly, it could be in your belly very shortly.
Order today at goldbelly.com and get free overnight shipping anywhere nationwide.
My name's Amy, and I bought and financed my car through Carvana. Everything was all good, but then things hit a slight snag. Okay, so they were trying to verify my employment status while I was at work in a giant hole in a mine. But then something amazing happened.
Hello.
Carvana worked with my shift manager and got everything sorted out, so I didn't miss out on the car. Super helpful. I was over the moon, even though I was underground.
We'll drive you happy at Carvana.
You're watching Daybreak Asia. Well, KSK Group's flagship 8 Conley development in Kuala Lumpur is slated to be finally completed by the end of the year. The high-end branded residents have been in the works since 2013, with completion delayed by the pandemic. Now, CEO Joanne Kwa grew KSK from an insurance company her father started in Malaysia more than 3 decades ago. Today, the group has a suite of businesses to its name, and there are including tech ventures, and there are plans to expand even further. I spoke exclusively to Joanne Kwa about 8 Conley and concerns about oversupply of high-end properties in Malaysia.
we are actually a niche alternative real estate investment class. And what that means is that branded residences is a slice above just your normal luxury. It's provided, the services are actually provided by the hotel. So people do think of it as a completely different asset class. And so when you look at that, then, for example, branded residences, there's only 3 developments in Malaysia that's actually in KLCC area, especially, that's only doing branded residences. So there's not much supply that's actually in the market. So that is actually for us where we are looking at. I think when we talk about oversupply, we're actually talking about the mass and also the mass luxury.
Obviously, this is your first property development project as well for KSK Land. And it came at a time when there was COVID as well. What lessons would you take from COVID going into your next development project?
I think one thing that we can learn moving forward is really about, how do we actually look at the construction supply of, for example, labor in the market, and how those kind of costs are actually increasing. So what are we going to do moving forward? Things like prefabrication of homes. I think moving forward and looking at future developments, we would be considering things like prefabrication construction where cost considered, it's not going to be that high anymore, and actually we save on time. And everybody knows that in the property development industry and construction industry, time is money. So I think that would actually be very important for us. Yeah.
KSK Group, quite diversified, interests from insurance, tech, property. Where do you see the biggest growth drivers now?
For KSK Group, we play in 2 core industries for us. One is actually property, real estate, and the other is actually insurance. We see opportunities in both. Where we are really obsessed with is actually customers. For example, if we look at Acorn Lay and we're selling branded residences, we don't want to just be a real estate developer to stop at just handing over keys to people. We want to continue that relationship with our customers, and what that means is to look at how we can inject property management into the ecosystem so that we can add value for the customers.
So what exactly led you to identify the customer as the starting point? Because as you say, property and insurance are 2 industries that are very legacy businesses, and they see